lower Brent prices, in fact, now near the $72.5 a barrel mark. Now, talking about the Indian markets, like you mentioned, one positive that happened was that we were on a 5-day losing streak, and yesterday Nifty managed to go ahead and snap that particular streak. Along with that, what did better and what actually gave a significant bounce was the financials pack. All of the financials that had seen a significant sell-off in the last 5 to 7 trading sessions yesterday bounced back quite sharply, and the Nifty Bank was the one that actually did most of the heavy lifting as far as the markets itself were concerned. Broader markets largely in tandem with the benchmark indices, but the breadth there was slightly muted, in fact, in favor of the declines. What did well? Metal stocks did well. Any hopes of anti-dumping duty is something that bodes positive for the entire metal pack, and the entire ferrous pack yesterday did very well. Now, along with that, IT and auto stocks were the ones that did see some selling pressure. IT stocks continue to see the fall that they did after Accenture results. Now, a couple of stocks in the broad end of the markets, India Cements, Ultratech Cement, deal going through, that was quite positive. SW Solar, that was another stock that did quite well. So overall, GIFT Nifty as well as Asian markets indicating a muted but slightly positive start for our own markets today.
Vivek, thanks a lot for that. Over to Abhishek now, who list out the stocks that you need to keep an eye out for today. Abhishek, good morning. What's on your list?
Good morning, Homas. To begin with MSC Electronics, the competent authority has approved capacity capability assessment for GPS location-based PAPIS. Now, PAPIS is a public address and passenger information system, if you take a look over there. Apart from that, they have, MMTC has got a warning letter from NSE and BSE due to non-holding of stakeholders relation committee in FY24. Ramki Infra has also got a warning letter from NSE and BSE on risk management committee meeting intervals. HG Infra, their arm HG Banaskanta BES has signed a battery agreement with respect to battery energy storage purchase with NTPC Vidyut Vyapar Nigam, and they have also signed an agreement for procurement of about 185 megawatt and 370 MWH on long-term basis. Now, TVS Motor, they have completed acquisition of 39.1% stake in DriveX. With this, the company now holds about 87.4% in DriveX. Now, Whirlpool, they have signed agreement with PG Electropast for contract manufacturing of Whirlpool branded semi-automatic washing machine. Bharat Forge, they will infuse about $64.5 million in their arm Bharat Forge America Incorporation. We also have a news from Money Control, wherein Tata Group has roped in Cyril, Amarchand and Kotak Mahindra Capital as advisors to their 15,000 crore plus IPO of Tata Capital. Last but not the least, we have the credit card business momentum given out by RBI. So SBI card, they have lost market share massively on spends. It is down to 14.9% in November when compared to 19.5% on a YOY basis and about 15.8% on a month-on-month basis. So in absolute value, their spends or total receivables are down 19.7% YOY and about 21% on a month-on-month basis. Back to you.
Abhishek, thanks a lot for that. And apart from all of these stocks that Abhishek just highlighted, also keep an eye out on Vedanta today because it's going to trade ex-dividend. Finally, Sudarshan joins in with cues from the F&O space. Sudarshan, good morning. The 200 DMA still continues to be a bit of a headache for the bulls. What's the setup on the F&O side looking like?
Morning, Omar. That's correct. So flows remain muted, but yesterday, while we might have closed in the green, there are two negatives. First, Nifty closed off-wise and failed to manage to hold on the levels above 200 DMA, that is 23,830 odd. And second, if you look at the broader markets, market breadth, despite mid-cap index closing the green, market breadth was in favor of declines. And for today, GIFT Nifty is indicating a start with minor gains. And talking about the flows, yesterday FI sold almost rupees 170 crore, while DIs have bought more than rupees 2,200 crore. Even in the index futures, FIs have sold 644 crore, and they have reduced long positions by 675 contracts, and at the same time, they have added short positions of almost 8,000 contracts. As far as the long exposure is concerned, now FI's long exposure has reduced to less than 31%, which is lowest in almost 2 months. And on the client side, long exposure remains healthy. It's still at 65%. On the option front, 23,850 call has seen addition of more than 13 lakh shares. 23,900 call also has seen addition of more than 13 lakh shares, and on the put side 23,500 put has seen addition of more than 33 lakh shares with premium at 25. And with these important levels for Nifty, support is now seen somewhere around 23,550 and resistance at 23,850, that is around 200 daily moving average. Now lastly, stocks in focus. One stock that has come out of the ban is SAIL, and also keep an eye on Vedanta because it goes ex-dividend today.
Indeed. Thanks a lot for that, Sudarshan. Keep an eye out on all of these updates. Time for a short break. Up next, we take a look back at the year that was for Tamil Nadu's electronics manufacturing sector. Stay tuned. Back on the other side.
Full crowd outside the theatre. You have to please vacate. I said 100% okay. No police personnel, nobody ever told me. It was just told by one or two of my managing people. It is a dark, so I didn't even exactly have details of who even told me. It was one of my managers only. It was no police for sure. Nobody even approached me. Nobody communicated to me. They just said there's overcrowd outside. We have to leave right now. And I left the crowd.
Our Navy and Commerce have been treated in a very unfair and injudicious way. The fees being charged by Panama are ridiculous, highly unfair, especially knowing the extraordinary generosity that has been bestowed to Panama, I say very foolishly, by the United States. This complete ripoff of our country will immediately stop. It's going to stop. The United States has a big and vested interest in the secure, efficient, and reliable operation of the Panama Canal. If the principles, both moral...
Welcome back. Now, 2024 has been a year to remember for Tamil Nadu's electronics manufacturing sector. For the second year running, the state topped India's electronics export order book. Now, on Rewind 2024, CNBC-TV18's Jude Sanith revisits some of the key milestones that led to the state's electronics production boom and reports that, going by estimates, the state is set to repeat its stellar performance in 2025 as well.
For the second year running, Tamil Nadu stood out as India's top exporter of electronics goods. At $9.56 billion in FY24, the state's value of electronics exports was double than that of Karnataka and Uttar Pradesh, and the export orders it has received between April and September 2024 are already above $6 billion. In April, Tamil Nadu not only secured the pole position in electronics exports for the previous fiscal, but also registered a whopping 78% growth over its own numbers in the previous year. Incidentally, the state accounted for $9.56 billion in electronics exports out of a total national electronics export order value book of $29.12 billion. This meant that the state approximately accounted for 1 out of every 3 rupees that India earned in electronics exports through all of FY24. So it comes as no surprise that the state's electronics sector repeatedly made headlines through the year. Investments from Salcomp, Pegatron and Foxconn fructified, and as their plants commenced production, they added extra thrust to the state's export engine. And in September, American communications major Cisco launched its first Indian plant in Sriperumbudur in partnership with global electronics manufacturer Flex.
Cisco's partnership and the announcement made a huge difference, not just for Flex in India, but also in industry in itself. High technology products, highly skilled workforce, labor force, as well as the talent. And last but not the least is the manufacturing ecosystem, which means the supplier ecosystem as well.
It's this strong and fast-growing supplier ecosystem that the state government is banking on to fuel the brisk growth in electronics exports. It hopes the number will cross $12 billion in FY25, and that's just for starters.
The already existing infra will take us to 12 now, but what we are seeing is more down the value chain coming in, more components down the value chain. The entire supply chain probably, if possible, of Apple is something which we are all looking at. But the next year would be, we are looking at really bigger numbers. Right now we are at 35% of India's output. Right? We would definitely want to go up.
The groundwork for this is already in place. In January, Tata Electronics announced an investment of 7,000 crore rupees towards expanding its components plant in Hosur. Further, Taiwanese electronics major Foxconn has committed 13,000 crore rupees in further investments, and US-based Jabil has promised 2,000 crore rupees. This means Tamil Nadu will soon host 4 of the biggest global suppliers of tech giant Apple, and as more come in, $12 billion in exports may be just a portion of what the state clocks in 2025. In Chennai, Jude Sanath.
Interesting there from Jude, but time for a short break. Up next, it's time to get you Growth Code, a collaborative initiative by Grow and CNBC-TV18. And our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we'll help you understand the various costs and expenses you need to be aware of as a trader.
Buy something at 100, sell it at 120, you think you've pocketed 20 rupees, right? No, that's not how it works in the stock market, because there are several other costs to consider beyond just the price of the security. First is the securities transaction tax, which is charged by the government on both sale and purchase of securities, typically at 0.1% for equity delivery and 0.025% for intraday trades. Then there is this GST, which is applicable on brokerage fees, again typically at 18%. So if your brokerage charges about 100 rupee fee, you'll have to pay an additional 18 rupees as GST itself. Then there are these exchange transaction fees charged again typically by stock exchanges, usually a small percentage of your total transaction value. And above all of that, don't forget the brokerage fees itself. These can either be fixed or a percentage of your trade value depending on your broker. So all these costs, they add up. It's important for you to account for them when you're planning your trades.
Of this magnanimous gesture of giving are not followed, then we will demand that the Panama Canal be returned to the United States of America in full, quickly, and without question. I'm not going to stand for it. So to the officials of Panama, please be guided accordingly.
Back with us here on Power Breakfast, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Some bit of pressure seen on crude prices ahead of the holiday.
Oh, well, absolutely. If, to begin with, it has been a negative going for the crude oil prices. But where we stand right now, and this perhaps is how the year could end as well, the Brent is down by 5.5%, and you have WTI down by 3% as well. Actually, almost everything within the energy as a space has been on the weaker side. Gasoline prices are down by 8%. Heating oil is 10% down. Coal is down 14% as well. The only thing that has been trading in the positive in this year has been the natural gas prices, up by 40% in this year. But the markets will continue to watch the potential oversupply in 2025. That continues to weigh the prices down. And then it also is about the OPEC downgrading demand estimates all the time for 2024. A bit of a rebound is, though, what we've seen come in for many of these metal prices. If you look at the copper prices, we are off 3-month lows right now. Zinc has seen some strength come into the markets as well. And then you look at the aluminum prices, we're looking at some bit of a support onto that one as well. Remember, yesterday was a good day for metals, not just underlying metals, but the equity metals seem to be doing well as well. But the street also still is looking at U.S. tariff threat on China, lack of China fiscal support, and then you also are dealing with soft U.S. PC inflation in the month of November. That continues to weigh onto the markets even now. But then it's pre-holiday thinned volumes trade, and you could be looking at a very, very narrow range.
Indeed, that's going to be the theme of the week, right? Thin volumes as we head into the holiday. Manisha, thanks a lot for that. Now, the Bangladesh government has formally asked New Delhi to hand over former Prime Minister Sheikh Hasina, who's been living in exile in India since the fall of her regime. Now, the Dhaka-based International Crimes Tribunal has issued arrest warrants for Sheikh Hasina and her ministers, accusing them of crimes against humanity and genocide. Now, the Ministry of External Affairs sources have confirmed receiving a note verbale from the Bangladesh High Commission. And to end the bulletin on a slightly somber note, one of the most influential filmmakers in Indian cinema, Shyam Benegal, passed away last evening at the age of 90. The veteran filmmaker breathed his last in Mumbai's Wockhardt Hospital, where he was undergoing treatment for chronic kidney disease. Shyam Benegal was honoured with the National Film Award for Best Feature Film in Hindi a record 7 times, and he also received the V. Shantaram Lifetime Achievement Award in 2018. Now, through his career, Benegal received numerous accolades, including the Padma Shri, the Padma Bhushan, and of course the Dada Saheb Phalke Award, which is India's highest honour in cinema. Now, his vast filmography boasts of several masterpieces, including Manthan, Zubeda, Ankur, Nishant, Mandi, that altered the course of Indian cinema. Now, Benegal's demise will mark the end of an era, leaving behind an enthralling legacy for cinema lovers.
Gonna be president, that I can tell you. And I'm safe, you know why? He can't be. He wasn't born in this country. Now, he's a great guy, and we want to have him. Everybody, so many people are in this audience that have helped.
2024 saw a lot of action in the mutual fund space, and funds raised via NFOs has definitely been one of them. Let's look at the numbers. Funds raised by NFOs or new fund offers stood at 1.04 lakh crores in 2024. This is still the month of November. And we have more NFOs in the month of December that has not been accounted for here. That is an uptick of 63% versus funds raised in 2023 at around 63,800 crore rupees. Now, this was slightly lower than 2022. That time, the number was 67,336 crore rupees. But 2021 also saw massive inflows. This was double the amount versus 2020, when the amount raised was around 53,700 crore rupees. Now, if we talk about the number of NFOs, 2022 still tops the list. So far in 2024, we've seen 205 NFOs which have been issued till November. This compares with 212 in 2023, 246 in 2022, 140 in 21, and around 81 in 2020. Some of the categories that saw high flows: multi-cap funds getting in 6,300 crore rupees of money, and other ETFs at around 1,400 crore rupees. But the real star of this year had to be sectoral funds. 40 sectoral or thematic funds have seen the highest flows that we have seen in the last 5 years. Sectoral funds garnered around 67,772 crore rupees in 2024 so far, which is more than the flows in this space from 2020 to 2023. In this period, sectoral funds garnered around 52,165 crore rupees. This is via 59 NFOs. Even index funds actually saw a lot of interest. 76 NFOs in the index fund space, raising 12,147 crore rupees, which is the highest that we have seen in at least 5 years. Index funds have always seen a lot of interest, and more so in the last 3 years, with more focus on passive investing. In 2023, 53 index funds were launched, garnering around 2,700 crore rupees. This compares with 85 in 2022, and these numbers were very low in 2021 and 2020, as you can see on your screen. Interestingly, no mid-cap funds were launched in 2023 and 2024. This space did see a big rally, but did not see a new product here, but saw massive flows in the existing names. Also, only one small cap.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call, coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Lata Venkatesh, with me Surabhi and Rima, and on behalf of all of us, a very happy Christmas to all of you out there.
Merry Christmas.
It's Christmas to everybody.
Yeah, it's the season to be jolly.
Absolutely.
And
season to party.
As you can see, we're trying to do our little bit, and we're in Christmas colors here as well. But I think the street is going to be happy because Santa finally showed up. And bulls will hope and pray that Santa stays for a while, doesn't leave in a jiffy.
Well, I'm not sure how seriously I would take Santa's visit yesterday. In fact, let me start on that note. We did see a bit of Santa more emphatically in the US. Even they had about 10 days of lower closes. And then for the last 2 days, they have seen some green on the screen. Yesterday was clearly emphatic on the NASDAQ. Coming up, 1%. It was very clearly a positive. But I don't know how much of that is going to brim over to emerging markets, because the other indicators were anti-emerging markets or not clement to, EMs, especially the dollar index going back above the 108 mark, and the yields, which fell a bit because of the PCE inflation coming in as a little lower than expected. Even that went back to the 4.58% mark. Bond yields higher and dollar index higher can never be good for countries like us, because it is so tempting to be in dollars and to buy absolutely risk-free US bonds, which will give you 4.58 and perhaps a little more because of the currency appreciation. Now, what was happening in India, the rupee fell, and that's the important part. It closed at its lowest point of 85.12 or 85.11, despite the fact that we had a positive equity closing and we had dollar index dipping below the 108 mark to 107.6 at one point in time. It looked fairly good, but the rupee did not take any of the positives because there was a lot of importer buying. The moment you get it below the 85 mark, there was a lot of buying and it went back and closed higher. So once again, the FII buying yesterday, no, it wasn't buying. It was selling. It was only 170 crore, but that was not because they seemed to be wary of selling, but probably more because of holidays, that people are not out there to work. So that's why I wouldn't take Santa's presence on Monday very seriously. It seems to be more because the FIs were not selling in all their fury. And therefore, people stayed away. The only Santa I see in the picture is in tech stocks. Both Nasdaq is higher, the dollar is stronger. For every very good reasons, I would think the tech stocks can still stage a rally today. But I leave it to Rima and you to decide for that.
But I guess the markets had such a drubbing in the last couple of months that even if it is a false rally, the bulls will take it. For what it's worth, at least it's not sort of splashing the screen with all kinds of red. And maybe they'll hope for some of that, even if it's a false rally or a rally that you don't really believe you know because the FPIs are away. But for what it's worth, maybe the bulls will hope for more of that because we're seeing that play out across a lot of the regional markets as well. Trade is very thin, volumes are very light. Markets like Australia, Hong Kong, even Singapore, I think all these markets are closing out very, very early for the Christmas holiday. There's no trade tomorrow. So let's see. I mean, volumes have been on the dipping side. But there's interesting news and data out of Japan. So I just want to put that on the table. First, the BOJ minutes. Remember, the Bank of Japan did not hike rates because it was waiting and watching to see what the Fed does, what the implications are going to be once Donald Trump takes office. But we know that inflation has been rising in Japan. The last print was also higher. That's exactly what the minutes note. They're saying that if inflation moves along expected lines, if it keeps trending higher, then rate hikes are possible. And the BOJ may reach 1% on its benchmark rate by late 2025. So that's interesting. And I think that's the market's expectation as well, that the BOJ is not going to reverse gears so easily. If inflation is trending higher, it will come out with hikes, but it's being very measured, looking at the international picture as well. More news from Japan. Honda is the biggest headline in the region in the last 24 hours because of the merger talks with Nissan. The shares there are surging 15-16%. And not just that, Honda this morning announced a massive buyback. Honda is buying back 24% of its equities. It's a $7 billion buyback that Honda has announced. The street is absolutely loving it. That's a big headline in the region as well. Quick word on oil prices, fairly range-bound. Actually, yesterday oil fell. It was down to almost 72. This morning, there's a bit of a pickup once again. But the forecast that I picked up this morning is really encouraging, at least for us here in India. This is Macquarie saying that the average for the year is going to be about 70.5, which is so much better from the near 80. That's where, if you talk about the average in 2024, then oil averaged close to 80. So it will be a whole $10 lower. That's the expectation as we get into the new year. So that's good news. So we've discussed, of course, the pullback on our street yesterday, backed largely by domestic buying. Domestic buying was pretty good, actually. Once again, clearly domestic mutual funds have not gone on holiday mode because they're very active in the market. And I think the sector that I'll focus on today is going to be telecom, and Rima is going to tell us more about it. Little unusual. We've not heard the government or the regulator come in and talk about tariffs or product pricing. But yesterday there was a note and there was sort of some chatter in the form of recommendations that should telecom service providers think of bringing back the pure voice packs, non-data, just pure voice small packs. And TRAI said that this would be very helpful for people in rural areas, particularly elders who perhaps don't need the data. So very interesting. It's a recommendation. It's not a diktat. How will the market take it? How will the companies take it? That's what we will wait for. And Rima must have already been working the phones to try and figure this out. So there's more coming from her on this in just a bit.
Well, let's get to the good news, right? Across the world, many markets are shut early today. The not so good news is that we've got a full trading day. But US markets shut today. But even in Asia, you've got New Zealand, Australia, Hong Kong and Singapore. All these markets will be shutting early today. So it's indeed going to be a holiday thin trade. And tomorrow, across the world, global equity markets are shut. There was also weak economic data coming out of the US. There were two key data points. One, the Conference Board's Consumer Confidence Index fell to 104.7 in December, lower than estimates of 113. And secondly, the non-durable goods orders have declined by over 1% in the month of November. But you know, guys, I'm feeling the Santa spirit, and I think there is going to be a little bit of a supportive environment for equities, just purely because that FI selling is out. Right? That was such a big headwind, and now that it's out of the way and domestic buying is very much intact, will, at least on the liquidity front, you know, you got that support. And plus, even the IPO action, which was sucking out so much liquidity, now that's come to an end. Towards the year end, there are no new IPOs which are asking investors for subscription. So at least on the liquidity front, I think the environment is a little bit more supportive. But of course, it's not fundamentals, but it's on the liquidity front.
Yeah, mice can be at play when the cat is away.
Oh, absolutely. But guys, by the way, I'm sure all of us have noticed here in Mumbai, the city is decked up like never before for Christmas. It's very, very festive out there. So I'm sure market participants, portfolio managers, money managers, they themselves will look out for a couple of good, you know, fun days ahead. So on that positive note, let's get started with the equity call of the morning. We have Sehadri Sen of NK, who says that a strong market and enhanced flows have pushed the share of equities in household domestic savings nearly 2 times to 31% since FY16. As per their estimates, he says the Indian market is therefore more resilient to FPI selling, and the trend is here to stay. He sees lower fixed income yields, among other factors, continuing to push savers towards equities for another 8 to 10 years. He says domestic mutual funds are more exposed to small and mid caps than FPIs and are taking more active sectoral bets. He believes this will continue driving small and mid cap outperformance and be a drag on heavyweight sectors like financials and staples.
Okay. Well, that is a positive. It's something we underestimate. The inflation targeting regime, bringing yields down, has, you know, directionally changed Indian household savings. But that puts greater responsibility on mutual fund managers to deliver. Well, on that note, let's invite our first guest of the morning on this festive Christmas morning. Mark Matthew of Bank Julius Baer joins us. Mark, good morning, and really grateful that you're taking time off on a holiday season to be with us. A very, very happy Christmas to you from all of us here.
Merry Christmas to you too. By the way, it is a work day here in Singapore.
Okay, it is a work day in India as well, and we work on Jan 1st as well. So I think we steal a march over the others. But to come back to markets, you know, we continue to see the US exceptionalism playing out. Are you seeing that peaking any point, that, you know, the dollar doesn't rise anymore, US yields don't rise anymore, so money comes back to emerging markets anytime in the next quarter of 2025?
I can't really speak for the emerging markets, but I do think the US market is putting in a top, and there are 3 reasons for that. The first is that the market is expensive. It has only been this expensive 2 times before, the dot-com bubble and the pandemic stimulus bubble. The second thing is that the breadth of the market is narrow. Less than 40% of the S&P member companies are trading above their 50-day moving averages. And the last thing is that we saw in the Fed statement and summary of economic projections last week that inflation is a concern for them. If memory serves me right, the number of contributing, the number of the Fed officials who contribute their forecasts, who felt that there was upside risk to inflation, that number went from just 3 in September, which was the last time they released their summary of economic projections, to 15 out of 19. In other words, almost everybody. And I think I can't entirely see why inflation should go up, but I think it is a major risk. And so that's the cherry on the top of a peak in the market. If all of a sudden we're not talking about the Fed cutting rates anymore, maybe even talking about them tightening.
Let's follow up. If you expect the US markets to top, where would smart money go? Would it come to EMs, and what would be the pecking order in EMs?
Well, it depends on why it would peak. I think it would probably go more into, I'm not exactly sure. I think it would go into cash, to be honest, in the beginning, just to figure out what the lay of the land is. But emerging markets, I doubt they would be be first on the list of things people would look to when they are de-risking into a rising rate environment.
And maybe one of those reasons is because we don't know what's really happening with all these tariff wars and what direction U.S. policy will take, which emerging market will get penalized and how, right? Mark, hi and season's greetings to you. So on that, so we have to watch out for, obviously, as you said, the direction of inflation in the U.S. The rate cut expectations have been tempered. Now, when Trump takes office, what are the key things that you'll watch, and how important is it going to be for markets? What should we track once the market comes back in January, post-New Year?
Well, lots of things. Whether they'll be able to cut or extend taxes, cut taxes or extend the existing tax breaks, whether they'll be able to deregulate major sectors of the economy, whether they can cut excess spending in the federal government. Of course, relations with neighbors, principally Mexico and Canada, where they've threatened 25% tariffs on both, relations with China. So many different moving parts. If I may say, in general, I think they will be able to do some of what they've said, but if I had to put a number on it, maybe 20%. It's not so easy to do these things. But the net effect, I believe, would be accretive to U.S. GDP growth and therefore indirectly inflation.
Mark, hi. Are you of the opinion that the Indian equity markets too are topping out?
Well, if the U.S. goes into a bear market, I can't really recall previous instances where India didn't go down as well. So in a major, in excess of 20% fall in the U.S. market, I sincerely doubt the Indian market would be able to withstand that. I'd like to just say that we're not saying that the top is in, but we're saying that there's a process that we think is unfolding where top is coming. And we don't like to sell before the top, so we're fully invested, but we are foreseeing an occasion, some point next year, where the market will have a sizable correction. And when I'm talking sizable, I'm talking in excess of 20%. India would go down too.
That's a big call, Mark. I mean, that one that's going to stand out in our minds for sure. Let me just ask you, why do you feel that the U.S. could correct by 20%? I take the point on inflation, but if growth continues to be as strong as it did, I mean, there's no recession in sight, right? Early 2024, everybody was worried about recession. Look at it now, 3.1% GDP print, the last GDP. So if growth remains so strong, then will equities really sell off in this fashion?
Well, what I'd say is that in my little career, what I've noticed is recessions are impossible to predict. The economists who predict them are just lucky, that's all. And you can look at so many studies to show that. Hardly any of the recessions that have happened were called for by the majority of economists within a year prior to them happening. So as much as Trump is pro-growth, which he is, I could give you several examples from Grover Cleveland to George Bush Sr. of other pro-growth, pro-market presidents who came into office and there was a recession. That's the nature of recessions. They're very difficult. There's so many, there's millions of moving parts in the economy. So forecasting them is, I think, practically impossible. So now that I've said that, I'll also say that the other problem with the U.S. is that it's gone up 60% in the last 2 years. And so it's expensive. It has only been this expensive twice in the past. And that makes it vulnerable to a correction.
Okay. Well, point taken, Mark. For starters, the conference board data was not very good. So there are, small red flags here and there. I know Mark is not giving us very good news, but over the year end, it's always good to be warned of what can happen. That also is a Christmas gift. Thank you very much, Mark, and I hope you have a brilliant 2025.
Thank you.
Well, that's the word coming in from Mark Matthew of Julius Baer, warning that the US may give us a scare. Personally, I'm worried that it may give us a scare because of an accident like cryptocurrencies or something like that.
Yeah.
More than growth slowing down, which can happen, a little more slowly. the big fear of giving boost to something over which market regulators have no control.
Well, and there are lots of crypto bulls in this new administration. So let's see, it promises to be an interesting ride. Let's quickly move on and tell you what we've got coming for you on the show today. Lots of corporate interactions that are lined up at 8:35. We'll be speaking with Ashish Rai for Orient Pro Solutions. The company has acquired 100% stake in Phoenix's SaaS for about 10 million euros. So we'll find out how that helps them. At 9 a.m., we'll be in conversation with Shirish Pardesi of Centrum to talk about some of the major trends in the FMCG sector. Is there a recovery in sight in 2025? At 9:20, Rahul Arora of Nirmal Bang Equities joins in. He's our market master of the day. At 9:30, we get chatting with the management of Muthoot Finance. Big concern about the MFI sector, but will it get better from the fourth quarter of FY25 onwards? Are we at the bottom here? That's what we'll ask Mr. George Alexander Muthoot. After that, we get chatting with Mr. Sampath of Keynes Technologies, one of the best performing stocks and sectors of the year, the EMS play. So what is the outlook for 2025? Is the order book still looking as robust? And what are they seeing ahead on the horizons? That's what we discuss. At about 9:50, Alok Mishra of Microfinance Industry Network and Aishwarya Khandelwal of India Ratings joins in. We talk about some of the key big trends in the microfinance sector. And by the end of the show, in our special segment, Outlook 2025, we have Lata joining Sameer Arora today for a conversation that promises to be very, very interesting.
Time for a shop break, but we've got lots of stock-specific action to track today, and we'll get to it in just a bit in our special Top 10 segment. We're looking at Whirlpool, PG Electroplast, Symphony, Oberoi Realty, Greaves Cotton, Orient Pro Solutions. These stocks could be higher in today's trade. Reliance, Bharti Airtel, Vodafone Idea, SBI Cards are the stocks that are on our radar that could open in the red.
And finally, in some tragic news, veteran filmmaker Shyam Benegal, often regarded as one of the most influential filmmakers and indeed intellectuals of our time, passed away yesterday. The veteran filmmaker took his last breath in Mumbai's Wockhardt Hospital, where he was undergoing treatment for chronic kidney problems. Shyam Benegal was honoured with the National Film Award for Best Feature Film in Hindi a record 7 times. He has received the V. Shantaram Lifetime Achievement Award in 2018. Through his career, Benegal received numerous accolades, including the Padma Shri, Padma Bhushan, the Dada Saheb Phalke Award, which is India's highest honour in cinema. Old-timers like me will, of course, remember so many of Shyam Benegal's films, starting from Ankur, Nishant, Manthan, and the more latest, of course, Well Done Abba, which kind of rings in his sense of humour and satire in that movie. And the positivism, the optimism, that you can make a difference in a bureaucracy-ridden world.
(2024) saw a lot of action in the mutual fund space, and funds raised via NFOs has definitely been one of them. Let's look at the numbers. Funds raised by NFOs or new fund offers stood at 1.04 lakh crores in 2024. This is still the month of November, and we have more NFOs in the month of December that has not been accounted for here. That is an uptick of 63% versus funds raised in 2023 at around 63,800 crore rupees. Now, this was slightly lower than 2022. That time, the number was 67,336 crore rupees. But 2021 also saw massive inflows. This was double the amount versus 2020, when the amount raised was around 53,700 crore rupees. Now, if we talk about the number of NFOs, 2022 still tops the list. So far in 2024, we've seen 205 NFOs which have been issued till November. This compares with 212 in 2023, 246 in 2022, 140 in 21, and around 81 in 2020. Some of the categories that saw high flows: multi-cap funds getting in 6,300 crore rupees of money, and other ETFs at around 1,400 crore rupees. But the real star of this year had to be sectoral funds. 40 sectoral or thematic funds have seen the highest flows that we have seen in the last 5 years. sectoral funds garnered around 67,772 crore rupees in 2024 so far, which is more than the flows in this space from 2020 to 2023. In this period, sectoral funds garnered around 52,165 crore rupees. This is via 59 NFOs. Even index funds actually saw a lot of interest. 76 NFOs in the index fund space, raising 12,147 crore rupees, which is the highest that we have seen in at least 5 years. Index funds have always seen a lot of interest, and more so in the last 3 years, with more focus on passive.
Welcome back. So, like we've been pointing out, there are markets around the region which are showing some green. But it's a little mixed right now. For us, the GIFT Nifty is actually down 40 points. So, let's see which way we go. But lots of stocks to track as always. And our team is standing by with the CNBC-TV18 list of top stocks for the morning. Abhishek, I'll start with you. There's a credit card data that's come out today. How does it look for SBI card?
Well, credit card data, take it with a pinch of salt, given the fact that in the previous month, October, we had the festive season of Diwali, and last year you had Diwali in the month of November. So there is an effect of, the base YOY and month on month as well. However, SBI card has lost a massive market share, which I'll adhere into. Industry-wise, the card issuances is up 11.7% YOY and about 0.3% month on month. The spends are up 5.5% YOY, and they have declined by 16% on a month-on-month basis. So average ticket size is down 5.7% YOY and about 16.5% month-on-month. For SBI card, the card issuances have grown by only 9.8% YOY when compared to industry average of 11.7%. However, month-on-month, their card issuances have grown by 1.2%, while industry has grown by 0.3% only. Spends, they are down 19.7% YOY and about 20.9% month-on-month. The average ticket size, that's down massively by 27% YOY and nearly 22% month-on-month. So in terms of cards, their market share is at 18.7% when compared to 18.5% month-on-month and about 19% on a YOY basis. However, the spends market share, that's down massively to 14.9% when compared to 19.5% that they had on a year-on-year basis and about 15.8% on a month-on-month basis. So losing the market share in spends, I've given a red tick on SBI card today. Back to you.
Thank you very much, Abhishek. That's extremely well put. The industry, you may see some month-on-month declines because of the festival season in the previous month, but SBI has done much worse than the industry. That's a very important point. And methinks, just a deviation, it was not a sensible idea to ward off, to hive off SBI cards from the main SBI. HDFC Bank is making money primarily because they've given free cards to the HDFC home loan guys. I mean, you already trusted them with whatever, 40 lakhs, 1 crore, give them a card as well. You must envelop it with the savings data and loan data that the bank has. Perhaps hiving it off was not the best of ideas. But anyway, that discussion for another day. Stocks and news. Upasana, you have a list.
Good morning. First up, let me start with PG Electroplast and Whirlpool. Both these stocks will remain in focus today as both these companies have signed a definitive agreement for contract manufacturing for select models of Whirlpool's branded semi-automatic washing machine. Now, under this agreement, PG Electroplast will manufacture some of the SKUs for Whirlpool at its factory in Roorkee. And mind you that the PG Electroplast is already an existing supplier of Whirlpool's branded air conditioners. Now, what the company has highlighted is both these companies, that is Whirlpool and PG Electroplast, will continue to evaluate the potential expansion opportunities further. Next up is Symphony. Even this stock will be in focus. Company has launched 17 new air cooler models, and what company has said that they have received overwhelming response from its trade partners. Company has received highest ever off-season advance collection for its new products, and most of the revenue from these new models will be recognized in March 2025 is what the company has indicated. Hence, both these stocks will remain on our radar, and I expect both of them to open in green today.
Thank you very much for that. Over to Vinny now for some more stocks in the news.
Good morning. Yes, so let's start with Oberoi Realty. That one is going to be in focus, expecting a positive move here after they've signed a development agreement for 81 acres of land. This is in Alibag, Maharashtra. Now, they plan to build and construct a luxury 5-star hotel or a resort in that 8.6 acre part of the land. And this is around a 3,28,000 square meter land in Raigad, which they're looking to develop. So an interesting move and is what we're expecting in terms of Oberoi Realty going forward as well. Greaves Cotton, keep an eye out on that one. After its subsidiary Greaves Electric Mobility has filed for a DRHP. Now, obviously, they plan to raise around 1,000 crores through IPO fresh issue, and there's also an OFS. In the OFS, we'll be seeing Greaves Cotton, obviously one of the top shareholders of Greaves Electric Mobility, as well as one of these investment companies and investment groups, that's Abdul Latif Jameel Green Mobility, that will also be looking to sell some shares in this OFS for the Greaves Electric Mobility. So keep an eye out on this one. Other than that, we have Orient Pro that is also expected to open in the green. They've announced an expansion into the European markets with the acquisition of Phoenixes, and this is around a 10 million euro cash transaction, which is taking place for the 100% stake in the company. So keeping an eye out on all of these stocks today, expected to open in the green.
Okay, got that. Thanks very much, Vinny. In fact, we'll be chatting with the Orient Pro management to figure out how this acquisition helps them and what the overall business outlook is like. Ashish Rai will be with us in just a bit from now. But let's head across to Rima. Rima, now tell us this whole TRAI recommendation that, bring back the old pure voice packs. What does it mean?
So basically, remember, TRAI is a regulatory body and they can only make recommendations on tariffs. Tariffs are under forbearance, which means that telecom companies have the right to price their tariffs. There will not be any there can be a regulatory nudge, but there cannot be a regulatory diktat on how to price tariffs. Now, what TRAI recommended yesterday is that also introduced only voice and SMS packs. There are many people who don't want data, but because the packs are all bundled together, you get voice, SMS and data, it's forced on people who don't need it. And therefore, there is a need for only a voice and an SMS data pack. Now, telcos have two options, right? You have a current entry-level pack, which includes voice, data and SMS. You can say that I'm introducing another pack, another price point, which could be lower. Now, for instance, the entry-level pack is about 199 rupees, which includes also 2 GB of data, 28 days, etc., 100 SMSs, some voice calls, thrown in. Now, you can say that for only voice and SMS, no data, I'm excluding data, I will price this lower at 150 rupees. Yeah. Now, the risk for telcos is that some of the customers will downtrade and they will lose revenues on that front. But the other option that telecom companies have is that saying that the 199 pack, which is the entry-level pack, remains the same. I'm just excluding data from it.
Give you more voice minutes.
And this has only voice and SMS. And if you want data, then you need to upgrade to the higher value pack. So now the ball is in the telecom companies' court. This is clearly a nudge from the regulatory authorities to introduce more affordable packs. Don't force data on them. But I think the way the street is going to read it, at least for now, till pending clarity from the telecom companies, is that given that we're such a price conscious and there's always been price aggression, that maybe there is a risk that the telecom companies introduce a cheaper variant plan, and therefore there is that risk of downtrading, which could pressure the company's financials.
My point would be, bureaucrats in the TRAI don't have the commercial sense that a telecom company will have. Their own money is on the line. So if this was commercially viable, they would have thought of it before the bureaucrat.
But the bureaucrats are thinking of Janta ka bhala.
Yeah, that's and that can only be recommendatory. Yeah. So I don't know whether we should run away with the idea that this can be negative at all.
It may not be. Telecom companies have the right to say that, my entry-level plan now excludes data. It only includes voice and SMS. Take it, because anyway, everyone's already paying for that. That's the minimum amount. Yeah. And if you want data, then you upgrade. And that would be positive for, telecom companies. So it depends, how this plays out. Okay. But interesting development.
So recap now of all the stocks.
Okay, let's do a quick recap then. So stocks with positive news flow are Whirlpool, PG Electroplast, Symphony, Oberoi Realty, Greaves Cotton, Orient Pro Solutions. Stocks with negative news flow are the telecom companies, perhaps. We'll have to see how this plays out, and SBI Cards.
Okay, with that, let's go over to Manisha Gupta to get a roundup of all the commodity market action. Manisha, tell us, what should we be prepared?
Well, high volumes and very, very thin trading numbers coming in here. The markets also have, in the meanwhile, seen some strength come back in case of the crude oil prices. That is because the Trump is now threatening to reclaim Panama Canal, accusing it of excessive usage fees. Remember, 2% of global oil flows through Panama Canal. So various statements still coming in from the U.S. president-elect are keeping the markets edgy here. In the other news, we also are looking at some more pressure continuing for the metal prices. The strength in U.S. dollar is putting pressure. But for the gold prices, we still are up by 27% in this year. This, by the way, is the best yearly gain since 2010 that we have seen for gold. Copper is still trading at a 3-month lows. Aluminum and zinc prices still continue to decline. The U.S. PC numbers coming in soft for the month of November are putting pressure. And then the lack of China fiscal support, demand concerns as we are stepping into 2025 also weighing on. So most of these metal prices, which did perform very strongly in the first half of 2024, haven't done that in the second half of this year. And we have washed away quite a bit of gains. But the markets will watch out on what the U.S. does before it heads for the big long weekend here. Very jittery is all I can say, as in the Asian markets right now.
Okay, thank you very much for that, Manisha Gupta. Jittery but thin trades. Most people away on holiday. So in a holiday thin trade, there is likely to be heightened speculative activity. We take a short break on that note, but when we come back, we are going to connect with Himang Jani, who will take us through a lot of fundamental analysis of stocks.
In 2023, 53 index funds were launched, garnering around 2,700 crore rupees. This compares with 85 in 2022, and these numbers were very low in 2021 and 2020, as you can see on your screen. Interestingly, no mid-cap funds were launched in 2023 and 2024. This space did see a big rally, but did not see a new product here, but saw massive flows in the existing names. Also, only one small-cap fund was launched in 2024. And now we are towards the end of 2024, and December also has seen a lot of action in the NFO space. But will this continue in 2025? Will there be new products by mutual funds houses to diversify their portfolio? Well, time will tell.
Gonna be president, that I can tell you. And I'm safe, you know why? He can't be. He wasn't born in this country. Now, he's a great guy, and we want to have him. Everybody, so many people are in this audience that have helped.
EV vehicles.
Welcome back. Asian market is largely positive today. Hang Seng is up more than 1%. Kospi, though, is in the red. And in the entire emerging market basket this year, in 2024, the Korean market, the South Korean market, is the only one to report a negative, return. Kospi is down 8% in 2024, and it's the only Asian market to end 2024 in the red. There is some consumer sentiment data, and that's also fairly muted at the lowest level since October of 2008, which is basically the financial crisis. But Hemang Jani is now with us to talk about individual stocks. Hemang, first come in on the telecom stocks and this TRAI recommendation that introduced only an SMS and voice pack. How will the telecom companies respond to that? And would investors be worried that, we could be in for cheaper tariffs now?
Thanks for having me. So clearly, let's get a perspective on the total component of the non-data subscriber for Bharti, Vodafone and Jio. So Bharti accounts for about 15% of the revenue coming from the non-data subscribers. Vodafone is 20%, and Jio technically is classified as data subscriber only, but almost about 50 to 70 million of the Jio phone users are prone to some sort of a downgrading. Now it remains to be seen how exactly the telecom companies respond to this, and will there be a separate price point or offering for the non-data users? So to that extent, there is a possibility of some sort of a down trading, but ultimately it will entirely depend upon telecom companies. So maybe a bit of a negative reaction for the telecom companies, but I don't think there is a case for a substantial correction on this news.
Okay. Good morning, Hemang. Good to have you with us, especially when a lot of guests are not obliging. They're away on holiday. Thank you very much for joining us. Well, first up, I wanted to ask you, at the moment, are you a net buyer? Because the market has given you almost a 10% correction, is this a good buy time, or do you think you will still wait?
Good morning, Lata. So yes, I think after almost disaster or Q2 and the fact that trends have not really reversed in a major way for many sectors, people are going into the earnings season with a lot of caution, particularly on the consumption side. Even the government capex does not seem to have revived in a big way. So I think people will look out for pockets where you can see a bit of a positive surprise. So, something like spirit companies, maybe some of the banks, auto, you can have a little bit of surprise come through from names like Mahindra. Also, one important aspect is in the microfinance, which actually surprised everybody big time negatively. There are indications that you could see even far bigger surprise, because the stress as far as the microfinance sector is concerned is still not out of the way. So I think we will have to be far more stock specific, sector specific when you're approaching the market at this point.
Okay. Now, there is actually mixed data. We will have our colleague Sudarshan present the data. He has the Vahan registration numbers from December 1 to 24, and it looks like two-wheelers is really bad. Still down 20% year on year. But at least personal vehicles are flat. They haven't fallen. And this is year on year. You can't even complain that people don't buy in December because it is seasonally adjusted data. We will have Sudarshan come and give us that data. But Hemang, there is some positive news we got from Symphony. They have said to the stock exchange that the advance money they have got for their new air coolers for the summer season, that is advance payments, is excellent. I mean, among some kind of a record. Is there any pocket in consumer durables or discretionaries that you would buy even in the current market?
So Lata, when we look at consumer discretionary space, I think spirit companies, our interactions with the management clearly suggest that both in terms of the high end or the premium product volume and on the margin side, things are very well placed. Also, I think, some of the, companies on the manufacturing side, like PG Electro, Dixon, Amber, those companies continue to do well. So I think these are the pockets that we would be looking to buy into.
This PG Electroplast, what a rally it's had. Just last week or 10 days back, they did a QIP. They raised 1,500 crore rupees. And the price point for that QIP was 690 to 699 rupees. And look at the stock price now, 950 rupees. And this QIP happened in the month of December itself, in the first half of December. 30% up move in the month of December. And this year, it's 300% higher. And today, of course, there's fresh news. The company has entered into contract manufacturing agreement with Whirlpool to manufacture certain models of washing machines. Hemang, would you go out and buy PG Electroplast at these levels and after this kind of a rally?
Rima, yes, the stock has done exceptionally well last 1 month or year to date, and clearly I think in a scenario where many companies and sectors are struggling with growth, you have very fewer pockets, like PG Electro or maybe Dixon, Amber. These are the pockets which are showing you a lot of growth, and the fact that the companies have invested in the capex or raised money would mean that the trend will continue. So I do find that the run-up is, huge, and the valuations are not cheap by any stretch of imagination. But because of the lack of availability of better options, in the value or comfort zone, people would want to have some part of their portfolio in these names. So from that perspective, I do like PG Electro. I think it still offers another 25-30% kind of an uptick even from current levels.
Hemang, request you to stay on, inviting the management of Orient Pro Solutions. Now, the company has announced its expansion into the European market with the acquisition of Fenixys for 10 million euros. To discuss this, we have Ashish Rai, Global CEO at Orient Pro Solutions, joining in. Ashish, thank you for joining in. Santa has come with an acquisition for you. The gift he's bought is Fenixys. So tell us a little bit more about the company that you acquired, the rationale behind it, and what are the margins and the kind of growth rate this company has enjoyed in the past, and how can you scale it up?
Yeah, hi, good morning, first of all. Thanks for having me. That was a nice comment. Look, Fenixys, we've been extremely impressed with and very, very excited. We've been partnering with Fenixys for some time. It's a highly specialized capital markets consulting firm, partners with some of the largest banks in Europe and in Middle East and Africa in terms of their, the trading book transformations, right? So I think it was sort of very, very strategic to us. One, as you may know, we've got a lot of tier one offerings, soft products in the enterprise application space around the banking book. We are pretty much the leaders in Asia on a lot of these solutions, and this sort of helps us expand those offerings out into the European market, both from a services capability standpoint, as well as a go-to-market standpoint, as well as the relationship with the largest banks. Plus, it also allows us to build out a global capability on the capital market side, where a lot of it is centered around our partnership with Murex. Fenixys also happens to be a partner, and we are very strong in Asia and Middle East, and Fenixys is very strong in Europe and the Middle East, right? So we sort of bring that together into a global capital markets capability, right?
Sure.
On your question around,
Yeah, two questions. Margins of Fenixys, will it be EPS accretive? And two, what is the current contribution of Europe and how much would it go up to?
So Europe for us right now is near zero, right? So we had a stated strategic plan at the beginning of the year to expand into Europe this year. I think with this acquisition, we really strengthened that overall. So next year, it should be a pretty material percentage. I think we should be, for the next 2 years, nudging to double digits. Margins, yes, it would be EPS accretive. Fenixys is a profitable firm. We don't really infuse any capital into the business right now. Over time, we believe over the next 18 months, we will be able to drive the Fenixys business to our enterprise margin levels, right, which is at 20% plus EBITDA levels.
That was exactly what I was going to ask you, Ashish. This is a fairly competitive place. We just heard from NSE, their NSE IT company has been spun off into New Summit, and they offer a lot of capital market products. NASDAQ has its own software unit, which provides capital market products. So Fenixys margins would be under pressure because of competition. Does it come up to Orient Pro's level at all in terms of margins?
That's a great question, Lata. I think the way to look at it is this. One is Fenixys standalone as a pure services player existing out there. Second is Orient Pro with its enterprise products, with its IP-led offerings, and then extending the Fenixys services capability to Orient Pro stack as well. Right, so most of the operating leverage for us comes from expansion on the product side. I think on the services side as well, we believe this is a highly specialized offering, right, together with our capabilities offshore, you can create large global, dual shore, multi-shore capabilities for the large global banks. So I think even on the services side, we feel very good about being able to get to the services level, because this is not commoditized services, this is not software development, this is around services around very specialized IP. I think we can maintain margins there. And then as we extend the Orient Pro's product stack and build out our services capability in Europe, I believe that will really bring us up both growth levels as well as margin levels to our enterprise levels.
So Ashish, just to complete this point, margins for Finexis will come up to 20% in how many quarters?
I think over the next 18 months, we should be able to, get the growth numbers up to Orient Pro kind of levels, which is 30% odd. And we should be able to get the margins up to the enterprise levels.
Okay.
A word on your
just a further question on an outlook as well. You earlier have told us that for this year FY25, I think the revenue guidance is 30 to 35%, EBITDA guidance is 20 to 22%. So I want a broader view now, and you're very bullish on your US business. As we go forward, what have you started hearing from clients? Because we'll have the new dispensation come in, Donald Trump as well. And what would be your mix between onshore and offsite right now? And are you prepared if there is a sort of, anything on immigration, on H-1B visas? What are you looking out for, considering that you're quite optimistic on the US outlook?
Yeah, so look, the 30 to 35% guidance for the year, we are very firm on. We will land in that band, probably slightly upward bias. The US will climb up to almost double-digit percentage level on the overall business. So I think that you're totally right. We are very bullish on the growth that we're seeing in the US. We are not that affected by things like immigration policies and all, because we are a products vendor. In US, we exist through our presence on the transit payment side. We are a technology provider to closed loop to open loop transformations happening across US. And second is on the product side, where we provide payments technology, banking technology to certain partners, right? So I think we're not very resource intensive. I think, overall, we have a product stack that's now more or less proven to be very, very strong and top tier in the world. We are leaders in many of those spaces in Asia. So it's a question of organically expanding into more markets, whether it's Europe or US, and proving that same sort of leadership in those markets, right? We feel, and these are all, products which are proven with large banks, across Asia, across US now, right? So we feel very good about being able to expand. I don't think we'll be affected by things like immigration policies and all, to the extent that, to let's say impact a services vendor. But yes, I mean, we will navigate things as they come along. We feel very good about US.
All right. It's good to hear businessmen who feel good about the business. Thank you very much, Ashish. Precisely the kind of good news we want to hear as we coast into the new year. And here's wishing you as well a very happy 2025.
Happy holidays. Thank you.
Well, that's the word from Orient Pro. We have to take a quick break, but we're going to be back. We will have our technical experts joining us to give us their technical strategies as well. Sudarshan and Mitesh will be with us.
सुबह से चल रही है जब प्रेस कॉन्फ्रेंस फाइनल नहीं हो। ईवी व्हीकल्स के ऊपर ये एब्सोल्युटली क्लियरली मेंशन करना चाहिए कि नया व्हीकल्स ईवी खरीदने में 5% है। Am I right? 5%। पुराने ईवी व्हीकल्स खरीदने का विषय ही आया है। We want to promote EV. GST Council is in favor of EV. Nobody is stopping people from buying EV. मगर used EV खरीदने के समय एक व्यक्ति दूसरे व्यक्ति को सेल करेगा तो कोई नहीं है उसमें। The same thing as 5%. No GST. Sorry. Used EV. An individual selling to another individual, no GST. But if a company has bought EV, or if there is a regular registered used car seller who buys EV, does some propping up in it, adds value to it and then sells it. It was felt by states and it was felt by auto and many others also that the EV market is not so saturated as yet that used cars will come. And category mein, therefore used cars category mein EV bhi hai, petrol vehicle bhi hai, diesel vehicle bhi hai. And I like to highlight this point to you. हमारी तरफ से केंद्र सरकार, गवर्नमेंट ऑफ इंडिया विच इज 1/3 मेंबर ऑफ द GST, हमारी तरफ से एजेंडा में सेल ऑफ ओल्ड एंड यूज्ड EV व्हीकल्स को 12 से 5 तक ले आने के लिए we had suggested. But when the discussions happened, it is on that margin, the margin value between purchased price and resale price. 12 लाख में खरीदा, 9 लाख में बेच रहे हैं सेकेंड हैंड यूज्ड व्हीकल के नाम पर. On the margin is only this 18% is being put, as would be for any used car. So it is on the margin, not on the entire amount at which the car is being sold. So EV vehicle का हमारे recommendation तो 5 को ले आओ उसको भी जैसे EV का नया vehicle का rate है. मगर after विस्तार discussion, the marginal value.
All right, welcome back. So we've given you lots of fundamental cues to chew upon. Let's get down to technicals then. We have Mitesh Thakkar as well as Sudarshan Sakhani joining in. Gentlemen, morning. So, you know, we were joking and debating how this is a false rally or a Santa rally. But whatever it is, I think traders will just heave a sigh of relief. At least we had some pullback on the Nifty yesterday. So let me ask you, how much credence and weightage are you giving to yesterday's pullback and how would you trade today? Mitesh, good morning.
Good morning, Subi. So I think, one, we were very oversold day before yesterday and we had a pullback. Now, I don't see any signs of a reversal or an uptrend or up move starting. So my belief is that maybe in the short term, the decline is arrested and therefore the market might chop around broadly, between 23,600 to about 23,800, 850 zones. I think that should be 250 point kind of range for the next few days. I still believe that there is a significantly higher chance of us eventually breaking down. So the idea is that you try to buy near the range, keep a very tight stop loss, try to book profits near the upper end of the range, which is around 23,800, 820 levels, even explore shorting over there.
Okay.
Sorry, go ahead.
Sudarshan, good morning. What would you do? Short this rally?
Hey, good morning. And no, Lata, yesterday I said that we could be heading for a Santa Claus rally. Could be. And yesterday was a good day. Our levels of 24,600 were not touched. So there was a buying opportunity intraday also. I was saying that buying opportunity continues to exist. So see, Lata, suppose a trend is starting again on the upside, it won't happen in a day. It will take its own time. So far as our levels are protected, the levels below which we say it's not working, that's 23,600 for the time being. So far as that is protected, I would be long, look to buy on dips and let the market takes its own rhythm. I think in a few days, we'll see higher levels.
Let's get to the top stock ideas then for the day, Sudarshan.
Sure. Glenmark is a buying opportunity. Stop under 1535. And from the similar sector, Apollo Hospitals, not exactly similar, roughly. That's a buy with a stop under 7180. We discussed this yesterday also that pharma does its own thing. The market is down. Suddenly pharma stocks have good news and they keep on rallying. That phase continues. So Glenmark, Apollo Hospital, my only intraday short is Polycab, where something is going on. It's an intraday short with a stop above 70. I'm sorry, I'm missing the stop. Okay. So we'll just say it's an intraday short. And Manappuram is a buy. Yes, Polycab. Okay. And Manappuram is my third buying idea with a stop under 183. So there are primarily we should focus on the buys, Glenmark, Apollo Hospital and Manappuram.
Okay, got it, Sudarshan. So you're still more inclined towards some buying ideas rather than selling. But Mitesh was telling us that he's looking to short the index at around 23,800. Mitesh, let's come down to stocks as well. Selling or buying or a mix of both?
I have a mix of both, Surabhi. So I have a sell on MCX if it breaks 6,300. Take a stop at 63.70. Look for targets of 61.50. Hoodco is a sell on a mild bounce back around 238, 240 range. Sell with a stop at 245 half. Look for targets of 225. And on the buying side is Dabur, which I would recommend buying with a stop at 499 for targets of 528, and ITC. If it starts getting past yesterday's high of 478, buy with a 5-6 point kind of a stop and look for a target of 492.
Okay. Thank you very much for that, gentlemen. We are going to come back to you with more trading ideas, or 4 more trading ideas as we get closer to trade. For the moment, it's a break. We still have Hemang Jani with us. We're going to come back with the pre-opening trades, and we will also be joined by Shirish Pardeshi of Centrum Broking. He's going to talk to us about the key trends in the FMCG space.
ये 18% डाला जा रहा है जैसे कि हर यूज्ड व्हीकल का है. So more can be asked as question. It is not a blind application of 18%. It is more thoughtfully done. Our recommendation was for 5%, but post that the discussions have resulted in this. The concept note is got to be studied. In principle, the council has accepted it. Once the concept note is studied in detail, then again it will be presented before the GST Council. Once they agree on simplifying as per the note, the registration process for small companies, then the amendment will have to be done in the law. So that is one thing which I referred. Training partners, skill training partners of the National Skill Development Council, उनको जो approved partners है, not everybody, जो approved partners है, उनको GST exempt करने के लिए निर्णय हुआ है, मगर notification आएगा बाद में. Payment aggregators who do less than 2,000 rupees payment are eligible for exemption. But let us understand, and I provide this clarification now, that this exemption does not cover payment gateways and other fintech services which do not involve settlement of funds. So payment aggregators alone, I'm talking about, who do less than 2,000 rupees will have that exemption provided. Another important decision, there are several which will be covered in detail in your press note, which all of you all will receive.
Welcome back. This is Open Exchange coming to you live from the CNBC-TV18 Motilal Oswal studio. And as promised, we have Shirish Pardeshi with us to shed spotlight on the FMCG space. He's from Centrum, of course. Centrum is positive on the FMCG space. Shirish, good morning, and thank you very much indeed for joining us. I'll just take a minute to speak about the pre-opening trades. The pre-opening rates are opening absolutely randomly. The Nifty is in the red and the Sensex in the green. So we'll come back to it in just a bit. Shirish, happy 2025 to you. Thank you for joining us. Why are you all positive on FMCG? We heard every one of them almost, grumbling away. We had data from Godrej. We had Marico as well. Not very happy with the kind of sales data they had in earlier Q3. What makes you positive?
Thank you, Lata, having me on the show. There are 3 trends which at this point of time, if you look at on the ground, starting from June, July onwards, the syndicated data was showing that the rural recovery was on the card. That is what is visible. Please keep in mind that about 52% of volume comes from rural markets, and these all are firing well. Second, barring apart the weather conditions, people might have become little short-term negative because the season, the winter is not the way it was panned out. But if you look at the agriculture data, whether it is the Kharif crop output or Rabi, I think my view is that the rural will still continue to do better. Now, the issue is that when we look at the urban consumption is inching lower than the expectation. There are two reasons there. When you look at the MFI data, the microfinance data collection, or you look at the earning growth, which has been tapering down, no wonder the leverage of the urban has gone up, and these consumers are having a pinch. The third point which is there, which is important, is that how these companies are managing the channel conflict. If you look at the QS, the quick commerce segment is firing well, the modern trade is doing well, while the general trade, the traditional trade is struggling. Now, these channel conflicts are actually telling us the primary billing or the company billing is happening at the lower side, while the secondaries are having better. Look, the Indian consumers are always been value for money, and they will hunt and bargain whichever channel which is giving them the benefit of price.
Okay.
No, but Mr. Pardeshi, the point I think for the market is that do you want to be in stocks which are going to give you low single digit to maybe sort of mid single digit kind of growth, which is what FMCG has been doing, considering the valuations have been very, very rich historically. You do have a positive view on, I think, companies like Colgate and maybe, I think, even an ad on HUL. So tell us the buy thesis over there. What do you see ahead? What kind of volume growth in 2025? I mean, FY26, let's say.
See, if you look at last 3 to 4 quarters, this volume growth was being challenged. However, Colgate has proven that whatever inputs in terms of marketing, on-ground activities, distribution, sampling, these all are reflecting into the very strong volume growth. Now, the question is that the street is not giving the benefit, saying that the volume growth is low to high single digit and the value growth is missing. But you have to also keep in mind that the inflation is inching up and there could be a price which is there. Historically, my experience says that 2/3 volume, 1/3 price is the right summation, which is better for the consumer companies. However, at this point of time, the price inflation, which has just started inching up, and if you look at our channel check says that most of the companies has implemented around 3-4% price increases. So effect of this will happen. Now, the question is that if you want me to answer the next year, what kind of volume growth we expect, you can expect a 10-year or 20 years average, which is in the range of about 4 to 5%.
Okay, just want to interrupt the stock discussion for a minute. The markets, stock markets still are not giving us much of a trend. The Nifty is kind of blinking flat line to red and the Sensex is up 0.25%. So I won't come to shares since things are so undecided, but what's clearly traded, the traded rate on the rupee is clearly indicating continued weakness. It's now gone to 85.13.14. We closed yesterday at about 11.12, 85.11.12. So the first trades have been for a more expensive dollar. And that is perhaps to be expected because we did see the dollar index move back up over the 108 mark. So this shouldn't come as too much of a surprise. Shirish, are your buys only HUL and Colgate?
No, our buys are Britannia and Emami. The reason is that Emami, if you look at the 10-year average or even 5-year average, the 1-year forward was in the range of about 30-32, while Emami is trading at maybe 23-24 times. So there is a value which is there. However, the interest is that if the season is expected to pan out the way next 15 days, if the temperature falls, I think Emami should do well. What is more important is that all the issues around the company's pledge and other things which are sorted out. And I think it's one of the better company which has been delivering a very strong high operating margins. So in that context, there is a value pick which I would say. Similarly, when you look at Britannia also, which is trading its lower than 5 years and 10 years average multiple. However, what is more important at this point of time, the company in the previous con call has already said that there is price increases or the grammage reduction which will happen. We'll have to wait and watch. However, these are the things which are in the short term. And looking at the multiple, it looks attractive at this price.
Okay. What about ITC? The stock hasn't done too much despite the news about the hotel demerger. Is there any value in ITC at current levels or any arbitrage?
I would say that let's wait because we are in that phase. Another 15-20 days, we will have budget blooms and things will start inching up. However, on ground, what is important is that if the thesis is that the rural recovery is on the card, I think I would expect the cigarette business for ITC should do well. However, we have to also keep in mind that there is an incremental competition which is gearing up in the cigarette segment. So one, there are two short-term challenges. One is the budget, what will happen and what are the kind of duty changes and the excise changes which will happen. And second, I think the industry has not taken a very strong price increases, and there's no precedence unless the excise has gone up and the industry has taken standalone price increases. So I think these are the two interlinked issues which will get a clarity maybe another a month or so.
Okay. Thanks a lot for that, Shirish. Pleasure speaking with you and hope you have a very good 2025.
Thank you.
Well, that's the word coming in on the FMCG space from Centrum. A buy on Emami is what they're rooting for. Let's just get back to the markets for a jiffy. The Sensex is still holding a bit in the green. Sudarshan, any buys now after the first few minutes of pre-open trading?
Well, my pick would be to buy Manappuram with a stop under 183. Broadly, financials should be a little more cheerful today.
Okay, financials more cheerful. Mitesh, anything you've noticed, any buys in addition to the list you gave us?
I'll go with a buy on Dabur, I think. Targets of 528, 530 in the short.
Okay. It's very, very quiet, by the way, on the pre-open screens. There's not much moving. Adani Enterprises, BEL, Adani Ports, some of these stocks are up and about. That's pretty much it. And
if I may interrupt for a minute. Since the rupee is now gone to 85.15, you know, the first 5 minutes of trade over there and the dollar has gotten that much more expensive. Sudarshan, is there anything in the IT space that you would buy? A weak rupee? Okay, I think we'll come to Sudarshan in a minute. Mitesh, anything in the IT space that would count as a buy?
See, IT, in fact, Lata was doing very well a couple of days back. I think it's just got corrective, towards last weekend. So I think I'm waiting for this pullback correction to play out and then buy into IT stocks.
Okay, all right. Mitesh, thanks very much. Let's see how the market opens out. We'll come back to you during the course of the day to take stock. Let's look at some of the stocks that are in news. Vinny is looking at Biocon today. There's a drug approval that the company has received, I think, in the EU. Very morning. Tell us more.
Good morning. So what we're seeing coming in for Biocon, positive news. One, the company and its European partner have actually received this DCP. What is DCP? It's a decentralized procedure approval. And this is in the European markets for that complex formulation, which is liraglutide. Now, the company has spoken about this as well. This is a big opportunity, the GLP-1 opportunity that we talk for most of the companies. And Biocon too itself has highlighted this in Q2 about this opportunity. Now, finally, they've gotten this approval for the European Union market. So keeping an eye on this one. What is this? Now, this is an approval for the generic version of Victoza, which is a treatment, which is a drug used for treatment of type 2 diabetes. And this is also used in weight management, weight loss as well, which everyone has been using it for some time. So that is a big market that is shaping up across the globe. And that is why a big positive for Biocon. They said that this is a big opportunity for them in the second half of the year. They were expecting these launches to take place from now on till FY26 as a big opportunity. And that is what is happening right now with the liraglutide approval coming in, at least in the European markets. They are already in the pipeline in the US markets. So let's wait out for that as well.
Okay, thank you very much for that, Vinny. So a diabetes control generic version and a diet control generic version, both of which hopefully will make money for Biocon. They've got initial approvals. Now, here's some data which is a little disturbing and telling us that the urban consumption slowdown has not gone away. Sudarshan is here. He has compiled the latest registration data from the Vahan portal. Sudarshan, tell us, what did you pick up?
Morning, Lata. So we have tried to see if there is an improvement in Vahan registration data after we covered last week. The answer is no. Yes, there is a minor pickup. Last week when we had covered, after 2 weeks, total registration was down nearly 25%. Now it's down 20%. And which segment is driving the most? It remains the two-wheeler segment. So overall registration is down 19%. Even two-wheeler segment registration is down 20%. Two segments that are doing much better than other segments, and those segments are electric vehicle and CNG. Electric vehicle registration has increased 9% and CNG segment also has increased 8%. For passenger vehicles, last week for the 2 weeks, registration was down 3%. Now it has turned flat, so there is a minor positive here also. So overall registrations from December 1 to 24 in 2024 is it 13.87 lakh units against total registration in 2023, it was 16.37 lakh units. So in the last 1 week, there is a minor pickup, but concerns remain.
Okay, minor pickup, but year on year, we are still not doing as well as December of 2023 is what Sudarshan is telling us. That's a bit worrisome. But perhaps if there is a pickup in the third week, it will be better off in the fourth week. What's not looking good is the credit card data that we've got from SBI cards. Abhishek had explained to us earlier. He's here to remind us of the SBI card numbers vis-a-vis industry credit card numbers. Tell us, Abhishek.
Well, Lata, to begin with, last year in November, the Diwali was there, and in this year, October, Diwali was there. So, YOY and month on month may not look a comparable parameter for growth. However, the SBI card has lost market share, which is a key worry. So, industry-wide, the card issuances is up 11.7% YOY and about 0.3% month on month. Spends are up 5.5% YOY and down about 16% month on month. Average ticket size is down 5.7% YOY and about 16.5% month on month. The card issuances at SBI card that's crossed the 2 crore mark now at grown at 9.8% YOY and 1.2% month on month. Spends are down 19.7% on a YOY basis and about 20.9% month on month. So average ticket size is down nearly 27% YOY and about 22% month on month. The SBI card market share with respect to card issuances has been at 18.7% when compared to 19% YOY and about 18.5% on a month-on-month basis. So month-on-month card issuances market share has increased. However, the spends market share has declined massively to 14.9% when compared to 19.5% YOY and about 15.8% on a month-on-month basis. Back to you.
All right. Yes, Abhishek, thanks very much. SBI card has found itself in slightly troubled waters, lower growth. Not new, it's been happening for the past couple of months now. Anyway, let's quickly take stock of Asia as well as where we stand as we're gearing up for market open. Asia, remember, a lot of the markets they've got very thin trade. So Hong Kong, for instance, is showing you a near 1.2% gain. But guess what? The market's about to shut down. I think 9:30 IST is when Hong Kong is already off for its Christmas holiday. Likewise, Singapore. Australia is already shut for the day. So the volumes are thin, but the color has been green across most of the regional markets. That brings us to the Nifty here. Again, the starting would be about 15 points higher. Remember, the challenge for the market was the 200 DMA. Intraday, there was an attempt yesterday to cross above that mark, but it wasn't quite successful. Let's see if the fact that most of the FPIs are away, and maybe if we just maybe we don't get the bulk of that selling, whether we try and take out the 200 DMA at least today. So as we're gearing up for it, things are very quiet. There are no major sectoral moves or trends. It'll be down to individual stocks and, of course, what traders latch on to. So here we go. The bell has gone in. Starting with some moves on Adani Enterprises, about 1% higher. There is BEL, NTPC, Coal India. Some of the PSUs are starting positive. There's a Nestle, which is up and about. We were just discussing FMCG stocks with the analyst earlier at Centrum. ICICI Bank, SBI, very minor green ticks. But the Nifty is now blinking red as well. So let's see what's happening on the other end. Power Grid, Cipla, Sun Pharma, Apollo Hospitals. These are stocks on the way down. There are some of the metal names which were shining bright yesterday. There's some profit taking there. JSW Steel, Tata Steel. These are stocks on the lower side. IT actually is not really responding too much to the rupees moves or to the Nasdaq's gain. If you see, Infosys is up about 0.3%. TCS is actually managing a 0.3% gain now. Wipro is down. Tech Mahindra is absolutely flat for the time being. I'll handed over with Bharti Airtel. Remember all this chatter around TRAI's recommendation? Right now, the stocks seem to be taking it in its stride. No concerns there. About 0.6% up on Bharti for now. Extremely quiet. 2-3 points here and there around the flat.
I've never seen a quieter market. I mean, there's nothing that has moved more than 0.5%, red or green.
Yeah. So just a word on Bharti Airtel. Yesterday, during market hours, the TRAI released the October subscriber data. Now, the industry has been losing subscribers since July when the tariff hike, or 15 to 20% tariff hike was effected. So from July to even the month of October, the industry has lost subscribers on an aggregate basis, but the pace of subscriber addition has slowed down. But in the month of October, Bharti added subscribers, while Jio and Vodafone Idea lost subscribers. So the thing is, this came out during market hours, but on the sidelines, it's it's a positive, right? It's incrementally positive. That in the month of October, when the industry lost, Bharti had managed to add about 2 million subscribers.
I mean, even a couple of days before that, they paid back their spectrum debt to the government. So there has been a string of positive news. Okay, now we are seeing more than 1% moves in one odd quarters. One of them is Sedulity, the healthcare technology company. That one's up about 3.84%. IGL is up about 1.7%. They have, I think, taken some price hikes, and that may be helping them. But the number of stocks in the red are outweighing the number of greens at this point in time. Okay, no, it's still the other way around. Advances are higher. But the mid-caps have moved into the red, which is what gave me the fear that maybe even in terms of advanced declines, it would be red. Mid-caps just marginally in the red, but still in the red for the record. The Nifty is blinking red and green. But to be fair, we shouldn't draw any trends because just about everything is moving in very, very narrow range. The market is crying out. It's holiday time, it's party time, and we don't want to concentrate on work. Well, Tata Motors now moving into the green.
Tata Investments. Remember, there's a money control report that Tata Capital is moving closer to an IPO. Look at what's happening on Tata Investments this morning. That's Motors. The other one, Tata Investments is up almost 5-6%.
Okay, it's this PG Electroplast, the stock that we were talking about earlier. So Hormus has just shared. Look at the return since 2021. In 2021, the stock price was up 470%. In 2022, 40%. In 2023, 111%. And this year, it's up more than 100%. So it's 4 solid years on the trot for PG Electroplast. On Sagility, there is a JP Morgan note where they've initiated coverage with an overweight rating, and their target price has been set at 54 rupees. And there's also Greaves Cotton, which has been pushing higher because its subsidiary, its EV two-wheeler subsidiary, the manufacturer of the Ampere brand of e-scooters, has filed a DRHP. They're looking to raise 1,000 crore rupees via the IPO. And this 1,000 crore rupees that the IPO is looking to raise, the subsidiary, there is a fresh issue, and there's also an offer for sale where Greaves Cotton, the parent company, will be selling some shares. So it's monetization for Greaves Cotton, the company. HG Infra, there is some news. The stock is up. MTNL, where they've offered voluntary retirement BRS for all employees above the age of 45 rupees, is higher. MobiKwik continues to run this week, up 11%. So it's very, very strong on MobiKwik. Ola Electric in the green too. On the way down, Vedanta has gone ex-dividend by 8.5 rupees per share. That explains the red tick on Vedanta. Zomato, Easy Trip, NMDC Sale are some of the losers. But let's welcome Rahul Arora, CEO of Nirmal Bang Equities. He's with us in the show. Hi.
Morning.
Feels like old times. Feels like he's here to anchor.
Yeah, no, I was hearing Lata saying that it's Christmas time. I was like, what are we doing here?
And then we all wishing each other happy holidays. That's the part that I really don't get.
The boys have run away. Why don't you step in as an anchor?
Well, I can try. It's been years, but...
No, you better answer questions rather than ask them, Rahul. Well, first up, we've seen the markets off 10% from the highs, or nearly that, from the 26,200 highs. Are you in a stock picking mode at this point in time?
So first off, morning, and thank you for having me, Lata. I think one thing that was clear, Lata, at the highest point of this rally, which was somewhere around 26,500, 27,000, that the market was very overheated. I think if we looked at most of the stocks under our coverage, they were trading anywhere between 1.5 to 2.5 standard deviation over 3 and 5 year mean. So I think nobody would have questioned going into the result season, that is the last result season, that the market was overheated.
Yeah.
Add to that, you had one of the worst result seasons in recent memory, where at least at our brokerage house, 80% of the stocks either were held on estimates or downgraded. So you just had about 20% going in. And then, of course, subsequently, the shocker of a GDP number that sort of came out. So I think, obviously, sentiment has not been the best concluding this year. I think the next 40-45 days will be very important. We kickstart an earnings season in a couple of weeks. We have a new president in the United States, and we've recently put out a report on, what tariff implications could mean for global trade. And then, we have the union budget on the 1st of February, and then, of course, the RBI policy. So I think the next 45 days or so will be very crucial for the market. It's going to be very news heavy. But I think if I was to look at 2025 in totality, Lata, I think 24,000 will be a bit of a pivot point for the market. Plus minus 10% is how we're probably going to, spend the year. I think the recent high of about 26,500, 27,000 will be the peak for next year. I don't see the Nifty falling more than, say 21, 22,000. So it's going to be a broad range. But as you rightly pointed out, Lata, that doesn't mean stock picking opportunities don't arise. Even right now, there are enough and more opportunities that are being thrown up. But I think as we enter the next year, we should have slightly tempered expectations, because let's not forget the last 5 years have seen the Nifty go from 7,500 to 27,500. So I think to some level, having some measured expectations is not a bad way to enter 2025.
And what are the themes that will dominate the narrative next year?
So I think this is probably a consensus call that you've heard, Rima, but I think the biggest overweight is BFSI. I think, unfortunately, the elephant hasn't moved. I think FY26 is going to be a relatively softish year, because I was looking at, we've just put out a very detailed thematic on deposit growth and looked at how it's panned out from independence, and when credit and deposit growth, kind of converges, and it's kind of converged right now. So FY26 may be a bit of a challenging year. An odd ICICI bank may outperform, an odd federal bank may outperform, but by and large, you're probably looking at 10 to 13% kind of NI and PAT growth for most banks this year. But I think as the year wears on and you start factoring in FY27 earnings, most banks are trading between 1.5 to 2.5 times price to book. That's nowhere close to where they have traded at their peaks, where they were trading between 2.5 to 3.5, and some banks even 4. I think if you get into a situation where you're looking at 15% plus kind of operating profit growth, BFSI will come back sort of to lead. The one sector I would completely avoid would be consumer staples, I think, at this point in time. So I think, any money that you have towards consumer staples can be moved here. And I think that the joker in the pack, as I was alluding to Lata in my first answer, could be IT services. I know it's had a good run, but I think if the US, the one call everyone in the world has got wrong for the last 2 years is the US recession. People have been writing about it, and not just sell side, buy side consulting firms, BCG, McKinsey. I mean, you pick up any, pretty much everyone's got it wrong. And I think the resilience of the US economy has helped. I think, and the last probably place, I think, so BFSI, IT, and I think consumer discretionary. I think these will still be the three themes to play out, and probably go underweight on consumer staples. That would probably be my broad positioning. And I think because government capex is going to be in the center of everything as we sort of approach the budget, I still think manufacturing and capital goods related sectors could do well, albeit valuations are not really cheap. But I think at least from a growth perspective, that sector could hold out.
So, Rahul, the thing is, for large cap BFSI and for IT to do well, these foreigners, they have to stop selling 90,000, 30,000, 40,000 crores worth of Indian equity on a monthly basis. And that goes back to the other point that you're making, this extreme strength in the US economy and the fact that this great buy home, buy go home, buy America trade, that's been the hallmark of the end of 2024. But what do you hear in terms of the chatter when you talk to your sort of circle around you? In terms of the extent of this FPI selling, can we hope for it to reduce at least somewhat?
No, I think some clarity may emerge, Surbi. And I think, when we had done Editors Roundtable a few weeks back, I had said that, the only economy that I see India competing for capital with in 2025 is the United States. I think on a relative basis, the fact that China still feels the need to stimulate its economy, and see, a lot of capacities have moved to India on the manufacturing side. I don't think we're living under any delusion that China Plus One was going to pay out in a magnanimously big way and everyone's going to move manufacturing here. It's played out in a limited way. You've seen that in durables, you've seen that in electricals. I mean, someone like a Vivo announcing such a big deal with Dixon just about a week, 10 days back. So that process is on, I think. You are competing on a manufacturing level with something like a Vietnam, which is allowing 10-year tax holidays. That is something that India hasn't gone down the road and done yet. But I think from a straight FII perspective, you're probably competing with the US. On an FDI perspective, maybe Vietnam can be added. But my sense is, Survi, I think if, you have relative stability in the US markets from here on, I think the fact that Trump has come back, and I think, if you go back in history and as far back as you want, typically a democratic president has always coincided with global conflict. It's quite interesting. And a Republican president has actually coincided with stock markets doing well, partly because, most of the banks on Wall Street even today, are pro-Republican and are Jews. And I think, that's why they particularly take a stand on Israel as well. So I think it's going to be a pro-market government. And I think if that is the case, I think even if India manages to grow at 6%, at some stage, I think it is just a pro-Trump trade that's taking it there. Sorry for that tongue twister. But I think that's probably what it is. Obviously, the rupee has also seen a resultant impact of that. But I'll go back to a very small anecdote and I'll conclude my answer with this, Surbi. I think, in 2008, post-Lehman, I remember that year, FIs had pulled out about $20 billion from Korea, and the Kospi was still up 10%. And we used to ask ourselves, when will India reach that level where FIs would sell and the markets would still be positive? Given the selling numbers that you've seen, if we didn't have a 70 lakh crore asset management industry in India, the Nifty would probably be at 15,000 or even lower. So I think there is that absorption part. Of course, the other thing that's hurt our markets from an absolute standpoint is that a lot of IPOs have come through. So there has been some liquidity that's moved from the secondary market to the primary market. There have been some very big ticket IPOs. So that's also put some sort of a cap. But I think all of this will find its, the water will find its level. And I would not be surprised at some stage if we made a move towards the previous heights.
Rahul, stocks. You have BFSI and you have consumer discretionaries and IT. Which ones in these three sectors? Okay,
so let me try and make a model portfolio for you. I think if you look at banks, I think in the large caps, we'd probably stick with SBI and HDFC Bank. I think those would
not
be...
ICICI.
ICICI Bank is a consensus call, Lata, and I think it's trading at 3 times price to book. So I think on a relative basis, the delta...
HDFC Bank.
I think, is probably where it's at. I think you could look at an AU and a Federal, I think, in the mid caps. I think AU will probably grow at about 25% plus. Their cost to income ratio is going to drop down dramatically, which is going to aid profitability. So that's on BFSI. I think we can add ICICI approved life insurance to that. I think that would probably be. And one stock that you probably don't discuss very often, Lata, would be HUDCO, Housing Urban Development Corporation. That's sort of on the BFSI side. On the consumer discretionary side, since we're talking Christmas, let's start with an alcohol stock, United Spirits. We love that name. I think there have been a lot of regulatory changes in Karnataka, a lot of route to market changes, which could potentially give us an upside risk to our numbers by about 15%. So I think UNSP could be one, Chalet Hotels could be another, and Westlife could be a third. I think if you're playing the consumer discretionary basket, and like I was talking about manufacturing a little earlier, I think we'd play defense through some names like, say, Hindustan Aeronautics and BEML. I think those are some of the names that sort of come to mind immediately. Apart from that, I think it's very stock specific, Lata. I think we'd probably stick with LTIM and Coforge. I think Coforge will still give you about a 20% growth in the next financial year. I think there are still some levers. In fact, we recently met the management and upgraded our numbers. So I think, and I think if you want to go down the value chain, Rima, I think Birlasoft could be another one. I think it's been a bit challenging, but I'm not sure how many of these names are actively discussed on the channel. But these are, you need to find new ideas to give people all the time. But I think those are some of the names that we would look at in IT. Coforge would be the top bet, followed by LTIM and then Birlasoft.
Coforge has given a fantastic return of 45% CAGR over the last 5 years.
Let me put it into perspective, Rima. When we went into the lockdown, Persistent went in at 400 and came out at 3,600. So it was a 9-bagger in 2 years. So past performance...
Persistent's 5 year CAGR is 80%.
Exactly. So I think if you are let me give you one of the best examples that I love talking about is Dixon Technologies. I think if you look back over the last 10 years, the company has grown its sales, operating profit and PAT compounded by 35 to 40%, at a 35-40% return on capital employed and a nearly 4% EBITDA margin, and look at what's happened to the stock. I think if you're able to give those growths, I often call Dixon the Nvidia of India because, the way it compounds, the valuations don't look out of whack when your EPS is growing at that level. So, there are opportunities.
So there are opportunities. So let's end with the consumer because, that's a sector that historically you've always looked at so closely. And I know that you said that staples are not a place that you'll venture in. And I think the reasons are very obvious. When 3-4% kind of growth, does the market really want to go there? But at the same time, India is consuming in very different ways. I mean, the hotel stocks, the spends over there, travel, tourism, the discretionary part of it. Any stock on consumption which kind of tries, or maybe a Zomato, Swiggy, I don't know, anything that tries to capture where the money is being spent, because it's being spent. Look at all around us.
So, Survi, at your CNBC event just a few weeks back, you all hosted the Swiggy CEO on the day of his listing. And I remember the Sensex was down 1,500 points that day, but Swiggy was up 20%. It was remarkable that a company that was making 2,500 crore losses was having a 20% up move on a day when the Sensex was down. I think a lot of the trade has moved to aggregators. You've seen Zomato move from 40 to whatever it is today. You've seen that happen in Policy Bazaar as well. But I think, Survi, the way I would look at consumption today is, as I was talking about the Nifty, look at 5% volume growth as the mean. At bad times, this will drop to 2 to 3%, maybe even 1%. And at good times, about 7-8%. You combine a little bit of pricing and premiumization and you get about a 10-11% kind of growth. Now, at that, do you want to be paying 45-50 times valuation is my only limited point. And I would not be comfortable doing that very clearly. I think the only FMCG consumer staples names I would probably look at is where there is a food component to it. I think that could be an interesting one. So maybe something like a Britannia, Tata Consumer and a Nestle. I think those could be interesting names to look at, but predominantly hardcore consumer staples names like, say, a Lever or a Godrej. And you've seen the commentary around Godrej. I mean, it was a shocker. I think just those I would probably still want to, stay away from. And, as I was talking to Lata earlier, I've already listed some of the consumer discretionary names that we like. But Swiggy looks like an interesting one. I know one of my competitors has put out a note with a 700-750 price target.
Two of them, actually. I think there are two foreign brokers, but not words of 700.
So
JP and CLSA.
And I think a lot of it is quick commerce related. And I think that looks like a very, very interesting space. I think the one thing that's changed for a lot of these companies is when you go back to when these companies started listing, and I remember doing a show with Lata at that point, I think in the peak of, when these new gen companies were listing, terms like price to sales, client addition, GMB were the big thing. I think now they have understood the business. They're talking about, ROCs, they're talking about return to profitability, they're talking about cash flows, and that's why you're seeing these stocks re-rate. So I think that sanity has creeped into that side of the business that, theek hai, mera itna loss hai, but let me at least guide towards profitability and take the investors along. And I think that's what people are paying for.
Every time I click buy on the cart, I just look at the 10 rupee platform fee, the small cart fee, and all of those fees, and I still click buy, right? I mean, that's a habitual change.
So what I do is I see like, delivery is being charged. I need to spend a little bit more to save on the delivery. So every time I have to save that, 20, 30 rupees, I have spent like 200 rupees.
But thank you.
Thank you, Rahul. We have to call it a day because we have a very big company joining us. Maybe you want to listen to that conversation. We're going to be joined by Jairam Sampath of Keynes Technology in just a minute after this break. Have a brilliant 2025 yourself.
You also, Lata ma'am. Thank you so much. And to your entire team. Thank you.
Happy New Year. All right. Well, let's take that break. Come back on the other side and we'll have the management of Keynes Technologies with us.
That no GST is payable on the penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with loan terms. This will be very important for small businesses. So I repeat it. The Council has desired that we issue a clarification that no GST is payable on the penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with terms, loan terms. There are three things on which, even as the GST Council was busy deliberating, from the morning.
Welcome back. The market has been holding up, not too many big dramatic moves, but the color is red now. That you have to take on board. About 0.4% down on the Nifty. So let's see if the bulls manage to come in at some point in time. But as we promised, let's move on to some of the companies that have had a rocking and roaring 2024. And Keynes Technologies is definitely one such stock. It's been one of the best performers of the year, surging over 170% in the last 12-odd months. Well, let's talk about the opportunities ahead. Yes, there's a lot of exuberance around the EMS space. There is the PLI opportunity as well. So what does 2025 have in store? We have Jairam Sampath, Chief Financial Officer at Keynes Technologies, joining in. Mr. Sampath, thanks for being with us. Season's greetings to you, and we really appreciate all the conversations that we've had with you through the course of the year. But you tell us that now let's talk FY25, and it's been a good year with Keynes, offering a lot of new tie-ups, expanding. So as you're looking to close out the year, what is the overall revenue growth, and what is the visibility in terms of all the newer projects that you're in right now?
Hey, good morning to you and to all the viewers. Season's greetings. Yeah, this year has been a good, successful year because despite half of the year being taken up by, I'm talking about the financial year, being taken up by elections and some little uncertainties on the political front, still we have been able to turn out a reasonably good result, and I think we will carry our guidance through this year, which is like a 3,000 crore turnover with a 15% plus EBITDA. And I think what shall I say, the prognosis for the coming years is pretty good. And we have also embarked on a few, let's say, strategic moves now to make sure that we continue this growth story. So we have an aspiration of reaching on our 40th year a $1 billion mark. That's in FY28. And of course, we are now keenly thinking about what happens beyond that. So the moral of the story, I think, here is that we need to like work for the future and make an effort to carve the future. I think chances become brighter then. So we give kind of 3 years ahead planning, 3 to 4 years ahead planning for whatever we have in store. So up to FY28, I think we have fairly good visibility. We have 2 new businesses that have been launched. That's the OSAT piece and the PCB fabrication piece. And yeah, so a lot of work to do, but I think overall, I would say it's a very, let's say, aggressively demanding market. That means you have on one side demand and supply gaps, which are increasing. On the other side, a lot of execution challenges because the country is going through developing capacities and so on. So I think it's good news, good problem to solve. And as we go into the next several years, I think you will see similar work going on.
So Mr. Sampath, the revenue, last time we spoke, you said revenue for this year is 3,000 crores. Now, as we're almost ending Q3 as well, do you have more visibility? Could we say, could it be 3,200 higher? We just want to kind of go back and check that number with you.
Yeah, no, I think any higher guidance would probably come in the last quarter. When we complete this quarter, then we will probably know this. So, yeah, I think also we always believe that it's not the quarter that matters, it's the long-term growth prospect that matters. So we kind of, now our sights are trained on what happens beyond FY28 because the growth has to be ensured through actions now. And yeah, I mean, be as it may, order book is strong. So by FY25 end, maybe it will be even better probably. But I don't want to put a number to it right now. Let's do it and then we can meet up.
Mr. Sampath, since you have visibility till 2028 and you're guiding for $1 billion of revenue, is there scope for you to expand margins from here on, from the current 15% by 2028? And what would the revenue breakup be between PCB, OSAT, and the traditional EMS business?
Yeah, so like I have previously said, that the margins depend on 2 aspects. One is the mix of our businesses, and the second is the operating leverage that we get. So operating leverage contains in itself our plans for spending extra money for getting new projects on board and so on. So if you were to look, take a careful look, let's say we are assuming we have to make some assumption about US dollar versus rupee. So we are saying it may be about 90 rupees. So about 9,000 crores is the total number that we are talking about, and of which we have visibility for more than 7,000 crores in the EMS space, about 1,500 crores in the OSAT business, and about 500 plus crores in the PC board business. So as we go nearer to FY28, maybe some of these numbers will go up, perhaps. So let's see. And this will be margin accretive because the other 2 businesses bring in a tad higher EBITDA number. And so I think you can see a upward movement on the margins.
Okay. Oh, that's good to hear. Jairam, how do you see the next package of the PLI coming in? The electronics, apparently a 40,000 crore PLI. Are you throwing your hat in the ring? And will it give the same margins as the previous? Because I believe there are a whole lot of Pidilites and Sanjeev Goenka and a whole lot of new groups who are going to be competing here.
Yeah, I think that's a welcome move. See, 40,000 crore, you must see it as, let's say it's 6% of the total, roughly 6% of the total sales that they expect. So that would mean a huge amount of, 40,000 crores of investment they expect. And that would mean a huge amount of sales that's going to come through. And newer groups coming in will only strengthen the industry. So as far as components are concerned, in our case, it's the PC board, which may probably be covered in this. Of course, the details of the schemes are yet to be announced, but we expect the PC board to get some, both in terms of subsidy and in terms of, let's say, incentives coming in. But on the other hand, while these are very encouraging things from the government side, government is doing all it takes. I think the individual players also must throw their hat in the ring of the technology and make sure that over next 3-4 years time frame, take advantage of government schemes, but make sure that you are able to stand on your own with better profitability and better, let's say, competitive strength in front of all the global majors who will probably be flocking into India shortly. And so it will be a technology-led, let's say, renaissance or resurgence or emergence, whatever you call it. And yeah, I think all these new players have to come in because electronics is becoming not just an industry, it's almost like a horizontal, almost in every industry.
No, I take your point. Jairam, just if I can squeeze in a quickie, since we're running out of time. Are you also on the verge of signing up with any of the majors? I mean, we just heard Whirlpool signing with PG Electroplast. We heard just previously Dixon with Vivo. Are you continuing in those verticals? And if yes, anything we should hear?
Yeah, so in our case, the large let's say, ventures, etc., would not be in the consumer space. It will be non-consumer space. But we do have a couple of them coming up, and you would probably hear in FY26 some good news on the OSAT front too. We are almost very close to acquiring a very large, let's say, client who will be an anchor, both in the legacy packaging as well as advanced packaging. So in some sense, the destiny is helping us. So we got to make the best use of next 5 years that we have with an aggressive market demand, you know. So we are working hard on that.
And you're on track. Mr. Sampath, I remember, I think this was a conversation we did around Diwali when you explained how for you, it's not just the, you know, the legacy OSAT, which is a low margin business. You're going to be sort of aiming for the high margin business as well.
Yeah.
So are you on track? Because you told us that you should be up and running by the first quarter, and give us a sense of investments as well. Total capex outlay for the overall business and specifically on semiconductors. But how much cash do you have? How much are you going to be spending next year? Some idea.
Yeah. So on the three businesses, as far as the EMS business is concerned, roughly 7.5% of our total sales will be investable as a capex, and that would be generated from within our business itself. That's EMS piece. Because we do have a good plan of OCF. So I think we'll be able to self-fund that EMS business. As far as the semicon is concerned, it's a 3,400 crore capex. And this capex will roughly get done, 50% of the capex will be spent by FY27, and another 50% will be spent by FY30. And so these will obviously accrue businesses worth about 4,200 crores by FY30. And as far as the PC board is concerned, it's a 1,400 crore capex. And we hope to complete at least half of it by FY26 end, and then further enhance capacities in FY27-28 timeframe. Almost pretty much the PC board business as well as OSAT business will go step in step. And so these are the layouts, and we have already done for the projects. So we are on the way.
Okay, we'll leave it at that. Jairam, pleasure having you with us, and let's hope that 2025 is going to be equally brilliant for you and for Keynes. Thanks for joining us.
Thank you.
Well, we have to jump to our next guest who is waiting by. Muthoot Finance is the management that's waiting by. they have revised their loan growth guidance for FY25 to 25% from 15% earlier. To discuss these and more, George Alexander Muthoot joins us. George, thank you very much indeed for joining us on Christmas Eve. If George is obliging, that's very kind of you. So a happy Christmas and a New Year to you.
Certainly a happy Christmas and New Year to all of you also there in Bombay. So
yeah, oh, good. Good to hear that. So clearly business is taking precedence. Yeah, why have you revised it higher? What makes you so optimistic? Your loan growth numbers?
Because the Q2, we had already reached 18% growth by Q2 itself. So that makes us more confident to revise the guidance from 15 to 25. And probably we will again revisit the guidance once Q3 is also behind us.
Okay. You know, there is a bit of a contradiction in the news that we are getting from media and from the industry. We just heard that Reserve Bank is hurrying people to do gold auctions in cases of default. Are there more gold auctions at your end as well? So should we be worrying about defaults?
I think there is some lot of misunderstanding there. Okay. Reserve Bank has never asked anybody, not for that matter, for any of us, to do auctions quickly. Never. I think by doing an auction, we are doing an injustice to the customer. So only when there is a loss, etc., or when it is NPA, or the customer is not forthcoming, we should see auctions. Auctions should be seen only as the last resort.
But are gold auctions, are gold auctions generally rising? I mean, with or without, let's take out the Reserve Bank angle. But are there higher incidents of auctions?
I think our auctions are almost nil. Almost very, very bottom. We're doing very little auctions because the gold price has gone up and there is no need for the auctions because we are always in the money. We're always in the money. The LTV is 75%. Today, our average LTV is only less than 60% because the gold prices are going up. So customers who have not paid interest or interest payment, etc., no due, etc., their money is still there. So we don't need to auction this gold. Actually, auctioning is actually a crime which you are doing to the customer because this precious ornaments, these are all ornaments, not gold, bullions, etc. So precious ornaments should not be auctioned. Should be seen as last resort only.
How do you see, sir, your net interest margins going ahead?
Net interest margin, we have always maintained that at the same level of about 9 to 10%. I think it will remain there. For some time, initially, if there's a higher cost of borrowing, etc., we try to absorb it. But after a while, if it is going higher, we just raise our yield. But finally, we would try to maintain our net interest margin.
Okay. Even your asset quality in Q2, sir, deteriorated marginally. So gross NPAs went up from 4% to 4.3%. In the month of October, November, and almost December, how has the asset quality been?
So when you say asset quality, don't link it to the NPA. Asset quality and NPA is entirely different for a gold loan business. The asset is always gold. It is good quality gold. So the asset quality has not changed. So what we are giving is, as you said earlier, when we don't do aggressive auctions, the NPA may come up slightly. But since we are always in the money, we have never lost even 1 rupee to this by auctioning an NPA account because we get our principal, we get our interest, and the most important thing, we are able to help or maybe support the customer. That is the biggest problem.
That's just banking jargon.
This confusion about RBI asking some people to auction, I think it is a misstatement. Definitely a mistake.
Fair enough. So are you going to be auctioning a little more than what you were? And I think the NPA bit that we kind of also want to understand is the MFI. Because that's where there has been concern about how long will the pain last, are collections getting better or not. So just tell us a little more about the MFI piece and when you see a recovery there.
What I was saying earlier was fully about the gold loan business. Correct. It is fully secured. There is no issue there. Our guidance, etc., is for the gold loan business, not for the MFI business. So MFI, yes, it is going through a rough patch now. Last 2 quarters, it is going through a rough patch. Even our MFI, Belstar, I think their growth, etc., is flat or maybe little reduced only. They have an AUM of about 9,000 crores. I think in the next 2 quarters also, the growth will be flat. I think they are refocusing on collections and maybe making the book a little more better. As far as any MFI, this is a tough time, tough period, maybe another 2-3 quarters or 2 quarters at least, it will be like that. After that, things should improve.
But to protect Belstar's balance sheet, would you consider consolidating it with the main Muthoot business itself?
No, I think it's a subsidiary. We are thinking of going for we actually have got approached for an IPO. So it will remain as a subsidiary. We don't want to, there's no need to protect it. It is on its own. It has good capital adequacy. It has good funding. It has good quality assets also compared to the peers, compared to other NBFC, other microfinance. Belstar is mainly focused on self-help groups. So they are SCNA. They are more on the self-help. They do join
No, Mr. Muthoot, there is an interpretation or a understanding that because people at lower levels are running out of income or incomes are falling, they are resorting to more gold loans because that's the last resort. And that ties in with the fact that, you know, in the MFI space also, there have been more defaults. So are you seeing pain at the lower end? People unable to return their money, but the loan is good because the underlying jewelry is still yielding more value.
So I think don't look at it that way. We are looking at it as something else. That see, at the lower level, at some level, rural level, etc., people are not getting the funding. Not only MFI, even the personal loans in cities, they are little hard to come by in the last 2 quarters. You have seen that banks and NBFCs are going slow on personal loans, unsecured loans. I should say unsecured personal loans, especially for the non-salary. So we feel that we are actually helping customers in doing that. Of course, we get the whole business out of that, but then it is putting purchasing power in the hands of people. Is where we feel we are doing a service to the society.
So Mr. Muthoot, finally leave us with a guidance, if you can, on how gross NPAs will move, a number, because you've always said this in the past that you are not inclined to quickly go off an auction. You want to give your customers more time to pay. So since you're not going down that road, no matter the nudge from the central bank, your gross NPAs are above 4% right now. Will they continue to trend higher even by the end of the year?
I think it should remain at that level only. We will persuade the customers to make either take back the loan or award an auction. And if worse comes to worse, if customers are not coming at all, then last resort we'll go for an auction. That's the last resort. So the
but NPAs will be above 4%. But above 4% by the end of the year.
That level. Yeah.
So just one quick question. The recent guidelines on leverage, the 3 loans per person, is it only for incremental customers or for all customers starting 1st of January 2025?
I'm not very sure. It is regarding microfinance. I'm not exactly sure about it. But I think for microfinance, it is 3 microfinance loans per customer, what the general understanding is.
Okay, we'll leave it at that. Thank you very much, George Alexander Muthoot, for joining us. And here's wishing you once again a very good 2025.
Thank you. Wishing you all the same.
Thank you. Okay, we were speaking about microfinance. So as we have been discussing, the sector has witnessed a lot of pain in calendar 2024 and is expected to remain under pressure, as Alexander Muthoot said, probably for a couple of quarters more. What are the factors? What are the pain points? And how are things turning? First, we are going to have Abhishek with some details.
Rural economy came under great pressure during the large part of CY 2024, especially in the microfinance segment. Now, the sector is expected to see pain in its business going into 2025 as well. Let's look at the numbers. The AUM growth or the loan growth, which was more than 26% year-on-year last year, has declined to less than 9.5% this year so far. Now, growth is expected to further slow down as lenders battle various issues ranging from over-leveraging of customers to credit cost to asset quality pain, etc. The biggest impact has been seen for Spandana Spurti, ESAF SFB and Credit Access Gramin. In CY 2023, all these lenders had seen improvement in their asset quality, while asset quality has deteriorated in CY 2024 so far for them. X of Satin Credit Care, all of them have seen pain in their asset quality. Highest pain was seen for Fusion Finance. Now, amount-wise, these lenders saw their gross NPA decline by 32% on an average in CY 2023. But it has risen by 79% in CY 2024 so far. Now, massive rise was seen for Fusion Finance, Spandana Spurti and Credit Access Gramin with respect to asset quality deterioration. They also saw their stock price and valuations decline due to lowering of growth and deterioration in asset quality. So, highest decline in valuations has been seen for Credit Access Gramin, Fusion Finance and Equita Small Finance Bank as well. Marginal improvement seen in lower valuations of Ujjivan Small Finance Bank and Utkarsh Small Finance Bank. Now, stocks have underperformed Nifty this year so far. On a year-on-year basis, while Nifty has given a return of more than 17%, all these lenders focused in MFI segment have given negative returns ranging from as low as 5% to more than 62%. From 52-week high, Nifty has given a negative return of nearly about 7%, while these lenders have given negative returns ranging from as low as 31% to as high as 73%. Highest negative return is from Fusion Finance, Spandana Spurti as well as Credit Access Gramin. Let's look at the outlook with respect to 2025, which ICRA has laid for the sector. Stricter lending norms for microfinance shall improve the credit safeguards, but will pose challenges with respect to near-term performance of this sector. Now, borrower rejection rates are projected to increase further given the fact that 20% of the borrowers are expected to be impacted by the new guardrails that have been put in place. NBFC MFIs, their AUM growth will compress to 0 to 5% range in FY25, while it was at 29% in FY24. Credit cost is expected to be between 5.4 to 5.6% for FY25, which is on the higher side, which along with an expected margin compression shall impact the bottom line or the profitability of the lenders in this sector. The sector has challenges stemming from borrower leveraging, socio-political disruptions and operational challenges as well due to largely employee attrition that's been seen in the players. Now, there is significant downside to the near-term loan quality of this sector as well. Return ratios like ROA can decline massively for lenders in large part of 2025. They are strongly capitalized, so incremental capital requirement will be low due to expectation of slowdown in loan growth rate for them.
Thank you, Abhishek, for that. To take what Abhishek was saying, talking about the stress in the industry, how growth rates are likely to slow down to just 0 to 5% in FY25 versus close to about 29, I think more than 25% last year. We have with us Alok Mishra, CEO and Director of Microfinance Industry Network, MFIN, and Aishwari Khandelwal, Associate Director at India Ratings and Research, joining in. Thank you very much, both of you, for joining in, and season's greeting to you. Mr. Mishra, if I may start with you. For a while now, we've been talking about the stress in the industry and how the stress has only accelerated. What is the latest, say in the month of December? Has December been worse than November? And what is the guidance over the next, the near term now, 3 to 6 months?
Thanks. For November and December, we don't have the credit bureau data on which we rely and publish our publications. But I keep interacting with the CEOs, our member CEOs, and what I get to hear is that December is better than November, and later half of November was better than the earlier part of November. So I see a signs of stability there. But I would be able to say that only when I get the credit bureau numbers of December. But the field situation seems to be improving, and especially in December.
Okay. Good morning, Mr. Mishra. Thank you very much for sparing time for us. You all have recently advised even stricter rules, right? The cap of 2 lakh rupees, and I think only 3 loans per person instead of 4. Were those the new rules?
Yeah. Let us see, in the guardrails 2, which we released on 15th of November, there were 8 items, out of which 6 or 7 where they, what I would say, a reiteration of the existing norms to be follow stricter implementation to strengthen underwriting. On the loan side, what we have said is that in the July guardrails, we had said 2 lakh rupees of maximum loans to a microfinance borrower. In addition to the repayment obligation of Reserve Bank. Now we have said that 2 lakh, which is also a regulatory norm, should also include unsecured retail loans because we see retail overlap. And on the 3 loans part, we have said not more than 3 lenders for a microfinance customer, 3 microfinance lenders.
Yeah, got it. Now, obviously, this is prospective. Or are you expecting your members to just wait for the others to pay back their loans? Are you forcing existing 4 or 5 loan guys to come back and reduce it to 3?
Yeah. So the expectation is, for example, if you suppose I am a microfinance customer and I have got 4 loans, the customer obviously has to bring it down to 3. 4 lenders to 3 lenders, and then only then if he further goes down to 2, then he can get another loan. So the persons who are in excess of that will have to reduce it, and there is a common perception that people are saying that we are drying out the liquidity. We are not drying out the liquidity. It impacts only 7 to 8% total customers, and there also, if they reduce their leverage, which is good for them, they can again get fresh credit.
Got it. Okay, let me get Aishwarya into the conversation. Aishwarya, you all had a very good report in August where you highlighted the problem of higher number of loans per person and higher defaults. What is the current situation? It's about 5 months since your old report.
Right. So I think, we have seen all seen the Q2 results. I think Q3 is expected in terms of the delinquencies. Q3 is expected to be the peak in terms of the delinquencies. In terms of the normalcy, if we talk about Q4, we could see some improvement in the collection efficiencies, but getting back to the normalcy, normal collection efficiencies going back to the March 24 levels, I think that's a prolonged time. We would see another 2-3 quarters or so when we could see the collection efficiencies getting back to the March 24 levels. So we see a prolonged recovery in terms of the collection efficiencies. So Q3 is expected to be the peak in terms of the delinquencies because the collection efficiencies have stabilized in Q3, but it has declined from us. It has declined from March 24 numbers to September 24 numbers.
Aishwarya, can you give some numbers? Aishwarya, 1 minute. Can you please give some numbers? When you say it has declined, how much, what is the current number? And how much do you expect it to improve? And exactly by when? By June, by October, when?
So collection efficiencies have declined by around 250 to 300 basis points, depending on the MFI. Entity to entity. But improvement. This collection efficiencies numbers improving back to around 98-99% levels is expected to be a prolonged recovery from here now.
Okay. Mr. Mishra, would you want to comment on that? Do you think that collection efficiency comes back to 98 by June, by September? What is the sense you are getting from your members?
Yeah. Well, I would not get into numbers because that's for the rating agencies and institutions to give. But I see that, it is difficult for me also to hazard a guess that, the fellow panelist was saying, that it will take 2-3 quarters to return back to normal. Because what I have seen in the past experience is that that the stress comes to microfinance sector first, and it recovers also faster than other sectors. So what time it will be, for example, now we started talking of stress in May and June when the collection efficiency dipped. And now after 4 or 5 months, by September or October, you're reading news items of stress on other sectors also, like retail loans or credit card loans also. So we gave the first alarm, and I think we will recover also faster. But whether it will be 1 or 2 quarters or 3 quarters, that is difficult for me to say. But yes, things are on an uptick.
Okay, so will the third quarter, as Aishwarya says, be the worst quarter in terms of stress? We should see it declining in the next quarter, you think?
Yeah, because under the expected credit loss method, the most of the top NBFCs, the MFIs are there, because they would have crossed 90 days from starting from May, and the provisions will come in.
Fair enough, fair enough. Thanks a lot for that, Mr. Mishra. Out of time, and Aishwari for improving our understanding. This third quarter will perhaps still show, the results will show stress, but it should hopefully decline from there, is what our guests are telling us. Well, on that note, it's time for a break, and we will come back with our technical experts, and we'll also have Manisha on commodity trades.
There's a lot of speculation in the media. And as a result, there's a lot of speculation in the social media. अरे पॉपकॉर्न के ऊपर भी डाल रहे हैं टैक्स। मैं मीडिया से हाथ जोड़कर रिक्वेस्ट करती हूं, ये पूरे प्रेस मीट हम करते हैं हर जीएसटी काउंसिल के बाद, और टैक्स ऐसे विषय है जिसमें बहुत लेयर्स होता है। कोई आंख बंद करके टैक्स लगाते भी नहीं है और आंख बंद करके हटाते भी नहीं है। पूरे विषय समझने के बाद प्लीज आपके मीडिया में चलाइए। पॉपकॉर्न के ऊपर टैक्स, मैं इसका पूरे पृष्ठभूमि आपके सामने रखना चाहती हूं। सॉल्टेड पॉपकॉर्न, कैरामलाइज्ड पॉपकॉर्न, प्लेन पॉपकॉर्न, ऐसे स्टेट्स हैं जहां नमकीन के नाम में पॉपकॉर्न सॉल्टेड भी सेल होता है कि नहीं? नमकीन है वो, मगर जब पॉपकॉर्न सॉल्टेड सिर्फ नहीं है, उसमें कैरामलाइज्ड पॉपकॉर्न भी मार्केट में आता है एडेड शुगर के साथ। एडेड शुगर के चीज हर एक में रेट एक है, नमकीन के ऊपर रेट कम है। सो कैरामलाइज्ड पॉपकॉर्न का ट्रीटमेंट के ऊपर सब लोग विस्तार से चर्चा की। व्हेन यू टॉक आउटसाइड इट लुक्स सिली, अरे पॉपकॉर्न के ऊपर इतना चर्चा चाहिए क्या? मगर हर आइटम के ऊपर फिटमेंट कमेटी में स्टेट्स भागीदारी लेकर चर्चा करने के समय वो क्लियरली बोलते हैं एडेड शुगर वाले चीज को तो हम ट्रीटमेंट अलग ही देते हैं, चाहे वो ड्रिंक हो, कार्बोनेटेड ड्रिंक हो, जूस हो, जिसमें एडेड शुगर है। इसीलिए पॉपकॉर्न का ट्रीटमेंट में जब तक वो नमकीन है, सॉल्टेड है, मसाला एडेड है, चटपटा मसाला है, चिली पाउडर है, कुछ हो, सब 5%, am I right? 5%. But when it has added caramelized sugar, it is no longer namkeen.
Welcome back. Markets still in extremely range terrain with the Nifty Bank indicating some red. Let's invite Mitesh Thakur into this conversation. Mitesh, good morning. What's the 10 o'clock trade?
Morning, Lata. So nothing on the index because, I still believe we are just chopping around in a range. But on the stock side, Indigo is something, which has caught my eye today, and Ipca Lab. So if I would want to buy once it crosses 1605, it's trading around 1600 levels. So buy about 1605, keep a stop below 1577 and look for a target of 1650 to about 1660. And Indigo is the other one which I would recommend buying with a stop below levels of 4470 and look for a target of around 4700 here.
Thank you very much for that. By the way, all the Tata Group stocks are active. So Tata Investment is now up 11%, Tata Chemicals 3%, Tata Motors has now moved to the pole position in the frontline pack, 2% higher, Tata Elxsi, TCS all up more than 1.5%. So the pack is outperforming. But it's time now to talk commodities. Manisha is joining in. Manisha.
Well, thank you so much for that. It's almost end of the year and we've seen volumes continue to decline, and that would happen even more as we head towards the Christmas Eve today. I want to take you through on what we've done in 2024 in sense of non-agri commodities, and I'll start with energy where we are closing this year in the negative there. As you can see, Brent has declined even more than what the US crude prices have done, and it has been a declining spree for heating oil, coal, natural gas prices. Everything to do with crude and crude products has been on a weaker side, barring natural gas, because here the market
markets are still looking at sanction concerns. It is still below 5-year average in sense of inventories. And there are concerns between a pipeline flow from Russia to Ukraine passing via Europe. And is the reason you've seen 60% of gains come in for the natural gas prices. But as you can see, everything else in the 2024 has been in the negative when it comes to energy as a sector. I want to take you through precious metals now, and here is what you have better gains coming in. Gold and silver prices, more than 25% of gains coming in for this one. Can't say the same about the other PNG metals, where you have platinum and palladium prices down between 4 to 5% there. But gold with 27% of gains and silver by 23%. We have seen all-time highs into this one in the Indian markets, whether it has been about global central bank buying, geopolitics, dollar index, even as it has been trading at 2-year highs, we have seen gains continue in case of gold and silver. That brings me to non-ferrous metals now, and here as well, while we are looking at gains for most of these metals, but the markets are slightly jittery now as we get into the new year, especially with trades and tariffs and China lack of clarity, all of that keeping prices on edge there. But copper and aluminum have gained between 4 to 6%. Outperformance within the metal space clearly has come in from zinc, 13.5% of gains there. The other metals like nickel and lead actually are clearing or closing this year into the negative there. Talk about the ferrous metal prices, and here everything is in red. The steel prices in China and US have declined quite sharply, and so has been the case when it comes to steel as well. We've seen 18% decline in China and 38% of a downfall that you've seen come in for the US markets as well. Here, China was a major factor, and since we did not see good numbers coming in, the construction and the property sector still rolling under a lot of pressure, we are looking at that immediate impact coming in for prices here. Well, as I said, 2025 is going to be quite interesting to watch because it is going to be about what OPEC and non-OPEC do for the energy markets. It's going to be about Chinese demand, EV, and it also is going to be about on what we see in sense of adoption when it comes to decarbonization. The markets will also watch out for the US tariffs and sanctions on what countries and how much, and that calculation will clearly come in by the first quarter of 2025. And then it is going to be about China stimulus, US tariffs, energy transition. There is just so much to watch out for in 2025, but all of this will have to wait until the first quarter of 2025 on what Trump does. What is the kind of reallocation that we see in various asset classes will tell us on where the money really starts to move. Dollar is going to be quite an important thing to watch as well, because we're looking at 2-year highs right now. Most of the major currencies, high-yielding currencies, are closing this year into the negative. So this is going to be an important one. For gold, global central bank buying is going to be a theme that we will want to watch. The last 3 years, including 2024, there has been near record buying there. The geopolitical tensions is going to be another thing. And then it also is going to be about central bank buying, geopolitics, investment demand, which has been a theme in 2024 with the kind of returns that gold has given you. It's something that we will carry on as a thing to watch in next year as well. I quickly want to take you through some last few plates on what the global banks and brokerages are putting out in sense of prices for 2025. This is for Brent, and as you can see, it's a big range. In any case, for this year as well, we've seen a range of 90 on the higher side and 70 on the lower side. So it has been a $20 range, exactly what we are getting into 2025 with. Citi is most bearish. They expect oversupply and higher supplies from non-OPEC as well. And then EV adoption in China has been higher. The other banks and brokerages, as you can see, are looking at prices between 65 to 80. UBS, of course, clearly seems to be the most bullish when it comes to the crude oil prices. Take a look at gold, and here everybody is bullish. The least bullish is perhaps Bernstein, and we've seen UBS talk about below 3,000, but 3,000 really seems to be the most favorable consensus number there coming forward. So that means another all-time high could be coming in for gold. Silver, while we saw all-time highs in the Indian markets, but the global market saw a 12-year highs. Next year could be a build-up on that. This year high has been 34. So we are looking at higher build-up in the next year. $38 to $40 on the higher side is an expectation for next year for the silver prices. And finally, copper should come in on your screens. And while this year saw an all-time high, but from the highs, we are down by nearly 16%. For the next year, it perhaps is looking at even more bullish. So currently, while the prices are trading at around $9,100 a ton, $9,400 is what Bank of America expects. But JP Morgan, Citi, Goldman Sachs, UBS expect $10,000 to $10,500 on the higher side for next year. So some bullishness continuing here.
Okay. Thanks a lot for that, Manisha. I know as a commodity expert, you like to sound bullish, but we are glad that you're not so bullish on crude. Thank you very much for that exhaustive and comprehensive overview. We have to take a quick break, and thereafter, it's our special segment, Outlook 2025. We are going to speak to the best of fund managers you would like to listen to. Samir Arora of Helios Capital joins us on how the markets may pan out in the coming year.
उसका रेट अलग है, सो वो थोड़ा आपके प्रेस नोट में हम विस्तार से उसका एक्सप्लेनेशन दे रहे हैं. विषय को समझकर प्लीज जितने भी आपके मीडिया के द्वारा स्प्रेड करना है करिए.
Well, the problem of 2024 for the global steel industry has been that Chinese steel demand has been weak, which has resulted in higher Chinese steel exports. Well, let's explain this to you in further detail. India's steel demand has been rising at 10% over the last 4 years. But in the same period, Chinese steel demand is down by 13%. Now, India is the second largest steel producer and will remain an important growth driver in the world. The issue is China has slowed down, which has resulted in Chinese prices slipping to COVID lows, which in turn has pressurized global steel prices. The Chinese housing market has remained weak, with prices of newly built commercial and residential buildings slipping all the way since mid-2023. This has impacted steel demand, thereby leading to rising iron ore inventory at Chinese ports, which is currently way higher than the average inventory levels. The pain point is that Chinese monthly exports have been rising because domestic demand out there has faltered. And for the first time since 2016, Chinese steel exports will clock more than 100 million tons. It's also on course to challenge the previous all-time highs. Well, the Indian steel industry, they are up in arms. Mr. Sajjan Jindal has made a solid pitch. He wants some protection for the domestic ferrous industry because Chinese steelmakers, they have an unfair advantage and part of their exports are trickling into India. Well, the Steel Ministry has recently proposed to the Finance Ministry to impose 25% safeguard duty on steel imports, as India has now turned a net importer from being a net exporter in the previous year. Well, Nuvama has said the imposition of some safeguard duty along with the onset of a seasonally good quarter could give the steel producers some elbow room to go ahead and increase prices by around 2,000 rupees per ton, as domestic prices are at a bit of a discount in comparison to the landed cost of imports. But they also highlight that factors like anti-dumping investigation in Europe and aggressive exports by China is eating into India's exports, which is more concerning than the elevated imports that we're seeing. We'll have to stay tuned to see the government's action with regard to these rising imports, but things could get better for the domestic steel industry from here on, because Chinese steel prices could have bottomed out. Their exports as well could slow down. Additionally, domestic steel makers, well, they've chalked out their capacity addition plans with focus investing.
Welcome back to our year-end series, Outlook 2025. And we now have a delightfully intelligent fund manager and veteran stock market watcher, Samir Arora, founder, of course, of Helios Capital. Samir, good morning and thank you very much indeed for sparing time for us.
I have to come here to cheer you guys up.
Well, we need some cheering. You know, at one point in time around October, we thought we were going to run away with a 20% gain on the index, or probably even more. It's been, you know, shaved off to perhaps at best a 10% gain. What's your sense? Do we find the bottom quickly or can we plumb some more depths before the market rises?
So actually, Nifty is up 10 and the 500 index is up 15. So that's why I feel that it is not in any way some out of line kind of returns. But let's see the guys, because I am positive. Of course, the degree of positivity in terms of how much returns you can make will be obviously less than what we made in the last 2-3 years. But let's do first big picture. So the world, and we have these guys in the US talking about the biggest bubble in US. So if you look at the US market, if you look at the equal weight index or the Russell 2000 index, for the last 5 years, these returns will be something like 10% per annum. So basically, when people talk about US having a big bull run, they are talking about 10 to 15 stocks.
Okay.
And on those 10, 15 stocks, including the Magnificent Seven and a few others you can add, all of them separately, they are cash rich, big beneficiaries of AI, not concept stocks. Their valuations are in 20s and 30s. And for the US stock to have guidance or expected consensus earnings growth of 15% type from, you look at Amazon, you look at Google, you look at Microsoft, all of them, at least as of now, expected to grow earnings at 15%. So what is so wrong about those guys also having premier valuations a little bit, but having gone up a lot and still trading in 20s and 30s multiple with a 15% type of growth? So I don't feel that the US market itself is a bubble just by looking at S&P, which is driven by these 15 stocks. And if the US market is not a bubble, the first part of the argument goes away that this world is in some mad bull run. And if you look at India, the Indian market returns for the last 3 years for the index, which is not even, let's take Nifty, because clearly Nifty has done poorly. But if you do even the 500 index for 3 years, it will be up around 15% per annum, which is more or less in line with our longer term history. And now let us say that somebody thinks it's overvalued because the earnings were a bit slow in this quarter and last quarter, and therefore the fair value is 19 times PE, but you are at 21 times PE. So you are overvalued by 10, 15%, which you have accumulated over 2-3 years. Who is to say that the market is always supposed to trade at whatever is your longer term average? And secondly, that the correction has to happen in one stroke, so that first it has to correct 10%, 12%, and then it will become a good market. Maybe it corrects gradually. Maybe it goes up first and then goes down. It is not wildly out of line. I have seen wildly out of line markets. For example, in 2004, 5, 6, and 7 calendar years, the market was up 40% per annum. If you look at the 500 index, it was up some 39 point some percent per annum. We have seen periods like 1999, when the market went up some 85%, and the NAV of my fund, Alliance Equity Fund, now called Birla Sun Life Equity Fund, in that one calendar year was up 280%. Those are wild bull runs. This is a measured bull run.
No, I remember those times. Cub reporter, but I have interviewed you in Alliance as well, Samir. But, you know, when we are stepping into the coming year, do you think we will still continue, or fund managers should be chasing, you know, the EMS or the e-commerce, the new gen stocks? What has been ignored? The HDFC banks, Reliance, TCS, those were the ones that the market's not been looking at. Will things turn?
First of all, when we talk about market, first we talk about the market is 500 index.
Yes,
so the question whether the market will go up or not is not whether Dixon will go up another 100%. Most probably it won't. And neither will my food companies go up 100%. But can they go up slightly more than that? So before that, the market itself will have some rotation in a sense that obviously, because the large caps have massively underperformed mid and small. And in the past, if you do before this round of bull run of mid and small in 2020, so if you look at previous 20 years ending in 2019 December, let's say, which I did, broadly the large caps and small caps and mid caps are not materially different from each other. You know, the small caps actually in a big 20-year type phase actually underperformed even the 500 index. Means broadly they converge. Similarly, in the US, they converge, except that in the last 6, 7 years, 5 years, there the opposite has happened. That the large caps, particularly these big 20-odd companies, have done much better. But again, there in the past, they converge. So therefore, first we have to say that whether next year is a year for which we have to be bearish and sitting on cash and waiting for a crash, I think that is not obvious and not needed. But therefore, the market returns, if the market returns are expected, according to us, to be in the same range as our historical longer-term average, which is 12-14%. Then these stocks which are growing 10, 12, 14% with a higher confidence, like these banks and all you're saying, become better candidates. And that's why not me only, many of the guys even...
No, I got that. Yeah, so what will you rotate into is my question. One of them you picked up, one of them you would rotate into would be banks. What else would you rotate into and rotate out of? Okay.
We never rotated out of them. So our logic is that you will have 2 or 3 main chunks, which mostly the market has converged to financial sector, financial services, private sector banks, and some form of IT, which for 2 years we were bearish up to June of 24, and now we think IT is a good sector. And then you need a bit of jing bang. You need a bit of dreams and this thing where you can grow at least the earnings at 30% and 25% for 3-4 years, hopefully. And that some people this year chose EMS and we chose the food delivery and the new platform type companies, which are, these PTM and PB Fintech and Swiggy and Zomato and car trade and all, where you're hoping that there are some longer term, tailwinds, so that at least for the next few years, 3-4 years, you're not growing at 15%, 12%, which is what our boring banks and even IT might grow in that range. Which is this 12, 14%, 15% type range. So you need a jing bang. So that is why it's called a portfolio. We will not buy the EMS companies because our logic is that we have a benchmark, and those benchmarks of EMS companies trade at 8 multiple and 10 multiple. And in India, you can make it 20 because everything is double, but you don't make it 150 multiple.
Okay, fair point. Well, just one more word on consumption. This year has been the year for the discretionary consumption, the Trents, the Indian hotels, the Titans, and it's not been for the FMCGs. Will things continue that way, or will the tables turn?
Actually, it's not been for Titan also, because we sold it about 9, 10, 12 months ago, because I watch Netflix and I could see that there was this documentary on lab-grown diamonds, which has now become a hot thing for long. And this is where you made more money. And more than that, it spoils the whole thing of buying diamonds if you can't distinguish, even though technically somebody might know this is a real diamond or a lab grown or whatever. But in general, I think what our basic concept is that very high valuations can be a stumbling block, even though the companies may grow. So we don't have these kind of consumer companies. We have a few of these Zomato type, which also you can say high valuation if you so desire. But their growth rates will be very high compared to the rest for a number of years.
Okay. Samir, you are also a global fund manager. So tell us, do you think US exceptionalism goes away? Do you think smart money will come back to EMs and India?
No, smart money should buy both. I, after the Trump victory, bought all the 4 asset classes personally, because in my fund I only broadly do India, and then we have a global fund. But that is India, US, China, and gold. Everything is a buy. First of all, please remember, we've not had a blowout rally. We've not had that last thing where markets go up 20, 30% in a 2, 3, 4 month period. And by the way, you can see all these previous bull runs that people talk about, and then they say that they sat on cash. So let's say the 91 bull run, Harshad Mehta time, boom, it'll go up some 80, 90% in a few months, and then it'll crash. Same thing happened in 99, 2000, where in the last part of 99 and first 2-3 months of 2000, the market would have gone up, or these tech stocks would have gone up 100% kind.
Right.
And even in 2007-8, because I know my NAV, my hedge fund NAV went up 104%. Okay. This year and this period has not been like that. It has been very measured. And the reason why it is measured is that there is supply. Now, people take it as a negative that there has been so much supply. But simultaneously, there has been so much demand in the sense of flows from domestic guys. But whatever be the reason, the supply has made the overall market in check. So the overall market has not gone up, maybe other than 10, 15 stocks, in which we have also become negative on a few of them, and we have a few. Every portfolio manager will have 2-3 such stocks with a combined weight of 7-8%. Now somebody can have Trent and something, I will have Zomato and something, somebody will have Dixon and something, but it's not driving madness in our portfolios or in the hype in the market.
Got it. Samir, out of time, and here's wishing that you have a superb 2025. Thank you very much indeed for joining us.
Thank you very much. Be bullish.
Okay, point taken. And on that note, we wrap up on this edition of Outlook 2025. After a break, it's time for Chartbusters.
And cost efficiencies, which could support volume growth and probable expansion of unit profitability. Well, the steel industry hopes to get its sheen back in 2025.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen. We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform?
Shares of Tata Investment Corporation are up 10% along with other Tata Group companies like Tata Motors and Tata Chemicals after sources tell Money Control that the Tata Group is preparing for a mega 15,000 crore rupee IPO of Tata Capital.
PG Electroplast and Whirlpool climbs more than 2% after the companies enter a contract manufacturing agreement where PG Electroplast will manufacture select models of Whirlpool branded semi-automatic washing machines.
Biocon has climbed more than 2% after it has received approvals for anti-diabetic and weight management drugs in the European Union.
Defense and Aerospace Electronic Solution provider data patterns ease up over 2% after brokerages issue bullish notes. Phillip Capital sets a target of around 3,400 rupees while Nuvama also issues a bullish note.
And HG Infra is up 2.5% after its subsidiary has entered into a battery energy storage purchase agreement with NTPC. Good morning, you're watching Chartbusters here on CNBC TV18. I'm Hormuz Fatakia, with me is Vinny Motiwala, and looks like Santa has finally arrived on Dalal Street, at least for the Nifty. The Nifty Bank 2 is recovering from the lows, but what was started off in the red is now in the green.
Absolutely not a bad day shaping up today, right? And even today, mid and small cap is almost in line with what we're seeing from the benchmark indices front. Nifty Bank hoping that also comes to the green side by the end of the day.
Indeed, and it is a good recovery from the Nifty, but the bigger takeaway is the fact that the Nifty is now trading above its 200-day moving average, which is at 23,841. That is the level that you need to keep an eye out for on the index, and that will be the most important level. 23,841 is that level on the Nifty. The Nifty Bank 2 is recovering from the lows. It's almost moved into the green, but still trading below the flat line, but a significant recovery from the lows of the day, at least 100 points off the lows. The broader markets too are moving in tandem, but there is plenty of stock specific activity as we speak, and we just spoke of Tata Investment Corporation and a lot of these Tata Group companies, and that is what is keeping the headlines as of now. And Tata Investment is up almost 11%, and a lot of others, right? Tata Motors, Tata Chemicals, all of these companies are seeing healthy gains this morning after the money control report about the fact that they are lining up a 15,000 crore rupee IPO of Tata Capital. But the other exclusive story that we are tracking this morning, where sources have told CNBC TV18 that Amber Enterprises may be looking to demerge one of its key business. Sudarshan is here with more details on that. Sudarshan, tell us more.
So Amber Enterprises has three segments: consumers, electronics division and railway subsystem. So what we understand from sources that company may like to consider demerger of electronics division, and once the demerger is done, they might bring an IPO. Remember, so as of FY23, electronics division had formed nearly 20% of total revenue, and if you look at Q2 FY25, electronics division had formed nearly 30% of total revenue that company had reported for Q2 FY25. As far as valuation is concerned, Amber Enterprise FY26 estimated PE is at 54 times versus Dixon is trading at 99 times. Also, in 2024, as far as the stock performance is concerned, Amber Enterprise has almost doubled versus 182% rise for Dixon Enterprises. So the stock might be in the focus going ahead because company might consider demerger and the IPO for the electronics division arm.
Okay, Sudarshan, thank you so much for giving us the update on Amber Enterprises. As of now, the stock is holding on to gains of almost 3 to 4% in trade. Let's move on and shift focus to our special segment, where we will get you a few ideas for profit from Money Control Pro. Anubhav Sahu, who is of moneycontrol.com, joins us to talk to us about a stock that he is tracking closely. Anubhav.
Well, one structural opportunity we have been talking about is that of CDMO, and in this space, Divi's Lab is an interesting pick. Though it has been witnessing multiple challenges, it is also looking up to new opportunities at the same time. Among biggest challenge has been pricing erosion of the generic business, which appears to be stabilizing. Secondly, there could be impact on the API supplies to its client Novartis, as its heart failure drug Entresto may have to face generic launches in near term. That said, the company is eyeing multiple growth levers, which is also backed by commencement of Kakinada plant in the current month and cash surplus balance sheet. Secondly, contrast media business is firming up with the pickup in volumes under long-term contracts. In addition, GLP-1 opportunity can be a major earnings driver in our opinion. Sales from the branded drugs in this category like Ozempic was about $11 billion last quarter, and this opportunity is expected to reach $150 billion by 2030. Now, company has shown increased confidence towards this value chain by investing towards infrastructure to provide fragments of long amino chains. While valuations are at a premium, we expect about 26% earnings CAGR for the medium term, and hence we believe one can accumulate the stock during market declines.
Okay, let's welcome now Shilpa Rao, the Prabhudas Leeladhar for a technical check on the markets. Good morning, Shilpa. Thank you so much as always for joining in with us. Shilpa, today let's talk about Nifty Bank, right? Nifty is managing to sustain to those gains that we saw yesterday. But Nifty Bank, what are we expecting in terms of levels there? Last trading week, last couple of trading weeks now. So what should we be watching out for there?
Bank Nifty, if you see, there's a good support around 51,000 zones. The put writers are very actively placed there. So this 51,000 to 50,800, this zones should act as a good support on immediate basis. If we do so, then the levels of 51,800 to 50,000 definitely will come likely. It can happen today as well, or maybe, 1 or 2 sessions from here. But it is crucial that we hold 50,800. Talking about Nifty, Nifty has a good support zones at around 23,600 to 23,700. That is when the option writers are very strongly placed. However, the resistance is also at around 23,850 to 24,000. So this, the broader range of 23,600 to 24,000 is somewhere, the range bound trade is happening. So buying on the lower zones and selling on the higher zone is what, we are recommending. And only a breach above any side of this zone, then you will see a 500 points up move or down move. So till that time, it is a range bound scenario.
It's a range bound scenario, and you can see that, right? Because the Nifty made an intraday high of 23,867 as of now, and yesterday's high is 23,869. So it's very close to yesterday's high. But Shilpa, what are specific stocks that you're recommending this morning?
I have one buy in Maruti. Maruti is, gaining momentum, and, there's a good fresh open interest addition today on the long side. Stock is trading at around 10,870 zones. So from here, keep a stop loss of 10,750 and look for targets of 11,000 zones, maybe intraday or one session from here. The other one would be a buy in Indigo. Indigo is also approaching 4,600 zones. If it sustains this level, you will see a sharp move towards 4,720 to 4,780. So positional trade also Interglobe is looking very strong. Keep a stop loss of 4,550 and stay long.
Okay, Shilpa, surely we'll keep an eye out on that. And just one last word, anything on Amber Enterprises? You just heard Sudarshan also just broke a story. But what are your thoughts on Amber on the charts and technicals, given that we've seen such a good run-up for the stock?
Look at, the weekly or, the monthly chart as well. There's a good breakout coming in. So, maybe on declines also towards 7,000, or, you can definitely pitch in there and stay long. Good support is around 6,800 zones. So, any declines from here also is a good buying opportunity. From here, the stock is trading at a new trajectory. Maybe levels of 7,800 to 8,000 zones can also be tested.
130% now this year for Amber Enterprises. Well, thank you, Shilpa, for joining in, sharing with us your views on the index and specific stocks as well. Time for a short break. More on the markets on the other side. Stay tuned.
Journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
2024 saw a lot of action in the mutual fund space, and funds raised via NFOs has definitely been one of them. Let's look at the numbers. Funds raised by NFOs or new fund offers stood at 1.04 lakh crores in 2024. This is still the month of November, and we have more NFOs in the month of December that has not been accounted for here. That is an uptick of 63% versus funds raised in 2023 at around 63,800 crore rupees. Now, this was slightly lower than 2022. That time, the number was 67,336 crore rupees. But 2021 also saw massive inflows. This was double the amount versus 2020, when the amount raised was around 53,700 crore rupees. Now, if we talk about the number of NFOs, 2022 still tops the list. So far in 2024, we've seen 205 NFOs which have been issued till November. This compares with 212 in 2023, 246 in 2022, 140 in 21, and around 81 in 2020. Some of the categories that saw high flows: multi-cap funds getting in 6,300 crore rupees.
Welcome back, and we just spoke of Amber Enterprises, Sudarshan's news break, and the stock is now extending its gains, and 5.5% higher now is Amber Enterprises. It's made that intraday high of 7279, and it's going from strength to strength is Amber Enterprises. But the other stock that is going from strength to strength today is Biocon, and that is on the back of a couple of generic drug approvals. And Vinny, who is our subject matter expert on this, will tell us more on that. Vinny.
Absolutely. So Biocon today, we saw it start with 1% gain. Now it's picked up a bit of pace, 2% uptick right now. Now the company has actually received this procedural approval. So it was already in the pipeline, this approval. So it's a DCP approval, that's decentralized procedure approval. It's for a liraglutide drug. Now this is with its partner Zentiva in the European market. So EU region, that's where they've got this market authorization. Now in the European Union, because they've gotten it for one of the countries, it applies to the whole of the European Union, this market authorization. That means in terms of saving in cost, in terms of applying to other countries, that reduces. So one, that is the benefit. It's a complex formulation. Liraglutide obviously is something that has been trending, the GLP-1 opportunity that everyone talks about. So a benefit coming in on that front. It's a drug that is going to be used, generic drug that is going to be used for type 2 diabetes, as well as it's also used in treatment of weight management, controlling your weight. So that is where these drugs are used, and this is a generic version which they've got this approval for. Now, company in Q2 FY25 had spoken about this, that how this is going to be driving the growth for the company. Liraglutide, semaglutide, this GLP-1 opportunity. They've spoken about liraglutide also filing for a review in the US FDA front as well. So they're waiting for that approval coming in. Analysts are saying that in the EU region, currently there are 5 approvals that are already there. So 5 companies are already there. And key will be to watch out for and market share distribution, how that shapes up. Last year, this drug, the competitive brand, that was around $1 billion sales that they had. Out of that, 50% was rest of the world. And then 50% rest of the world, EU would be around $200 to $300 million for the brand. So that's an opportunity that we are watching out for.
Drugs improving the health of patients, gains in the share price improving the health of shareholders. So it's a win-win, I guess, for both of them.
Health of the patients, and maybe even reducing the weight of the patients is who are looking to use it that way.
They'll definitely be hoping for that, isn't it? But yes, Biocon at the highest point of the day now, 2.5% higher, nearing 340. But concerns are rising for the auto sector because the retail sales data is reflecting a sharp slowdown in sales. And Sudarshan is back after one news break. He brings in some more concerning data now. Sudarshan.
So last week, after 2 weeks of December, we had reported that Vahan registration for the month of December was under pressure. So after 3 weeks today, it's done. So we had tried to analyze if there is an improvement in last 1 week. Well, the answer is there is a minor pickup, but overall registration remains under pressure. For the 3 weeks of December, overall registration is down almost 15%, and it's dragged mainly by two-wheeler segment, where registration has fallen 20% in the first 3 weeks of December. If we talk about positives, one for PV segment, where till last week it was down 3%. Now after 3 weeks, registration has turned flat. Another positives are coming from the two segments. Those are electric vehicle and CNG. Registration for electric vehicles has increased 9% and for CNG it's up almost 7%. Now overall registration for first 3 weeks, total registration this year is 13.87 lakh units, and now in comparison of 2023 we had more than 16 lakh units. That's down 16%. So there is a minor pickup in last 1 week, but overall concerns remain as far as Vahan registration data is concerned.
Okay, Sudarshan, thank you so much for the update coming in there. But let's move on, and we have a positive brokerage note coming in, and this is for the defense sector. Upasana is joining in with us to give us more details of this one. Upasana?
Well, a couple of brokerage notes highlighting a positive outlook on the defense sector this morning. Now, Elara says that it's expecting order inflow to rise sharply in Q4 FY25, given that the defense capex is set to be met in FY25. It says that the allocation to defense companies stands at 75% of the total budgeted defense capex. And it also has highlighted that engine vows for HAL may end soon, as General Electric will supply F404 engines in March. And inflows for HAL may also jump by 1.2 trillion by FY26. Now, the brokerage has highlighted top picks for the sector. It has given a buy rating on HAL with a target price of 5,465 per share. Buy rating on BEL with a target price of 345 per share. Accumulate rating on Bharat Dynamics with a target price of 1,300 per share. And Garden Reach has also, the brokerage has given an accumulate rating with a target price of 1,660 per share. Now, Nuvama says that it is optimistic on Indian defense space. Huge localization push to reduce dependence on disrupted global supply chains, and also continued modernization efforts with large programs coming ahead of the expected lines in terms of execution. Their top picks for the sector is BHEL and Data Patterns. And lastly, Phillip Capital has also given a positive outlook on the sector. It says that the defense sector stands out as a compelling investment theme, offering multiple growth levers and strong visibility for long-term execution. Now, it has overall maintained a positive outlook on the sector, favoring stocks with favorable risk-reward profiles such as BEL with a target price of 390 per share, HAL with a target price of 5,500 per share, and Data Patterns with a buy rating and a target price of 3,400 per share.
And is certainly beginning to warm up to the defense stocks again after the drubbing that they had seen post the record highs in July and August. Upasana, thanks a lot for that. Time for a short break then. More on the markets on the other side. Stay tuned.
The ETFs at around 1,400 crore rupees. But the real star of this year had to be sectoral funds. 40 sectoral or thematic funds have seen the highest flows that we have seen in the last 5 years. Sectoral funds garnered around 67,772 crore rupees in 2024 so far, which is more than the flows in this space from 2020 to 2023. In this period, sectoral funds garnered around 52,165 crore rupees. This is via 59 NFOs. Even index funds actually saw a lot of interest. 76 NFOs in the index fund space, raising 12,147 crore rupees, which is the highest that we have seen in at least 5 years. Index funds have always seen a lot of interest, and more so in the last 3 years, with more focus on passive investing. In 2023, 53 index funds were launched, garnering around 2,700 crore rupees. This compares with 85 in 2022. And these numbers were very low in 2021 and 2020, as you can see on your screen. Interestingly, no mid-cap funds were launched in 2023 and 2024. This space did see a big rally, but did not see a new product here, but saw massive flows in the existing names. Also, only one small-cap fund was launched in 2024. And now we are towards the end of 2024, and December also has seen a lot of action in the NFO space. But will this continue in 2025? Will there be new products by mutual funds houses to diversify their portfolio? Well, time will tell.
Welcome back to Chartbusters on CNBC-TV18. Let's pull up Indigo because that's also in focus today, seeing an uptick of 4%. We had the aviation data that came in out for the month of November. Overall, domestic air passenger, that grew by 12%. But Indigo's data, we saw 15% growth for the month of November on a year-on-year basis. Occupancy is somewhere around 90% in the month of November, second best November in 5 years. So surely growth coming in for the aviation sector. And today, Interglobe Aviation holding on to gains of more than 4% at a, I think, almost few months high that we're seeing coming in, at least a 1 month high, is for sure that Interglobe Aviation is trading at as of now, keeping an eye out on the aviation data going forward as well. But on that note, we are absolutely out of time on this edition of Chartbusters. But as we wrap up, it's time to introduce Growth Code, a special initiative by Grow and CNBC-TV18 to further empower retail investors and traders. Renowned investors and professional traders convened at Grow's Trading Right event on November 9th, where they shared valuable strategies. Here are some of the key insights from Arjun Tandon, partner at Kailasa Capital Advisors, on how to determine your capital requirements.
एक एक्सपेक्टेशन सेट करना ज़रूरी है कि मुझे ट्रेडिंग से इतनी इनकम चाहिए. सो व्हाट इज़ योर फाइनेंशियल गोल? आप क्या चाहते हो कि मेरी मंथली इनकम ट्रेडिंग से कितनी हो? एंड दैट विल डिसाइड योर कैपिटल. सो लेट अस से कि आप कहते हो कि मैं ना 1% रिटर्न तो बना सकती हूँ या बना सकता हूँ. सो योर कैपिटल, अगर आपको मंथली इनकम 50,000 रुपए की चाहिए, योर कैपिटल विल बी 50 lakhs. अगर आपको लगता है कि आप 2% रिटर्न बना लोगे, देन योर कैपिटल रिक्वायरमेंट इज 25 lakh. एंड सिमिलरली अगर आपको लग रहा है कि मेरी एक्सपर्टीज बहुत ज़्यादा है, मैंने कुछ क्रैक कर लिया है रिलेटेड टू ट्रेडिंग, आई हैव सम सेटअप्स जहाँ पे बहुत अच्छी रिटर्न्स आ सकती हैं, सो ऑन अ 5% रिटर्न एक्सपेक्टेशन आपको सिर्फ 10 लाख रुपए चाहिए.
Gonna be president, that I can tell you. And I'm safe. You know why? He can't be. He wasn't born in this country. Now, he's a great guy, and we want to have him. Everybody, so many people are in this audience that have helped.
व्हीकल्स, उसके ऊपर भी सुबह से चल रही है जब प्रेस कॉन्फ्रेंस फाइनल नहीं हो. ईवी व्हीकल्स के ऊपर ये एब्सोल्युटली क्लियरली मेंशन करना चाहिए कि नया व्हीकल्स ईवी खरीदने में 5% है. Am I right? 5%. पुराने ईवी व्हीकल्स खरीदने का विषय ही आया है. We want to promote EV. GST Council is in favor of EV. Nobody is stopping people from buying EV. मगर used EV खरीदने के समय एक व्यक्ति दूसरे व्यक्ति को सेल करेगा तो कोई नहीं है उसमें. The same thing as 5%. No GST. Sorry. Used EV. An individual selling to another individual, no GST. But if a company has bought EV, or if there is a regular registered used car seller who buys EV, does some propping up in it, adds value to it and then sells it. It was felt by states and it was felt by auto and many others also that the EV market is not so saturated as yet that used cars will come. And category में, therefore used cars category में EV भी है, petrol vehicle भी है, diesel vehicle भी है. And I like to highlight this point to you. हमारी तरफ से केंद्र सरकार, Government of India, which is 1/3 member of the GST, हमारी तरफ से एजेंडा में सेल ऑफ ओल्ड एंड यूज्ड ईवी व्हीकल्स को 12 से 5 तक ले आने के लिए we had suggested. But when the discussions happened,
Good morning. Welcome to Trading Hour. It's the second day of green on the screen right now. So it looks like the Santa rally has just about arrived. As we speak, it's about 80 points higher on the Nifty. The day's high today was 83,867, which is just above the 200-day moving average. As we speak, we're slightly below the 200-day moving average of 23,841. We're touching that level, but now we need to conclusively and comprehensively cross that level for the bulls to get some more confidence and momentum. But for now, it's up close to about 1/3 of a percentage point. Metals and banks on the back foot, on the way up. The entire Tata Group stocks are active. So Tata Motors is your top gainer, but even the TCS is higher. And some of the, led by Tata Motors and M&M, even the auto index, the Nifty auto index is showing you green on the screen. And defense is a big mover on the back of notes coming through from Elara and Nuvama.
Absolutely right. And one more, Phillip Capital too. So today is a day where a lot of sell-side analysts have put the focus on the entire defense space, and that's keeping those stocks quite active in this session. But like you mentioned, when you talk about the broader end of the markets too, the advanced decline is quite positive there. When you're talking about the mid-cap and small-cap index, gaining in tandem largely with the benchmark indices. You spoke about some of the Tata Group stocks. This on the back of the fact that Money Control has reported that there could be another IPO from the group in the offing. Some of the names that are doing quite well from the Tata pack is Tata Chemicals, Tata Motors, like you mentioned, Tata Consumer. Look at Tata Investment Corp. That particular stock is at the upper circuit, and even a Voltas, for that matter, today is gaining. The other stock on the radar is Amber Enterprises. If you pull up a 3-day or 5-day chart for that particular name, remember, stock yesterday ended higher by almost 12%. Today, it's cooled off a little bit, was higher by almost 6-7%, but it's cooled off from the day's highest point. Some more details on that particular name later. And like you mentioned, the defense companies in focus today as well. But largely, overall, a positive start. Advanced decline largely in favor of the advances today.
And there's one stock which is on fire, and not just today, for the last couple of years now. We're talking about PG Electroplast. Now, PG Electroplast recently had raised money via QIP, and this month itself, it's up 30%. This year, we've seen a gain of close to about 300%, and this follows some big rallies on PG Electroplast. Hormus has told me 2024, 300+ rally, 2023, 110%, 2024, 40% higher, and 2021, 472% higher. But for the latest news on that, the tie-up with Whirlpool, we've got Upasna joining in. Upasna.
Well, PG Electroplast and Whirlpool have signed a definitive agreement for contract manufacturing of selected models of Whirlpool-branded semi-automatic washing machines. Now, under this agreement, PG Electroplast will manufacture some of the SKUs for Whirlpool at its factory in Roorkee. And PG Electroplast, mind you, is already an existing supplier of Whirlpool-branded air conditioners. And both these companies have indicated that they will continue to evaluate the potential expansion opportunities going forward. Hence, this stock remains in focus today on back of this.
Well, thank you so much for that, Upasna. Both the stocks, PG Electroplast as well as Whirlpool, doing quite well in the session today. Well, one particular stock that I'm tracking is actually Edgy Infra. That particular stock too has seen some green in today's trading session. Now, what's actually happened over that is that the company yesterday to the exchanges has informed that one of its subsidiaries has entered into a battery energy storage purchase agreement with NTPC Vidyut Vyapar Nigam Limited. Remember, a lot of road companies, a lot of infra companies are diversifying, and Edgy Infra too is making a play for the same. Along with that, a couple of days ago, remember, the company went ahead and acquired close to 28.4 lakh shares in another subsidiary, which is Edgy Jaipur Solar Project. Now, this particular acquisition was done at via the rights issue at 10 rupees a share. Now remember, just to give some context, HG Infra had guided to a total order inflow of close to 12,000 crore as far as FY25 was concerned, and this was against just an order inflow of close to 4,500 crore. The total order book at the end of Q2 stood at over 16,600 crore, and remember at the end of FY24 the order book just stood at around 8,480 crore. On the back of that, HG Infra today doing quite well.
Indeed, and let's get to the other big story which Money Control has picked up from its sources. The Tata Capital, the flagship financial services arm, the NBFC arm of Tata Group, has initiated work on a big bang listing. The last IPO from the conglomerate was Tata Technology, which had a bumper debut last year, November of 2023. Now, Ashwin is joining us on the phone line. He's picked this up from his sources and he's here with the details. Ashwin.
Good morning, Rima and Vivek. Yes, this is a story that broke last evening on Money Control. After Tata Technologies, the House of Tata is now preparing for the next big IPO from Bombay House, and that's coming in from their flagship financial services arm, Tata Capital. Now, of course, the clock is ticking for the Tata Group because this IPO is being done to comply with the RBI's mandatory listing norms for upper layer NBFCs. Tata Capital falls in that list, and the deadline for that is September 2025. What I'm picking up from my sources is that Tata Capital has initiated work on a big bang IPO of Tata Capital, and what we're given to understand is that the size of the IPO is likely to be in excess of 15,000 crore rupees, maybe a combination of both primary and secondary issue of shares. Early advisors have been roped in, investment bank Kotak Mahindra Capital and law firm Cyril Merchant Mangaldas. Those are the details that we're picking up at this point in time. Our queries to Tata Sons and Tata Capital have remained unanswered as of now. But keep in mind that this is an important IPO that is coming in from the diversified conglomerate. Tata Capital, of course, is a subsidiary of Tata Sons. Tata Sons directly owns around 92.83% of Tata Capital. There are a few other Tata Group companies that hold a stake in Tata Capital as well. If you talk about the size of Tata Capital, it had an AUM of around 1,58,000 crores as on March 31st. Also keep in mind that the merger of Tata Motors Finance with Tata Capital had also been approved earlier in June. So therefore, consequently, Tata Motors will also have around 4.7% stake in the ultimately merged entity. So an IPO and a deal of big consequence for the group, all eyes on how they fast track it to meet the September 2025 deadline. Back to you guys.
Thank you so much for that, Ashwin. All of the Tata Group stocks on the back of that particular development that you've reported are doing very well in the session. Well, moving on, now let's introduce Growth Code, a special initiative by Grow and CNBC-TV18 with the aim of empowering investors and traders. Prominent investors and professional traders gathered at Grow's Trading Right event on November 9th to share their valuable insights and strategies. Here's a snippet of Arjun Tandon, partner at Kailasa Capital Advisors, sharing his thoughts on the risk of trading with small capital. Let's listen.
Let us say anybody who wants to do option selling. तो ऑप्शन सेलिंग में लगभग 1-1.5 लाख लगता है पर लॉट. अब अगर आपको इन सारी चीज़ों का बेनिफिट उठाना है, आप चाहते हो कि मैं थोड़ा डिफरेंट इंडाइसेस में काम कर लूँ, थोड़ा पोजीशन साइज एक्स्ट्रा रख लूँ, तो मुझे लगता है 10 लाख 15 लाख इंडेक्स के लिए आपको चाहिए ऑप्शन सेलिंग. उससे कम में आप जाओगे तो इट इज़ डिफिकल्ट टू सस्टेन. सी इम्पॉसिबल कुछ नहीं है, हर चीज़ प्रोबेबिलिटीज़ की गेम होती है. प्रोबेबिलिटीज़ आपके अगेंस्ट होती जाएंगी जितनी छोटी कैपिटल के साथ आप मार्केट में आ रहे हो. अगर आप सेम ऑप्शन सेलिंग स्टॉक्स में करना चाहते हो तो नेचुरली आपको डिफरेंट स्टॉक्स में पोजीशंस बनानी पड़ेंगी. कल को किसी भी स्टॉक में कुछ भी न्यूज़ आ जाती है तो वो आपके अगेंस्ट जाएगा. तो स्टॉक्स में अगर आपको पोजीशन बनानी है तो आई फील 20 लाख के आसपास आपको चाहिए, सो दैट आप एक डिफरेंट नंबर ऑफ स्क्रिप्ट्स में आप ट्रेडिंग कर पाओ.
It is on that margin, the margin value between purchased price and resale price. 12 लाख में खरीदा, 9 लाख में बेच रहे हैं सेकेंड हैंड यूज्ड व्हीकल के नाम पर, On the margin is only this 18% is being put, as would be for any used car. So it is on the margin, not on the entire amount at which the car is being sold. So EV vehicle का हमारे recommendation तो 5 को ले आओ उसको भी जैसे EV का नया vehicle का rate है. मगर after विस्तार discussion, the marginal value के ऊपर ही ये 18% डाला जा रहा है जैसे कि हर used vehicle का है. So more can be asked as question. It is not a blind application of 18%. It is more thoughtfully done. Our recommendation was for 5%, but post that, the discussions have resulted in this. The concept note is got to be studied. In principle, the council has accepted it. Once the concept note is studied in detail, then again it will be presented before the GST Council. Once they agree on simplifying as per the note, the registration process for small companies, then the amendment will have to be done in the law. So that is one thing which I referred. Training partners, skill training partners of the National Skill Development Council, उनको जो approved partners है, not everybody, जो approved partners है, उनको GST exempt करने के लिए निर्णय हुआ है, मगर notification आएगा बाद में. Payment aggregators who do less than 2,000 rupees payment are eligible for exemption. But let us understand, and I provide this clarification now, that this exemption does not cover payment gateways and other fintech services which do not involve settlement of funds. So payment aggregators alone, I'm talking about, who do less than 2,000 rupees will have that exemption provided. Another important decision, there are several which will be covered in detail in your press note, which all of you all will receive. I clarify that no GST is payable on the penal charges.
Welcome back to Trading Hour. Well, let's now shift our focus to the commodity space. Manisha joins in, and today, Manisha is focusing on metals.
Thank you for that. Yes, I am. If you look at 2024, Vivek, and you turn back, you will see that the best of the performance within the metal sector has come in from zinc, where we have seen 13.5% of gains. And even as copper is called Dr. Copper, we haven't seen that kind of a performance come in from this one. And that perhaps tells you a story. Also, when you look at the aluminum prices, and even as there have been various pardon me, supply concerns coming in for aluminum. When you look at alumina and bauxite, we haven't seen prices gain up as much. So clearly, there was a huge amount of short covering and fresh longs that we saw happen in for zinc. Well, the markets also have seen concerns come in from China, and that is a theme that we seem to be carrying forward into 2025 as well. There is still weakness in Chinese demand, especially when it comes from property as a sector. The lack of big bang stimulus measures, fiscal spending is something that the market still watch out for. And to add to that, there are now concerns about tariffs from US coming into China as well. And China already has started to curb. We've seen that tax rebate already being announced from China. So that is going to be one theme to keep an eye on. The second is going to be about the currency moves. We have seen Chinese yuan continue to be depreciated. The US dollar index is trading at a 2-year highs. So where the currencies move forward is going to be yet another thing to see. The third thing is going to be about energy transition, and most of us believe that 2024 perhaps could define that, and energy transition would see a lot of demand coming in from metal. That clearly was not seen yet again, but that seems to be shifting as a theme into 2025. The fourth is going to be about on how would you see decarbonization, investments into newer mines, what kind of JVs would we see in metals, and that would define on how the metal prices would be in 2025. In the meanwhile, well, copper is something that everybody would keep an eye on. Currently, we are trading at around $9,100 a ton. And the most bearish of a forecast comes in from Bank of America at around $9,400. But all the other banks including UBS, Goldman Sachs, Citi and JP Morgan believe that 10,000 and plus kind of levels is what you could see in 2025. Now comes zinc, and here the street is totally divided. We have some banks like SMM and Trading Economics anticipating that you could be looking at 2,000 to 2,600 in sense of Fitch ratings as well. And then you have a report from Citi suggesting that 3,100 could be a level that you could see for zinc. Zinc actually is the best performer within metals coming in from Citi there. So as you can see, a very big divide, and anywhere between 2,000 to 3,000 is where the street anticipates the zinc prices in 2025.
Thank you very much for giving us these updates. The rupee continues to inch lower at new record levels, 85.18. We opened at 85.13, and now it's lost 5 paise more. Get into a break. On the other side, we'll invite Mitesh Thakkar and get in a few top trading bets. Stay tuned.
And collected by banks and NBFCs from borrowers for non-compliance with loan terms. This will be very important for small businesses. So I repeat it. The Council has desired that we issue a clarification that no GST is payable on the penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with loan terms. There are 3 things on which, even as the GST Council was busy deliberating, from the morning, there's a lot of speculation in the media. And as a result, there's a lot of speculation in the social media. अरे पॉपकॉर्न के ऊपर भी डाल रहे हैं टैक्स। मैं मीडिया से हाथ जोड़कर रिक्वेस्ट करती हूं, ये पूरे प्रेस मीट हम करते हैं हर जीएसटी काउंसिल के बाद, और टैक्स ऐसे विषय है जिसमें बहुत लेयर्स होता है। कोई आंख बंद करके टैक्स लगाते भी नहीं है और आंख बंद करके हटाते भी नहीं है। पूरे विषय समझने के बाद प्लीज आपके मीडिया में चलाइए। पॉपकॉर्न के ऊपर टैक्स, मैं इसका पूरे पृष्ठभूमि आपके सामने रखना चाहती हूं। सॉल्टेड पॉपकॉर्न, कैरामलाइज्ड पॉपकॉर्न, प्लेन पॉपकॉर्न, ऐसे स्टेट्स हैं जहां नमकीन के नाम में पॉपकॉर्न सॉल्टेड भी सेल होता है कि नहीं? नमकीन है वो, मगर जब पॉपकॉर्न सॉल्टेड सिर्फ नहीं है, उसमें कैरामलाइज्ड पॉपकॉर्न भी मार्केट में आता है एडेड शुगर के साथ। एडेड शुगर के चीज हर एक में रेट एक है, नमकीन के ऊपर रेट कम है। सो कैरामलाइज्ड पॉपकॉर्न का ट्रीटमेंट के ऊपर सब लोग विस्तार से चर्चा की। व्हेन यू टॉक आउटसाइड इट लुक्स सिली, अरे पॉपकॉर्न के ऊपर इतना चर्चा चाहिए क्या? मगर हर आइटम के ऊपर फिटमेंट कमेटी में स्टेट्स भागीदारी लेकर चर्चा करने के समय वो क्लियरली बोलते हैं एडेड शुगर वाले चीज को तो हम ट्रीटमेंट अलग ही देते हैं, चाहे वो ड्रिंक हो, कार्बोनेटेड ड्रिंक हो, जूस हो, जिसमें एडेड शुगर है। इसीलिए पॉपकॉर्न का ट्रीटमेंट में जब तक वो नमकीन है, सॉल्टेड है, मसाला एडेड है, चटपटा मसाला है, चिली।
Welcome back. Biocon is in focus after a couple of generic drug approvals. Vinny is here with the details. Vinny.
Good morning. So yes, Biocon is in focus after the company and its European partners, Zentiva, have actually received a procedural approval that's called decentralized procedure approval for a complex formulation, which is liraglutide. Now, this is for the European Union region. Now, what does it do is because they have received this approval, they don't need more market authorizations for other countries in the European Union region. So that would be saving them some cost in terms of applying for new approvals. Other than that, this is a generic version of a Victoza, which is a treatment drug which is used for type 2 diabetes. So on the back of this, this drug is also used for GLP-1 opportunity, which is a weight management opportunity and treating weight management. So that is a key factor to watch out for. Now, do not forget the management has already spoken about this opportunity in its Q2 con call. They were expecting this approval coming in, and they have already applied for a review with the US FDA for this similar drug as well. So keep an eye out on this one. Analysts are saying that currently for this Victoza drug brand, the sales were around $1 billion in the last year in terms of global sales that we saw coming in, and especially in the rest of the world. In that rest of the world region, European Union would be accounting to around 200 to 300 million sales. So a good opportunity that comes in for Biocon, an important drug that they will be focusing on, and the opportunities will start shaping up in H2 FY25 as well as FY26 for the company.
Thank you so much for that, Winnie. Biocon now trading near the day's highest point. Well, moving on, positive brokerage views continue to come in as far as the defense sector is concerned. Upasana is here to tell us more.
Well, defense sector remains in focus today as a lot of brokerage notes are saying that the defense sector is on a positive outrun. Now, Elara says that it is expecting a ordering flow to rise sharply in Q4 FY25, given that the defense capex is set to be met in FY25. Now, allocation to domestic companies stands at 75% of the total budgeted defense capex, and it also says that the engine woes for HAL may end as soon as General Electric will supply F404 engines in March, and inflows for HAL will jump by 1.2 trillion in FY26. Now, they have highlighted the top picks for the sector. HAL, they have given a buy rating with a target price of 5,465 per share. They've given a buy rating for BEL with a target price of 345 per share. Bharat Dynamics, they've given an accumulate rating with a target price of 1,300 per share. And Garden Reach, they have given an accumulate rating with a target price of 1,660 per share. Now, Nuvama says that it is optimistic on India defense space. It says that the huge localization push to reduce dependence on disrupted global supply chain and even continued modernization efforts with large program coming ahead of expected lines. Hence, their top picks for the sector is BHEL and Data Patterns. Now, Phillip Capital also has a positive outlook. It says that the defense sector stands out as a compelling investment theme, offering multiple growth levers and strong visibility for the long-term execution. Overall, they maintain a positive outlook on the sector, favoring the stocks with favorable risk-reward profile, such as BEL. They have a buy rating with a target price of 390 per share. HAL, buy rating with a target price of 5,500 per share. And lastly, Data Patterns, buy rating on this stock with a target price of 3,400 per share.
Thank you very much for that. Defense stocks are on fire. Mitesh is now with us for a quick technical check on the markets. Mitesh, still very, very quiet. Anything that you've gleaned by way of a trend and any defense stocks that you like?
Pretty quiet, actually, because post the bounce back, we haven't seen any kind of follow through. But I still believe that this is all a process of, compression, and we are not looking at some kind of expansion happening in either direction. So, as I said earlier, I think 23,850 broadly on the upside and 23,600, 550 on the downside is the range. So we're still within that range, not much happening on the index. The Bank Nifty between the two indices is slightly on the weaker side. But if it can clear 51,400, then I think the Bank Nifty should be able to gain some strength, and that in turn might help the Nifty to go up further higher. But as of now, I think I'm waiting for that 51,400 to be clear.
Mitesh, what are your individual picks for the day? Anything that you're liking?
So Jubilant Food is on the buying side. Buy list. It's buy with a stop at 689 for targets of 725. And I'm waiting for some kind of a breakdown on the chart of Kalyan Jewellers. If it breaks 715, 714, take a short version with a stop at about 730 and look for a target of around 690.
Okay, thank you very much for that. We will slip into a very short break. On the other side, we'll discuss market fundamentals. Anirudh Garg from Inva Asset PMS joins in next.
Sub 5%, am I right? 5%. But when it has added caramelized sugar, it is no longer namkeen. इसीलिए उसका रेट अलग है. So वो थोड़ा आपके प्रेस नोट में हम विस्तार से उसका एक्सप्लेनेशन दे रहे हैं. विषय को समझकर प्लीज जितने भी आपके मीडिया के द्वारा स्प्रेड करना है करिए.
Well, the problem of 2024 for the global steel industry has been that Chinese steel demand has been weak, which has resulted in higher Chinese steel exports. Well, let's explain this to you in further detail. India's steel demand has been rising at 10% over the last 4 years. But in the same period, Chinese steel demand is down by 13%. Now, India is the second largest steel producer and will remain an important growth driver in the world. The issue is China has slowed down, which has resulted in Chinese prices slipping to COVID lows, which in turn has pressurized global steel prices. The Chinese housing market has remained weak, with prices of newly built commercial and residential buildings slipping all the way since mid-2023. This has impacted steel demand, thereby leading to rising iron ore inventory at Chinese ports, which is currently way higher than the average inventory levels. The pain point is that Chinese monthly exports have been rising because domestic demand out there has faltered. And for the first time since 2016, Chinese steel exports will clock more than 100 million tons. It's also on course to challenge the previous all-time highs. Well, the Indian steel industry, they are up in arms. Mr. Sajjan Jindal has made a solid pitch. He wants some protection for the domestic ferrous industry, because Chinese steelmakers, they have an unfair advantage and part of their exports are trickling into India. Well, the Steel Ministry has recently proposed to the Finance Ministry to impose 25% safeguard duty on steel imports, as India has now turned a net importer from being a net exporter in the previous year. Well, Nuvama has said the imposition of some safeguard duty along with the onset of a seasonally good quarter could give the steel producers some elbow room to go ahead and increase prices by around 2,000 rupees per ton, as domestic prices are at a bit of a discount in comparison to the landed cost of imports. But they also highlight that factors like anti-dumping investigation in Europe and aggressive exports by China is eating into India's exports, which is more concerning than the elevated imports that we're seeing. We'll have to stay tuned to see the government's action with regard to these rising imports, but things could get better for the domestic steel industry from here on, because Chinese steel prices could have bottomed out. Their exports as well could slow down. Additionally, domestic.
Welcome back to Trading Hour. Well, on Friday, you did see one particular stock take it on the chin, and that was Siemens. Post the analyst call, and while the analyst call was on, the stocks saw a very deep knock on the back of some moderating commentary from the management, especially in terms of capex. Yesterday, the stock was largely flat, but today, the sell-off has resumed. The stock was down almost 3%. Remember, whole host of brokerages cut both their EPS estimates as well as the target valuation multiples for Siemens. Today, down another 2.5 to 3%. Well, but moving on, 2024 has been about putting more than just convenience store at your fingertips and about delivery within 10 minutes. It's been about the meteoric rise of quick commerce with apps like Blinkit, Zepto and Instamart stealing the limelight, and entrepreneurs and investors wanting a piece of the action. On our ongoing series, Rewind 2024, CNBC-TV18's Shilpa Ranipeta reports that while 2024 was the year of the quick commerce boom, 2025 will be the year of the survivor.
First, they said no one wants delivery in 10 minutes. Then a few players offered it anyway and spoiled the Indian consumer. As the year progressed, everyone wanted everything in under 10 minutes. Groceries, iPhones, flowers, party hats and decorations, juicers, speakers, shoes, jewelry, even bed sheets.
Or is their expectations just keep expanding. They just keep going higher and higher. And now we're starting to look at consumers wanting things in 10 minutes, but now it's also wanting a lot more things in 10 minutes. And maybe even like wanting their food in 10 minutes. So bed sheets was 3 months back. It was the most searched, like, let's say, more searched with less selection than what consumers wanted. So that's an example. Like, you would wonder why people want bed sheets in 10 minutes, but they want it.
The Indian consumer loved it. Blinkit, for instance, delivered nearly 93 million orders in the second quarter alone, and Instamart fulfilled nearly 70 million orders. And so 2024 became the year of the quick commerce boom. Zomato's Blinkit and Swiggy's Instamart have been growing in triple digits and are growing nearly 6 times faster than their food delivery businesses. The numbers did not go unnoticed by investors. While Zomato's stock has surged 137% between the 1st of January and the 17th of December, Swiggy's 11,300 crore IPO in November was subscribed 3.6 times. It listed at an 8% premium to its issue price despite a muted market, and as of mid-December is up 52% off its lows. CLSA expects it to rise an additional 32% to over 700 rupees per share. Zepto, on its part, is the highest funded startup in India, having raised $1.35 billion in 2024 alone. It is currently processing over 7 lakh orders a day. Small wonder then that a slew of existing e-commerce players are jumping onto the bandwagon. Flipkart has launched Minutes, Myntra has launched M-Now, Amazon is testing Tez, and Big Basket also pivoted to quick commerce.
Last year was about 100% for the category itself. This year, I think quick commerce will grow by 50 to 70%. And over the next 2 to 3 years, I don't see this pace of growth slowing down. Right. It should continue to grow at about 30, 40, 50% CAGR over the next 3 years. All quick commerce players are experimenting and trying to figure out what are the other products that you can add on. So a lot of experiments are going on.
Experts say that given a massive total addressable market, the increased competition will not be a problem, provided companies can execute at scale.
I think it's a good thing. A lot of the innovation happens when there is more competition. I feel that there are going to be a lot of players. There are going to be players that are going to be specialists in certain areas. And I think this is a very, very large space as compared to food delivery, so it should be able to support multiple successful companies.
It may boil down to how much these companies are willing and able to do to survive. Blinkit, Instamart and Zepto, after all, are yet to turn profitable, though they are headed in that direction. But similar apps like Joker, Fridge-No-More, Bike have failed even in a large market like the US.
It comes in and just starts randomly, discounting, which has happened historically in the past without naming names. Then we think it's like a death knell. That's like the worst way to get market share because it's not even long term. You're not going to be able to hold on to that market share when you eventually do pull the plug.
As 2025 dawns, quick commerce companies are trying to get food and drinks delivered to consumers within 10 minutes, and that will be the next frontier. These quick commerce players are also testing features like quick returns, pay later and EMI options to make 10-minute delivery accessible and appealing to more. So 2025 could well be the year the quick commerce model will be put to test, and the company that manages to keep costs in check and turn profitable while keeping up with the ever-changing expectations of the impatient and spoiled consumer will determine who emerges a survivor. In Mumbai, Shilpa Ranipeta.
Thank you very much for that. The impatient and spoiled consumer. That's what quick commerce has done for us. But let's see who survives, the fittest of the survival of the fittest. But get into a break, and here is some good news for all our viewers. India's business news leader is now just a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, financial world updates, all at your fingertips. So don't wait. Download the CNBC TV18 app now from the Apple Store or the Google Play Store.
Well, they've chalked out their capacity addition plans with focus on value addition and cost efficiencies, which could support volume growth and probable expansion of unit profitability. Well, the steel industry hopes to get its sheen back in 2025.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Invest.
Welcome back. Now, Team Lease is in focus because earlier this week, the company acquired stake in two companies, TSR Dara Shaw, and the other one is Crystal HR, which will expand the company's services in HR tech. To talk more about it, we have with us Ramni Datti, CFO of Team Lease Services. Ramni, thank you very much for joining in. This is Rima here. We'd spoken just recently, and you had indicated that the company is very actively closing in on acquisitions in the HR tech, and that's played out. So can you tell us these two acquisitions, what does it do in terms of revenues and in terms of EBITDA, and how much have you paid for these two acquisitions?
Hi, Rima. Good morning. So we have been saying that we are actively looking for M&A opportunities, especially in the HR tech space, because the addressable market is huge. Team Lease as a brand is very well known with corporates in terms of payroll management, employee engagement, payroll-related compliance management. And we are looking for expansion in HR tech space, which gives us additional portfolio of services and solutions, which we can cross-sell to our existing staffing clients, as well as create it as an independent P&L. So with that intent, while we have organically started our own HR tech suite, we are also looking for M&As that can roll up and expand the service portfolio. So now with TSR Dara Shaw, we are able to access a large enterprise base of clients, almost with 170,000 payroll records. And these are some of the largest BFSI clients that we are talking about. So the opportunity for upselling as well as bringing in more value addition from Team Lease is huge. And we also want to use this as an opening balance to acquire more clients in BFSI space as well as enterprise segment. Now coming to the second one is an interesting thing, the Crystal HR, which is a HRMS platform. There are very few HRMS platforms which are profitable in the country right now. Most of them are not making profits. The cost of acquisition is very high in this space. However, Crystal HR has managed to build this business over 20 years, focusing on mid-segment and mid-segment of enterprise clients. So they have close to 3 lakh payroll records being serviced on their platform, working with almost 400 plus corporates across the country, while they have more concentration, more in the south of India, we want to use TeamLease brand and take it across other geographies. So now with TSR Darashaw and Crystal HR, we have a larger portfolio both in managed payroll as well as tech-related solutions on employee management.
Understood that, Ramani. The other question that we want to ask you is in terms of valuation, how did you value these companies? We understand together you've paid a little over 40 crore for both of these acquisitions. What was the multiple that you've given? And you also mentioned about both cross-selling as well as upselling opportunity. Could you give us a number or quantify the opportunity size that you see with both of these acquisitions?
Yeah. No, for both the deals, we went with the profit multiple since TSR Darashaw is more of a service business. So there, the PBT multiple is slightly on a lower side, which is about 5.5 times. There are also some other adjustments which we have to take into consideration. Crystal HR being a product business, it's slightly above 7 times of the PBT. So this also is very competitive in terms of the other deals that have been taken place in the recent past in HR tech space. Sorry, I missed the second part of your question.
Would you be able to quantify the cross-selling, upselling opportunity?
I think it's too early to exactly quantify because right now what we are assessing is for the pressure that we are seeing in staffing PAPM, especially Crystal HR will give us additional services which we can upsell to the clients in our staffing segment, and that can help us expand PAPMs marginally. Over and above that, since these two businesses put together will contribute close to 5-6% of our profits, that will also help to take up the overall group profitability.
And just to get the numbers in, what will it add to your revenues and at the EBITDA level? And as a percentage of, say, FY24 numbers, what would it stand at? How material are these?
On revenues, they are not material, Rima, because in terms of top line, their contribution is like less than 1%. They're about 22 crore in revenue. But as I mentioned, in terms of EBITDA contribution, based on their current run rate, it would be about 5 to 6% contribution on our group EBITDA.
I just want to take you to the underlying business itself. How are demand trends playing out both in general staffing as well as specialized staffing? You did mention last time that it's going to be more of a volume game for you. You're expecting steady state margins. So in Q3 especially, has there been a pickup you've witnessed?
In Q3, barring two sectors, which is BFSI and IT services, the demand has been fairly stable, be it consumer verticals, telecom, retail, pharma, quick commerce, across all these sectors, and manufacturing is again one of the largest headcount addition sector for us in this quarter as well as next quarter as well. So we are seeing steady demand. BFSI, as we called out earlier, because of the RBI restrictions, especially in the unsecured loan space, NBFCs and staffing profiles. So there has been a kind of pressure on volume addition in BFSI space. Coming to IT, I think it would take 1 or 2 quarters for us to see an actual recovery. As of now, at least the headcount decline has been ceased. We are seeing marginal improvement in net addition in IT space. But for us to call it as a recovery, I think we are at least 1 or 2 quarters away.
So Ramani, as we look ahead to the next year, what would be the top 3 priorities for TeamLease? You'd spoken about the acquisition, so that's played out. So that's done in 2024. So now for 2025, your top 3 priorities.
So definitely it's profit expansion. So that's our topmost priority because over the last 3-4 years, the profits have been flattish. So our topmost priority for next year is to make sure consistent profit expansion quarter on quarter. That's the topmost. Secondly, in terms of margins, because again, be it in staffing or specialized staffing or at group level, the margins have been diluted over the last 3 years. So the primary focus will also be in terms of how can we bring in solutions which can help us expand the margin percentage as well. Lastly, again, be consistently warm on our top line growth, maintain 20-25% revenue CAGR.
Thank you so much for joining us, Ramani, and we wish you and your team a very happy 2025. Well, moving on, let's now take a short break. Up next, we'll discuss market fundamentals with Anirudh Garg from Invest at PMS.
effective strategies with insightful expert opinions. On the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
2024 saw a lot of action in the mutual fund space, and funds raised via NFOs has definitely been one of them. Let's look at the numbers. Funds raised by NFOs or new fund offers stood at 1.04 lakh crores in 2024. This is still the month of November, and we have more NFOs in the month of December that has not been accounted for here. That is an uptick of 63% versus funds raised in 2023 at around 63,800 crore rupees. Now, this was slightly lower than 2022. That time, the number was 67,336 crore rupees. But 2021 also saw massive inflows. This was double the amount versus 2020, when the amount raised was around 53,700 crore rupees. Now, if we talk about the number of NFOs, 2022 still tops the list. So far in 2024, we've seen 205 NFOs which have been issued till November. This compares with 212 in 2023, 246 in 2022, 140 in 21, and around 81 in 2020. Some of the categories that saw high flows: multi-cap funds getting in 6,300 crore rupees of money, and other ETFs at around 1,400 crore rupees. But the real star of this year had to be sectoral funds. 40 sectoral or thematic funds.
Welcome back to Trading Hour. Well, as promised, Anirudh Garg from Invest at PMS joins us now to discuss market fundamentals and his top sectoral picks. Thank you so much for joining us, Anirudh. Anirudh, the first thing that strikes us is the fact that you are now sitting on a 100% cash portfolio. That's about as bearish as you can get as far as the equity markets are concerned. What is the reason? What is the rationale for completely exiting, the entire equity portfolio?
A very good morning to all the viewers of CNBC TV18. See, I think as Morgan Housel has rightly said, everybody is right in the stock market. You just have to rely on your framework, and the framework should match your psychology. What, as an investor for a very long time, I started investing in 2006. We've been a fund since 1992. What I've realized over the time that whenever a bull run comes, the bull market correction, or particularly a bear run which follows it, a lot of wealth that you've made in a bull run gets depleted. So it's okay, it's okay to take a breather from time to time. It's okay to not be investing in very expensive markets. I think that is the prime rationale, not to be We are all, I believe, investors and not stock market investors alone. And the overall, I think the motive is to grow the capital. And since the markets are expensive, A lot of FOMO factor is there in the market. A lot of investors are now jumping in with expecting the returns that we have seen in the last 1 or rather 2 years. So I believe, very frankly, that CAGR would not be there, and there is a significant room for downfall from here.
Would you quantify the downside? And what would be the marker for a correction? Because for some time now, a lot of people have been calling out for a correction, but the corrections have been shallow. It's only now in the last 3 months that pretty much a 10% correction has persisted. Till then, it used to be a 5% correction and the markets would instantly bounce back. What would be, what makes you convinced this time that the correction is going to be, more deep-rooted and broad-based?
See, first of all, Rima, a very good afternoon. And the first point that I believe is the overexposure that the Indian retail investor now has in the market. I have had discussions with a lot of retail investors, particularly from our PMSs, where I see that I was talking on your sister TV show as well, where I was telling them that an investor to whom it was difficult to, convince to put in 50 lakhs back in July 2022, today has a portfolio of around 10 crores, which is around 90% of their capital into the markets. So a lot of money from new retail investors has come into the market. And apart from that, apart from these behavioral biases, the valuations are also not supportive. See, the global growth is going for a toss, especially in India. If you see, the impact of the US inflation, something is not right with the Indian economy. We are not cutting rates. We did not have an inflation problem, but we are not cutting rates as expected. We are lagging behind the US. And also, I believe that the earning depletion that is happening in the Indian economy is not right. India was particularly going through an old economy run. Old economy run by means either the interest rate sensitives go up or these capex sectors go up. This time, since there was no global growth and global inflation under control, so it was a chance of the capex, and we saw a wonderful run in railways, defense, infrastructure, and power. But the tide change after the general elections. BJP not getting a majority. We should all, we all know that India was getting a very high rating as compared to rest of the world. Why? Because everybody believed that India is being run by one of the best business minds out there. This government had tremendous allocation to capex, and it was taken very positively. But as the tides changed after general elections and now schemes like Ladli Behna, just alone in Maharashtra, it is 46,000 crores of expected outgo. And if this happens, I believe that the derating for the Indian economy is something that can come right now. So just a little bit cautious on the markets. We going in 100% cash does not mean that the markets will, go into the correction mode. We went in September 2021 up till the Russia-Ukraine war broke out in early March 2022. So it is a part of our strategy that whenever we feel that the markets are expensive to exuberant, we go in for cash and take a breather from time to time.
Anirudh, another question that we want to ask you is, now in the ongoing correction, what is it that you're finding attractive? Or, let's say maybe a few stocks from the sectors you like go down another 5, 7, 10%. What is it, or which sectors would you like?
Okay, just to answer the previous question, I forgot the point with Rima made. If I can quantify it, in Nifty, we are seeing around 8 to 10% correction, but in the small and mid caps, I think it will be 1.5 to 2x of that. So somewhere around, say, 13, 14 to say a 20% correction can also come in the mid and small cap space from the highs that they had achieved. And when it comes to the sectors that we are liking, of course, I believe that somewhere the capex theme that has started in India, it is a primary theme of this bull run, and I think it will continue. So somewhere when the valuations are supportive of the growth that is going to come, these themes would become attractive with time and price correction. A lot of consumer names, something like a food delivery and a confectionery delivery company is something we like. The airlines are getting this airline in India is getting a lot of market shares. So, these are the companies that we're liking. Hotel companies are something that we like a lot. So yes, going forward, consumer names are something which are gaining traction. Capital goods again would become, when it comes in the valuation game, would become very, very attractive for us. Yes, but we are not very, very bullish on, say, on the other side, we're not bullish on autos, we're not bullish on global commodities like metals and all.
And how long will this correction last, to your mind?
I think there are a lot of events, Reema, that are coming in the next couple of months. We have Mr. Trump coming in, so a lot of drama expected then, and then we have our budget. So generally, if you look at the past few years, say the past 15 years, generally, whenever there is confusion, there is an increased amount of volatility, and in that increased amount of volatility comes capitulation in the market and ultimately leads to a formation of a strong bottom. That is something we believe should happen in the next 2 to 3 months.
Okay, thank you so much for joining us, Anirudh, giving us a sense of markets. You're quite cautious as far as the entire market setup is concerned as well. Thank you so much for sharing your views with us today. Well, with that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
Highest flows that we have seen in the last 5 years. Sectoral funds garnered around 67,772 crore rupees in 2024 so far, which is more than the flows in this space from 2020 to 2023. In this period, sectoral funds garnered around 52,165 crore rupees. This is via 59 NFOs. Even index funds actually saw a lot of interest. 76 NFOs in the index fund space, raising 12,147 crore rupees, which is the highest that we have seen in at least 5 years. Index funds have always seen a lot of interest, and more so in the last 3 years, with more focus on passive investing. In 2023, 53 index funds were launched, garnering around 2,700 crore rupees. This compares with 85 in 2022, and these numbers were very low in 2021 and 2020, as you can see on your screen. Interestingly, no mid-cap funds were launched in 2023 and 2024. This space did see a big rally, but did not see a new product here, but saw massive flows in the existing names. Also, only one small cap fund was launched in 2024. And now we are towards the end of 2024, and December also has seen a lot of action in the NFO space. But will this continue in 2025? Will there be new products by mutual funds houses to diversify their portfolio? Well, time will tell.
Gonna be president, that I can tell you. And I'm safe, you know why? He can't be. He wasn't born in this country. Now, he's a great guy, and we want to have him. Everybody, so many people are in this audience that have helped.
ईवी व्हीकल्स उसके ऊपर भी सुबह से चल रही है जब प्रेस कॉन्फ्रेंस फाइनल नहीं हो। ईवी व्हीकल्स के ऊपर ये एब्सोल्युटली क्लियरली मेंशन करना चाहिए कि नया व्हीकल्स ईवी खरीदने में 5% है. Am I right? 5%. पुराने ईवी व्हीकल्स खरीदने का विषय ही आया है.
Team.
Stocks trade ranged ahead of Christmas with several overseas markets, including the US, set to shut sessions early. Energy and realties clock some gains, even as metals and financials lose ground.
The rupee drifts lower, hitting a new record low of 85.18 to the dollar, buying by oil importers, even as the RBI is yet to step in, according to dealers. The pressure on the rupee was expected due to the rise in the dollar index and an expected month-end dollar buying back home.
The Telecom Regulatory Authority of India has recommended giving prepaid customers the option of buying only voice or SMS packs and extending pack validity to from 90 to 365 days. Such a move by telcos could lead to some down trading, is the fear among the industry.
Network 18's Money Control reports that Tata Capital is likely to float a 15,000 crore rupee IPO in 2025 to meet RBI's upper layer NBFC norms. The stocks of stakeholders Tata Investment and Tata Motors perk up on the news.
Whirlpool inks a deal with PG Electroplast to source select washing machines. The deal is positive for the EMS player and likely offers cost benefits to Whirlpool besides giving it a Make in India croaking rights. Both stocks gain.
Good afternoon. You're with us here on Halftime Report on CNBC-TV18. I'm Hormas Fatakia. With me is Surabhi Upadhyay, and the 200 DMA continues to prove to be a headache for the bulls as of now. Well, it's Friday, it's a holiday, it's the holiday cheer. We're heading into a midweek holiday, and the bulls would definitely be hoping that we do end up above that 200 DMA mark of 23,841. Currently at 23,814 is where the Nifty lies, slightly off the highest point of the day. What's doing well though in today's trading session are a lot of these FMCG names like ITC. Mahindra & Mahindra is doing well, Tata Motors is doing well. We'll get to that, the Tata Group, in just a bit. But a lot of on the downside though, it's HDFC Bank and JSW Steel. Not many. It's pretty quiet as of now for the benchmark index, but that 200 DMA is the important level to watch out for, Surabhi.
Oh, absolutely. So it's very stock specific. I mean, the moves today, volumes are thin as one would imagine and expect. I'll just read out some more interesting movers from the broader market. Look at Amber Enterprises. Remember, Amber was up around 12-13% yesterday, and it's perked up again today. Its peer company, PG Electroplast, is the one that got that order from Whirlpool, but there's a hectic buying on Amber as well. Some of the foreign brokers are expecting a new policy to come in, a new form of PLI to come in, giving benefits of up to 40,000 crores to the sector. So some of this chatter seems to be keeping Amber excited. There's Sagility, where there are more positive brokerage notes coming through, and some of them from foreign brokers as well. Stocks up about 5%. And then you have some names like Hindustan Copper, MRPL. They're managing to find good ground as well. The only problem or the downside in the market today is that banks are not quite playing ball. In fact, the Bank Nifty is right now lower by almost 80 points. Speaking of banks and financials, actually, let's look at the money markets, where the rupee has been making all kinds of headlines. In fact, it has continued to drift even lower today. It hit a fresh low of 85.18. There is, of course, the international resurgence in the dollar, and there's been some dollar buying by importers as well. Let's actually go across to Lata to understand what's driving such downside pressure on the currency. Lata.
Yes, actually you summed it up very well. The dollars actually moved higher to over 108. The overnight number was 107.71, and thanks to that, pressure was expected. The rupee has drifted. Actually, what was startling, or what is startling about today's move, is that it's drifted straight away to that 85, almost 85.2 mark. It is 85.18. Normally, you would see a 5 paise move and then the Reserve Bank come in. But today, it appears the Reserve Bank hasn't yet stepped in, but bankers emphasize the word yet, because it could come at a round figure of 85.2. We don't know. In any case, this is also a holiday-thinned trading session. And there isn't so much of flows from the FII side. The dollar buying, as we noted, was largely because oil importers usually buy dollars for month-end payment of bills. And that's what has pushed the dollar, made the dollar more expensive. No one's talking of any technical levels. Some polls have been done in the market and people are expecting the first support level for the rupee at 85.2. There are some from other, public sector bankers who expect the rupee support to come in at 85.25. But, well, these are just standard expectations, lines in the sand. The rupee will drift lower as long as you don't see FII flows or other kinds of flows in, and as long as you continue to see the dollar perk up.
Okay, all right, Lata, thank you very much for that. So we'll keep an eye out on the currency and let's see if indeed it hits that level of 85.20. So that's what we have going right now. Actually, this fall in the rupee, it's not having too much of an impact on some of the IT stocks. Let's pull up some of the biggies like TCS. There's about a 0.5% gain, so it's not bad. Infosys also very minor, about a 3 rupee rise on Infosys is what you're getting. There is IndusInd, beg your pardon, there is Tech Mahindra, which is managing about a 5 rupee gain. So the gains, Hormas, are not, you know, extraordinary, because I think it's a lot more than just the currency's weakness, which kind of gets offset with hedges as well. It's going to be more about the commentary that they get from some of their large US clients.
Issues of their own as well, right? And we are heading down to earnings season as well. So the commentary from these companies will be very important to watch out for.
You know, I must put on board, since we were talking currencies, we were speaking with some of the IT analysts earlier, and many of them actually point out that while the rupee is weakening, it's cross-currency movements, and because of cross-currency issues in the quarter that's closing, Q3, there could be an impact of almost 1% on earnings for the sector as a whole, because of the way a lot of different currencies have moved vis-a-vis the dollar.
It tells you why there is no significant impact, right, on this. Interesting moves, then we'll keep an eye out on all of this. But it's time to take a short break. But before we do that, it's time for Growth Code, a special initiative by Grow and CNBC-TV18 to further empower retail investors and traders. Renowned investors and professional traders convened at Grow's Trading Right event on the 9th of November, where they shared valuable strategies. Here are some key insights from Arjun Tandon, the partner at Kelasa Capital Advisors, on how to determine your capital requirements.
एक एक्सपेक्टेशन सेट करना ज़रूरी है कि मुझे ट्रेडिंग से इतनी इनकम चाहिए. सो व्हाट इज़ योर फाइनेंशियल गोल? आप क्या चाहते हो कि मेरी मंथली इनकम ट्रेडिंग से कितनी हो, एंड दैट विल डिसाइड योर कैपिटल. सो लेट अस से कि आप कहते हो कि मैं ना 1% रिटर्न तो बना सकती हूँ या बना सकता हूँ. सो योर कैपिटल, अगर आपको मंथली इनकम 50,000 रुपए की चाहिए, योर कैपिटल विल बी 50 lakhs. अगर आपको लगता है कि आप 2% रिटर्न बना लोगे, देन योर कैपिटल रिक्वायरमेंट इज 25 लाख. एंड सिमिलरली, अगर आपको लग रहा है कि मेरी एक्सपर्टीज बहुत ज़्यादा है, मैंने कुछ क्रैक कर लिया है रिलेटेड टू ट्रेडिंग, आई हैव सम सेटअप्स जहाँ पे बहुत अच्छी रिटर्न्स आ सकती हैं, सो ऑन अ 5% रिटर्न एक्सपेक्टेशन आपको सिर्फ 10 लाख रुपए चाहिए.
To promote EV. GST Council is in favor of EV. Nobody is stopping people from buying EV. मगर used EV खरीदने के समय एक व्यक्ति दूसरे व्यक्ति को सेल करेगा तो कोई नहीं है उसमें. The same thing as 5%. No GST. Sorry. Used EV. An individual selling to another individual, no GST. But if a company has bought EV, or if there is a regular registered used car seller who buys EV, does some propping up in it, adds value to it and then sells it. It was felt by states and it was felt by auto and many others also that the EV market is not so saturated as yet that used cars will come. And category mein, therefore used cars category mein, EV भी है, petrol vehicle भी है, diesel vehicle भी है. And I like to highlight this point to you. हमारी तरफ से केंद्र सरकार, Government of India, which is 1/3 member of the GST, हमारी तरफ से एजेंडा में सेल ऑफ ओल्ड एंड यूज्ड EV vehicles को 12 से 5 तक ले आने के लिए we had suggested. But when the discussions happened, it is on that margin, the margin value between purchased price and resale price. 12 लाख में खरीदा, 9 लाख में बेच रहे हैं second hand used vehicle के नाम पर. On the margin is only this 18% is being put, as would be for any used car. So it is on the margin, not on the entire amount at which the car is being sold. So EV vehicle का हमारे recommendation तो 5 को ले आओ, उसको भी जैसे EV का नया vehicle का rate है. मगर आफ्टर विस्तार डिस्कशन द मार्जिनल वैल्यू के ऊपर ही ये 18% डाला जा रहा है, जैसे कि हर यूज्ड व्हीकल का है. सो मोर कैन बी आस्क्ड एज क्वेश्चन. इट इज नॉट अ ब्लाइंड एप्लीकेशन ऑफ 18%. इट इज मोर थॉटफुली डन. आवर रिकमेंडेशन वाज फॉर 5%, बट पोस्ट दैट द डिस्कशंस हैव रिजल्टेड इन दिस. The concept note is got to be studied. In principle, the council has accepted it. Once the concept note is studied in detail, then again it will be presented before the GST council. Once they agree on simplifying as per the note the registration process for small companies, then the amendment will have to be done in the law. So that is one thing which I referred. Training partners, skill training partners of the National Skill Development Council, उनको जो approved partners है, not everybody, जो approved partners है, उनको GST exempt करने के लिए निर्णय हुआ है, मगर notification आएगा बाद में. Payment aggregators who do less than 2,000 rupees payment are eligible for exemption. But let us understand.
Welcome back. Let's move to another story that's coming in from Money Control, and this is one that's really moving stocks today in the market. Sources are telling Money Control that Tata Capital, the flagship financial services arm of the Tata Group, is looking to list. It could be a big bang listing as well, as much as 15,000 crore rupees. Let's straight away go across to Ashwin, who's been breaking that exclusive story. Ashwin, so this is getting the market excited. I mean, stocks like Tata Investment, etc., are all higher, noting this news. What exactly are you picking up?
Good afternoon. So this is a story that was broken last evening on Money Control, and what I'm picking up from my sources is that Tata Capital, which is a subsidiary of Tata Sons, the holding company of the Tata Group, and also the financial services flagship of the diversified conglomerate, is in fact looking at an IPO in 2025. Work has begun, and the entire IPO process for a big bang listing has been initiated. That's what sources are telling me. 2 advisors have been roped in as of now: investment bank Kotak Mahindra Capital and law firm Cyril Amarchand Mangaldas. More advisors may also come on board at a later stage as and when required. This is going to be a really, really big issue. It is expected to be in excess of 15,000 crore rupees, and it's also likely to be a combination of both primary and secondary issuance of shares. Now, what is the trigger? The trigger, according to sources, is the fact that RBI has made it mandatory for all NBFCs that fall in the upper layer list to mandatorily list by September 2025. So the clock is ticking for the Tata Group. September 2025 is the deadline for NBFCs like them to get listed on the domestic bourses, and that is why this process has been initiated. If one looks at Tata Capital, it had an AUM of around 1,58,000 crore rupees as of March. If one looks at the shareholding of Tata Sons, the holding company, it's around 92% stake. Some other additional stake is also held by Tata Group companies and the trust. Also, don't forget that Tata Motors Finance, that is also an entity that is going to be merged with Tata Capital. So it's going to be a beefed up entity before the IPO. Let's keep a close watch on it in the new calendar year. A big one coming in from Bombay House.
That explains the move in a lot of these Tata Group companies, right? Ashwin, thanks a lot for that news break. And Tata Investment, Tata Motors, Tata Chemicals, all of these stocks are surging on the back of this news break by Money Control. But from one news break to another, and Amber Enterprises already was having a good year of 2024. And what has made this an even better year now is this news break from Sudarshan. He's joining in with the exclusive details that has led to this 7.5% up move in the stock. Sudarshan.
So Amber Enterprises has three business divisions. One is consumer durables, second is electronics, and another is railway subsystem. So what we understand from sources that Amber Enterprises now looking to demerge its electronics division, and post the demerger is completed, it will bring an IPO. And also sources indicate that bankers are already appointed for this purpose. Now talking about the valuation front, Amber Enterprises FY26 estimated PE is 54 times, and now if you compare peer-to-peer, Dixon's FY26 estimated PE is 99 times. And on the stock front, in 2024, Amber has given stock returns, that positive returns of almost 100%, while Dixon stock has surged almost 200%. CNBC-TV18 has CNBC-TV18 has sent the query to the management. Comments are still awaited. And talking specifically about the electronics division's performance, in FY24, it had formed 20% of its total revenue, company's revenue. But in Q2 FY25, revenue had almost doubled, and electronics division had formed almost 30% of total revenue. So obviously, Amber Enterprises will be in focus going ahead as well.
All right, Sudarshan, thanks a lot for that news break. 130% higher so far now is Amber Enterprises for the year, 74.35 now as we speak. But another good stock, another buzzing stock though in today's session is PG Electroplast, and that is after it entered into a contract manufacturing agreement with Whirlpool, and Upasna is joining in with more details on that. Upasna.
Well, certainly, PG Electroplast and Whirlpool have entered into a definitive agreement for contract manufacturing of select models of Whirlpool's semi-automatic washing machine, and under this arrangement, PG Electroplast will manufacture some of the SKUs for Whirlpool at its factory at Roorkee. Now, company has indicated that PG Electroplast is already an existing supplier of Whirlpool branded air conditioners, and both the companies have said that they will continue to evaluate potential expansion opportunities going forward as well. That's why this stock remains in focus today, surging higher in trade today.
PG Electroplast, it's been a multi-bagger, should be. At the start of 2021, the stock was at 14 rupees. Today's intraday high is well over 1,000.
It's been a phenomenal rise for all of these electronics manufacturing companies, Amber, PG Electroplast, a couple of the others, Keynes, etc. It's been an absolute dream run, with the government also supportive with PLI policies, and of course a lot of contracts happening from international MNCs like the one that PG has announced with Whirlpool. So big moves coming in today and over the year. We do have to take a very quick break. We will come back with a lot more on the markets in just a bit. We'll have our technical guest joining in and get you some trading calls.
And I provide this clarification now, that this exemption does not cover payment gateways and other fintech services which do not involve settlement of funds. So payment aggregators alone, I'm talking about, who do less than 2,000 rupees will have that exemption provided. Another important decision There are several which will be covered in detail in your press note, which all of you all will receive. I clarify that no GST is payable on the penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with loan terms. This will be very important for small businesses, so I repeat it. The Council has desired that we issue a clarification that no GST is payable on the penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with terms, loan terms. There are three things on which, even as the GST Council was busy deliberating, from the morning, there's a lot of speculation in the media. And as a result, there's a lot of speculation in the social media. अरे पॉपकॉर्न के ऊपर भी डाल रहे हैं टैक्स। मैं मीडिया से हाथ जोड़कर रिक्वेस्ट करती हूं, ये पूरे प्रेस मीट हम करते हैं हर जीएसटी काउंसिल के बाद, और टैक्स ऐसे विषय है जिसमें बहुत लेयर्स होता है। कोई आंख बंद करके टैक्स लगाते भी नहीं है और आंख बंद करके हटाते भी नहीं है। पूरे विषय समझने के बाद प्लीज आपके मीडिया में चलाइए। पॉपकॉर्न के ऊपर टैक्स, मैं इसका पूरे पृष्ठभूमि आपके सामने रखना चाहती। सॉल्टेड पॉपकॉर्न, कैरामलाइज्ड पॉपकॉर्न, प्लेन पॉपकॉर्न, ऐसे स्टेट्स हैं जहां नमकीन के नाम में पॉपकॉर्न सॉल्टेड भी सेल होता है कि नहीं? नमकीन है वो, मगर जब पॉपकॉर्न सॉल्टेड सिर्फ नहीं है, उसमें कैरामलाइज्ड पॉपकॉर्न भी मार्केट में आता है एडेड शुगर के साथ। एडेड शुगर के चीज हर एक में रेट एक है, नमकीन के ऊपर रेट कम है। सो कैरामलाइज्ड पॉपकॉर्न का ट्रीटमेंट के ऊपर सब लोग विस्तार से चर्चा की। व्हेन यू टॉक आउटसाइड इट लुक्स सिली, अरे पॉपकॉर्न के ऊपर इतना चर्चा चाहिए क्या? मगर हर आइटम के ऊपर फिटमेंट कमेटी में स्टेट्स भागीदारी लेकर चर्चा करने के समय वो क्लियरली बोलते हैं एडेड शुगर वाले चीज को तो हम ट्रीटमेंट अलग ही देते हैं, चाहे वो ड्रिंक हो, कार्बोनेटेड ड्रिंक हो, जूस हो, जिसमें एडेड शुगर है। इसीलिए पॉपकॉर्न का ट्रीटमेंट में जब तक वो नमकीन है, सॉल्टेड है, मसाला एडेड है, चटपटा मसाला है, चिली पाउडर है, कुछ हो, सब 5%, am I right? 5%. But when it has added caramelized sugar, it is no longer namkeen. इसीलिए उसका रेट अलग है।
Welcome back. You're with us on Halftime Report. Well, let's quickly do a technical check on the market. What we've got going is a flat-looking screen, just about a 20-point up move on the Nifty. So there's not much moving. And the mid-cap index is very, very flat today. Even there, we're not getting too much of a gain. I think we've got our technical guest joining in now. So let's go across to him, Sachidanand Utekar of Trade Bull. Sachidanand, great to have you on the show as always. Very sideways market, and I guess it's slightly thin on volumes as well. Let's talk about the index. Any trades, Nifty, Bank Nifty?
Good afternoon, Survi. Good afternoon, Hormuz. I think the market may see this lackluster action within the indices for the next couple of trading sessions. But if you look at the overall development, I think 23,700 support is something which will be critical for today. And on the higher side, until unless we don't see a closing above the 5-day exponential moving average, which is placed somewhere close to around 23,890, we may not see a immediate spurt when it comes to Nifty. Nifty Bank also is indicating a kind of a range-bound movement itself. We have very strong support somewhere close to around 51,000 level. And on the higher side, 51,350, 51,500 look like resistance. So probably we may see this sideways consolidation getting continued or getting carried forward for the final day of this particular series as well.
And what about specific stocks then, Sachitanand, this afternoon?
Well, almost what we have identified is stocks which were relatively weak and which have started, showing signs of, positive divergence. Plus, in the last couple of trading sessions, there are signs of good short covering moves. So the first stock which has hit our radar, which we have also recommended to our clients, is ITC. Now, after almost falling for 12 consecutive weeks, the stock is showing a very stable base near its 200-day exponential moving average. It is a kind of a double bottom formation which needs a confirmation close above that 495 mark. If you look at the overall structure, there's a good bullish crossover on its 5 and 20 exponential moving averages, indicating that there could be fresh momentum in the offing. So we are expecting that this particular move may unfold towards 505 eventually. And that's why we are recommending building fresh long positions here in ITC January futures. The stop loss for the trade should be placed at around 470 on a closing basis. We may see an immediate swing towards 488, but eventually we see this particular rally unfolding on towards 505. The other stock which has hit our radar on the bullish side, which was primarily in a very strong negative trend, is Bharat Forge. Now, after almost 25 weeks of a declining move, for the last 3 weeks, we have seen a good, strong, positive divergence even on its weekly scale. Now, if you look at the overall structure, the stock has been trending below its 200-day exponential moving average, which is placed at around 1460. But the way the data is shaping up, 1300, 1340, looks like a very confident range, and we may see a good, strong breakout coming soon in this particular stock. And that's why we are recommending building long positions. The immediate target could be around 1420, but eventually we see this stock scaling towards 1460. And that's why we are recommending building fresh long positions in January futures. From a position perspective, the stop loss should be placed at 1288.
All right, Sachitanand, thank you so much for sparing time joining us today with your views on the index and specific stocks as well, ITC and Bharat Forge, the two recommendations there from Sachitanand. But as we slip into a short break, here is some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. And you can get instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download the app now from the Apple Store or the Google Play Store right away.
वो थोड़ा आपके प्रेस नोट में हम विस्तार से उसका एक्सप्लेनेशन दे रहे हैं। विषय को समझकर प्लीज जितने भी आपके मीडिया के द्वारा स्प्रेड करना है, करिए।
Well, the problem of 2024 for the global steel industry has been that Chinese steel demand has been weak, which has resulted in higher Chinese steel exports. Well, let's explain this to you in further detail. India's steel demand has been rising at 10% over the last 4 years. But in the same period, Chinese steel demand is down by 13%. Now, India is the second largest steel producer and will remain an important growth driver in the world. The issue is China has slowed down, which has resulted in Chinese prices slipping to COVID lows, which in turn has pressurized global steel prices. The Chinese housing market has remained weak, with prices of newly built commercial and residential buildings slipping all the way since mid-2023. This has impacted steel demand, thereby leading to rising iron ore inventory at Chinese ports, which is currently way higher than the average inventory levels. The pain point is that Chinese monthly exports have been rising because domestic demand out there has faltered. And for the first time since 2016, Chinese steel exports will clock more than 100 million tons. It's also on course to challenge the previous all-time highs. Well, the Indian steel industry, they are up in arms. Mr. Sajjan Jindal has made a solid pitch. He wants some protection for the domestic ferrous industry because Chinese steel makers, they have an unfair advantage and part of their exports are trickling into India. Well, the Steel Ministry has recently proposed to the Finance Ministry to impose 25% safeguard duty on steel imports, as India has now turned a net importer from being a net exporter in the previous year. Well, Nuvama has said the imposition of some safeguard duty along with the onset of a seasonally good quarter could give the steel producers some elbow room to go ahead and increase prices by around 2,000 rupees per ton, as domestic prices are at a bit of a discount in comparison to the landed cost of imports. But they also highlight that factors like anti-dumping investigation in Europe and aggressive exports by China is eating into India's exports, which is more concerning than the elevated imports that we're seeing. We'll have to stay tuned to see the government's action with regard to these rising imports, but things could get better for the domestic steel industry from here on, because Chinese steel prices could have bottomed out. Their exports as well could slow down. Additionally, domestic steel makers, well, they've chalked out their capacity addition plans with focus on value addition and cost efficiencies, which could support volume growth and probable expansion of unit profitability. Well, the steel industry hopes to get its sheen back in 2025.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai.
Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports.
We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Back with us here on Halftime Report. The Nifty has given up almost all the gains that it had since the morning. It was a smart recovery from the lows of the day, but it seems as if we are heading back to that territory. Almost at the flat line now is the index 23,780, and yet again that 200-day moving average proving to be a very, very strong barrier for the index to cross. But on to our series of year-enders, and we are putting the spotlight today on the microfinance sector, and it witnessed pain in this year, and that is expected to continue in 2025 as well. Now, what are the key factors and pain points for the sector, and how will things pan out in the upcoming year? Abhishek is here with more details on that.
Rural economy came under great pressure during the large part of CY 2024, that is calendar year 2024, especially in the microfinance segment. The sector is expected to see pain in its business going into 2025 as well. Let's take a look at the numbers. So AUM growth, that is asset under management growth, which was at 26% YOY last year, that is in 2023, has declined to less than 9.5% growth year on year this year so far. So growth is expected to further slow down as lenders battle various issues ranging from over leveraging of customers to credit cost to asset quality pain, etc. So the biggest impact has been seen for Spandana Spurti, ESAF SFB and Credit Access Gramin in 2023. All the lenders saw improvement in their asset quality, but in 2024, X of Satin Credit Care, all of them witnessed huge pain in their asset quality. Highest pain was seen in Fusion Finance. Amount-wise, these lenders saw gross NPA decline by 32% in 2023, and then it rose by 79% in calendar year 2024 so far. Massive rise was seen for Fusion Finance, Spandana Spurti and Credit Access Gramin. They saw their stock price and valuations also decline due to lowering of growth and deterioration in the asset quality. Now, highest decline in valuations on a one-year forward price to book value has been for Credit Access Gramin, Fusion Finance and Equita Small Finance Bank. Marginal improvement was seen in lower valuations of Ujjivan Small Finance Bank and Utkarsh Small Finance Bank. The underperforming Nifty this year so far. On year-on-year basis, while Nifty has given a return of 17.3%, these lenders have given negative return ranging from as low as 5% to as high as more than 67%. So from 52-week high, if you take a look, Nifty has given a negative return of almost 7%, while these lenders have given negative returns ranging from as low as 31% to as high as 73%. Highest negative return is from Fusion Finance, followed by Spandana Spurti and then Credit Access Gramin. Let's look at the outlook for 2025 given by ICRA on this sector. Stricter lending norms for microfinance shall improve the credit safeguards, but will pose challenges to near-term outperformance or the performance of the sector. Borrower rejection rates are projected to increase significantly as over 20% of the borrowers are expected to be impacted by the new guardrails set by MFIN. Now, NBFC MFI's AUM growth will compress to 0 to 5% growth in FY25 from 29% that they had in FY24. Credit cost is expected to be at a high range of 5.4% to 5.6% for FY25, along with margins is expected to compress the overall profitability of the sector. The sector has challenges stemming from over-leveraging of their borrowers, socio-political disruption, as well as operational challenges largely related to the high employee attrition seen over here. There is significant downside risk to the near-term loan quality of the sector. ROA or return on asset can decline massively for the lenders in large part of 2025. They are strongly capitalized. Hence, incremental capital requirement for loan growth will be lower due to expectation of slowdown in the overall loan growth of the sector.
Abhishek, thanks a lot for that. And earlier today, we spoke to Alok Mishra, the CEO and Director of the Microfinance Industry Network, and Aishwarya Khandelwal, the Associate Director at India Ratings and Research, to discuss the latest trends from the sector. Listen into excerpts from that conversation.
And what I get to hear is that December is better than November, and later half of November was better than the earlier part of November. So I see signs of stability there. But I would be able to say that only when I get the Credit Bureau numbers of December. But the field situation seems to be improving, and especially in December. There is a common perception that people are saying that we are drying out the liquidity. We are not drying out the liquidity. It impacts only 7 to 8% total customers. And there also, if they reduce their leverage, which is good for them, they can again get fresh credit.
Q3 is expected in terms of the delinquencies. Q3 is expected to be the peak in terms of the delinquencies. In terms of the normalcy, if we talk about Q4, we could see some improvement in the collection efficiencies, but getting back to the normalcy, normal collection efficiencies going back to the March 24 levels, I think that's a prolonged time. We would see another 2-3 quarters or so. When we could see the collection efficiencies getting back to the March 24 levels. So we see a prolonged recovery in terms of the collection efficiencies.
Time for a short break. More on the markets and specific stocks on the other side. Stay tuned.
Five years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
2024 saw a lot of action in the mutual fund space, and funds raised via NFOs has definitely been one of them. Let's look at the numbers. Funds raised by NFOs or new fund offers stood at 1.04 lakh crores in 2024. This is still the month of November, and we have more NFOs in the month of December that has not been accounted for here. That is an uptick of 63% versus funds raised in 2023 at around 63,800 crore rupees. Now, this was slightly lower than 2022. That time, the number was 67,336 crore rupees. But 2021 also saw massive inflows. This was double the amount versus 2020, when the amount raised was around 53,700 crore rupees. Now, if we talk about the number of NFOs, 2022 still tops the list. So far in 2024, we've seen 205 NFOs which have been issued till November. This compares with 212 in 2023, 246 in 2022, 140 in 21, and around 81 in 2020. Some of the categories that saw high flows.
Welcome back. And Ola is set to launch its 10-minute food delivery Ola Dash. Now, Kapish Malhotra, the commerce head at Ola Consumer, says that the company will launch Dash across all cities. Now, in conversation with Shilpa Ranipeta, he also spoke about the 10-minute food delivery service and more on that. Listen in.
We at Ola, given our heritage of mobility, are one of the largest last-mile logistics players in the country today. Right? We have one of the largest two-wheeler fleets in the country, and using that strength and using our strength of knowing our consumer base very, very well through our consumer app, we can marry these two and provide a very quick and affordable service for the consumers. For the food items, and these are most items are quick preparation items, which is snacks, tea, ice creams, QSR meals, right? For our restaurant partners, and the real innovation here is quick logistics. Right? That's really the key project that we are running in Ola Dash, right? And that is something we have been able to do very, very well. It's very early right now, but we are seeing a great response from our consumers. Rather, almost 10% of our food orders now are coming via the Dash orders.
So you're going to maintain a 1 kilometer radius. Is that what the plan is?
Yeah, right now we are working with a 1 kilometer delivery radius, right? And we can do that given we have very high demand density from the consumer side and we have very high supply density from our driver partner side, right? So we are able to do that in a 1 kilometer radius, right? And because we want to keep the promise of 10 minutes for the customers, hence we are doing it in a shorter radius than I think most other players.
Talk to me about the expansion now. You started piloting it in Bangalore. Now, are you going to be launching it nationwide also?
Yes, sure. So we have already launched our food delivery services pan-India. We are present right now in 100 cities pan-India, and we will very soon be launching the Dash service, which we are piloting right now in Bangalore, across all the cities as well.
Right, let's talk about the food delivery business. That's something that you also started piloting in Bangalore, I think around August. So as things stand, can you run me through how the growth has been of the food delivery business? How much of a share on ONDC do you think you have captured? And also, if you compare it to the incumbents within Bangalore, what's the share that you've captured for food delivery?
We have reached a scale of almost 20% the size of incumbents in Bangalore market. Right, we have captured a 10% market share. And that's only in Bangalore. And this week, we have launched our services pan-India. We have seen great response from our consumers, from our restaurant partners, and of course, the delivery partners. And specifically also because we are doing our entire food delivery business on ONDC. We are fully committed to the ONDC open network philosophy. Right, and which essentially means much better pricing for the consumers, much better commission structures for the restaurants, and enabling this entire ecosystem via our logistics services, which is scale, efficient, and affordable for our restaurant partners. Right, being able to structurally reduce cost in the overall food delivery ecosystem, which has enabled us to provide this experience both to our consumers and merchants. So we have seen a very quick growth in Bangalore market, basis which we are convinced on being able to service a much larger pie and scale this pan-India, which we have done this week.
Let's talk about your quick commerce plans also. You piloted grocery also in Bangalore on the ONDC network, right? So going forward, have you already expanded into other categories? Will you also look at more categories? And is there a pan-India expansion plan for the quick commerce business also?
Sure. So I think, along with, and we are working very closely with ONDC to shape the future of digital commerce in some of these newer categories. We went live with grocery in Bangalore again around August and September. And we have seen great response from the consumers as well as the merchants, right? And that's something, again, we plan to replicate that Bangalore success pan-India, which we will be doing very soon. I, again, can't give you an exact date today, but, we plan to launch grocery pan-India as well, right? Speaking of other categories into the quick commerce domain, we are actively working with our merchant partners and adding categories, almost on a daily basis, right? We have within grocery itself, we started with fresh and staples, but we have entered into FMCG categories as well. And very soon we will be entering the D2C brand store categories as well, which captures a large part of the beauty, personal care, kind of markets. And we also plan to launch fashion and electronics categories very soon, along with ONDC.
10-minute food deliveries on the annual. And time for a short break here on Halftime Report. More on the other side. Stay tuned.
Getting in 6,300 crore rupees of money and other ETFs at around 1,400 crore rupees. But the real star of this year had to be sectoral funds. 40 sectoral or thematic funds have seen the highest flows that we have seen in the last 5 years. Sectoral funds garnered around 67,772 crore rupees in 2024 so far, which is more than the flows in this space from 2020 to 2023. In this period, sectoral funds garnered around 52,165 crore rupees. This is via 59 NFOs. Even index funds actually saw a lot of interest. 76 NFOs in the index fund space, raising 12,147 crore rupees, which is the highest that we have seen in at least 5 years. Index funds have always seen a lot of interest, and more so in the last 3 years with more focus on passive investing. In 2023, 53 index funds were launched, garnering around 2,700 crore rupees. This compares with 85 in 2022, and these numbers were very low in 2021 and 2020, as you can see on your screen. Interestingly, no mid-cap funds were launched in 2023 and 2024. This space did see a big rally, but did not see a new product here, but saw massive flows in the existing names. Also, only one small-cap fund was launched in 2024. And now we are towards the end of 2024, and December also has seen a lot of action in the NFO space. But will this continue in 2025? Will there be new products by mutual funds houses to diversify their portfolio? Well, time will tell.
Welcome back. Joining us on the show now is Himanshu Agarwal. He is Director Satyam Balaji. Himanshu, thank you for joining us. And to rice, and I was looking at the numbers, and the rice reserves in India on 1st of December were 44 million tons versus government target of 7.6. And then we are looking at a good crop as well. What's your sense on the rice as supplies that we have, the domestic demand, the kind of export numbers that you are envisioning?
So basically, yes, we see a record production this year. I mean, we're looking at about 137 to 138 million metric tons is what India is expected to produce. And government is very wary of the fact that they're sitting on a very high stock. Hence, we see the government buying hasn't been that aggressive as we have seen in the last couple of years. It's slightly reluctant in taking big numbers because there is storage issue. There are other issues that eventually they would face. So supply side, there's no concern. Domestic demand, I would, we in a way, I would say that there's big numbers available in the market in terms of inventories, and with so much such a lucrative MSP and bonus in certain states, everybody is more than happy to give the rice. And internationally, also the market cannot sustain these levels. Unfortunately, we do not have. We're not in a big bull run of rice trade internationally, wherein we can sell the rice at our own prices. So, yeah, I mean, there is a challenge. There is definitely no equilibrium as of today in terms of supply and demand.
Himanshu, we do understand that after India opened up its exports, the international markets have only been declining. I mean, 10 to 15% since September until now. And I do understand that Indian rice is the cheapest or most competitive into the international markets right now. So what are the numbers that you're looking to do in sense of exports this time?
Honestly, I would slightly disagree on that front, that the Indian price is not cheapest internationally right now. We are facing very stiff competition from the likes of Pakistan, Myanmar, Vietnam on certain commodities, and even Thailand, which is our biggest competitor. So it's not that India prices are the most competitive as of now, but yes, we are getting back our lost share of trade. So yeah, that's where we are. So prices have declined from 550 to 430. But yeah, I mean, we are still not very competitive. I mean, we still, for India, we were trading parboiled at 350 before duty came in, and today we are at 440. So we are still about 25% higher to the lowest we have seen.
And what's your sense on the exports then? I mean, as you said, there is good crop. And I mean, I was reading some reports that Thailand and Pakistan crop has been good as well this time around, even Myanmar for that matter. So where does India stand in the export market, and what are the kind of numbers that we could be doing?
We expect, I mean, in next 2025, we should at least hit 17 to 18 million tons of export, given because there's still one commodity which is not openly allowed to export, which is broken rice. So we are constantly in talks with government to understand how exactly do they see, allowing that to go, because it's still on quota system and still routed through NCL. So that's about 3 million tons of additional export we can look into if government decides to ease on broken rice. So 17 million if the broken rice is still restricted, and we can hit 20 million if broken rice is also allowed to be exported the way it was 2-3 years ago.
Himanshu, how would you also look at the pricing part of it in the coming year now? I mean, we've seen a volatile year, mostly depressed, but yes, since the prices have started moving, how are you looking at 2025 in sense of year? And how would you also react to various reports suggesting that with the kind of returns that maize farmers got, that could eat into some of the rice area?
So yes, I mean, all indications show that we are in for a bit of a bear run, but then again, that's when the market surprises you, when everything indicates in one direction. That's where the market surprises you, because there is an ample amount of supply available. The prices are not very competitive internationally. India is not the only one offering rice. There are many countries offering rice. So yes, we should see some correction in prices, which we have already seen after duty has been removed. But yeah, I mean, maize, again, India used to export maize in good numbers, but that's not the case. I mean, we would see maize harvest going up in India in next couple of years because of support on ethanol front, and also the returns that the people have gotten on maize. So yes, that would eventually eat into rice, but for this cycle, I mean, all of this would be for the next cycle, but for this cycle, I expect some price correction down the line.
Himanshu, also when it comes to Indian markets, have the trends changed at all? I mean, we do understand that millets is making a bit of an inroads right now. There's healthy eating. Is rice demand growth as it has been in the previous years?
Unfortunately, in terms of millets and all of this, these are still luxury in terms of Indian market is concerned. I mean, we are still a country where the majority are, fighting it out for basic necessities. So rice demand per se, I don't see a lot of challenge going on that front, because it's a very, very niche criteria which is going into millets or other grains. But in demand-wise, I don't see any change, at least in short term. Maybe in long term, we don't know how exactly market would react. And now with the RII and all of these institutes working out on different rice DNAs and rice structure, wherein the GI index would come out, will be very lower, significant, in terms of seed manufacturing. So we would see low GI rice coming into the market real soon. And a lot of work is going on branding of those rice as well. So I don't think rice being a staple has any challenge in long run.
Indeed. All right, Himanshu, thank you so much for joining in and sharing with us your views on this space going ahead. Manisha, thanks a lot for joining in as well. But with that, it's a wrap on this edition of Halftime Report. From me and the team that put this show together, thank you so much for watching. Business Lunch up next.
He's not gonna be president, that I can tell you. And I'm safe, you know why? He can't be. He wasn't born in this country. Now, he's a great guy, and we want to have him. Everybody, so many people are in this audience that have helped.
ईवी व्हीकल्स उसके ऊपर भी सुबह से चल रही है जब प्रेस कॉन्फ्रेंस फाइनल नहीं हो। ईवी व्हीकल्स के ऊपर ये एब्सोल्युटली क्लियरली मेंशन करना चाहिए कि नया व्हीकल्स ईवी खरीदने में 5% है। Am I right? 5%. पुराने ईवी व्हीकल्स खरीदने का विषय ही आया है. We want to promote EV. GST Council is in favor of EV. Nobody is stopping people from buying EV. मगर used EV खरीदने के समय एक व्यक्ति दूसरे व्यक्ति को सेल करेगा तो कोई नहीं है उसमें. The same thing as 5%. No GST. Sorry. Used EV. An individual selling to another individual, no GST. But if a company has bought EV, or if there is a regular registered used car seller who buys EV, does some propping up in it, adds value to it and then sells it. It was felt by states and it was felt by auto and many others also that the EV market is not so saturated as yet that used cars will come. And category mein, therefore used cars category mein EV bhi hai, petrol vehicle bhi hai, diesel vehicle bhi hai. And I like to highlight this point to you. हमारी तरफ से केंद्र सरकार, गवर्नमेंट ऑफ इंडिया विच इज 1/3 मेंबर ऑफ द जीएसटी, हमारी तरफ से एजेंडा में सेल ऑफ ओल्ड एंड यूज्ड ईवी व्हीकल्स को 12 से 5 तक ले आने के लिए वी हैड सजेस्टेड. बट व्हेन द डिस्कशंस हैपेंड, it is on that margin, the value, the margin value between purchased price and resale price. 12 लाख में खरीदा, 9 लाख में बेच रहे हैं सेकेंड हैंड यूज्ड व्हीकल के नाम पर. On the margin is only this 18% is being put, as would be for any used car. So it is on the margin, not on the entire amount at which the car is being sold. So EV vehicle का हमारे recommendation तो 5 को ले आओ उसको भी जैसे EV का नया vehicle का रेट है. मगर आफ्टर विस्तार डिस्कशन द मार्जिनल वैल्यू के ऊपर ही ये 18% डाला जा रहा है जैसे कि हर यूज्ड व्हीकल का है. सो मोर कैन बी आस्क्ड एज क्वेश्चन. It is not a blind application of 18%. It is more thoughtfully done. Our recommendation was for 5%, but post that, the discussions have resulted in this. The concept
Stocks trade ranged ahead of Christmas with several overseas markets, including the US, set to shut sessions early. Energy and realty clock some gains, even as metals and financials lose some ground. And rupee drifts lower, hitting fresh lows of 85.18 on a dollar, buying by oil importers, even as RBI is yet to step in, says dealers. Pressure on rupee was expected due to the rise in dollar index and the expected month-end dollar buying at home. The Telecom Regulatory Authority of India has recommended giving prepaid customers the option of buying only voice and SMS packs and extending pack validity 90 to 365 days. Such a move by telecoms could lead to some downtrading. Network 18's Money Control reports that Tata Capital is likely to float a 15,000 crore rupees IPO in 2025 to meet RBI's upper layer NBFC norms. Stocks of stakeholder Tata Investment and Tata Motors perk up on news. Whirlpool inks a deal with PG Electroplast to source select washing machines. The deal is a positive for EMS players and likely offers cost benefit to Whirlpool, besides giving it Make in India clocking rights, and both stocks gain in trade.
Hello, good afternoon. You've tuned into Business Lunch on CNBC TV18 and I'm Vinny Motiwala. Markets today holding on to the green, but quite range bound. You know, the levels that we've seen since yesterday, 23,800 around that mark, and it's roaming around those levels. You know, it's not crossing those highs that we've seen in yesterday or today's trading session. As of now, Nifty is at 23,782, which is up just 0.1% in trade. So off the day's highest point, but it's just been in the range. It's not seeing a downtrend. So yes, that's some respite coming in on that front. Sensex too holding on to almost 0.1% of trade of gain. Let's pull out the mid and small cap. Broader markets today are performing almost largely in tandem with the benchmark indices. Not much of a difference on that front as well. And Nifty Bank, that's where the pressure is coming in. Like you saw right now, 0.1%, 0.2% decline coming in for the Nifty Bank. Broader market surely in tandem. Let's pull up the sectors that are gaining in trade today. We have Nifty Auto that's holding on to gains of almost 0.7% in trade. We have FMCG that's managing to hold on to gains, as well as Realty continues to be a mover. PSU banks, nothing exciting that is happening on that front. So surely keep an eye out on PSU banks and where they are headed in trade. And in terms of Nifty gainers, you know, we do have names coming in like Tata Motors, Adani Enterprises, which is holding on to gains. Dr. Reddy's from the pharma front also managing to hold on to gains. And Trent, that's also seeing that buzz coming in and buzzing action in terms of trend, almost 1% of uptick. But yes, that's how the market is shaping up right now in terms of a move, not a bad move on that front. Holding on to those levels that we have seen, 23,700 to 800 mark, in that range is what the market is moving in. That's the Nifty. But let's move on and get the show started. And we'll talk about rupee. The rupee has actually now drifted lower, hitting fresh lows of 85.18 on a dollar buying. Now, this is by oil importers, even as you're seeing that RBI is yet to step in, is what the word is coming in from dealers. Lata is joining with us to give us more details on this front. Lata?
Dollars actually moved higher to over 108. The overnight number was 107.71, and thanks to that, pressure was expected. The rupee has drifted. Actually, what was startling, or what is startling about today's move, is that it's drifted straight away to that 85, almost 85.2 mark. It is 85.18. Normally, you would see a 5 paise move and then the Reserve Bank come in. But today, it appears the Reserve Bank hasn't yet stepped in, but bankers emphasize the word yet, because it could come at a round figure of 85.2. We don't know. In any case, this is also a holiday-thinned trading session. And there isn't so much of flows from the FII side. The dollar buying, as we noted, was largely because oil importers usually buy dollars for month-end payment of bills. And that's what has pushed the dollar, made the dollar more expensive. No one's talking of any technical levels. Some polls have been done in the market and people are expecting the first support level for the rupee at 85.2. There are some from other, public sector bankers who expect the rupee support to come in at 85.25. But, well, these are just standard expectations, lines in the sand. The rupee will drift lower as long as you don't see FII flows or other kinds of flows in, and as long as you continue to see the dollar perk up.
Thank you so much for that, Lata. But let's move on. And earlier on the day, we also spoke to Samir Arora of Helios Capital on who shared his views actually in 2025. What is his outlook for 2025? He seems quite bullish on that front. And he said that the overall market is not in a bull run, but rather is in a very measured upswing. Listen in to what more he had to say.
I have seen widely out of line markets. For example, in 2004, 5, 6, and 7 calendar years, the market was up 40% per annum. If you look at the 500 index, it was up some 39 point some percent per annum. We have seen periods like 1999, when the market went up some 85% and the NAV of my fund, Alliance Equity Fund, now called Birla Sun Life Equity Fund, in that one calendar year was up 280%. Those are wild bull runs. This is a measured bull run according to me. So our logic is that you will have 2 or 3 main chunks, which mostly the market has converged to financial sector, financial services, private sector banks, and some form of IT, which For 2 years, we were bearish up to June of 24, and now we think IT is a good sector. We will not buy the EMS companies because our logic is that we have a benchmark, and those benchmarks of EMS companies trade at 8 multiple and 10 multiple, and in India, you can make it 20 because everything is double, but you don't make it 150 multiple.
Okay, let's move on. And sources tell Money Control that Tata Capital, the flagship financial service arm of Tata Group, has initiated work on the big bang listing. Remember that the last IPO from the conglomerate was when Tata Technologies made a bumper debut in November 2023. Ashwin is joining in with us to give us more details on this one. Ashwin?
What we are given to understand from our sources is that Tata Capital, the financial services flagship of the Tata Group and the subsidiary of holding company Tata Sons, has in fact initiated work and the process for a big bang mega initial public offer or IPO in 2025. Sources are telling us that this issue could be anywhere in the region of 15,000 crore plus rupees, and these sources are also telling us that it could likely be a combination of both a primary issue of shares and a secondary component. Now, Kotak Mahindra Capital, the investment bank, and law firm Sirila Merchant Mangaldas, these are the two advisors that our sources are telling us have been roped in as of now. Other bankers and law firms may also be taken on board at a later stage. Now, if you look at Tata Capital, it had assets under management of around 1,58,000 crores as of March this year, and Tata Sons holds around 92% in Tata Capital. The remaining stake is held by a few other Tata Group companies and also the trust. Now, the reason why the Tatas are going in for this IPO is because under RBI norms, all NBFCs that are classified in the list of upper layer NBFCs, they have to mandatorily list by September 2025. So that is the regulatory compliance, and hence this process has begun. We are yet to hear from Tata Sons and Tata Capital. Let's keep a watch out for this big deal in the new calendar year.
Absolutely. Thank you so much for that. But let's move on. And the Prime Minister Narendra Modi met with eminent economists and sectoral experts today in a closed-door meeting. My colleague Parikshit is joining in with us to give us the latest on this front. Parikshit, good afternoon. What are you picking up here?
Yes, this has been an annual exercise where the Prime Minister meets top economists of the country, representatives of rating agencies, sectoral experts on the industry to get their views firsthand ahead of the budget. So this exercise is underway at Niti Aayog in the national capital. Niti Aayog Vice Chairman Suman Berry, also the CEO of Niti Aayog, BVR Subramaniam, are also present in this meeting. Now, the union budget, as we know, is going to be presented on the 1st of February. Discussions here in this meeting are taking place on what will it actually take to have a Viksit Bharat by 2047 and how this union budget, the next budget, can support that blueprint and vision of the government. There will also be discussions on how to deliver measures in the budget which can support growth, consumption and encourage the private investment cycle. The meeting comes in the backdrop of concerns around growth slowdown as the Q2 GDP came in at 5.4%, a 7-quarter low. So there could be discussions as to how the economy looks from here onwards and for the full fiscal year as well. There will also be discussions, recommendations on job creation, which has been a priority for the government, women-led growth, resilient supply chains, ease of doing business and greater local manufacturing. Also, the volatile geopolitical order that we find ourselves in and how India's tariff regime can come into play to safeguard our interests. There will be discussions on that as well.
Okay, Parikshit, thank you so much for the latest update on that front. We're going to sip into a very short break on that note. And as we sip into the break, let's introduce Growth Code, a special initiative by Grow and CNBC-TV18 with the aim of empowering investors and traders. Prominent investors and professional traders gathered at Grow's Trading Right event on November 9th to share the valuable insights and strategies they had. Let's hear out a snippet of the conversation of Arjun Tandon, partner at Kailasa Capital Advisor, sharing his thoughts on the risk of trading with small capital. Listen in.
Let us say anybody who wants to do option selling. तो ऑप्शन सेलिंग में लगभग 1-1.5 लाख लगता है पर लॉट. अब अगर आपको इन सारी चीज़ों का बेनिफिट उठाना है, आप चाहते हो कि मैं थोड़ा डिफरेंट इंडाइसेस में काम कर लूँ, थोड़ा पोजीशन साइज एक्स्ट्रा रख लूँ, तो मुझे लगता है 10 लाख 15 लाख इंडेक्स के लिए आपको चाहिए ऑप्शन सेलिंग. उससे कम में आप जाओगे तो इट इज़ डिफिकल्ट टू सस्टेन. सी इम्पॉसिबल कुछ नहीं है, हर चीज़ प्रोबेबिलिटीज़ की गेम होती है. प्रोबेबिलिटीज़ आपके अगेंस्ट होती जाएंगी जितनी छोटी कैपिटल के साथ आप मार्केट में आ रहे हो. अगर आप सेम ऑप्शन सेलिंग स्टॉक्स में करना चाहते हो तो नेचुरली आपको डिफरेंट स्टॉक्स में पोजीशंस बनानी पड़ेंगी. कल को किसी भी स्टॉक में कुछ भी न्यूज़ आ जाती है तो वो आपके अगेंस्ट जाएगा. तो स्टॉक्स में अगर आपको पोजीशन बनानी है तो आई फील 20 लाख के आसपास आपको चाहिए, सो दैट आप एक डिफरेंट नंबर ऑफ स्क्रिप्ट्स में आप ट्रेडिंग कर पाओ.
Got to be studied. In principle, the council has accepted it. Once the concept note is studied in detail, then again it will be presented before the GST council. Once they agree on simplifying as per the note the registration process for small companies, then the amendment will have to be done in the law. So that is one thing which I referred. Training partners, skill training partners of the National Skill Development Council, उनको जो अप्रूव्ड पार्टनर्स है, नॉट एवरीबडी, जो अप्रूव्ड पार्टनर्स है उनको जीएसटी एग्जेम्प्ट करने के लिए निर्णय हुआ है, मगर नोटिफिकेशन आएगा बाद में. पेमेंट एग्रीगेटर्स who do less than 2,000 rupees payment are eligible for exemption. But let us understand, and I provide this clarification now, that this exemption does not cover payment gateways and other fintech services which do not involve settlement of funds. So payment aggregators alone, I'm talking about, who do less than 2,000 rupees will have that exemption provided. Another important decision, there are several which will be covered in detail in your press note, which all of you all will receive. I clarify that no GST is payable on the penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with loan terms. This will be very important for small businesses, so I repeat it. The Council has desired that we issue a clarification that no GST is payable on the penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with terms, loan terms. There are three things on which, even as the GST Council was busy deliberating, from the morning, there's a lot of speculation in the media. And as a result, there's a lot of speculation in the social media. अरे पॉपकॉर्न के ऊपर भी डाल रहे हैं टैक्स. मैं मीडिया से हाथ जोड़कर रिक्वेस्ट करती हूं, ये पूरे प्रेस मीट हम करते हैं हर जीएसटी काउंसिल के बाद, और टैक्स ऐसे विषय है जिसमें बहुत लेयर्स होता है. कोई आंख बंद करके टैक्स लगाते भी नहीं है और आंख बंद करके हटाते भी नहीं है. पूरे विषय समझने के बाद प्लीज आपके मीडिया में चलाइए. पॉपकॉर्न के ऊपर टैक्स, मैं इसका पूरे पृष्ठभूमि आपके सामने रखना चाहती. सॉल्टेड पॉपकॉर्न, कैरामलाइज्ड पॉपकॉर्न, प्लेन पॉपकॉर्न.
Welcome back to Business Lunch on CNBC TV18, and let's move on and get you the updates from the ongoing Gaza war. Israel has confirmed the assassination of the Hamas leader Ismail Haniyeh and in Tehran in July this year. This revelation is likely to further risk tensions between Tehran and Israel in West Asia. Israel's defense minister Israel Katz also vowed to damage the Hamas and Hezbollah strategic infrastructure and beheaded their leader if they continued to attack the country. And moving on to some somber news, a veteran director and screenwriter Sham Benegil passed away last evening at the age of 90. The veteran filmmaker was undergoing treatment for chronic kidney disease at Mumbai's Wockhardt Hospital. During his career, he was honored with the National Film Award 7 times and received the V. Shantaram Lifetime Achievement Award in 2018. He has also received numerous accolades, including the Padma Shri, Padma Bhushan and the Dada Saheb Phalke Award. He was known for his filmography in films including Manthan, Ankur, Mandi and Nishant.
ऐसे स्टेट्स हैं जहां नमकीन के नाम में पॉपकॉर्न सॉल्टेड भी सेल होता है कि नहीं? नमकीन है वो, मगर जब पॉपकॉर्न सॉल्टेड सिर्फ नहीं है, उसमें कैरमलाइज्ड पॉपकॉर्न भी मार्केट में आता है एडेड शुगर के साथ। एडेड शुगर के चीज हर एक में रेट एक है, नमकीन के ऊपर रेट कम है। सो कैरमलाइज्ड पॉपकॉर्न का ट्रीटमेंट के ऊपर सब लोग विस्तार से चर्चा की। व्हेन यू टॉक आउटसाइड इट लुक्स सिली, अरे पॉपकॉर्न के ऊपर इतना चर्चा चाहिए क्या? मगर हर आइटम के ऊपर फिटमेंट कमेटी में स्टेट्स भागीदारी लेकर चर्चा करने के समय वो क्लियरली बोलते हैं एडेड शुगर वाले चीज को तो हम ट्रीटमेंट अलग ही देते हैं, चाहे वो ड्रिंक हो, कार्बोनेटेड ड्रिंक हो, जूस हो, जिसमें एडेड शुगर है। इसीलिए पॉपकॉर्न का ट्रीटमेंट में जब तक वो नमकीन है, सॉल्टेड है, मसाला एडेड है, चटपटा मसाला है, चिली पाउडर है, कुछ हो, सब 5%, am I right? 5%. But when it has added caramelized sugar, it is no longer नमकीन, इसीलिए उसका रेट अलग है। So वो थोड़ा आपके प्रेस नोट में हम विस्तार से उसका एक्सप्लेनेशन दे रहे हैं। विषय को समझकर प्लीज जितने भी आपके मीडिया के द्वारा स्प्रेड करना है करिए।
Well, the problem of 2024 for the global steel industry has been that Chinese steel demand has been weak, which has resulted in higher Chinese steel exports. Well, let's explain this to you in further detail. India's steel demand has been rising at 10% over the last 4 years. But in the same period, Chinese steel demand is down by 13%. Now, India is the second largest steel producer and will remain an important growth driver in the world. The issue is China has slowed down, which has resulted in Chinese prices slipping to COVID lows, which in turn has pressurized global steel prices. The Chinese housing market has remained weak, with prices of newly built commercial and residential buildings slipping all the way since mid-2023. This has impacted steel demand, thereby leading to rising iron ore inventory at Chinese ports, which is currently way higher than the average inventory levels. The pain point is that Chinese monthly exports have been rising because domestic demand out there has faltered. And for the first time since 2016, Chinese steel exports will clock more than 100 million tons. It's also on course to challenge the previous all-time highs. Well, the Indian steel industry, they are up in arms. Mr. Sajjan Jindal has made a solid pitch. He wants some protection for the domestic ferrous industry because Chinese steel makers, they have an unfair advantage and part of their exports are trickling into India. Well, the Steel Ministry has recently proposed to the Finance Ministry to impose 25% safeguard duty on steel imports, as India has now turned a net importer from being a net exporter in the previous year. Well, Nuvama has said.
Welcome back to Business Lunch on CNBC TV18, and let's move on. 2024, that has been a year to remember for Tamil Nadu's electronics manufacturing sector. For the second year running, the state topped India's electronics export order book, and on Rewind 2024, CNBC TV18's Jude Sanath is revisiting some of the key milestones that led to the state's electronics production boom, and reports that, going by estimate, that the state is set to repeat its stellar performance in 2025 as well.
For the second year running, Tamil Nadu stood out as India's top exporter of electronics goods. At $9.56 billion in FY24, the state's value of electronics exports was double than that of Karnataka and Uttar Pradesh, and the export orders it has received between April and September 2024 are already above $6 billion. In April, Tamil Nadu not only secured the pole position in electronics exports for the previous fiscal, but also registered a whopping 78% growth over its own numbers in the previous year. Incidentally, the state accounted for $9.56 billion in electronics exports out of a total national electronics export order value book of $29.12 billion. This meant that the state approximately accounted for 1 out of every 3 rupees that India earned in electronics exports through all of FY24. So it comes as no surprise that the state's electronics sector repeatedly made headlines through the year. Investments from Salcomp, Pegatron and Foxconn fructified, and as their plants commenced production, they added extra thrust to the state's export engine. And in September, American communications major Cisco launched its first Indian plant in Sriperumbudur in partnership with global electronics manufacturer Flex.
Cisco's partnership and the announcement made a huge difference, not just for Flex in India, but also in industry in itself. High technology products, highly skilled workforce, labor force, as well as the talent. And last but not the least is the manufacturing ecosystem, which means the supplier ecosystem as well.
It's this strong and fast-growing supplier ecosystem that the state government is banking on to fuel the brisk growth in electronics exports. It hopes the number will cross $12 billion in FY25, and that's just for starters.
The already existing infra will take us to 12 now, but what we are seeing is more down the value chain coming in, more components down the value chain. The entire supply chain probably, if possible, of Apple is something which we are all looking at. But the next year would be, we are looking at really bigger numbers. Right now we are at 35% of India's output, right? We would definitely want to go up.
The groundwork for this is already in place. In January, Tata Electronics announced an investment of 7,000 crore rupees towards expanding its components plant in Hosur. Further, Taiwanese electronics major Foxconn has committed 13,000 crore rupees in further investments, and US-based Jabil has promised 2,000 crore rupees. This means Tamil Nadu will soon host 4 of the biggest global suppliers of tech giant Apple, and as more come in, $12 billion in exports may be just a portion of what the state clocks in 2025. In Chennai, Jude Sanath.
Okay, thank you so much for that. But with that, it's a wrap on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. But a very Merry Christmas to all our viewers out there, and hope you have a great Christmas. But before we go, here's some visuals from y'all from across the globe, as many have decked up for the year-end festivities this time. So have a great time.
Some safeguard duty, along with the onset of a seasonally good quarter, could give the steel producers some elbow room to go ahead and increase prices by around 2,000 rupees per ton, as domestic prices are at a bit of a discount in comparison to the landed cost of imports. But they also highlight that factors like anti-dumping investigation in Europe and aggressive exports by China is eating into India's exports, which is more concerning than the elevated imports that we're seeing. We'll have to stay tuned to see the government's action with regard to these rising imports, but things could get better for the domestic steel industry from here on, because Chinese steel prices could have bottomed out. Their exports as well could slow down. Additionally, domestic steel makers, well, they've chalked out their capacity addition plans with focus on value addition and cost efficiencies, which could support volume growth and probable expansion of unit profitability. Well, the steel industry hopes to get its sheen back in 2025.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports.
We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube.
Time for Midcap Radar here on CNBC-TV18 this Tuesday afternoon. We are about to head into a midweek holiday, but the bulls are still looking for Santa on Dalal Street because the 200 DMA is proving to be a bit of a headache for the Nifty. I'm Hormas Fatakia. With me is Vivek Iyer. Vivek, good afternoon.
Good afternoon. Good afternoon. Like you mentioned, what's actually happening is that you're seeing some green on the screen, but every time there's an attempt to move higher, you're seeing quite a bit of selling pressure emerge. Especially, the IT and the auto stocks are the one that's actually keeping markets quite subdued.
Indeed, and we'll talk about all of this over the course of the next 30 minutes, but these are the top headlines we're tracking this afternoon. Stocks move in a range ahead of Christmas, with several overseas markets, including the US, set to end the sessions early. Energy, autos and realty stocks clock some gains, even as metals, IT and financials lose some ground.
Different stocks rally after brokerages remain upbeat and maintain a positive outlook for 2025. Elara Capital expects ordering to rise sharply in Q4 FY25 for these companies.
Eicher Enterprises jumps up to 8% after sources have told CNBC-TV18 that the company is looking to demerge its electronics division and plans to list it separately after the demerger process.
Greaves Cotton shares surged 10% following the company's announcement that its material subsidiary Greaves Electric Mobility Limited filed a DRHP with SEBI for an IPO worth rupees 1,000 crore.
And Network 18's Money Control reports that Tata Capital is likely to float a 15,000 crore rupee IPO in 2025 to meet RBI's upper layer NBFC norms. Stocks of stakeholders like Tata Investment and Tata Motors perk up on the news. Well, that's how the case has been. It's been quiet. It's been down on volumes so far. As before we head into a holiday, absolutely at the flat line is the Nifty. But just as both Vivek and I were mentioning, any attempt to move higher is getting sold into. 23,869 was yesterday's high. And exactly the same level we've hit today as well at 23,867, but we've failed to cross that 200-day moving average, which is around that 23,840 mark as of now for the Nifty. But there are plenty of movers in the broader markets, and there are stocks like Finolex Cables, the Tata Group companies that are moving on. But Upasana is here to tell us more about the mid caps that are moving in trade this afternoon. Upasana.
First up, let us look at the stocks gaining in today's session. MRPL, Solar Industries, Phoenix Mills, it continues its 2 days gaining streak up about 3.5%, NLC India and even IGL. In terms of top losers, PB Fintech is down about 2% in trade, Intellect Design, Sundaram Finance, NMDC, SAIL, which is down about 1.3%. Now let us look at the stocks on the back of the news flow that remained in focus today. Now Biocon up about 4.5%. That's a strong gain coming in. The company has received DCP approval for its complex formulation liraglutide in European Union. Now, PG Electroplast and Whirlpool also remain in focus as PG Electroplast has signed a definitive agreement for contract manufacturing of semi-automatic washing machine for Whirlpool. Hence, these two stocks we can see clearly gaining in today's trading session. Amber Enterprises also in focus, up nearly about 6% after CNBC reported that according to sources, company is looking to demerge its electronic division. And lastly, even Tata Group stocks continue to remain in focus today. Money Control has reported that Tata Capital is likely to float 15,000 crore IPO in 2025. And we can see Tata Investment up nearly about 8% in trade today, and even Tata Motors gaining on the positive momentum.
Well, thank you so much for that, Upasana, for highlighting all the top movers as far as the broader end of the markets are concerned. Well, a good time as any to welcome Shrikant Chauhan from Kotak Securities for a technical check on the market. Good afternoon, Shrikant. First up, it's been a very choppy trading session. Markets not been able to hold on to gains. How do you see the benchmark indices move from here?
Good afternoon, Vivek. Good afternoon, Harmos, and Merry Christmas well in advance to all of you. I think, the markets are really under a lot of pressure. The way the market is comfortably holding below the mark of 200-day simple moving average clearly indicates that there is good amount of selling pressure or maybe liquidation of long position, and that's the reason it is every time whenever it is trying to move there, it is falling from the highs. Even if we consider the put call ratio and the overall option statistics, then based on that also the pressure is increasing until the markets are not crossing 24,000. I think we are going to see the market to remain in this range only. So it is better to stay away from taking any specific call on the index. It is yes, in case if we see the market is crossing 200 days simple moving average in next, let's say 30-40 minutes, then it's fine. Then we can say that there is good amount of some short covering is happening. But otherwise, I think the markets are going to remain under pressure. We need to be more and more stock specific in this market. None of the other indices are showing any specific strength. So it is better to be more stock specific in this market.
If you have to be more stock specific, what are the stocks that you are recommending to your clients, Shrikant? And season's greetings to you as well.
Thank you. I think, here we need to just hide ourselves in a sector like pharma, because there only we are seeing good amount of buying interest. Good amount of activity and volume attraction is there. A stock like Aurobindo Pharma, which is currently trading around some 1260, 1265. There, if we see the overall technical formation, then it is diverging positively. And if we see the stock is holding about around these levels, then the next level to watch out for would be 1400. So at this level, it's a buy with a stop loss close to 1200. The other stock which we like is Fortis Healthcare. And there also, if we see the technical formation, then it is forming triangle sort of formation. So it has been like consolidating since last almost 2 months. And now it is on the verge of crossing its upward boundary. So at this level, it's a buy around 680.85 with a target of 725, 750 on the high side.
Thank you so much for that, Srikanth. Well, one particular stock, especially from the broader end of the markets, ahead of the festive season is UBL. Now, this particular stock is up almost 3.5% today and at the day's highest point. Well, now it's time to introduce the Growth Code, a special initiative by Grow and CNBC-TV18 to further empower retail investors and traders. Renowned investors and professional traders convened at Grow's Trading Night event on November 9th, where they shared valuable strategies. Here are some key insights from Arjun Tandon, partner at Kailasa Capital Advisors, on how to determine your capital requirements.
एक एक्सपेक्टेशन सेट करना ज़रूरी है कि मुझे ट्रेडिंग से इतनी इनकम चाहिए. सो व्हाट इज़ योर फाइनेंशियल गोल? आप क्या चाहते हो कि मेरी मंथली इनकम ट्रेडिंग से कितनी हो, एंड दैट विल डिसाइड योर कैपिटल. सो लेट अस से कि आप कहते हो कि मैं ना 1% रिटर्न तो बना सकती हूँ या बना सकता हूँ. सो योर कैपिटल, अगर आपको मंथली इनकम 50,000 रुपए की चाहिए, योर कैपिटल विल बी 50 lakhs. अगर आपको लगता है कि आप 2% रिटर्न बना लोगे, देन योर कैपिटल रिक्वायरमेंट इज 25 lakh. एंड सिमिलरली, अगर आपको लग रहा है कि मेरी एक्सपर्टीज बहुत ज़्यादा है, मैंने कुछ क्रैक कर लिया है रिलेटेड टू ट्रेडिंग, आई हैव सम सेटअप्स जहाँ पे बहुत अच्छी रिटर्न्स आ सकती हैं, सो ऑन अ 5% रिटर्न एक्सपेक्टेशन आपको सिर्फ 10 लाख रुपए चाहिए.
Global market maestros before crafting your investment strategy. How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
2024 saw a lot of action in the mutual fund space, and funds raised via NFOs has definitely been one of them. Let's look at the numbers. Funds raised by NFOs or new fund offers stood at 1.04 lakh crores in 2024. This is still the month of November, and we have more NFOs in the month of December that has not been accounted for here. That is an uptick of 63% versus funds raised in 2023 at around 63,800 crore rupees. Now, this was slightly lower than 2022. That time, the number was 67,336 crore rupees. But 2021 also saw massive inflows. This was double the amount versus 2020, when the amount raised was around 53,700 crore rupees. Now, if we talk about the number of NFOs, 2022 still tops the list. So far in 2024, we've seen 205 NFOs which have been issued till November. This compares with 212 in 2023, 246 in 2022, 140 in 21, and around 81 in 2020. Some of the categories that saw high flows: multi-cap funds getting in 6,300 crore rupees of money, and other ETFs at around 1,400 crore rupees. But the real star of this year had to be sectoral funds. 40 sectoral or thematic funds have seen the highest flows that we've seen in the last 5 years. Sectoral funds garnered around...
Welcome back to Midcap Radar. Well, this is our special segment, Midcap Spotlight. Sudarshan joins us and he'll talk to us about Greaves Cotton today.
So stock is in focus today as company has announced that it's going to bring an IPO of its electric mobility arm, that is Greaves Electric Mobility, and for the same, company has filed DRHP. So IPO will be a mix of both fresh issue and the OFS. So via fresh issue, company is looking to raise up to rupees 1,000 crore, and in the OFS, company that is Greaves Cotton will be selling 5.1 crore shares, and other major shareholder, that is Abdul Latif Jamil Green Mobility, and it will be selling 13.8 crore shares. Talk about the major shareholders. So Greaves Cotton currently holds 62.5% stake, and Abdul Latif Jamil Green Mobility holds 37.5% stake in the electric mobility arm of Greaves Cotton. So what is company going to use the proceeds of the IPO? First, it says it will be using and investing in the product research. Also, it will develop and build battery assembly capabilities, and looking to invest to boost manufacturing capacity of electric mobility going forward. So going ahead, we'll be looking for SEBI's approval, and another, what exactly company says about on the valuation front. So on the back of this today, Greaves Cotton stock is sharply higher and up around 13%.
Well, it's the time of buzzwords that we live in, isn't it? Sudarshan, thanks a lot for that. AI, EV, you put an EV buzzword in a stock and it shoots through the roof. That's what's happening with Greaves Cotton right now. 13% higher on the filing of a DRHP, and 260 is where Greaves Cotton currently stands at. But moving on to the aviation sector, where Jefferies is positive on that. Domestic air passenger growth has now jumped to 12% in the month of November on a year-on-year basis. Now, in fact, Indigo is also surging in trade today as Elara Capital has upgraded the stock to a buy. Winnie, a second positive call in 2 days.
So yes, specifically in terms of the air traffic data, good traction is what one has seen in the month of November. India's domestic air passenger, that has seen a growth of around 12% on a year-on-year basis, as well as versus October it was just 8%. First half of the year it was 5%. And Indigo itself, they've seen a 15% growth on a year-on-year basis in the month of November. In November, the industries also achieved that milestone of 500K domestic passengers in a day. Indigo overall, when you look at it, the occupancy has climbed to 90% in the month of November, which is the second best November since almost 5 years. And so far in the month of December also, the traction and the occupancy that they're seeing there is also around in the 90% range. So good numbers is what we're expecting coming in from Indigo. They've maintained that 60% plus market share even in the month of November. On the other hand, for Air India, the shares was down. Overall, the share was down to 27.3%, which is an 11-month low. So one person's gains and another person's loss over there is what we're keeping an eye out on. But ATF prices, they have remained in a range. So that is a key positive for Indigo going forward as well, or even the aviation sector as a whole. Now, yesterday, do not forget that Elara came out with a note, a double upgrade coming in, buy rating, target price is also 5,309 rupees. And previous target price was 3,847 rupees per share. So yes, couple of positives coming in here in terms of tailwinds, demand trends, and that is clearly seen in the domestic passenger traffic data.
Thank you so much for that, Vinny. But from aviation to pharma, you've also been tracking healthcare today, and Biocon is the stock in focus. An important generic drug approval coming its way. Tell us more.
Absolutely, Vivek. So, what we're keeping an eye out on is that this was a procedural approval. The company had highlighted that they would be coming out with this very soon. Now, the company and the European partner, that is Zentiva, have received this DCP, and this approval is for a complex formulation, which is liraglutide. Now, do not forget, liraglutide is a generic version of Victoza's treatment drug, which they have, which is a type 2 diabetes drug. It's a generic of that one. Now, this drug is used for treatment of diabetes as well as in terms of weight management, which is the trend which has been picking up. GLP-1 opportunity even for Biocon is what they've spoken about. And just a quick highlight in terms of the Q2 highlights that the management said, they expect formulation is something that will be driving the growth for the company in the second half of the year. They've spoken about liraglutide, launch in the UK and other markets in H2 FY25. Now, we've seen it in the European market as well, the approval coming in the European Union side. As well as liraglutide has already filed. The company has filed for this with the US FDA as well, and they are under review on that process. So that could be expected sometime soon. So a lot of positives coming in for Biocon, and this one specifically is a positive because global sales for Victoza as a brand last year was around $1 million, and out of that 50% was for the rest of the world. In that rest of the world, if you would include European Union just itself, that would be around 200 million to 300 million sales coming in only from the European Union side. So big opportunity surely shaping up for Biocon here.
Indeed, Vinny, thanks a lot for that. At the highest point of the day now is Biocon, 4.5% higher as we speak. Time for a short break. More on the markets on the other side. Stay tuned.
₹772 crore in 2024 so far, which is more than the flows in this space from 2020 to 2023. In this period, sectoral funds garnered around 52,165 crore rupees. This is via 59 NFOs. Even index funds actually saw a lot of interest. 76 NFOs in the index fund space, raising 12,147 crore rupees, which is the highest that we've seen in at least 5 years. Index funds have always seen a lot of interest, and more so in the last 3 years with more focus on passive investing. In 2023, 53 index funds were launched, garnering around 2,700 crore rupees. This compares with 85 in 2022, and these numbers were very low in 2021 and 2020, as you can see on your screen. Interestingly, no mid-cap funds were launched in 2023 and 2024. This space did see a big rally, but did not see a new product here, but saw massive flows in the existing names. Also, only one small cap fund was launched in 2024. And now we are towards the end of 2024, and December also has seen a lot of action in the NFO space. But will this continue in 2025? Will there be new products by mutual funds houses to diversify their portfolio? Well, time will tell.
He's not going to be president, that I can tell you. And I'm safe. You know why? He can't be. He wasn't born in this country. No, he's a great guy, and we want to have him. Everybody, so many people are in this audience that have helped.
Welcome back to Midcap Radar. Well, like we've been highlighting, every time the Nifty attempts to go higher, there is some selling pressure that we are seeing at the higher levels. Have a look at the Nifty almost into the red territory. A couple of stocks are that you can look at. Look at SBI, stock down near the day's lowest point. Another name, telecom company, which is IndusInd. That's the other stock. After a brief rally in the morning session, that particular stock too has seen quite a bit of a sell-off. And the other stock from the broader end of the market that's seen quite a bit of selling pressure is actually Sun TV, down almost 3%. And the sell-off in Sun TV has accelerated in the last half hour or so. But moving on, sources are telling CNBC-TV18 that Amber Enterprises may be looking to demerge one of its key businesses. Sudarshan, who broke the story earlier in the day, is here with more details.
So Amber Enterprises has three divisions: consumer durables, electronics and railway subsystems. Now we understand from sources that company is looking to demerge its electronic divisions, and once the demerger is done, it might bring the IPO for the same. And company is already, what we understand from sources, that company has already appointed bankers for the same demerger and for the IPO process. Now talking about the revenue for the electronics division, in FY24, this division had formed almost 20% of the total revenue. But if we talk about the Q2 FY25, electronics division had formed 30% of total revenue and had almost double if you compare year on year. Now coming to the valuation front, for Amber Enterprises, FY26 estimated P is at 54 times. Now compare peer to peer, for Dixon, it's almost 99 times. Now on the stock front in 2024, Amber Enterprises stock has almost increased by more than 100%, and at the same time, Dixon stock has given positive returns of more than 200%. As far as the story is concerned, CNBC-TV18 has written to the management, but comments are still awaited.
Sudarshan's news break sent the stock 7.5% to 8% higher at one point of time. It's given up some of those gains, but still holding on to a 5% advance is Amber Enterprises. What a year it has been for all of these ERMS companies, right?
If you look at the stock price yesterday, if you pick up, the 5-day chart, yesterday the stock was higher by almost 12%, and it's added on to the rally today. So, looks like something is in the offing as Sudarshan has been picking up. But, again, like you mentioned, Amber Enterprises, the stock of the week for sure.
Well, Sudarshan's news breaks are most... Sudarshan never gets a news break wrong, but we look forward to that as we wrap on this edition of Midcap Radar. Here is some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app, and get instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download the app from the Apple Store or the Google Play Store. From Vivek, me and the team that put this show together, it's a goodbye. MF Corner up next.
व्हीकल्स उसके ऊपर भी सुबह से चल रही है जब प्रेस कॉन्फ्रेंस फाइनल नहीं हो। ईवी व्हीकल्स के ऊपर ये एब्सोल्युटली क्लियरली मेंशन करना चाहिए कि नया व्हीकल्स ईवी खरीदने में 5% है। Am I right? 5%। पुराने ईवी व्हीकल्स खरीदने का विषय ही आया है। We want to promote EV. GST Council is in favor of EV. Nobody is stopping people from buying EV. मगर used EV खरीदने के समय एक व्यक्ति दूसरे व्यक्ति को सेल करेगा तो कोई नहीं है उसमें। The same thing as 5%. No GST. Sorry. Used EV. An individual selling to another individual, no GST. But if a company has bought EV, or if there is a regular registered used car seller who buys EV, does some propping up in it, adds value to it, and then sells it. It was felt by states and it was felt by auto and many others also that the EV market is not so saturated as yet that used cars will come. And category mein, therefore used cars category mein EV bhi hai, petrol vehicle bhi hai, diesel vehicle bhi hai. And I like to highlight this point to you. हमारी तरफ से केंद्र सरकार, गवर्नमेंट ऑफ इंडिया विच इज 1/3 मेंबर ऑफ द जीएसटी, हमारी तरफ से एजेंडा में सेल ऑफ ओल्ड एंड यूज्ड ईवी व्हीकल्स को 12 से 5 तक ले आने के लिए वी हैड सजेस्टेड. बट व्हेन द डिस्कशंस हैपेंड, it is on that margin, the value, the margin value between purchased price and resale price. 12 लाख में खरीदा, 9 लाख में बेच रहे हैं सेकेंड हैंड यूज्ड व्हीकल के नाम पर. On the margin is only this 18% is being put, as would be for any used car. So it is on the margin, not on the entire amount at which the car is being sold. So EV vehicle का हमारे recommendation तो 5 को ले आओ, उसको भी जैसे EV का नया vehicle का रेट है. मगर after विस्तार discussion, the marginal value के ऊपर ही ये 18%.
Hello and welcome to MF Corner on CNBC TV18. I'm Vinny Motiwala in the Mumbai studio. And this is at a time when markets are in a tizzy. Earnings growth has seen a slowdown. Is it time that one should actually start investing as an investor and looking at international mutual funds? How important is it to diversify into international mutual funds, and what is the risk that you face, especially in terms of rupee depreciation? Is that a concern comes in? That's what we'll be discussing today, and that's what we'll be talking about, investing in international mutual funds for an investor. What are the pros and cons of that, and how should they going forward? They should take this forward in terms of decision. Now, obviously, for that, we have our experts joining in with us. We have Sanchita Mukherjee, who's the managing partner at Talk the Walk, joining in with us right now. And we will be shortly joined by Dhirendra Kumar, CEO at Value Research as well. Sanchita, good afternoon. Thank you so much for joining in with us. And firstly, happy festivities. Tomorrow is Christmas, so surely excited about that. But international market, you know, how is that? What is it that you're supposed to be looking at in terms of the mutual fund side? Is it the right time to start looking at international mutual funds right now?
Thank you so much for having me in your show. It's always a pleasure. When we are talking about international mutual funds, let's understand a lot of investors are curious about different economies of the world and different markets of the world, say US markets, European markets, Chinese markets, Taiwan, Hong Kong. There are mutual funds, there are ETFs. So how does one really go about it? When one discusses international mutual funds, it's very, very important to understand that they also come with a lot of volatility. And the risk parameters, the benchmarking over there is very, very different. So it's important to take the right kind of advice from a registered investment advisor. A lot of investors also feel that geographical diversification to a little bit of an extent in their own individual holdings makes a lot of sense. So they do like to understand about different geographies and what it entails. However, having said that, a lot of international funds are also linked to geopolitical tensions. They will also be at the vagaries of monetary policies outside of India. But having said that, on the plus sides, a lot of sectors which are not well represented in the Indian equity market. Say, for example, if an investor wants to invest into clean energy, renewables, advancements in technology, artificial intelligence, EVs, these are some of the thematic and sectoral funds, which international funds through the mutual fund route also offer. So this is quite varied. And right now, after the recent budget, the tax treatment is also at par with domestic equity mutual funds. Hence, a lot of investors are actually curious, but it's important for them to understand that these are volatile. The risk parameters are different. One needs to have a longer horizon of 5-year plus, and one needs to take the taxation advice from a tax expert.
Absolutely. That's very, very important, right? Long-term horizon is what we're watching out for as well. Sanchita, if you could help us just understand, how should one choose the right international fund? Is there a key parameter that one should be watching out for?
Well, it'll, again, as I usually talk about investment thesis or a mantra for me, it's like no one size fits all, right? So you'd have to understand how your individual funds, what are the exposures in Indian equity, and how you've gone about with investing, say, in large cap, mid cap, small cap, thematic funds, fund of funds, hybrids, and all of that. That will define also your objectives and the parameters that you have for your own self when you're investing. Having said that, it's important to know investing into international equity mutual funds is like a double-edged sword. Whilst I mentioned that, one can, based on your own understanding of geographies, your own understanding of themes or the mega trends, be it advancements in healthcare or artificial intelligence, semiconductor manufacturing, technology prowess, all of that, which are the themes you would like to understand or take an exposure in as an investor? Right kind of advice is often sought in this kind of a thing because it's typically meant for savvier investors, not for first-time investors, definitely not for investors who are looking to park their money in the shorter horizon. Definitely an absolute no-no for them. So one has to understand and have a knowledge of international markets because on one hand, you might greatly benefit out of geographical diversification, out of investing into mega trends, which are not well represented in the Indian equity markets. But on the drawback, one might also land up investing in economies which do not have a very rewarding experience. For example, China, if one were to look at Chinese economy, one were to look at the deflation situation in Japan, these have not really made money for retail investors for long periods of time. So one has to be very, very cognizant of international investing as a double-edged sword.
Absolutely, Sanchita, well put, right? Double-edged sword is what one is watching out for there. But we also have Dhirendra Kumar of Value Research joining in with us as well. Dhirendra, good afternoon. Thank you so much for joining in with us. Well, obviously, we just started talking about, the importance of international mutual fund and how one should be going about this process. Could you explain us and help us understand what is the risk that is there and what is it that, what kind of investors can actually look at this international mutual fund?
I think every investor should consider investing in international fund simply because, the reason why you invest in a mutual fund is to gain diversification with convenience. And the global funds or, the international funds or the funds which invest abroad are the ones, they are the simplest route. If you have any other way, you have 50 other things. You have to worry about taxation. You have to go and look for a broker. You have to go and convert your rupee into dollar to invest. So this is the most convenient. You invest is just like any ordinary mutual fund. Everybody should invest simply because we have our jobs here. Most of our money is invested in domestic markets. We have our houses here. And if all of it is going out of favor, there will be a part of your money which will not be exposed to that. That is what diversification is for. Then comes, and then third reason why, there are companies and there are countries where something happens, which never happens in India. Why all the technology innovation happened in the US or why China over the last 15, 20 years became the global manufacturing hub. So there are competitive advantages, in different geography, different economies, and there are a lot of there is a lot of history to it. There is a lot of ecosystem to it, and to benefit from that, and someone could be opportunistic about them. To benefit from that, one should invest in international fund, and it should be part of it is a relatively new segment of the market, also not very accessible because what has happened is that if investors want to invest in such funds today, most fund companies have hit their ceiling. RBI has a ceiling of $7 billion for the whole mutual fund industry. So no mutual fund is permitted to invest in international funds anymore. International funds are available in two formats. Those fund managers can invest and build a portfolio of stocks, or they can invest in another fund, which and run that fund of fund here. And there could be, and the third route that is available is the ETFs. You have many ETFs in which domestic investors are investing, or ETF mounted on an index, international index, and that segment has become very dangerous. Most international funds, index funds, ETFs are trading at a premium of 10 to 30%. That is downright dangerous. The day RBI permits that, you will face that loss. The premium of 10 to 30% is just not justified for any of the ETFs trading in the market today. So investors need to be very careful. Not to say that, whenever it is possible, there are still about 15-20 open-end funds where investors can invest. Investors should consider them. The best vehicle for investors would have been, a domestic fund which also invests abroad. And there are many such great stories in the market, options. But they have also stopped investing abroad because of the ceiling.
Absolutely. Sanchita, I want to take it to you in terms of the key risk, that we face in terms of the international market, because we see so much volatility that comes out, right? Given geopolitical tensions, you don't know what is going to be happening tomorrow, rate fluctuations that we see coming in. So, or what are the other risks that an investor, if you're investing in international mutual fund, that you have to be aware about?
100%. You have to be very, very aware and very cognizant, as rightfully pointed out by Mr. Dhirendra as well. There's this whole talk and a very large debate on these RBI ceiling, $7 billion as an industry, as the mutual fund industry, and $1 billion per fund house, and a separate corpus of $1 billion for ETFs. Now, what he mentioned, a lot of people question why would RBI have these kind of ceilings, because is it something to do with our forex reserves and all of that? I would say a lot of thought and a lot of meaning and impact goes in our with our regulators' view, because they really would primarily like to protect the retail investors. So our regulator is very strong in that aspect. Their worry is the kind of volatility and the risks involved in international markets, and they're very, very cognizant of that fact that if you suddenly allow these ceilings to go up dramatically, it might impact a lot of retail investors, because a lot of times people invest without really understanding what the underlying is. For example, he rightfully mentioned the number of ETFs and their valuations. In today's date, we talk about Indian valuation, that possibly it's on the higher side and all of that, and the apprehension. But think about it, when you're investing into international mutual funds, a lot of them are benchmarked to NASDAQ, Dow Jones, S&P 500, Russell 1000, Russell 2000, Russell 3000, Hong Kong ETF. I mean, the list is endless. Are we actually aware as investors on what we are investing into and what are the valuations in current date? So it's very, very important, because only if you understand what you're investing into, what the underlying is, how they have behaved traditionally over 10 years, 5 years, 15 years, is when you can take a meaningful exposure. Hence, the right advice to a registered investment advisor is very, very critical.
Okay. On that note, let's just take a very short break and a breather. On the other side, we'll continue this discussion with Dhirendra as well as Sanchita on investing in international mutual funds. So don't go anywhere.
जैसे कि हर used vehicle का है. So more can be asked as question. It is not a blind application of 18%. It is more thoughtfully done. Our recommendation was for 5%, but post that, the discussions have resulted in this. The concept note is got to be studied. In principle, the council has accepted it. Once the concept note is studied in detail, then again it will be presented before the GST Council. Once they agree on simplifying as per the note, the registration process for small companies, then the amendment will have to be done in the law. So that is one thing which I referred. Training partners, skill training partners of the National Skill Development Council उनको जो अप्रूव्ड पार्टनर्स है, नॉट एवरीबडी, जो अप्रूव्ड पार्टनर्स है उनको जीएसटी एग्जेम्प्ट करने के लिए निर्णय हुआ है, मगर नोटिफिकेशन आएगा बाद में. पेमेंट एग्रीगेटर्स who do less than 2,000 rupees payment are eligible for exemption. But let us understand, and I provide this clarification now, that this exemption does not cover payment gateways and other fintech services which do not involve settlement of funds. So payment aggregators alone, I'm talking about, who do less than 2,000 rupees will have that exemption provided. Another important decision, there are several which will be covered in detail in your press note, which all of you all will receive. I clarify that no GST is payable on the penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with loan terms. This will be very important for small businesses, so I repeat it. The Council has desired that we issue a clarification that no GST is payable on the penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with terms, loan terms. There are three things on which, even as the GST...
Welcome back to Mutual Fund Corner. Still have with us Dhirendra Kumar of Value Research as well as Sanchita Mukherjee of Talk the Walk on investing in international mutual funds. Dhirendra, let's talk about this. The way to invest in mutual funds, would you say international mutual funds and investing through mutual funds abroad is the best way to go, or is there another strategy that one could also follow?
Either is fine. You have actively managed fund and there are passive funds. And, there are domestic fund managers who are investing in a bunch of, such stocks, or they're constructing the portfolio and investing directly. It doesn't matter. Both are well regulated. Investing through mutual fund is, the reason why you invest in a mutual fund is that you don't have to be an expert and you don't really have to anticipate this. And I would say that everybody should, steadily increase their exposure to international funds or these funds. And it can, I would, given the opportunity, I don't think what is going on right now, that RBI has its own compulsion. It has to worry about the economy. It has to worry about the foreign exchange, reserves that we have. And it thinks that we will be relatively unstable if we, or there will be massive exodus from domestic markets to those markets. I think, we should gradually permit it. And that is RBI's, RBI has to really grapple with this. In Indian market is fairly attractive. Most investors still have most of their money invested domestically, and a certain percentage of his money if is in. And today I have even today I'm permitted to invest up to $200,000 every year directly. Okay. The only reason why I discourage or I suggest that nobody should invest, because then you have to look for a broker. Then you have to decide where to invest, whether it should be a fund and what is the regulatory jurisdiction. Something goes wrong, your broker goes bankrupt. What will be your recourse? I think for those reasons, domestic funds actually become very easy, and then you have to worry about transferring the money from your bank account, converting it into dollars, and funding that broker's account, where the money will lie, and you will take a decision whether to invest in a mutual fund, ETF, or a bunch of foreign stocks. I think that is all cumbersome. These mutual funds, you can set up your SIP, 5,000, 10,000 rupee, do it for a period of time. And I think what RBI is doing, is something where, I just find, lack of confidence in, I don't think there is any such worry. But I really can't question their wisdom. There could be 50 other things which will be driving their decision. But absolutely. I think, as and when permitted, every investor should gradually increase their exposure without worrying too much about anything.
Okay, absolutely. That's a word coming in from Dhirendra. But Sanchita, 2025, that's upon us, just around the corner. Importance in today's time of diversifying in the global markets. What is it that is so important?
Oh, absolutely. First of all, it gives you a very good leeway and an excellent roadmap in terms of diversifying geographically, right? So whereas, one would see the stellar run that the Indian equity markets have had in the last couple of years, and we have entered a phase in which there are questions on the slow earning growth and all of that. So investors do look at an exposure and a bit of a diversification into international funds, which is the mutual fund route, like you rightly mentioned, is a very convenient, the simplified process, and very, very transparent and a very liquid way to go about with geographical diversification needs. That's point number one. Point number two is the currency depreciation. What was just mentioned right now, a lot of middle class people who have traditionally now for the last 10 years, there's been an entire income explosion in the middle class. A lot of aspirational people like to send their children abroad to study and all of that. The rupee depreciation of 3% every year kind of hits, right? If you have these kind of aspirations, because let's understand, in an international mutual fund, when you invest, you are actually hedged against the currency devaluation of your own country, right? Because if you're investing when the rupee was possibly at an 85, and then there is a currency devaluation, and when you're exiting that fund and the rupee is at an 86, that's a devaluation, you actually stand to benefit. So it is a hedge against that, right? So geographical diversification, it's a currency hedge. Plus you get to understand and have an exposure into advancements into many other sectors which are not currently well represented into the Indian economy. For example, if there are advancements, semiconductor, chip manufacturing, advancements in technology, advancements in AI, advancements in clean energy, renewables, electric vehicles, you can get an exposure into all of this and more through international mutual funds by investing through the domestic mutual funds route into the international equities.
Dhirendra, your view on importance in 2025 for diversifying one's a portfolio into the global markets through mutual funds?
Yeah, undoubtedly. I would say that, one should have anywhere between 10%, 20%, going up to 50, 60% of one's long-term money. Long-term is the key word because, when you have a way of approaching it never invest your short-term money in equity in the first place. So even whether it be international market, one should not. Spread your money over time because, it's very difficult to time what will actually be the mechanism when the other markets are expensive, cheap. We witnessed the US market. We saw the bottom at a time when everybody was fearful. And since then, the market has gone up. In fact, some segments of these international markets or some of these funds, they have been the primary driver of many of our diversified equity funds because those markets have done extremely well. And it is very difficult to time a segment of the market or a sector of the market. Likewise, it is very difficult, or I would not say difficult, it is impossible to time your entry into a geography or a certain market which is cheap or expensive and be out of it and be in it. So I would say that just be methodical about it, put your long-term money, make sure that, you have a defined allocation. And if I'm talking of, 25%, 30%, 40%, think of it. But right now, I don't think domestic investors have avenues to invest in a fund, where they can objectively look at an attractive fund or a good fund, which is there in the Indian market, but is not taking money because most good funds, they have stopped their gates. Some of them are still open. And it's just a matter of time that they will also be shut down.
Okay. A quick word in terms of this for both of you all. What would be the allocation that, one should have in their portfolio towards international mutual fund in 2025? Just a number. Sanchita, first up.
Well, it would all depend on your own portfolio build-up. I think that is something that an investor can discuss with their advisor. But anything, I mean, as a thumb rule, one could look at a 5 to 10%, possibly not more, because like I said, for me, I would view it as a double-edged sword. There are opportunities, definitely, but there are risks associated. So obviously your own learning curve as an investor, the kind of advice you get from your investment advisor is very, very paramount, because thematic funds abroad can move in either which ways. And with Trump coming in 2025, and there's a lot of talk about the impending trade, tariff wars and all of that. Yes, so very long horizon, at least 5 years plus, and possibly 5 to 10% or more.
Sure. And Dhirendra, what would your number be for, if you even talk about long term, for international mutual fund allocation?
Investing for 10 years and more, I can well go up to 50% of my portfolio.
Oh, wow. Okay. That's a nice number there. Sanjita, just a word in terms of how accessible and liquid are these international mutual funds compared to maybe investing in directly through foreign stocks or bonds? What are we watching out there?
Oh, they are very, very transparent, very liquid, and very accessible. 100%. There, the process of investing is extremely simplified. If one were to look at direct stocks through the liberalized route scheme, there again, like he just mentioned, you'll have to open an account with an international broker. The account opening process is quite cumbersome. The compliance of the LRS reporting is will again be quite tedious. So for a retail investor to get a slice of the international pie in terms of investing through a diversified international equity mutual fund through the domestic mutual fund route is excellent. Right now, the mutual fund industry has close to 70,000 crores in 76 international funds, last I checked. And I think 43 out of that would be open through the, barring one, would be open through the SIP. Most of them are not taking lump sums, which you just mentioned, because there is a ceiling of $1 billion per asset management company. And one has to be very cognizant, like I said, of the underlying. I mean, are you really playing, or are you investing into the US manufacturing or the technology? What are the valuations and all of that?
Okay. Okay, Sanchita as well as Dhiren, thank you so much for joining in with us, because we are absolutely out of time on this edition of MF Corner on CNBC TV18. So thank you so much for that, and thank you so much, viewers, for tuning in. But up next, closing bell to take you through the last hour of trade.
Busy deliberating. From the morning, there's a lot of speculation in the media. And as a result, there's a lot of speculation in the social media. अरे पॉपकॉर्न के ऊपर भी डाल रहे हैं टैक्स। मैं मीडिया से हाथ जोड़कर रिक्वेस्ट करती हूं, ये पूरे प्रेस मीट हम करते हैं हर जीएसटी काउंसिल के बाद, और टैक्स ऐसे विषय है जिसमें बहुत लेयर्स होता है। कोई आंख बंद करके टैक्स लगाते भी नहीं है और आंख बंद करके हटाते भी नहीं है। पूरे विषय समझने के बाद प्लीज आपके मीडिया में चलाइए। पॉपकॉर्न के ऊपर टैक्स, मैं इसका पूरे पृष्ठभूमि आपके सामने रखना चाहती। सॉल्टेड पॉपकॉर्न, कैरामलाइज्ड पॉपकॉर्न, प्लेन पॉपकॉर्न, ऐसे स्टेट्स हैं जहां नमकीन के नाम में पॉपकॉर्न सॉल्टेड भी सेल होता है कि नहीं? नमकीन है वो, मगर जब पॉपकॉर्न सॉल्टेड सिर्फ नहीं है, उसमें कैरामलाइज्ड पॉपकॉर्न भी मार्केट में आता है एडेड शुगर के साथ। एडेड शुगर के चीज हर एक में रेट एक है, नमकीन के ऊपर रेट कम है। सो कैरामलाइज्ड पॉपकॉर्न का ट्रीटमेंट के ऊपर सब लोग विस्तार से चर्चा की। व्हेन यू टॉक आउटसाइड इट लुक्स सिली, अरे पॉपकॉर्न के ऊपर इतना चर्चा चाहिए क्या? मगर हर आइटम के ऊपर फिटमेंट कमेटी में स्टेट्स भागीदारी लेकर चर्चा करने के समय वो क्लियरली बोलते हैं एडेड शुगर वाली चीज को तो हम ट्रीटमेंट अलग ही देते हैं, चाहे वो ड्रिंक हो, कार्बोनेटेड ड्रिंक हो, जूस हो, जिसमें एडेड शुगर है। इसीलिए पॉपकॉर्न का ट्रीटमेंट में जब तक वो नमकीन है, सॉल्टेड है, मसाला एडेड है, चटपटा मसाला है, चिल्ली पाउडर है, कुछ हो, सब 5%. Am I right? 5%. But when it has added caramelized sugar, it is no longer namkeen. इसीलिए उसका रेट अलग है. So वो थोड़ा आपके प्रेस नोट में हम विस्तार से उसका एक्सप्लेनेशन दे रहे हैं. विषय को समझकर प्लीज जितने भी आपके मीडिया के द्वारा स्प्रेड करना है करिए.
Well, the problem of 2024 for the global steel industry has been that Chinese steel demand has been weak, which has resulted in higher Chinese steel exports. Well, let's explain this to you in further detail. India's steel demand has been rising at 10% over the last 4 years. But in the same period, Chinese steel demand is down.
There has been some recovery from the lower levels, though. The Hang Seng is trading with gains of around 0.4%.
Because the other indicators were anti-emerging markets or not clement to, EMs.
We've got a lot of tier one offerings, soft products in the enterprise application space around the banking book.
Adani Enterprises about 1% higher. There is BEL, NTPC, Coal India. Some of the PSUs are starting positive.
To do auctions quickly, never. I think by doing an auction, we are doing an injustice to the customer.
I am positive. Of course, the degree of positivity in terms of how much returns you can make will be obviously less than what we made in the last 2-3 years.
It's about 80 points higher on the Nifty. The day's high today was 83,867.
Tata Capital has initiated work on a big bang IPO.
People are expecting the first support level for the rupee at 85.2.
There will also be discussions on how to deliver measures in the budget which can support growth, consumption and encourage the private investment cycle.
The IT and the auto stocks are the ones that's actually keeping markets quite subdued.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good afternoon. Welcome to Closing Bell. It's the last hour on Christmas Eve, shall we say. And the market's changed its color. It's not been able to hold on to, too much of gain today. It's been more red than green. But let's see. We have the last 1 hour. So let's see if Santa manages to reappear again.
But it's not a big cut, right? It almost feels like there's some fatigue, like let's get the market done with. But, I think one thing that stands out is this 200-day moving average, which is approximately around 23,840, 60, 70 thereabout. It was the high yesterday, and even today, the intraday high on the Nifty is 23,867. So the 200-day moving average, today's high and yesterday's intraday high is all coinciding, and markets seem to be facing resistance at this level. So from that level, we've seen a fall of about 140 points from the day's high. But again, if you just look at the index level, it's pretty much flat.
Absolutely. For what it's worth, just to go over the movers and shakers today, the Tata Group obviously takes, top billing because of that news break that Money Control put out. The likely IPO of Tata Capital in 2025 could be a big issue, 15,000 crores. And because of that, several Tata Group counters, Tata Motors, Tata Chemicals, investments, a lot of these stocks have been up and about. So, we have all of them coming up for you. So, fair amount of green on the Tata Group today. Aside of that, there are some other consumer names that have managed to come back. Britannia would be one. There would be something like an ITC, that's a case in point. Nestle is managing some green. Trent is managing some green. Asian Paints also 0.3-0.4% higher. So on consumer, there is some buying that's taking shape. What's seeing profit taking today is one is, of course, metals. Remember, yesterday was all about the steel up trade. Well, it lasted for 1 day. Now it's down. JSW, Tata Steel are all losing ground. And banks have been fairly lackluster today. So large banks like SBI, they're not really contributing to the upside, so to speak. And IT is also ambling along. IT is not a major mover on the way up. IT is actually seeing some pressure. So those are the broad trends. IT banks down, consumers seeing some buying, and the Tata Group getting a lot of the headlines today. That's on the large cap screen. But I think mid caps, Rima, there are more exciting stocks, more deals, more order wins that are keeping stocks still excited today.
And the advance decline ratio is slightly in favor of the gaining side. Remember yesterday, despite the index showing you a gain of about 0.6, 0.7%, the advance decline ratio was negative. Well, today, the gap between the two is narrowing, but so far at least, there is a little bit of a lead that the advancing stocks hold. MobiKwik is your big winner on large volumes, 14% up on that. Greaves Cotton on the potential IPO of its EV subsidiary. Greaves Cotton has taken off, 10% up. Sagility, JP Morgan puts the target price at about 55 rupees. That's higher. Gas stocks across the board. In the frontline pack, it's BPCL. But outside of that, GAIL, IGL, big move seen. Paytm is up nearly 2%. Year-to-date, Paytm has a gain of about 55%. Ola Electric is another mover on the way up. RBL Bank deserves mention. Again, in the green for RBL Bank. On the way down, HCC is under pressure. Second day in a row. In 2 days, HCC is down nearly about 10%. Swiggy has had a fantastic run, so a little bit of profit taking visible on Swiggy, 3.5% lower. Vedanta, SAIL in the metals pack are trending with mild cuts, 2.5%, giving it companies NMDC and Nalco also down 1.5%. But on the whole, it's quiet, but with a negative bias. And this is at odds with what we've seen across the rest of the global markets, where the color has been green. It's been thinly traded. It's been quiet. But it was green across the Asian market screen, and even the early rates in Europe right now, the CAC and the FTSE currently higher. So how should you position yourself in the last hour of trade? Mitesh is now with us with a few closing strategies. Mitesh.
So, early in the day, I was talking about that we'll possibly do a range, and, we got a high of around 23,850, 867, which is slightly higher than 23,850, but it didn't sustain over there. Came back. So I think we might go back to 23,600, and in a bad case scenario, even 23,500. So this texture, isn't actually turning on the upside, but I still believe sell and rallies could be a good way, though next couple of days could be spent in consolidation as we approach the F&O expiry. So on the index, deploy range strategies, try to sell near 23,800, 820 levels with a 50-60 point kind of a stop. Try to buy near 23,550, 600 zone with another 50-60 point stop. Till, we get a directional bias coming into play. So I think that's the way to approach the index.
Okay. What about individual stocks? What trades today, Mitesh?
Good afternoon, Ruby. I have a sell on Maruti with a stop at about 10,820. 850. And a target of around 10,400 to begin with. And another sell on MCX, which I would recommend selling with a stop at 64.50 for targets of 60.50.
Got that. Let's get to the big story of the day, and this is a CNBC-TV18 exclusive. Sources are telling CNBC-TV18 that Amber Enterprises may be looking to demerge its business. Sudarshan is here with the details. Sudarshan.
So Amber Enterprises has 3 business divisions: consumer durables, electronics and railway subsystems. Now we understand from sources that company is looking to demerge its electronics division, and post the demerger, company may bring an IPO, and for the same, company is likely to have already appointed the bankers. Now talking about the revenue front for the electronics division in FY24, electronics division had formed 20% of total company's revenue. But talking about Q2 FY25, in Q2 FY25, electronics division revenue had formed 30% of total revenue and had almost doubled if you compare with Q2 FY24. On the valuation front, Amber Enterprises is trading at FY26 estimated P 54 times. Now compare peer to peer with Dixon. Dixon is trading at 99 times. Now the stock returns in 2024, Amber stock has given positive returns of more than 100%, while for Dixon, returns have been more than 200%. So on the IPO front, company is looking to bring an IPO for electronics division, and that's the reason for the last 2 days, stock is sharply higher. CNBC-TV18 has reached out to management for the query, but comments are still awaited.
Okay, all right, Sudarshan, thanks very much. Yeah, explains this 20% move on Amber in a week where there are not too many queues and it's largely thin trading. This is 6% today and was almost a 13% move yesterday. So we're talking 20% in 2 days flat. That's Amber Enterprises, around 7,300 on the screen. Well, Deepan Mehta is joining us on the show this afternoon. Deepan, always a pleasure to have you on. Season's greetings, and hope you're getting ready for a nice midweek Christmas break. Let's start with some of these EMS companies. What a tremendous year they've had, right? And this new piece of news, this potential demerger of one of their businesses, this is giving a fresh lease of life to Amber. Do you like this stock, or would you rather go with something like a PG Electroplast or a Dixon? Or do you feel the run-up has already happened now? It's too late.
Yeah, so good afternoon and thank you for having me on your show. Yeah, I think the valuations are crazy for these companies. I think like Dixon going at 100 times and 60, 70 times for Amber trailing 12 months. But as a distributor, we own shares of both these companies and cannot believe the valuation which they are trading at. No doubt there is growth, but I think we are paying far too much for these growth numbers. And there are very few pockets of where the growth is still in that mid-teens or 25-30%, and investors are flocking to those counters like say a Dixon or a Amber or some of the electronic manufacturing companies like say Keynes or Syrma SGS, or there is that Cient as well. So, I mean, if you're holding these shares, it's great, you remain invested. But from a fresh investment perspective, I think wait for a deeper correction.
Then you're definitely having a party, Deepan. Since you've been holding both Amber and Dixon in the portfolio, then it's going to be a very happy new year and a big new year bash, right?
Yeah, absolutely. It's going to be a new year bash. But, sometimes you also can't believe the gains that you have got in a stock. And that fear is there that, look, these stocks are trading at very expensive valuations. And we must brace ourselves for a correction. These kind of valuations are just not sustainable unless we have got the earnings trajectory completely wrong and the company grows much, much faster than what the street is projecting.
All of them have done so well, Deepan. So PG Electroplast, we've been highlighting it since morning, 300% up for the year. Keynes Tech is up 176%. So it's been big gains for the entire basket. But let's get to another big stock and another big mover, and that's Greaves Cotton. This is after the electric mobility arm of the company has filed for a 1,000 crore IPO. The DRHP is out. Sudarshan joins in with more.
So Greaves Cotton stock is in focus. Stock is up, I think, more than up 8%. And it's because of that, its electric mobility arm has filed draft red herring prospectus for an IPO. So IPO will be a mix of both fresh issue and the OFS. So via fresh issue, companies looking to raise up to rupees 1,000 crore, and via OFS, both major shareholders, that is Greaves Cotton, and second major shareholder is Abdul Latif Jameel Green Mobility, will be selling shares via OFS. So company will sell 5.1 crore shares, and Abdul Latif Jameel Green will be selling 13.8 crore shares. Talking about the major shareholders, Greaves Cotton holds currently 62.5% stake in Green Mobility, electric mobility arm, and Abdul Latif holds 37.5%. Now talk about what exactly company will be using via IPO proceeds. First, it will be investing in product research. Second, it will develop and build battery assembly capabilities, and also will be investing to boost manufacturing capacity. So that's what company is going to use the IPO money of electric mobility arm. So now we'll be awaiting SEBI's approval and what exactly at the valuation that company is looking to raise money via IPO.
Thank you. I don't know if it's had a rub-off impact on Ola Electric, but that too is higher in trade. Deepan, have you looked at the Ampere e-scooters? Your thoughts on the products and the EV business of Greaves Cotton?
Yeah, well, frankly, I'm disappointed. One would have expected Greaves Cotton, the EV business, to remain within the company, but doing an IPO means that Greaves Cotton will get a holding company discount, which could be anything. And the other remaining business of Greaves Cotton is not that exciting. It's a kind of a mature business. And the real growth and the valuation in Greaves Cotton was coming through the EV business. A few months ago, I think a few quarters ago, they had got into some issue in terms of the FAME subsidy, but now that seems to have got resolved. In any case, the present EV subsidy and the products are I think in market share terms, they're number 4, number 5. So I don't think you can value them at the same level as say Ola Electric or what value you may ascribe to any of the existing auto players. So I would just be a bit careful when it comes to Greaves Cotton at this point of time. I'm not sure that these kind of returns or this kind of up move can be sustained. There are much better plays within the auto industry than maybe a Greaves Cotton. As I said, this holding company thing is a big question mark, according to me.
Okay, so Greaves Cotton, let's see how this plays out in terms of the eventual IPO of the EV arm. Just back to the screen, looking at some more movers and shakers. Not much has changed. I mean, it's the Bank Nifty that's been under the weather today. We've been pointing that out. So, Deepan, in fact, let me ask you this. Largely speaking, when you talk to most fund managers, most point out that financials, they've underperformed this year. So this is a place to go to, perhaps, when you're talking about a medium-term portfolio outlook. Would you agree with that? And give us one or two stock picks in financials for 2025.
Yeah, I would tend to agree with that the BankX has been a big underperformer. Banks per se have not done well because the pre-provisioning profits for entire calendar year has been pretty much flat. And even all the unsecured lending which they have done, the NPAs have kind of creeped up over there as well. But these stocks are cheap, no doubt about that. And certainly you want to buy stocks which are out of favor. So if you have a slightly contrarian strategy in play, then banks can do well, especially now with the GDP growth rate coming off. If an interest rate cut comes, then that could certainly be a big boost for the banks, and any improvement in liquidity also could be a trigger. Having said that, I think I would go with the tier 2 PSU banks. I mean, I can't believe I'm saying this thing after so many years getting positive on these companies. But look, they've narrowed the gap when it comes to their financial performance. They've narrowed the gap when it comes to customer servicing. They have a strong franchise in terms of CASA. So I would go with these companies, the likes of Union Bank, Central Bank, Punjab and Sindh, Bank of Maharashtra. I think there are about 7-8 such banks which are still trading at very attractive multiples. And there's scope for re-rating over there and earnings also to get a boost if the trends improve within the industry.
You know, Dipan, you've been so cautious in the markets of late that I've never heard you, go out there and recommend any stock or any sector. It's after a while that, you're talking about going out there and buying. Most of the times you're amazed, expressing awe at the valuations of the stocks that even you hold or otherwise in the market. But let's get to IndiGlobe Aviation, because that's up nearly 5% over the last 2 days. We got the air traffic data, and plus yesterday there was an upgrade on the stock. Vinny is here with us.
Okay, let's move on. And talking about this aviation space, the India's domestic air passenger growth that has jumped by 12% YOY in the month of November versus October of 8%. The first half of the year also they managed to see a growth of around 5%. And Indigo's 15% growth in the month of November is that something that is keeping the stock abuzz. Now, other than that, when you're looking at it, the occupancy in Indigo also has climbed to around 90% in the month of November, which is the second best November in 5 years for the company. And as of now, till date, in the month of December, the highlight coming in is that the occupancy is around the 90% mark in the month of December as well. So good traction is what they're seeing, especially holiday season is something that is coming and is something that could be aiding the growth of airlines as well. Now, Indigo's market share in terms of that has remained above the 60% mark as well in the month of November. 63.6% is what the data indicates. While for Air India, they have seen a bit of a loss coming in terms of market share. The market share was at 27.3%. which was at an 11-month low. Let's not forget ATF prices, they have also remained in the range. So we'll be keeping an eye out on that for the aviation sector as a whole. And for Indigo, why are we seeing such a run-up? Because just yesterday we had seen Elara also give a double upgrade to a stock, buy rating from a previous sell rating, target price of 5,309 rupees per share from previous 3,847. So yes, couple of positives coming in for IndiGlobe Aviation, and that is why the stock is flying high in trade.
Okay, all right, Vinny, got that. Thank you very much for the details there. So Elara sounding an optimistic note on IndiGlobe. Dipan, so aviation, I mean, we know that that's where the spends are, right? Hospitality, aviation. But then the sector has its own woes to deal with. Sometimes there are engine issues. Sometimes there's a delay in delivery of aircraft. And there's regulation. Would you take a bet on an aviation stock like IndiGlobe at all?
Yeah, again, a disclosure, we are invested in Indigo. And I think it was very well covered by Vinny. Anything need to add over here is that the fresh capacity coming on stream over the next 3 years is phenomenal. And they are going global as well. So that could be even a kind of a boost for earnings. And with oil prices remaining steady, they'll be able to manage their margins far better. And if you compare, the ticket price also has improved year on year. So I think a lot of positive factors for aviation. Again, you have to compromise on the valuation for a company like Indigo, which has got such a fantastic market share and still such growth momentum. So I think that it's a great place to be in for the time being. Even if the market corrects a little bit, I think there is still a lot of growth in the aviation and the hotel industry, hospitality industry. And that's where investors should be slightly overweight.
Sagility? Is Sagility an IPO that you looked at? It listed about a month back. When it listed, there wasn't much fanfare. I think the IPO price was 30, 31, 32. It listed around those levels. But off late, over the last couple of days, there is far more exuberance related to Sagility.
Yeah, that's right, Rima. It was quite a low-profile IPO, and people had not really understood the business model. But now that it's gone public and a lot of more information is available, I think it's a great business. Then this claims processing or managing of the claims for US companies, and the relationships which they have are quite phenomenal. They run back into several decades or so, and they're using a lot of the India-centric processing to manage their costs and be competitive. And overall, I think with the Trump administration coming in, there's going to be a lot more focused on reducing the costs when it comes to the healthcare industry in US. And that's where outsourcing can play a major role. And I think Sagility certainly has very good services to offer as far as US healthcare outsourcing is concerned, not just for the insurance companies, but even hospitals and clinics and pharmacies as well. So very interesting company. I'm keeping it under watch. I wish I had bought it, but definitely keeping it under watch. And at corrections, you to buy such concept stocks if they're available at reasonable valuations.
I think when IKS got listed, everyone was wondering, is there some similarity in the business model? There isn't. But I think it put the spotlight even on Sagility, because after that, you've started seeing that increased interest in Sagility.
Absolutely. So, technology in healthcare, specifically in the US market, that's what they're catering to. And it seems to be working well for them for now. All right, Deepan, we'll let you go on that note. Thank you very much for joining in. You have a great Christmas break, and see you again soon. Take a break on that note, come back on the other side, and then we'll have Amit Jeswani of Stallion Asset joining in.
Now, India is the second largest steel producer and will remain an important growth driver in the world. The issue is China has slowed down, which has resulted in Chinese prices slipping to COVID lows, which in turn has pressurized global steel prices. The Chinese housing market has remained weak, with prices of newly built commercial and residential buildings slipping all the way since mid-2023. This has impacted steel demand, thereby leading to rising iron ore inventory at Chinese ports, which is currently way higher than the average inventory levels. The pain point is that Chinese monthly exports have been rising because domestic demand out there has faltered. And for the first time since 2016, Chinese steel exports will clock more than 100 million tons. It's also on course to challenge the previous all-time highs. Well, the Indian steel industry, they are up in arms. Mr. Sajjan Jindal has made a solid pitch. He wants some protection for the domestic ferrous industry, because Chinese steelmakers, they have an unfair advantage and part of their exports are trickling into India. Well, the Steel Ministry has recently proposed to the Finance Ministry to impose 25% safeguard duty on steel imports, as India has now turned a net importer from being a net exporter in the previous year. Well, Nuvama has said the imposition of some safeguard duty along with the onset of a seasonally good quarter could give the steel producers some elbow room to go ahead and increase prices by around 2,000 rupees per ton, as domestic prices are at a bit of a discount in comparison to the landed cost of imports. But they also highlight that factors like anti-dumping investigation in Europe and aggressive exports by China is eating into India's exports, which is more concerning than the elevated imports that we're seeing. We'll have to stay tuned to see the government's action with regard to these rising imports, but things could get better for the domestic steel industry from here on, because Chinese steel prices could have bottomed out. Their exports as well could slow down. Additionally, domestic steel makers, well, they've chalked out their capacity addition plans with focus on value addition and cost efficiencies, which could support volume growth and probable expansion of unit profitability. Well, the steel industry hopes to get its sheen back in 2025.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai.
Welcome back. It's time now to find out what dealing rooms is saying, and what better place to get it from other than NSE, and Nimesh is right there. Nimesh, it's tough, right? You almost feel, looking at the market action, that people have gone on holiday, the trading action would be muted. So I'm curious to hear what you have to say.
Well, Nima, it's really a struggle to find out what's really happening in the markets. No feedback, no dealers, no flows, absolutely nothing. It's pretty much quiet. Even the Nifty seems to be pretty much in that very narrow range, mid cap, small cap, everything seems to be in a very narrow range, and even the flows are quite muted as well. I guess from a sector point of view, some bit of traction is seen in the oil and gas stocks, and within that is basically the gas company, which has seen a bit of a up move today on the back of some reports of some relief there. So that's one side which has done well, and some selective buying in the auto names as well. So these are the two sectors which stand out. But again, pretty much even in the broader market, it's been pretty quiet. From a technical point of view, the range to watch out is on the downside. 23,350 is a very crucial support on the Nifty, so that's to watch out for. And on the upside, 24,350 is the range which will now act as a very strong resistance. So Nifty, looks like it's going to be in a range of the 1,000 points, at least in the next few days from here on. But as you rightly said, very muted flows. There is not much action as well. And as days go by towards the year end, you won't see even these kind of volumes in the last couple of days.
And stocks?
So, in terms of individual names, the first stock on my list is Ola Electric. While the stock has been consolidating in a narrow range, some flow seems to have emerged from larger HNIs, is what I understand. And also, all eyes will be on the announcement of those 4,000 store opening. That could be a near-term trigger for Ola Electric. So that's something to track there. The second stock is Vishal Mega Mart, a recent listing. After the listing, you've seen a bit of a consolidation in that stock as well, but the flows have resumed from larger FIs, is what I understand. And leading long-only fund seems to be an active buyer in Vishal Mega Mart. At these levels. So that's the second stock. The third name is Tata Motors. Up and buzzing in today's trade, up to 2% last I checked. The volumes have picked up as well. Couple of reasons why the stock is buzzing in trade. One, the selling pressure seems to be largely over from some larger FIs. And two, the street anticipates some clarity or some announcements from the company with regards to their EV penetration going forward. So that's something to watch out for in Tata Motors. And the last one is Tina Rubber. Again, a small stock. We don't talk too much about that name. Well, over the last couple of months, the stock has been in a range-bound trade, but I understand the company is likely to raise funds via QIP very soon. So that's a trigger in Tina Rubber.
Okay, all right. Thanks, Nimesh, very much for getting us whatever little inputs that you were able to gather. But otherwise, yeah, it's a fact the market is completely getting into holiday mood with the midweek holiday coming up tomorrow. Well, let's go across to our next guest. Amit Jeswani, founder and CIO at Stallion Asset, is joining in. Amit, I'm sure you're getting ready to wind down with a big party. You've done well. Your fund has done well this year. It's been all about growth. And though the Nifty has been, it's very quiet for the Nifty, just 10% growth, but individual stocks. And you've managed to pick many of them. So tell us, final thoughts before you close out for the year. What's new? We believe you've added Pratap Snacks. Any changes in the portfolio in the last 2-3 weeks?
Hi, Surbi. Good afternoon, and thank you so much for having me on your show. Surbi, it's been a rocking year, to be honest. Till Friday, we were making lifetime highs. Unfortunately, we've fallen a little, but it's okay. We are excited. It's not party time. It's time to think big. Donald Trump is coming on the 20th. That is going to give us a lot of opportunities. And individual stocks, we just play a lot of frameworks. So the stock that you mentioned, that's just because of change in management. We keep doing that all the time. That frameworks typically yields us multiple times higher than the benchmark kind of return. So these are just frameworks. Change in management is a framework, and we are taking only small bets, like 0.5%, 1%. In these frameworks, but the portfolio, we were on cash till last week. We've added some IPOs. So we got some opportunities there, and that is what we are doing. We're just trying to protect next year. We don't want to be super risk on. But we don't want to be risk off. We are trying to be fully invested all the time. We don't take market calls like what markets will go down, low. I don't care. I want to be with the best 25 companies who are executing very well, and they're growing at 2 times, 3 times the nominal GDP. And once you have that kind of team, over time you outperform the benchmark.
Now, Amit, since you've had a knack of picking, real winners this year, I have to ask you about the IPOs as well. Tell us a bit, that was a teaser, and it's been such a IPO flurry, it's hard to remember who is listing, which issue is opening, because it's so hectic, right? Tell us the companies that you have chosen to back and why. At least one or two examples, some names.
So I'll give you an example that Kohinoor, I won't take the company's name, but Kohinoor is what I'm calling that company. There's a certification company which got listed. There are only two certification, like diamond certification companies, which got one diamond certification company that got listed. We bought first day, first show there. India, so lab grown is where 55-60% of their revenues are there. 65% market share globally of lab-made diamond is by one, certification is by one company, and we got it at 35 times, very high ROCs of 50-60%. Duopoly, and they are market leaders in lab-made diamond, which is growing at 50-60%. And if you're getting lab-made diamond certification, kind of, see, these are national assets. You want to buy extreme high growth companies. Lab grown is growing at 50-60%. The company overall is growing at 30-odd%. So, and unlimited ROCs. Those are the kind of bets that we want to take. Very high ROC, very high growth, market leadership. There cannot be one more guy which can enter these kind of companies and these kind of business models. And today in the world, women, the total diamond polish market is 3.3 crore carats. Out of that, 60 lakh carats is lab-made diamond. 3.3 crore is the number of carats diamond that gets sold, and only 60 lakh is lab-made diamond. The prices of lab-made diamond is way lower. And here you get money on volumes. You get $20 for every certificate that you sign, basically. And the volumes, I think, will go up multiple times in lab-grown diamond, and we have got a good way to play it. So, of course, the stock has gone up today. I just saw it up, but these are good kind of bets that I think duopolistic market, there cannot be new guys, 30% growth. These are the places that we want to be. And we have 25 such names in our portfolio. So some of them will do well, some of them will lose money, but it's okay.
Well, International Gemological Institute, the IPO price was 417, and apart from high ROCE, even the margins are so high, 59% blended margins, even after they consolidate the Netherlands and the Belgium business. So IGI is one of your Kohinoors. Amit, any other recent purchases?
We bought one retailer which got listed. We are just
Vishal Mega Mart.
Yeah, that also we bought 70-odd% ROC, 26% growth in last 3-4 years. These are the kind of businesses we like. Where the first half growth for Vishal was very weak at 18%. So all these stocks are not recommendations. Me, my clients, my family members, we all have extreme high levels of vested interest. These are 0% recommendations. I'm just telling you what we might be doing, and we are buyer sellers very frequently. So do not do consult your advisors before you take. We are trading. We are like long-term traders, I should call. But yes, we have taken some small positions in Vishal Mega Mart as well. These are places that we have invested. We've tried a new kind of thing that we have going day one, first day, first show in IPOs. Let's see if we can get it right, or we can lose money also. Let's see.
But Demi, for Vishal Mega Mart, aren't you worried that it'll get, this entire consumption slowdown, fatigue, because it's catering to a price point which is about 200 rupees per apparel. Will this not hurt Vishal Mega Mart? As you said, H1 has been weak.
So if you grow more than 20%, then market treats you very differently. But if you grow less than 20%, market's treating you. This is what is happening in the consumer space. There are only few companies who are able to execute at more than 20%. And I don't see there any massive PD rating happening. Vishal should do okay because they are not just apparels. Apparels is one part. That's around 40% of the business. And then 60% is FMCG and general merchandise. That is, and they are 70% is in-house. They're like their own labels. And that is one of the best business matrices I've seen in retailers, which do 70% ROCs are very rare. And if they can grow, the main game is that if they can grow at 20% plus, see, we are trying. If they can grow at 20-25%, we'll be very happy. If they grow at 15% or 14%, then we may be sellers also, who knows? So we will keep execution is the key thing for us. They have grown while the consumer slowdown was there. They have still grown at 18%, which is decent. Last year, they grew 26%. This year, they grew 18%. So it's okay. But if they can continue 20% plus, then we'll be very happy. And we would add more probably. I don't know. But if they don't, so we need growth. Wherever we see growth, that is where you'll find us. And if they don't grow, we'll keep cutting weights.
Got it. By the way, today is a great day for a lot of these recent listings. We're just discussing Vishal Megamart, that's up 2%. IGI, which is also a thesis that Amit likes, that's up 9%. There is, what else did I see? There's MobiKwik, there's SBI Life Sciences. New IPOs are really flying around today. And now let's come to the other side of it, Amit, because you mentioned, and I take that point, and I think viewers should keep that in mind, that you look at high momentum, you look at big growth, but you also look at very quick, very frequent portfolio changes. So whatever's not working is out, or wherever you think you've met your objectives, you're out. So where are you taking profits in the portfolio?
We have across, I don't want to name because we've been trading very large volumes now, so I don't want to take names, but here and there we are churning portfolios. We are, see, this 2025 will also give you opportunities. Markets are up near 10%, Nifty 50. I just thought we are up 6 times higher than that. So in every kind of market, you get opportunities. Next year is also going to be a year of opportunity. I find I'm fully optimistic about next year also. And keep your ears, keep trying new strategies. We have to keep our eyes, ears, everything open. Alphas are going to come. I don't find any reason why large alphas will not get made next year. Very good executors.
You know, Amit, this is heartening to hear, because most pollsters and prediction experts on the street, managers, money managers, sell side people, most are predicting maybe range bound, maybe some correction, maybe slightly lackluster. But you're saying there'll still be plenty of opportunities at the stock level. So while you're not going to name stocks, tell us, what are you studying right now? Where could those hidden opportunities be? What kind of themes, what kind of areas, sectors, clutch of companies where the flavor could just take off?
Every morning I see what Donald Trump is doing. If you want to make alphas, it is going to be a Donald Trump year. This guy is, he makes decisions depending on what side of the bed he wakes up. So it's very difficult to predict what kind of decisions he's going to make. But if there are going to be tariffs, it's going to be trade wars, it's going to be a very different world 20, 30 days from today. And you have to be ready with all your opportunities. All we do from morning to evening at Stallion is keep thinking that if Trump does this, how do we position? We're just learning, because the industries which will get impacted, we don't typically own those kind of industries, or we don't even track those kind of industries so well. But there's a change which will happen. And when there's a large change, your profit pools can change. Like, think about it. Today in the solar cell market, okay? These solar cell guys, I'm not taking the leader, which all these guys, they buy cells from China at 7 cents and they are selling at 17 cents. There is a 60% duty on China. Even the US guys know that these guys are buying at 7 cents and selling at 17 cents. Same everything to the US guys, yet they're ready to lose money. I'm just telling you, this is not about trade wars. No, economies are not, like, no one is thinking economics here. It's about who will be the superpower. Will it be US or will it be China? So there is no economics, there's no thinking mind. It's just about superpower battles. And I don't do macro at all. But next year we might try some macro also. I don't know if we do it or no, but we are trying. We are working hard on it.
Okay, Amit, thank you very much. Have a very Merry Christmas. And if we don't speak, a very Happy New Year too. And make 2025 bring you as much luck as 2024 did. Get into a break. On the other side, a few BTST calls from our technical experts. Stay with us.
Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated.
Welcome back. Still very quiet on the index. There's not much moving. And even the mid-cap index actually is completely flattened out. So, Mitesh, what's the final advice? I mean, this morning started with you saying that if there is a bounce, you'll short short any kind of a rally, and that kind of worked. Any further stocks now? Any final advice?
See, to me, this market still looks like, it may not break down big time, but I think, still range. So we were at the upper end of the range. We kind of come up from there to the middle of the range. We might go down further a bit, head towards 23,600, 550 zones. So that is the kind of index outlook. With that, I have a STVT on Power Grid with a stop at 312.5 for targets of 306, 305 kind of level on the downside. And the other one is STVT on HCL, taken after a long time, a technology name on the radar. I think the first signs of pullback are visible over here. So keep a very tight stop at 1910, look for targets of 1875.
Okay, all right, got it. Thanks for that, Mitesh. You have a good Christmas break and see you again with the market when we get back. Right now, let's move on and tell you more about that exclusive story that our colleague Ashwin from Money Control picked up, and that's causing quite a flutter in a whole bunch of Tata Group stocks. And the story is that Tata Capital, the flagship financial services arm of the Tata Group, has initiated work on a big bang listing, and it could take place as early as the new year itself, early in the new year. Let's go across to Ashwin for more details. Ashwin, what are you picking up?
What we are given to understand from our sources is that Tata Capital, the financial services flagship of the Tata Group and the subsidiary of holding company Tata Sons, has in fact initiated work and the process for a big bang mega initial public offer or IPO in 2025. Sources are telling us that this issue could be anywhere in the region of 15,000 crore plus rupees, and these sources are also telling us that it could likely be a combination of both a primary issue of shares and a secondary component. Now, Kotak Mahindra Capital, the investment bank, and law firm Cyril Amarchand Mangaldas, these are the two advisors that our sources are telling us have been roped in as of now. Other bankers and law firms may also be taken on board at a later stage. Now, if you look at Tata Capital, it had assets under management of around 1,58,000 crores as of March this year, and Tata Sons holds around 92 odd% in Tata Capital. The remaining stake is held by a few other Tata Group companies and also the trust. Now, the reason why the Tatas are going in for this IPO is because under RBI norms, all NBFCs that are classified in the list of upper layer NBFCs, they have to mandatorily list by September 2025. So that is the regulatory compliance, and hence this process has begun. We are yet to hear from Tata Sons and Tata Capital. Let's keep a watch out for this big deal in the new calendar year.
Thank you very much for that. Even if you remember Bajaj Housing Finance, which listed earlier this year, one of the reason for that was the same, because it's classified as an upper level NBFC, upper layer NBFC, and it has to be listed.
Absolutely. So mandatory regulatory reasoning. But I mean, it got the market excited nonetheless, which is what we're seeing with a lot of Tata Group stocks as well today. Well, Jay Bala of Cash the Chaos is our next guest on the show. Jay, thank you for joining in. You know, before we talk markets and indices, since this is an interesting story in the market today, this possible new IPO coming in from the Tata Group, let me talk about current stocks, whether it's a Tata Motors, Tata Investments, anything where you're seeing either a trading or an investment opportunity, anything where some action can be taken on the Tata names.
Yeah, now that you touched upon the topic, Surbi, I have a pick from Tata Group case for today. Actually, that stock is Tata Chemicals. It's actually looking quite interesting, but the overall environment is negative. So my objective is slightly lower. Normally, the target would have been about the fresh 52-week highs, all-time highs. I have a long call with a stop loss of about 1,020 with an objective of 1164. That's the most interesting stock within the Tata Group space. And on a longer term basis, I'm waiting for Tata Technologies to fall a little more further and bottom out for the medium to long term. So these are the two names I'm watching. Tata Chemicals, more immediate. Tata Technologies, little more to fall and then pick up at the lows. So, you know, waiting for reversal to come through, not yet. But TCS is actually the weakest within the space. Surprisingly, the IT index being the strongest. Within that, TCS is the weakest within that sector.
Jay, you've been calling for the markets to head significantly lower, but so far at least we've managed to arrest the downfall with about a 10% cut. Have you been surprised with the way the markets have reacted? What would you attribute this sort of resilience to? And again, do you maintain your call that we head lower, and what would the trigger be?
Yes, Rima, very much maintaining that call. The market is just meandering in a bullish fashion, to very short-term bullish fashion. I expect the Nifty to maximum that 24,800 is a very big stretch. I anticipate it to during the festive season to bounce up somewhere close to about 24,100, but I wouldn't bet too much on it because the higher time frame objective is the June 4th low of 21,300 and change, 21,280, whatever that number is on June 4th low. The markets are hitting there. It's a very short-term bounce. As we are seeing today, the banking index is exhibiting weakness. SBI, the pivotal, which is within it, is showing further weakness. It shouldn't have printed 810. It has done that. It can see a short-term bounce to about 840, but the banking index is, I think, about to take lead and lead the markets lower. The markets are weak, and I have a rough objective. As with anything in the markets, nothing is cast in stone. I have an objective of 23rd January to February 18th. These are the 2 dates I have for the markets to bottom. If the market, the cap is a rough estimate, not a figure that's cast in stone.
No, so Jay, just to get the view again, near-term target on the Nifty, what would that be?
Yeah, very rough. I won't be whole. I mean, trying to play long on this, but if the market gets there, I'll short that. The objective is 24,100. So that's the ideal area to get reshort in the market.
And then when you initiate that short at 24,100, then what is the downside expectation you have?
By Jan 23rd, I would anticipate the market to touch the June 4th low of 21,280. And the intermediate levels are about, the November low is 23,264. And beyond that, it's 22,600. And then directly to the June 4th low of 21,280.
Okay, so that's still on the table. You've been calling for that for a while, that we will retest that low that we made on the day that we got our general election results. So you're saying maybe around the 23rd of January, that could still happen. Interesting call.
Jay, what's gotten everyone worried here has been the rise in the dollar index, and it's staying at 108. Even the pullbacks have been fairly minor. What's the call on dollar index?
I'm still holding the objective of 109. 108.8 was the high the dollar index saw a couple of days ago. I'm anticipating it to exceed that. But once that's exceeded, there's a possibility of a cool off for the dollar index to somewhere about 105.5. So in the very short term, there's one more high due, about 108.85, and 109.5 is a rough estimate. But the structure is the market should exceed 108.85 and then pull back to 105.5. On the longer term, this is probably the beginning stages of a move towards 123 to 124 by mid-2026. That also, I've been reiterating for quite some time. So it's not something new, but, short-term up-down movements are pending. But we need to see this reiteration once the presidential inauguration happens in the first week of January.
It's going to be high drama in January, that's for sure. And then ultimately we head into our budget, so it's going to be action-packed. Stay on, Jay. More questions in just a bit, but right now we do have to take a break. And as we take this break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download the CNBC-TV18 app from the Apple Store or from Google Play.
From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
2024 saw a lot of action in the mutual fund space, and funds raised via NFOs has definitely been one of them. Let's look at the numbers. Funds raised by NFOs or new fund offers stood at 1.04 lakh crores in 2024. This is still the month of November. And we have more NFOs in the month of December that has not been accounted for here. That is an uptick of 63% versus funds raised in 2023 at around 63,800 crore rupees. Now, this was slightly lower than 2022. That time, the number was 67,336 crore rupees. But 2021 also saw massive inflows. This was double the amount versus 2020, when the amount raised was around 53,700 crore rupees. Now, if we talk about the number of NFOs, 2022 still tops the list. So far in 2024, we've seen 205 NFOs which have been issued till November. This compares with 212 in 2023, 246 in 2022, 140 in 21, and around 81 in 2020. Some of the categories that saw high flows: multi-cap funds getting in 6,300 crore rupees of money, and other ETFs at around 1,400 crore rupees. But The real star of this year had to be sectoral funds. 40 sectoral or thematic funds have seen the highest flows that we have seen in the last 5 years. Sectoral funds garnered around 67,772 crore rupees in 2024 so far, which is more than the flows in this space from 2020 to 2023. In this period, sectoral funds garnered around 52,165 crore rupees. This is via 59 NFOs. Even index funds actually saw a lot of interest.
So 7 minutes to go before the day closes out. Let's get you a fundamental call on the market. We caught up with Samir Arora of Helios Capital earlier in the day, and he's very optimistic on the new year that's coming in. Take a look at his top calls, some thematic ideas, and what he feels the market may do in the new year.
I have seen widely out of line markets. For example, in 2004, 5, 6, and 7 calendar years, the market was up 40% per annum. If you look at the 500 index, it was up some 39 point some percent per annum. We have seen periods like 1999, when the market went up some 85% and the NAV of my fund, Alliance Equity Fund, now called Birla Sun Life Equity Fund, in that one calendar year was up 280%. Those are wild bull runs. This is a measured bull run according to me. So our logic is that you will have 2 or 3 main chunks, which mostly the market has converged to financial sector, financial services, private sector banks, and some form of IT, which for 2 years we were bearish up to June of 24, and now we think IT is a good sector. We will not buy the EMS companies because our logic is that we have a benchmark, and those benchmarks of EMS companies trade at 8 multiple and 10 multiple, and in India you can make it 20 because everything is double, but you don't make it 150 multiple. After the Trump victory, bought all the 4 asset classes personally, because in my fund I only broadly do India, and then we have a global fund, but that is India, US, China, and gold. Everything is a buy. It has been very measured, and the reason why it is measured is that there is supply. Now, people take it as a negative that there has been so much supply, but simultaneously there has been so much demand in the sense of flows from domestic guys. But whatever be the reason, the supply has made the overall market in check.
Okay, not convinced about EMS companies which have had a splendid run because of the valuations. We're in conversation with Jay Bala. Jay, have you had a look at the charts of companies like Dixon, Amber Enterprises, Keynes Technology? And what have you made of it?
Yeah, see, Dixon, I've had a look at it and I'm watching quite closely. I anticipated it to top around 16,600 to 17,000. It's gone to 19,000 and it's come back to 17,000 again. So now if this pullback were to stall at about 18,500, there's a good probability that Dixon Technologies has clocked a significant top. But, I will wait for the stock to break down below somewhere about 15,300. And then there'll be a sharp fall, likely somewhere about 11,000 to 9,000 for Dixon Technologies. Amber Enterprises, yeah, I've had a look. It's still looking quite bullish for probably one more sequence of higher high to come through, one pullback and one more high, somewhere about 7,900 to 8,250. So yeah, these are all in the late stages of the rally. But so be quite cautious unless you're an extreme short-term trader. I don't think there are investment opportunities in these names at present levels.
Okay, all right. Got that. By the way, that's some, I think, positive news coming in from, the US for Biocon. Earlier, Biocon was reacting quite well to an approval coming in from the EU for one of their diabetes drugs. And now this is a VAI status for their API facility in Bengaluru. And VAI is great because it's voluntary action. It's not an official action that's indicated or initiated by the US FDA, which is far more severe. So VAI is good. In addition, the positive news from the EU has meant, pretty good move on the stock today. Jay, finally, since you're saying that there could be some, near-term upsides and you are expecting on the Nifty that move to 24,100, what would be some quick, smart trades to look at? Anything that you would advise?
Yeah. Besides Tata Chemicals, I have another pick that's on capital goods name. It's called Crompton Greaves Consumer. It's a very little better than buy today, sell tomorrow. Long with the stop loss at about 380 with an objective of 420. So yeah, all your longs have to be quite small, and you need to take profits quickly. Don't linger longer than required. As soon as you see some green, take some money off the table.
To the global picture, what is the chart of the Dow Jones telling you? Because that's been the standout market of 2024. It's surpassed all expectation, all odds, no recession, and it's been the best performer.
Yeah, interesting that you asked about Dow Jones, Rima. See, Dow Jones had 11 consecutive sessions between December 5th and December 19th, where the close was lower than the open. So this occurrence is happening after 50 years. It's the last time it occurred was 1974. So this is a very, very rare occurrence. The market is telling you a very important message that we probably have seen a top for the Dow. And as the new year begins, I'm anticipating a decline to take hold. So as the festive season comes to an end, I anticipate the S&P futures to clock about 6,100 and the NASDAQ futures to clock about 21,000 and change. So, and once that's done, the counter-trend bounce is done, and we are likely to see a very sharp decline take hold. Bitcoin, which is a measure of risk on or risk off for me. I pointed out last time there's a possibility of a terminal top. Once again, watch that too. If we had to resist 102 and those levels and then break down, we have a very, very big top for Bitcoin. It's likely to have. This is what I said last week too. So watch out for risk off, risk on signs from Bitcoin.
I think you have to watch for January very, very carefully, because you're talking about maybe a big downside in equities, the Bitcoin topping and even halving. So yeah, let's see. Anything's possible as the new year begins. Jay, thank you very much for joining in case we don't catch up before January. Wish you a fantastic end of the year and a great 2025 as well. Well, let's quickly recap what's been such a quiet day. Look at the Nifty. It's down quite a bit from the peak, as that graphic is telling us, but it's hardly changed. I mean, 10 points down, that's what we've got. The mid-cap index is also absolutely flat. Bank Nifty range-bound. In terms of the weak hands today, metal stocks cooled off. JSW Steel, Hindalco, Tata Steel, all those stocks are down. There's some profit-taking and weakness in financials. SBI Life, IndusInd Bank, and IT stocks didn't quite come to the Christmas party. Look at Infosys, Wipro. Most of those names have been sulking today on the downside. On the upside, the Tata Group was shining. Tata Motors 2%. If you go beyond the Nifty, look at stocks like Tata Chemicals and Investment. They've done even better. Tata Investments almost 6% higher. The Nifty gainers included some auto names like Eicher Motors, some consumer names like Nestle, ITC, and Britannia. But I think the more eye-catching movers were beyond the Nifty, Rima, today, and plenty of them.
Plenty of them. And so far, at least, Santa hasn't visited the large caps, because month to date, in the month of December, the Nifty is down 1.7%. Though there is green, a 1% rally on the mid-cap index. Quick word on the mid-cap movers. MobiKwik, top honors. IGI, 10% up. It moved up in the last 1 hour of trade. Greaves Cotton, there was news about its EV subsidiary going in for a 1,000 crore IPO, 7.5%. Sagility, RBL Bank, Hindustan Copper, Vishal Mega Mart. Many of the gas names, IGL, GAIL, also on the winners list. On the way down, HCC down for the second day in a row. Many metals weak in trade. Vedanta, SAIL. Vedanta also went ex-dividend, but SAIL, NALCO, NMDC under pressure, and Swiggy gave up some of its recent gains. Well, with that, it's a wrap on Christmas Eve's market trading. But don't go anywhere, because on the other side is Markets Forward.
The index fund space, raising 12,147 crore rupees, which is the highest that we've seen in at least 5 years. Index funds have always seen a lot of interest, and more so in the last 3 years, with more focus on passive investing. In 2023, 53 index funds were launched, garnering around 2,700 crore rupees. This compares with 85 in 2022, and these numbers were very low in 2021 and 2020, as you can see on your screen. Interestingly, no mid-cap funds were launched in 2023 and 2024. This space did see a big rally, but did not see a new product here, but saw massive flows in the existing names. Also, only one small cap fund was launched in 2024. And now we are towards the end of 2024, and December also has seen a lot of action in the NFO space. But will this continue in 2025? Will there be new products by mutual funds houses to diversify their portfolio? Well, time will tell.
Gonna be president, that I can tell you. And I'm safe, you know why? He can't be. He wasn't born in this country. Now, he's a great guy, and we want to have him. Everybody, so many people are in this audience that have helped.
Dalal Street fails to hold opening gains to end at the day's low. The Nifty ends below 23,800. Broader markets fall in line with the blue chips.
Tata's financial service arm Tata Capital ropes in advisors ahead of potential IPO in 2025. The decision for listing is in the lines with RBI's mandatory requirement for upper layer NBFCs to list within 3 years of being notified. Sources say that the IPO size is likely to be around 15,000 crore rupees. That's a money control exclusive.
Rupee hits a fresh low. The rupee hovers around 85.18 against the dollar. The pressure on the rupee was expected due to the rise in the dollar index and the expected month-end dollar buying at home. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to prep you up for Thursday. I'm Reema Tendulkar. With me is my colleague, Vinny. Hi.
Hi, Reema. And I think the markets was quite confused between your dress and my dress color. Green, red, and ended in the red. Not exciting, right? I thought gave up all those gains.
It's given up all the gains. It was a very quiet and range-bound day. By the end of it, the Nifty ended with a cut of about 0.1%, below 23,750. But what was clear over the last 2 days is the 200-day moving average is acting as a stiff resistance. The 200-day moving average is 23,840, but it coincides with today's intraday high on the Nifty and even yesterday's intraday high. But remember, volumes have thinned out across the globe and even back home in India. Sectorally, it was metals where you saw weakness. PSU banks down close to about 0.5%. IT on the back foot. And on the way up, defense stocks did pretty well. Auto, FMCG also on the buyers list. And the Tata Group stocks. So Tata Motors was one of the big, gainers, at least on the Nifty pack, ending up with a gain of 1.8%. We'll discuss this on Tata Capital plans to go public. So the Tata Group stocks were fairly active. Flat close for the mid-cap index too. The advanced decline ratio, the gap between the gainers and declining stocks narrowed. But by the end of it, it was pretty much on an even keel.
Absolutely. So yes, we'll be keeping an eye out on how we see the markets moving on Thursday as well. But muted day coming in for the Indian markets as of now. Well, here's a lineup of y'all of what we have in store for y'all on the show today. And we'll start with the top movers and shakers of the day with Vivek Iyer. Well, the stocks of the day is Amber Enterprises. Sudarshan will join in with us to give us the key reasons why the stock was buzzing. And last but not the least, we get you the market opinions we received during the day in our segment Corporate Corner.
And it's over to Vivek now. As promised, he's at the big wall with the top stock movers of the day. Vivek.
Well, thank you so much for that. Like you mentioned at the start of the show, very choppy session, very directional session, if you could call that. But quite a few stocks, especially in the broad end of the market, that saw some wild moves. First on the list has to be Indigo. Again, very strong passenger data coming in. Remember, yesterday you saw a double upgrade coming in from Elara, and the market share gains that the company has seen in the month gone by, something that kept the stock quite buoyed up. Now, the likely upcoming IPO of Tata Capital is something that kept quite a few of the Tata stocks, quite active in the session today. Quite a few of the Tata Group companies, remember, whole stake as far as Tata Capital is concerned, and Tata Investment, at one point of time was at the upper circuit, cooled off a little bit, but the entire Tata Group stocks, most of them saw quite a bit of buying activity through the session. The other pack today that did quite well was the oil and gas pack. Most of the stocks, especially GAIL, IGL, MGL, these were the stocks that saw quite a bit of buying today, and even some of the OMCs like HPCL actually moved higher in the session today. Now, moving on, having a look at one from the pharma pack. Look at Biocon today. A positive news flow coming in terms of a key drug approval from the EU market. Along with that, a clearance coming in for the Bangalore API facility. Back of that stock ended high by almost 4%. And also, Greaves Cotton, this particular stock, we highlighted it earlier in the day, a subsidiary going in for an IPO as far as the EV mobility space is concerned. 7% higher as far as Greaves Cotton is concerned, but quite a few laggards as well. First up, the entire metal rally that we saw yesterday cooled off a little bit. All of the metal stocks today saw a profit booking emerging at the higher levels, Vedanta amongst the top laggards. Also look at Intellect Design. Yesterday the stock was up over 15%. Today cooled off quite a little bit. In fact, the top laggard as far as the NSE 500 was concerned. And lastly, Dalmia Bharat. Within the cement space, this particular stock saw quite a bit of selling pressure emerge, especially in the last hour of the trading session, over 2% down as far as Dalmia Bharat was concerned.
Right, Vivek, thank you so much for that. Those were the top movers in trade today. But let's bring on board our guest for today. We have Jay Bala, CMT at cashthechaos.com, as well as Sudeep Bandyopadhyay, Group Chairman at Indie Trade Capital, joining in with us. Thank you so much, gentlemen, for joining in with us on the show. Jay, very range-bound trading session, right? What we're seeing coming in the last couple of days for the Nifty. The 23,860, 870 is where it's roaming around. What is your view coming in on the Nifty as well as the Nifty Bank?
Yeah, for the very short term, Vinny, the markets are set to bounce a little bit and probably a maximum of 24,800. That's a big stretch, but my ideal objective is about 24,100 and change. So that's the this is a counter trend bounce. Make no mistake of that. And once that is done, the market is likely to drop to the June 4th low. And that's the objective I've been maintaining since the end of September. And as far as the banking index goes, the print of 810 for SBI is not a good sign. Probably a counter trend bounce to about 51,900 to 52,000 max. And then banking index is likely to take lead on the downside. So some more upside in the very short term, but the markets are looking quite weak.
Got that. Let's talk about the Indian aviation sector. Now, the domestic air passenger growth has seen a jump of 12% in the month of November on a year-on-year basis. IndiGlobe Aviation was also in focus separately because Elara upgraded the stock to a buy. The numbers are looking good, right, in terms of air traffic. More and more people are out there in the skies.
Absolutely, and I think let's not forget that this is holiday season as well. So everyone is booking those flight tickets. Maybe that is something also that is supporting these numbers coming in. But as of now, the passenger data, the domestic air passenger data that we have coming in, 12% growth YOY in the month of November. Last month, it was around an 8% number that we saw. First half of the year, 5% growth is what we're seeing. While Indigo, just talking about Indigo itself, 15% growth in the month of November versus last year. Also for Indigo, the occupancy has climbed to 90% in the month of November, as well as the December trends that are indicated right now. That also is somewhere around in the 90% range. Let's not forget this November month for Indigo has been the best in almost 5 years. So it's an interesting number that's surely coming in for Indigo. While obviously Indigo's market share continues to be about that 60% mark, 63.6% in the month of November. Air India, their market share is at 27.3%, which is at 11-month low. SpiceJet, Akasa, they have improved their market share by 60 and 20 basis points respectively. So it will be interesting to see how, the market share also moves going forward. Let's not forget, yesterday, this Elara note that we had, double upgrade, buy rating is what they've had now from a previous sell rating for Interglobe Aviation. Target price of 5,309 rupees. They've raised their EPS targets as well for FY25 to FY27. And a lot of tailwinds, what they're talking about, Rima, is in terms of demand that they're expecting to see. The higher demand, the higher traction in terms of new domestic airports that we'll have in Mumbai and Delhi, that will lead to better volumes, and that will be something that will be supporting the growth. And that's why I think Indigo, being the leader, is seeing a buzz in trade as well.
Indeed, 2 new airports on the anvil, the one in Mumbai and in Delhi. Sudeep Bandopadhyay is also with us on the show. Sudeep, have you been bullish on Interglobe Aviation? Because on one hand, the underpenetration, the fact that the India opportunity is so high is there. But there is also that regulatory overhang, engine-related issues. Then you don't know what's happening with ATF prices. So what's been your call on Interglobe Aviation, and are you turning incrementally more bullish?
Well, I think one more factor I'll add to the positives which we were discussing is that ATF prices have remained stable and there's a downward bias. So that also has definitely helped in Interglobe Aviation. Now, as far as my view on the entire aviation space is concerned, I'm always cautious on aviation. I think it's too volatile a sector. There are too many variables and too many factors which does impact aviation. Of course, there is no doubt about the fact that this is the peak season for airline industry, and they tend to do well in this holiday season. This is one chunk of the holiday season. The other is a summer vacation time. So both these chunk of time they do well. But having said that, considering the valuation where it is, and considering the as you rightly pointed out, the challenges, the aircraft-related issues, and also the competition, which is going to definitely come from Air India sooner or later, I would be a little cautious in advising a buy in Interglobe Aviation at this stage. I will keep watching. Maybe I'm missing an opportunity, but I'll still prefer to do that rather than jump into Interglobe Aviation at these levels.
And Jay, what's the chart of Indigo telling you?
Yeah, it's quite
flying
strong.
Up or down?
Sudeep has pointed out a very important point, and he's right about the aviation jet fuel having a downward bias. I'm anticipating Brent to drop to about $65 from the current levels of about 73. So that can give further tailwind. So probably Interglobe would have short-term upsides to work with. I'm not completely sure if it topped out or it's reversed, but I would say because aviation fuels are likely to give some more fillip to the current move, maybe I'm maintaining a slight bullish bias.
Okay, that's a word on Interglobe Aviation. But let's move on the flagship financial service arm of Tata Group. Tata Capital has initiated work on a big bang listing. This is according to the sources from Money Control. Remember, the last IPO from the conglomerate was when Tata Technologies made a bumper debut in November 2023. Money Control's Ashwin Mohan is joining in with us to give us details on this one. Ashwin, what are you picking up?
What we are given to understand from our sources is that Tata Capital, the financial services flagship of the Tata Group and the subsidiary of holding company Tata Sons, has in fact initiated work and the process for a big bang mega initial public offer or IPO in 2025. Sources are telling us that this issue could be anywhere in the region of 15,000 crore plus rupees, and these sources are also telling us that it could likely be a combination of both a primary issue of shares and a secondary component. Now, Kotak Mahindra Capital, the investment bank, and law firm Cyril Amarchand Mangaldas, these are the two advisors that our sources are telling us have been roped in as of now. Other bankers and law firms may also be taken on board at a later stage. Now, if you look at Tata Capital, it had assets under management of around 1,58,000 crores as of March this year, and Tata Sons holds around 92% in Tata Capital. The remaining stake is held by a few other Tata Group companies and also the trust. Now, the reason why the Tatas are going in for this IPO is because under RBI norms, all NBFCs that are classified in the list of upper layer NBFCs, they have to mandatorily list by September 2025. So that is the regulatory compliance, and hence this process has begun. We are yet to hear from Tata Sons and Tata Capital. Let's keep a watch out for this big deal in the new calendar year.
Thank you, and congratulations on that exclusive news. Let's move on to Amber Enterprises that rallied 6% after sources told CNBC-TV18 the company may be looking to demerge one of its businesses. Sudarshan is here with the details.
So at one point today, Amber stock was up almost 10%, and in the last 2 days, stock has moved almost 20%. So Amber Enterprises had 3 business divisions: consumer durables, electronics and railway subsystem. So out of these 3 divisions, sources say company is looking to demerge the electronics division, and post the demerger, it may bring an IPO for the same, and company is likely to have appointed the bankers as far from the what we know from these sources. Now, talking about the revenue front, in FY24, electronics division had formed 20% of total revenue, and in Q2 FY25, electronics division had formed 30% of total revenue, and year-on-year it had jumped almost 100%. Now, on the valuation front, Amber Enterprises FY26 estimated PE is 54 times. Now, if you compare peer-to-peer for Dixon, FY26 estimated PE is 99 times. And as far as the stock performance is concerned, in 2024, Amber has given positive returns of more than 100%, while for Dixon, returns have been more than 200%. As far as story is concerned, CNBC-TV18 has reached out to management. Comments are still awaited.
Okay, thank you so much for that, Sudarshan. And Amber Enterprises surely buzzing in trade today. But, Sudeep, coming to you for Amber Enterprises, Dixon Tech, Keynes Technology, all these have seen such a good run-up, right? And today also they're managing to sustain and hold on to those levels. When Sudarshan right now is talking about those valuations, they seem pretty expensive. What is your thought on this space?
Right, Vinny. I think these are good companies and showing very good growth. In today's day, you don't get 25-30% quarter-on-quarter, year-on-year kind of a growth, which these companies are posting. But a valuation of 99 times, 65 times and all that, I think these are a little too outside our imagination and reach. So I don't think I would recommend a buy in these companies at this stage. Some sharp correction at some stage may enable me to recommend a buy. We find that the growth becomes 70-80% kind of growth they're showing. Then again, these valuations can be justified. Otherwise, I will stay away from these counters, in spite of the fact that they are doing very well and there is definitely growth momentum in these stocks.
Moving on now to PG Electroplast, another big mover. This is after Whirlpool inked a deal with PG Electroplast to source select washing machines. It's a positive for PG Electroplast, and the stock ended with a gain of about 2%. Upasana is here with more. Upasana.
Well, PG Electroplast and Whirlpool, both the stocks remained in focus today as these companies have signed a definitive agreement for contract manufacturing of select models of Whirlpool branded semi-automatic washing machines. Now, PG Electroplast will use its manufacturing expertise with a key objective to make the products at an affordable price point, is what the company has indicated. And under this arrangement, PG Electroplast will manufacture some of the SKUs for Whirlpool at its factory in Roorkee. Now, mind you that the PG Electroplast is already an existing supplier of Whirlpool's branded air conditioners. Now, this deal will unlock new opportunities for growth, and both the companies will continue to evaluate potential expansion opportunities, is what the company has indicated in their press release. Hence, both these stocks remained in focus today, especially PG Electroplast. We saw a sharp up move in today's trading session.
Absolutely. Thank you so much for that, Upasna. Keeping an eye on PG Electroplast. But Jay, what is your view and thoughts on PG Electroplast? This up move that we've seen today, is that likely to continue going forward?
Yeah, we discussed PG Electroplast a few weeks ago when it was about 700 odds, and I was bullish on it, and still, it's got at least one more sequence of higher high to come through, possibly exceeding 1,000. But Whirlpool is not looking that good. It's probably topped at 24.49. It registered earlier this year. It's likely seeing a counter trend bounce, and probably PG Electroplast is much better than Whirlpool on a relative basis.
Gentlemen, thank you very much for joining in, and enjoy the Christmas break. A very Merry Christmas to you. We'll get into a break. On the other side, the top corporate voices. Stay tuned.
ईवी व्हीकल्स उसके ऊपर भी सुबह से चल रही है जब प्रेस कॉन्फ्रेंस फाइनल नहीं हो। ईवी व्हीकल्स के ऊपर ये एब्सोल्युटली क्लियरली मेंशन करना चाहिए कि नया व्हीकल्स ईवी खरीदने में 5% है। Am I right? 5%। पुराने ईवी व्हीकल्स खरीदने का विषय ही आया है। We want to promote EV. GST Council is in favor of EV. Nobody is stopping people from buying EV. मगर used EV खरीद।
Welcome back to Markets Forward on CNBC-TV18. And in today's Corporate Corner, Orimpro gained over 2% after it acquired Fenix's for 90 crore rupees. In a conversation with CNBC-TV18, the management said that the acquisition would help it expand into the European market and see a revenue contribution to hit double digits in the next 2 years from a negligible presence today in the European market. The acquisition is also expected to bring Fenix's margins to the company's level of 20% in the next 2 years. Next up, we also had on the list Keynes Technology. The firm's management has not revised its growth guidance for FY25. In fact, it expects its revenue growth to remain around the 3,000 crore rupees and EBITDA margin to be at that 15% range for FY25. However, the management did provide a guidance for FY28 and expects revenue to hit 9,000 crore rupees by that time. And in a bid to expand its portfolio, Team Lease has acquired stake in TSR Darshaw and Crystal HR. Team Lease's management said that the acquisition will contribute to 5 to 6% to overall profits, even as revenue contribution will be less than 1%. The firm's CEO, Ramani Datti, also said that the priority for the company going into 2025 would be profit expansion.
And let's get you some market opinion. Prep you up for 2025. It's Samir Arora of Helios Capital, who believes the current bull run in the market is more measured than the previous rallies. He's positive on financials and IT stocks.
So our logic is that you will have 2 or 3 main chunks, which mostly the market has converged to financial sector, financial services, private sector banks, and some form of IT, which for 2 years we were bearish up to June of 24, and now we think IT is a good sector. We will not buy the EMS companies because our logic is that we have a benchmark, and those benchmarks of EMS companies trade at 8 multiple and 10 multiple, and in India you can make it 20 because everything is double, but you don't make it 150 multiple.
And as we wrap Markets Forward, we'll get you a collaborative initiative by Grow and CNBC-TV18. Our mission is to equip you with valuable insights and strategies to navigate the market and make more informed decisions. We'll help you understand the various costs and expenses you need to be aware of as a trader.
buy something at 100, sell it at 120, you think you've pocketed 20 rupees, right? No, that's not how it works in the stock market, because there are several other costs to consider beyond just the price of the security. First is the securities transaction tax, which is charged by the government on both sale and purchase of securities, typically at 0.1% for equity delivery and 0.025% for intraday trades. Then there is this GST, which is applicable on brokerage fees, again typically at 18%. So if your brokerage charges about 100 rupee fee, you'll have to pay an additional 18 rupees as GST itself. Then there are these exchange transaction fees, charged again typically by stock exchanges, usually a small percentage of your total transaction value. And above all of that, don't forget the brokerage fees itself. These can either be fixed or a percentage of your trade value depending on your broker. So all these costs, they add up. It's important for you to account for them when you're planning your trades.
एक व्यक्ति दूसरे व्यक्ति को सेल करेगा तो कोई नहीं है उसमें. The same thing as 5%. No GST. Sorry. Used EV. An individual selling to another individual, no GST. But if a company has bought EV, or if there is a regular registered used car seller who buys EV, does some propping up in it, adds value to it and then sells it. It was felt by states and it was felt by auto and many others also that the EV market is not so saturated as yet that used cars will come. And category mein, therefore used cars category mein EV भी है, petrol vehicle भी है, diesel vehicle भी है. And I like to highlight this point to you. हमारी तरफ से केंद्र सरकार, Government of India, which is 1/3 member of the GST, हमारी तरफ से agenda में sale of old and used EV vehicles को 12 से 5 तक ले आने के लिए we had suggested. But when the discussions happened, it is on that margin, the margin value between purchased price and resale price. 12 लाख में खरीदा, 9 लाख में बेच रहे हैं second hand used vehicle के नाम पर. On the margin is only this 18% is being put, as would be for any used car. So it is on the margin, not on the entire amount at which the car is being sold. So EV vehicle का हमारे recommendation तो 5 को ले आओ उसको भी जैसे EV का नया vehicle का rate है. मगर after विस्तार discussion, the marginal value के ऊपर ही ये 18% डाला जा रहा है जैसे कि हर used vehicle का है. So more can be asked as question. It is not a blind application of 18%. It is more thoughtfully done. Our recommendation was for 5%, but post that, the discussions have resulted in this. The concept note is got to be studied. In principle, the council has accepted it. Once the concept note is studied in detail, then again it will be presented before the GST Council. Once they agree on simplifying as per team.
Well, hello and welcome to Business 360. I'm Ashmit Kumar, and here are the headlines that we're tracking this evening. The Indian rupee continues to weaken against the US dollar, hitting another record low today. Stock markets end with marginal losses after failing to hold early gains. Prime Minister Modi meets over a dozen economists ahead of the union budget. Niti Aayog officials were also present for the closed-door meeting, which took place after GDP growth in Q2 slowed to a 21-month low. Tata's financial services arm Tata Capital ropes in advisors ahead of the potential IPO in 2025. The decision for listing is in line with the RBI's mandatory requirement for upper-layer NBFCs to list within 3 years of being notified. Sources say that the IPO size is likely to be around 15,000 crore rupees. That's a money control exclusive. China firms up plans for a fiscal stimulus in order to soften the blow of an expected increase in tariffs once Trump takes charge. Reuters reports suggests that Chinese policymakers plan to issue a special treasury bond worth record $411 billion next year. Hospitality startup Oyo completes the acquisition of G6 Hospitality, owned by Blackstone, for $525 million. The deal adds nearly 1,500 franchise hotels across US and Canada to Oyo's portfolio. Dabur moves Delhi High Court against Patanjali, alleges that an advertisement featuring Ramdev claims that only Patanjali's Chyawanprash is original and that other companies lack the expertise. Dabur claims that the advertisement is disparaging and damaging to other companies. High Court agrees to hear the matter but refuses to restrain Patanjali from airing this ad. Vehicle registrations fall by 15% in the first 3 weeks of December. Petrol-powered vehicles and two-wheelers are the worst hit. Electric vehicles add some spark in an otherwise disappointing month. Mercury dips across North India as the Met Department warns of a severe cold wave. A fresh wave of snowfall hit Manali yesterday, leaving around 1,000 vehicles stranded between Solang and the Atal Tunnel. Kashmir's Sonmarg too witnessed heavy snowfall. The Election Commission of India counters allegations by the Congress party over Maharashtra elections, says that the increase in voter turnout between 5 p.m. and 11:45 p.m. is normal. Also adds that a case has been registered over allegations of voter list manipulation. Israel confirms killing Ismail Haniyeh, the chief of Hamas's political bureau in Tehran this July, marks the first public acknowledgement that Tel Aviv was behind the killing. Israel's defense minister warns that military would also decapitate the Houthi leadership, just as it did with the Hamas and Hezbollah top brass. Veteran filmmaker Shyam Benegal, one of the trailblazers of new wave cinema in India, dies at the age of 90. He was suffering from a chronic kidney ailment. Leading film personalities attend the cremation at Mumbai's Shivaji Park. Well, the stock markets failed to hold opening gains in a range-bound session today. Nifty and Sensex ended flat, with the Nifty falling below the 23,800 mark. The broader markets fell in line with the blue chips. Surbi Upadhyay is joining us now with a quick wrap of the day's trading action. Surbi.
Well, it was an extremely flat and range-bound day and along expected lines, considering a lot of global markets were anyway shutting early for the Christmas holiday. So what we have is a range-bound move between about 150 points, the highest and the lowest point on the Nifty today. But what the Nifty did was, once again, it failed to have a close above the 200 DMA, which comes in around the 23,840 level, thereabout, roughly speaking. Nonetheless, it wasn't too bad. I'll come to the movers and shakers in just a bit. In terms of the sectoral spread, there was some buying in consumer and auto that came back today. But then the large pillars of the market, IT as well as banks, they were fairly listless. The Tata Group deserves a special mention because of the story that our colleagues in Money Control put out, that Tata Capital could be looking at a large IPO in early 2025, and that got a lot of the group stocks excited. Let's look at Tata Investments, Tata Motors, Tata Technologies, Tata Chemical. All these stocks were up between 2, 4, 5%, depending on which one you picked up. Coming to the Nifty gainers, Adani Enterprises, Dr. Reddy's, and a lot of consumer names, like I mentioned. You had a good show from Britannia, Trent, ITC, and even BPCL did fairly well, with oil prices coming off overnight. The losers tally included a lot of metal names that were shining bright yesterday. So Hindalco, Tata Steel, JSW Steel, these were on the way down. Power Grid also cooled off. And financials like IndusInd Bank, SBI, and even SBI Life those stocks were on the lower side. Mid-caps had a better day today, and that's something to take heart from. The advanced decline ratio was better, and the index at least didn't go home with any deep gashes. It was flat at best. Today's movers included the likes of Greaves Cotton, which is looking at an IPO for its EV arm. Amber Enterprises, our colleague Sudarshan reporting that Amber could also be looking at hiving off its electronics business. Sagility, Triveni Engineering, RBL Bank, some interesting gains on many of these stocks. And also it was a great day for a lot of the recent listings. So much, shine and flutter around them. International Gemological Institute, Sai Life Sciences and MobiKwik, double-digit gains for some of these stocks coming through. So fairly exciting day at an individual stock level, but otherwise fairly quiet. We don't have too many cues going into the Christmas holiday. And then the bulls will hope for a final flurry when global markets come back to trade 26th onwards.
Right, Surbhi, thanks a lot for that. Now, Sameer Arora of Helios Capital believes that the current bull run in the market is more measured than previous rallies. He's positive on financials and IT stocks in 2025.
I have seen widely out of line markets. For example, in 2004, 5, 6, and 7 calendar years, the market was up 40% per annum. If you look at the 500 index, it was up some 39 point some percent per annum. We have seen periods like 1999, when the market went up some 85% and the NAV of my fund, Alliance Equity Fund, now called Birla Sun Life Equity Fund, in that one calendar year was up 280%. Those are wild bull runs. This is a measured bull run according to me. So our logic is that you will have 2 or 3 main chunks, which mostly the market has converged to financial sector, financial services, private sector banks, and some form of IT, which for 2 years we were bearish up to June of 24, and now we think IT is a good sector. We will not buy the EMS companies because our logic is that we have a benchmark, and those benchmarks of EMS companies trade at 8 multiple and 10 multiple, and in India you can make it 20 because everything is double, but you don't make it 150 multiple.
Well, on to the money market now. The Indian rupee hit yet another record low today. It stood firmly above 85 per dollar amidst dollar buying by oil importers. Month-end US dollar demand is expected to put further pressure on the Indian currency. Bond prices remain largely steady. And China's policymakers plan to sell $411 billion worth of special treasury bonds in 2025. According to a Reuters report, this would be the highest bond issuance on record. The move is in sync with Beijing ramping up fiscal stimulus to boost the slowing economy. The funds raised will be used to support consumption subsidies, business equipment upgrades, as well as investment in key technologies and advanced manufacturing sectors. Now, over a year after Tata Tech's successful IPO, another Tata Group company is eyeing its D Street debut. Sources tell Money Control that Tata Capital, the group's financial services arm, has initiated work for its IPO and could raise 15,000 crore rupees. The decision to list is in line with RBI's norms for the upper layer NBFCs. Ashwin Mohan joins us now with more details. Ashwin.
What we are given to understand from our sources is that Tata Capital, the financial services flagship of the Tata Group and the subsidiary of holding company Tata Sons, has in fact initiated work and the process for a big bang mega initial public offer or IPO in 2025. Sources are telling us that this issue could be anywhere in the region of 15,000 crore plus rupees, and these sources are also telling us that it could likely be a combination of both a primary issue of shares and a secondary component. Now, Kotak Mahindra Capital, the investment bank, and law firm Cyril Merchant Mangaldas, these are the two advisors that our sources are telling us have been roped in as of now. Other bankers and law firms may also be taken on board at a later stage. Now, if you look at Tata Capital, it had assets under management of around 1,58,000 crores as of March this year, and Tata Sons holds around 92 odd% in Tata Capital. The remaining stake is held by a few other Tata Group companies and also the trust. Now, the reason why the Tatas are going in for this IPO is because under RBI norms, all NBFCs that are classified in the list of upper layer NBFCs, they have to mandatorily list by September 2025. So that is the regulatory compliance, and hence this process has begun. We are yet to hear from Tata Sons and Tata Capital. Let's keep a watch out for this big deal in the new calendar year.
Well, in a bid to expand its footprint across North America, OYO has completed the acquisition of US-based G6 Hospitality for $525 million. The company operates around 1,500 hotels under brands like Motel 6 and Studio 6 in the US and Canada. OYO expects this deal to generate a gross booking value of $1.7 billion and pump up its EBITDA to 2,000 crore rupees in FY26. Meanwhile, Greaves Electric Mobility, the electric vehicle division of Greaves Cotton, plans to go public. The company has filed for 1,000 crore rupee IPO with SEBI. The IPO will be a combination of a fresh issue of shares and an offer for sale. The proceeds will be used for product research, building battery assembly capabilities, and boost manufacturing capacity. Now, shares of Amber Enterprises surged over 5% in today's trade. This after CNBC-TV18 reported that the company is looking to demerge its electronic division. According to sources, the company might also float an IPO of its electronics segment, for which bankers are already being appointed. The electronics division comprised 20% of Amber Enterprises' total revenue in FY24. Now, vehicle registrations declined by 15% in the first 3 weeks of December. Petrol-powered vehicles and two-wheelers are the worst hit. Electric vehicles add some spark in an otherwise disappointing month. India's telecom regulator has promised new guidelines against pesky calls and that they will be released in a month's time. Speaking to my colleague Abhimanyu Sharma, TRAI chairperson Anil Kumar Lahoti also defended the move to ask telecom service providers to offer a tariff plan without data and only for calls and text messages specifically designed for feature phones.
In our country, there are a large number of subscribers who are not using a smartphone. They have feature phones, and there are some who do not feel comfortable using a smartphone. So they should be able to, have the option of taking a plan which has only voice and SMS. So in order to give the consumer the choice that they can subscribe only to voice and SMS, this tariff order and amendment to the regulation has been issued, so that all the service providers provide at least one such tariff voucher.
So what is the status of consultation on satellite communication and also against unsolicited calls? What kind of suggestions have been given? Can you name a few?
For both the satellite communication, we have already completed the process of consultation, that is comments, counter comments and the open house discussion, and we have received a large number of comments from various stakeholders. These are all under examination, and after examining the comments, we will soon come out with our recommendations to the government. In respect of the unsolicited commercial communications, again we have completed the process of consultation, that is the comments, counter comments and the open house discussion, and after this again we have received a large number of comments because of the importance of the subject which are under examination, and we should be able to come out with the amended regulation within a month's time.
So any key comments or any timeline behind that, anything you can ascribe to that currently?
I think we have received a large number of comments. To pick up a few of them will not, at this stage, will not be fair.
Prime Minister Narendra Modi held consultations with leading economists and other stakeholders ahead of Budget 2025. Finance Minister Nirmala Sitharaman and top officials of the Niti Aayog were present at the meeting. Parishit Luthra joins us now with more details. Parishit, what were the key focus areas for this meeting?
Well, the clear focus in this meeting was the 2047 roadmap. Ever since the Prime Minister took over for his third term, the entire government machinery has been chalking out a 2047 roadmap. And sources tell us that even in this meeting, the Prime Minister and his team was more concerned about a long-term higher growth trajectory than the immediate budget exercise. Though there were consultations about the budget and what measures can be taken to spur growth across sectors, the larger focus was how can we have a larger vision for 2047. So this included a blueprint for the agriculture sector, the MSME sector, manufacturing. There was also a discussion on how India can leverage the current geopolitical landscape and have a bigger play in global value chains and be a bigger exporter to the world as well. Job creation was a big focus area in the budget in July. We had seen an internship scheme, a skilling scheme, and an employment scheme being announced. And clearly there could be further job employment push areas in the budget as well. But here the focus was on how to have sustained job creation across sectors, have more skilled jobs till 2047 as well. So you had the likes of former Executive Director of IMF, Surjit Bhalla, Ritam Desai of Morgan Stanley, DK Joshi of CRISIL, Ashok Gulati, and agricultural economists, BVR Subramaniam, the CEO of Niti Aayog, Suman Berry, the Vice Chairman of Niti Aayog, the Principal Secretary to the Prime Minister, Nirmala Sitharaman, all top leaders and officials from the government were present in that meeting, which was focused beyond the immediate budget exercise. But at the same time, there are concerns about a growth slowdown, especially in the September quarter, and whether we can come back to a high growth trajectory fast enough. So there were some discussions on that, but the broad discussions on the 2047 Viksit Bharat blueprint.
Indeed, Preksha, thanks a lot for that inside look at that all-important meeting ahead of the budget 2025. With that, we're slipping into a very short break now, but don't go anywhere. The Election Commission of India counters allegations by the Congress party over Maharashtra elections, says that the increase in voter turnout between 5 p.m. and 11:45 p.m. is normal. More details in just a bit.
The registration process for small companies, then the amendment will have to be done in the law. So that is one thing which I referred. Training partners, skill training partners of the National Skill Development Council, उनको जो approved partners है, not everybody, जो approved partners है, उनको GST exempt करने के लिए निर्णय हुआ है, मगर नोटिफिकेशन आएगा बाद में. Payment aggregators who do less than 2,000 rupees payment are eligible for exemption. But let us understand, and I provide this clarification now, that this exemption does not cover payment gateways and other fintech services which do not involve settlement of funds. So payment aggregators alone, I'm talking about, who do less than 2,000 rupees will have that exemption provided. Another important decision, there are several which will be covered in detail in your press note, which all of you all will receive. I clarify that no GST is payable on the penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with loan terms. This will be very important for small businesses, so I repeat it. The Council has desired that we issue a clarification that no GST is payable on the penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with terms, loan terms. There are three things on which, even as the GST Council was busy deliberating, from the morning, there's a lot of speculation in the media. And as a result, there's a lot of speculation in the social media. अरे पॉपकॉर्न के ऊपर भी डाल रहे हैं टैक्स. मैं मीडिया से हाथ जोड़कर रिक्वेस्ट करती हूं, ये पूरे प्रेस मीट हम करते हैं हर जीएसटी काउंसिल के बाद, और टैक्स ऐसे विषय है जिसमें बहुत लेयर्स होता है। कोई आंख बंद करके टैक्स लगाते भी नहीं है और आंख बंद करके हटाते भी नहीं है। पूरे विषय समझने के बाद प्लीज आपके मीडिया में चलाइए। पॉपकॉर्न के ऊपर टैक्स, मैं इसका पूरे पृष्ठभूमि आपके सामने रखना चाहती। सॉल्टेड पॉपकॉर्न, कैरामलाइज्ड पॉपकॉर्न, प्लेन पॉपकॉर्न, ऐसे स्टेट्स हैं जहां नमकीन के नाम में पॉपकॉर्न सॉल्टेड भी सेल होता है कि नहीं? नमकीन है वो, मगर जब पॉपकॉर्न सॉल्टेड सिर्फ नहीं है, उसमें कैरामलाइज्ड पॉपकॉर्न भी मार्केट में आता है एडेड शुगर के साथ। एडेड शुगर के चीज हर एक में रेट एक है, नमकीन के ऊपर रेट कम है। सो कैरामलाइज्ड पॉपकॉर्न का ट्रीटमेंट के ऊपर सब लोग विस्तार से चर्चा की। व्हेन यू टॉक आउटसाइड,
Welcome back. Now, here's an interesting case. Dabur has moved the Delhi High Court against Patanjali. The company has alleged that an advertisement featuring Baba Ramdev claims that only Patanjali's Chyawanprash is original and that of other companies lack the expertise. In fact, the word that has been cited by Dabur as objectionable is Baba Ramdev saying that it's ordinary. Other Chyawanprash companies making other Chyawanprash. Now, what's important is that these advertisements authorized by Patanjali were run across various broadcast channels, across various publications as well, and that is what has been objected to by Dabur. Dabur makes the claim that these claims being made by Baba Ramdev, by Patanjali, are in fact disparaging, are damaging to other brands, including Dabur. Dabur being one of the heavyweights in this brand, commanding nearly 60% of the market share as far as Chyawanprash is concerned, claiming that this is hugely damaging for the company. Also going on to say that as far as these claims are concerned, this is not something that Baba Ramdev is alien to. This is Dabur basically invoking the case that was going on before the Apex Court, where the Supreme Court had frowned on advertisements authorized by Patanjali Ayurved, where in fact it was claimed by Patanjali Ayurved that they had products that was even going to cure diabetes, even going to cure COVID, and that also had made those advertisements, they had made disparaging comments against allopathic medicine. So all of these aspects being argued before the Delhi High Court, the prayer that essentially Dabur had made, the interim prayer, the interim relief that the company had sought was for a stay on these advertisements being issued, being run by Patanjali. However, Delhi High Court, while it has agreed to hear Dabur's application, has agreed to hear Dabur's plea, it has not agreed to grant a stay as far as Patanjali's ads are concerned. So Patanjali's ad featuring Baba Ramdev are free to air, free to continue as far as broadcasters and publications are concerned. But nonetheless, the Delhi High Court has said that this does merit a hearing, this does warrant a hearing, and that it will sit and decide on the Chyawanprash wars later, and that will be in the month of January of next year. So that's just around the corner, a couple of weeks from now. But that's, of course, action coming in from the Delhi High Court. Let's, with that, shift our focus to the action going on between the Election Commission and the Congress Party. The Election Commission of India has countered allegations that were raised by the Congress Party over Maharashtra elections. In a 66-page response to the charges, the poll body said that increase in voter turnout between 5 p.m. and 11:45 p.m. is normal. Santhya Gora is joining us now with more details. Santhya, help us with this EC counter claim that's being made. Take us through some of these allegations that were made by the Congress and the response that is now coming from the Election Commission.
Right. So the Election Commission of India has responded to the allegations made by the Congress, citing electoral discrepancies during the Maharashtra elections. The ECI has dismissed all these allegations. Here are some of the key allegations and the ECI's responses to them. The most significant allegation raised by the Congress was the inexplicable increase in the voting percentage from 5 p.m. to 11 p.m. on polling day. The ECI has clarified that there is no discrepancy whatsoever in the voter turnout rate data. It explained that there is a difference between how the voter turnout rate is recorded in Form 17C and the trend uploaded on the voter turnout rate, that is VTR app. According to the ECI, Form 17C is filled at every polling station by the presiding officer and co-signed by the agents of candidates, and this particular form has the exact VTR. In contrast, the VTR app trend is collected by the sector magistrates through various methods, including physical visits to polling stations, phone calls and messages. The ECI stated that data on the VTR app might suffer from errors in data collection. Additionally, it noted that the 5 p.m. data on the VTR app is interim, as voting can continue past 5 p.m. or even 6 p.m. The ECI has also uploaded a detailed note on its website explaining the voter turnout process to educate citizens. Another key allegation made by the Congress was the addition of voters. The Congress claimed that over 50,000 voters were added across 50 assembly constituencies. The ECI has called this allegation misleading and factually incorrect, stating that over 50,000 voters were added in only 6 assembly constituencies. The increase in the overall number of voters was attributed to the registration of individuals who turned 18 after the Lok Sabha elections, measures taken by the election authorities to maximize voter registration, and increased voter enthusiasm to get themselves enrolled. The Congress also alleged arbitrary deletions from the voter list. In response, the ECI stated that over 8 lakh deletions were made, all following proper verification processes. Regarding the allegation of voter list manipulation using fake Aadhaar cards in Tuljapur, the ECI has said that an FIR has been filed and the matter is under investigation.
Right, Santhya, thanks a lot for that input. Now, before we end the show, let's talk about a collaborative initiative between GROW and CNBC-TV18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we will help you understand the 1 to 2% rule, which helps protect your capital.
You know, successful trading isn't just about finding the next big opportunity. It's about managing your risk to protect your capital. One of the best ways to do that is the 1 to 2% rule. Risk no more than 1 to 2% of your total capital on any single trade. So if you have 10,000 rupees in your trading account, you'd only risk 100 to 200 rupees on each trade. This limits your potential losses and gives you room to grow. The idea is to preserve your capital over the long run. Live another day to make another trade. By sticking to a small risk per trade, you'll be able to withstand losses without wiping your account. Trading is all about consistency, not chasing quick wins. By focusing on risk management, you'll ensure that you're in it for the long haul. It's a marathon, not a sprint.
अरे पॉपकॉर्न के ऊपर इतना चर्चा चाहिए क्या? मगर हर आइटम के ऊपर फिटमेंट कमेटी में स्टेट्स भागीदारी लेकर चर्चा करने के समय वो क्लियरली बोलते हैं एडेड शुगर वाले चीज को तो हम ट्रीटमेंट अलग ही देते हैं, चाहे वो ड्रिंक हो, कार्बोनेटेड ड्रिंक हो, जूस हो, जिसमें एडेड शुगर है. इसीलिए पॉपकॉर्न का ट्रीटमेंट में जब तक वो नमकीन है, सॉल्टेड है, मसाला एडेड है, चटपटा मसाला है, चिली पाउडर है, कुछ हो, सब 5%, am I right? 5%. But when it has added caramelized sugar, it is no longer namkeen. इसीलिए उसका रेट अलग है. So वो थोड़ा आपके प्रेस नोट में हम विस्तार से उसका एक्सप्लेनेशन दे रहे हैं. विषय को समझकर प्लीज जितने भी आपके मीडिया के द्वारा स्प्रेड करना है, करिए.
Well, the problem of 2024 for the global steel industry has been that Chinese steel demand has been weak, which has resulted in higher Chinese steel exports. Well, let's explain this to you in further detail. India's steel demand has been rising at 10% over the last 4 years. But in the same period, Chinese steel demand is down by 13%. Now, India is the second largest steel producer and will remain an important growth driver in the world. The issue is China has slowed down, which has resulted in Chinese prices slipping to COVID lows, which in turn has pressurized global steel prices.
the Chinese housing market has remained weak, with prices of newly built commercial and residential buildings slipping all the way since mid-2023. This has impacted steel demand, thereby leading to rising iron ore inventory at Chinese ports, which is currently way higher than the average inventory levels. The pain point is that Chinese monthly exports have been rising because domestic demand out there has faltered. And for the first time since 2016, Chinese steel exports will clock more than 100 million tons. It's also on course to challenge the previous all-time highs. Well, the Indian steel industry, they are up in arms. Mr. Sajjan Jindal has made a solid pitch. He wants some protection for the domestic ferrous industry because Chinese steel makers, they have an unfair advantage and part of their exports are trickling into India. Well, the Steel Ministry has recently proposed to the Finance Ministry to impose 25% safeguard duty on steel imports, as India has now turned a net importer from being a net exporter in the previous year. Well, Nuvama has said the imposition of some safeguard duty along with the onset of a seasonally good quarter could give the steel producers some elbow room to go ahead and increase prices by around 2,000 rupees per ton, as domestic prices are at a bit of a discount in comparison to the landed cost of imports. But they also highlight that factors like anti-dumping investigation in Europe and aggressive exports by China is eating into India's exports, which is more concerning than the elevated imports that we're seeing. We'll have to stay tuned to see the government's action with regard to these rising imports, but things could get better for the domestic steel industry from here on, because Chinese steel prices could have bottomed out. Their exports as well could slow down. Additionally, domestic steel makers, well, they've chalked out their capacity addition plans with focus on value addition and cost efficiencies, which could support volume growth and probable expansion of unit profitability. Well, the steel industry hopes to get its sheen back in 2025.
Team.
Hello and welcome to Commodity Champions. I'm Manisha Gupta. And 2024 was a volatile year for commodities as tensions in West Asia and elections across major economies like the United States, India and European Union shaped the market sentiment. Rate cuts by global central banks and safe haven buying supported gold and silver, while incoming US President Donald Trump's pro-America policies put pressure on other metals. The crude oil prices also saw extreme volatile moves on the back of geopolitical tensions and weak demand coming in from China. Many of these factors are expected to continue to impact the prices of commodities in the new year as well. Joining us then to take this discussion outlook for 2025 are Ajay Kedia, he's director at Kedia Commodities, and Dinesh Somani is founder at Pro IntelliTrade Services. Gentlemen, hi, thank you so much for joining us. Well, I'll start with the metals as a sector. And Mr. Kedia, when you look at the overall sector, we've seen an outperformance come in from zinc, and copper, which is also called the Dr. Copper, didn't actually end up giving us better returns there. How would you look at overall base metals as a space? What are the fundamentals that you will watch out for 2025? And what is a top trade that you would want to give in this sector?
Very good afternoon, Manisha. If we talk about 2024, definitely is going to be a very important year as we are very near to close 24. But I think it's very good for commodity. We have seen almost double-digit return in every commodity. Like bullion, we have seen around 20% gain. No doubt, base metal, despite of hindrance from the economy growth, Chinese economy, how it will be performing from Western sanction. Now we are seeing, despite that, we have seen zinc prices gain almost 20%, aluminium around 19%. Lead was slightly oversupplied. That is why prices was been slightly negative. Definitely, Dr. Copper were expected to test around, let's say 11,000, 11,500, but consumption cycle not picked up what all were expecting in 2024. But I think 25 is going to be a fabulous year, because one side we have a geopolitical tension from Russia, Ukraine, Middle East that can impact the consumption cycle. Secondly, Donald Trump, or we can say Twitter Trump, because still in last 5 days we have seen n number of tweets coming back from Donald Trump. So let's just imagine after 20th January how much this type of alert would be there and impacting the global scenario. But despite it, I think with the rate cuts globally, all central banks have started cutting down the rate. I think we are more bullish on metal like copper, zinc, and aluminium. No doubt, surpluses would be there in second half, particularly for aluminium, as per new latest report, and zinc also. But first half is going to be a very tremendous for metal. My first preference would be zinc, which is consistently holding very well. Still, YTD, we have got a return of 20%. So we expect a level like 270, 72 is good to buy. Higher side, maybe a level we can presume for zinc should be around 340 on higher side, whereas aluminium may retouch the level of 300. And last would be the copper, conservatively, but we can see a level towards 1100 because consumption or clean energy or EV demand is going to be positive with the rate cut we have seen from major central banks.
Mr. Somani, same question to you as well. Where do you see metals performing in 2025? And would you also want to divide the year into two? And the other point really is that even as the international markets have seen gains, but the Indian prices clearly have gained slightly more because of the rupee depreciation. Is that a phenomena that you see continuing in all of 2025?
Yeah, definitely. Good afternoon, Manisha ji. And we saw copper starting the year at 730 levels in MCX and then get up to 965 levels, a gain of almost 30%. Then the dollar index emerged out of 100 points from 100 to 107, 108 levels, almost 8% gain. And the base metal prices collapsed from all-time highs. We saw copper falling from 965 to 765 levels and then just consolidating around the 765, 865 range. I don't expect a much move in copper in the initial first 3 months of the new year. I expect a range of 765 and 865 over the next quarter. But slowly and steadily, I think prices could move up. The base metals that could emerge out of this is zinc. I expect the zinc prices to bottom out around 265 to 70 levels. Upside could be 330 levels. We saw prices coming out from 230 level to 300 in the last year, a gain of almost 30%. And we expect the momentum to continue to this year as well. Of course, the USD INR added premium to the prices, but zinc still thinks to be a strongest out of all the business.
Mr. Kedia, this usually is a trend that as we get into the month of January, by the second or the third week of Jan, we do see a lot of funds and money managers reallocate their funds into various asset classes. Now, because 20th January is going to be such an important date, are we looking at a delayed allocation this time?
Definitely, because the election outcome was totally surprise. No one was so much excited, but Donald Trump victory is going to be a game changer, especially from a geopolitical point of view. We have already seen every day the tweet for Middle East, tweet for Panama Canal, tweet for Canada, tweet for Greenland is continuously with that. So I think people will wait definitely up to 20th January what will be the policy. But one thing is very much clear, he is more concerned about the economic growth, particularly for dollar. And secondly, whatever the step, previously, we were also expecting the trade war would be there, inflation would be on higher side. But see, I think this is just like we can say one of the tool used by Donald Trump. Either get ready for war, otherwise increase our duties, or there would be a decrease in any cost. So I think the tool that Donald Trump is using is fabulous, and maybe that could be a bigger trigger for dollar index. And as of now, dollar index is trading very well about 200-day moving average. And as we know, when dollar is been on higher side, commodity generally trying to perform slightly on lower side. But I think one should wait up to Donald Trump to be in office, and then allocation would be there. Carry trades might be up till now till 24th. We have not heard about a major big carry trades as of now. So I think big fund houses are still waiting what will be the decision, what will be the approach by Donald Trump. So I think one should wait to see how the carry trades will perform in first month of 2025.
All right. Mr. Somani, this one is to you. Well, of course, we will be watching out for what the Trump does in sense of trade and tariffs. And the other thing is going to be about China. What, apart from these, would you want to watch out for in 2025? Is it still going to be about what the banks do in sense of interest rates, or the geopolitics on the other side, the currency on the... what are you going to watch?
Of course, the geopolitical tensions are going to be there this year. It was, I mean, there was all around the geopolitical tensions were rising, whether it was Ukraine or the Russian or the Gaza and everything, there was a misconception. Still, crude prices were hovering around the same level because of the demand concern. But the other thing which I would like to look at the currency levels, which was trading around in the Indian market, the USD INR was trading around 84.20, 84.30 levels, which moved up almost by 1% to 85.20 levels. And we expect the rupee to depreciate further to 86, 86.50 levels. So that would be the thing to be watched out, because major currencies, they have depreciated against the dollar, and similar thing is to be expected in Indian rupees as well.
Fair point that. Let's talk about energy markets now. And Mr. Kedia, we've seen crude oil prices head for a negative year, but the best performance clearly came in from natural gas. And the kind of trade that we saw on sell in crude and buy gas, do you see that playing out yet again in the next year, or do you see some deficits build up when it comes to crude?
Yeah, I think energy market already we have seen the performance was not so much aggressive. What we have seen other commodities like crude prices since January, we have seen unchanged, almost 6,000 on MCX. Brent is lingering near to 72, 73 only. Whereas natural gas has totally surprised in the line of expectation. Still, I think steam has been there with natural gas as an alternate fuel. Right now, it's around 315, which is around closer to 50% mark for natural gas. So I think 2025 is going to be an important year, because one side we are talking about the economic growth, economy recovery, with central bank taking utmost all steps to support the economy. But on the other side, China in 2024 has taken all steps. Everything was been on the table, but despite that, demand has not at all improved. On the other side, supply would be more important, because US has continuously trying to push their export in a global market, and that is why in 16-17 also we have seen Donald Trump has put the sanction on Iran so that he can make his space in the energy market. And this time also we expect US is going to create his space. So one side demand concern would be there, other side supply concern, oversupply concern would be there, which means prices is going to be on a volatile side, whereby we expect 63, 64 is going to be a very good support for Brent. Whereas on the higher side, definitely geopolitical triggers would be important. Let it be upcoming China, Taiwan, or maybe Middle East will continue to be there. Russia, Ukraine. Donald Trump has already consulted that we would stop this war. But I think with the ongoing trades, higher side could be around 80, 82 as of now. Coming on the natural gas as an alternate fuel, we have already seen a very good rally. But as compared to storage capacity in Europe, we are still 4% higher YOY if we compare. So I think important would be the Russia and European contract, because that is going to be end by 31st of December. If it is not renewed, then definitely there will be a still shortage of natural gas in European nation, and definitely that can trigger the prices to the level of 6.5 in international and domestic side. Maybe level like 500 plus could be possible. So it will be much important in next 7 to 10 days, whether it will be a shutdown case or it will be a renewal case. That will decide the natural gas future. But overall, I think crude is going to be slightly sideways to negative, we can say, but natural gas on a, as per the ratio, we expect is going to outperform crude oil prices.
All right, something that will continue in 2025 as well. Mr. Somani, this one is to you, and I want to talk about silver, because we did see all-time highs in the Indian markets, but a 12-year high in the international markets. Now, the Wall Street banks and brokerages are betting much higher levels of 38 to 40 for 2025. What is your sense?
Definitely, Manisha ji, we saw the year starting at 72,500. It tested the magical figure of 1 lakh rupee and then collapsed almost a gain of 38% in the year. Then it collapsed almost by 13.5% and tested 86,000 levels. Prices are consolidating between the 85,000 90 levels. But I think overall it could test around 83, 84,000 and then renewed buying would emerge out. Prices may cross 1 lakh level again, might test 1,08,000. In the international market, I expect 29.50 should be the downside. Upside again 34 and 38 levels should be tested. Overall, the picture looks good, and silver could be a better performer because the spread between gold and silver, it was earlier 24,000. Now it has drastically reduced to 13,000. We expect the spread to again move to 24,000 level from here onward. That indicates silver would perform much better compared to gold.
All right, there you have strategies all ready for 2025. Zinc is a definite topper here. And then there are buying recommendations also coming in for aluminum. You also have silver and, of course, natural gas prices at top gainers here. Thank you so much, Mr. Kedia, Mr. Somani, for joining in and preparing that portfolio for 2025. Well, with that, it's time for a break, but don't go anywhere. We will be discussing the outlook on gold on the other side.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai.
Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the
Welcome back. You're watching Commodity Champions, and let's shift focus now to gold. The precious metal is headed for its best year since 2010. It hit a fresh record highs of $2,790 per ounce earlier this year. And to discuss the outlook of gold, I'm joined by Amit Goel. He's co-founder and chief global strategist at Pace 360. Amit, hi, thank you for joining us. And yes, all-time highs and then correction as per our latest conversation. But from now for 2025, what is it that you're watching and where do you see gold prices going to?
Hi, Manisha. Merry Christmas to you and all the viewers of CNBC TV18.
To you too.
Thank you. So for gold, Manisha, there are quite a few factors that I would want to talk about. So there is this dollar index, which is, of course, one of the most important factors which determines what's going to happen to gold. And we know that dollar index has been skyrocketing ever since Trump's odds of winning the election started going up in October. And from levels of about 100 in September, we are now at 108.2. So dollar index has come up a lot, and gold has more or less weathered this storm pretty well, I would say. Then there are US bond yields, which have also been on a tear for the last 3 months. And whether it is US 2-year bond yields or 10 years, 30 years, all of them have come up a lot. And many of them are now close to 1-year, 2-year highs. So this is the second factor. Third factor is USD JPY. We all know that JPY and gold are basically two currencies, so to say, both of which give 0 to negative yield, while currencies like dollar, like euro and Canadian dollars, all of them give a positive yield. But gold and JPY do not give any yield, at least so far. Maybe the Japanese central bank raises the rates a little more in the next few months. But as of now, yen and gold are correlated. And yen actually has done pretty badly this year. And it is now close to its 3-decade low. So this is also a relevant factor. So if you combine all these macros and plus the fact that the US economic data has been extremely strong from October till about December first half, but has just begun to worsen a little in the last week to 2 weeks. So what I'm trying to say is that the macro picture for gold was pretty much at its worst in the last few months, when dollar index was going up, US bond yields was going up, yen was going down, and US economic data was extremely strong. So gold has pretty much weathered that. The macro outlook going forward is somewhat better. We believe that dollar index is actually going to go down from here in the first quarter. We believe that US bond yields are close to their top. We believe that yen is close to its bottom. And the US economic data has already started worsening in the last week to 10 days. So this is a great macro backdrop for gold. Now coming to the prices. See, if you look at gold, between October and November, you saw a very sharp correction when it went down from 2790, which was its all-time high in October, and it went down to 2535 levels in November second week. So my sense is that the level correction is more or less over on gold, with that down move of more than $250, and that just happened in a time frame of 2 to 3 weeks. So level correction is more or less over. The macro backdrop is actually improving, but I still believe that the time correction still has to happen in gold. And you very well pointed out that 2024 is one of the best ever years on gold in last many, many years. And plus, between October of 23 to October of 24, gold went up by more than 50%. So there are a lot of excesses in gold which have been committed over the last 4 to 5 months. I think those excesses, some of them have been washed off, but more of them have to be washed off in the next few months. So my sense is that the level correction is over. Time correction will probably play out over the next 2 to 3 months. Global macros in 2025 are looking to be much better than what they were in the last few months. So this time correction is also over in the next 2 to 3 months. I think the decks are all clear for gold to rally substantially in the second half of 2025.
Amit, when you say substantial, what are you saying? Because I'm still looking at 3,000 and 3,200 on the higher side coming in from various banks.
So my sense is that it will be difficult for gold to break 3,200, which is the higher end of the target put up by most of these Wall Street banks. I think that is probably, it will be tough for gold to cross that level in calendar year 2025. But more importantly, I believe that investors should start buying gold on every dip now. And I would want to point out one more factor, which is the central banks. You know that the central bank buying, particularly the Chinese central bank, has waned. It has faded in the last few months because of the high levels on gold. But in the last month, in November, Chinese central bank added a bit of gold because gold went down all the way to 2,535.
Oh, yes.
My sense is that below $2,600 an ounce, central banks will become more enthusiastic buyers, and they will buy. Their buying intensity will go up as gold corrects further from $2,600. So my sense that 2,450 to 2,500 is a very, very solid support for gold. I don't see that support breaking down.
Okay.
So you need to buy gold on the way down from 2,600 to maybe 2,500. You need to hold it because the next 3 years, I'm very positive that we will not only break 3,200, we'll actually even break $4,000 over the next 3 years. But right now, I think we have a bit of consolidation which is ahead of us.
All right, those are big numbers coming in from you, Amit. But as always, more often than not, you have turned out to be very, very true, very, very correct and accurate when it comes to these ones. So we'll follow out for 2,450 on the lower side and 3,200 on the higher side. But the next 3-year bullish run clearly will have a lot of investors coming into this space. Thank you as always for joining in and making sense of what really is happening into gold as a market. But with that, let's tell you that Tata-owned jewelry brand Zoya now has its footprint in Eastern India. It opened its first store in East India at Kolkata's upscale Shakespeare Sarani. Tata Jewelry CEO Ajoy Chawla and author and jewelry designer Twinkle Khanna unveiled the boutique store. Let's listen in.
Zoya has been playing the role of creating very meaningful jewelry, meaningful luxury, and almost I would say it's wearable art. Customer is seeking a certain depth of design and certain meaning in their jewelry. And Zoya is perfectly positioned to actually create that impact for that customer segment. Trying to expand its footprint to wherever this HNI segment is present in threshold levels. Today we are present in the top 8 towns. I think in the next 4 or 5 years, we could see these expand to at least 12 to 14 towns. Gold prices are always on the up. I think the last 5 or 6 years have seen a secular trend. You know, it's been a CAGR of something like 18-20% consistently. And I think with uncertainty in the world going up, with so much geopolitical tensions, with so many changes in the political arena that are taking place across the world, I think gold becomes a safe haven.
What's really interesting is they have even patented cuts, like this is called the bloom cut. And I think the other thing that I really like about what Zoya does is this juxtaposition of modern and traditional. And the jewelry is immensely wearable. You can repeat it and you can wear it, you know, for different occasions. And I think that is quite remarkable.
All right, as we end this segment, and you know, it really is about gold, the kind of returns it has given, and of course more and more companies now expanding, opening more stores, and more buying and investments happening in case of gold. But with that, that's all the time that we have on this edition of Commodity Champions. Thank you for watching.
Architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
2024 saw a lot of action in the mutual fund space, and funds raised via NFOs has definitely been one of them. Let's look at the numbers. Funds raised by NFOs or new fund offers stood at 1.04 lakh crores in 2024. This is still the month of November, and we have more NFOs in the month of December that has not been accounted for here. That is an uptick of 63% versus funds raised in 2023 at around 63,800 crore rupees. Now, this was slightly lower than 2022. That time, the number was 67,336 crore rupees. But 2021 also saw massive inflows. This was double the amount versus 2020, when the amount raised was around 53,700 crore rupees. Now, if we talk about the number of NFOs, 2022 still tops the list. So far in 2024, we've seen 205 NFOs which have been issued till November. This compares with 212 in 2023, 246 in 2022, 140 in 21, and around 81 in 2020. Some of the categories that saw high flows: multi-cap funds getting in 6,300 crore rupees of money, and other ETFs at around 1,400 crore rupees. But the real star of this year had to be sectoral funds. 40 sectoral or thematic funds have seen the highest flows that we have seen in the last 5 years. Sectoral funds garnered around 67,772 crore rupees in 2024 so far, which is more than the flows in this space from 2020 to 2023. In this period, sectoral funds garnered around 52,165 crore rupees. This is via 59 NFOs. Even index funds actually saw a lot of interest. 76 NFOs in the index fund space, raising 12,147 crore rupees, which is the highest that we have seen in at least 5 years. Index funds have always seen a lot of interest, and more so in the last 3 years, with more focus on passive investing. In 2023, 53 index funds were launched, garnering around 2,700 crore rupees. This compares with 85 in 2022, and these numbers were very low in 2021 and 2020, as you can see on your screen. Interestingly, no mid-cap funds were launched in 2023 and 2024. This space did see a big rally, but did not see a new product here, but saw massive flows in the existing names. Also, only one small-cap fund was launched in 2024. And now we are towards the end of 2024, and December also has seen a lot of action in the NFO team.
Hello and welcome to News Center. I'm Parikshit Luthra. The countdown to the February 1st Union Budget has well and truly begun. With less than 6 weeks left for the Finance Minister to table the budget papers on the floor of the Lok Sabha. The government has begun consultation with stakeholders. Prime Minister Modi met top economists today. Remember, the meeting also comes on the back of India's growth dipping to a 7-quarter low. Finance Minister Nirmala Sitharaman, top North Block officials were present at the meeting. We learned from sources discussions focused on India's economic blueprint, boosting job opportunities, ensuring bigger play for India in global value chains, among others. Joining us right now are Madhavi Arora, lead economist at MK Global Financial Services, and also Rajni Sinha, chief economist at Care Edge Ratings. Rajni Sinha, let me begin by asking you about the budget. Now, the budget is being presented in the backdrop of slowdown. 5.4% GDP growth in the second quarter. Now, this is a 7-quarter low. You've got retail inflation at 6.2%, CPI at 4.8%. Now, considering these immediate challenges in mind, what kind of a budget does India need to have a sustained growth path? Because this is something that everyone has been talking about, and the Indian government, the Prime Minister, is also working on a Viksit Bharat blueprint. Rajni Sinha, can you hear me?
Yes, yes. So, yeah, talking about the budget, I would say that one near-term fix that I can think of is that the government needs to focus on consumption boost. Because if we see in the last few years, the government's focus was on capex, and that has helped India record high growth. But if you're looking at now sustaining growth, I think some form of consumption stimulus is also required. So in that sense, I feel in the upcoming union budget, if the FM looks at, some kind of cut in personal income tax by, say, around 5%, the total income tax liability across all tax slabs, that should help boost consumption sentiments, consumer sentiments and consumption spending. But over a longer period of time, if I talk about our aspiration of being a developed country, for that, I think there are some other aspects that we need to focus on. And one, I think, very critical aspect in that is increasing the rural income. Given that more than 60% of India's population lives in rural area, if, the government policies or measures are able to increase the rural income, that can really be the game changer. And this is where I feel the focus should be on improving agriculture productivity. There's a lot that's happening on technology front. There should be, incentives given for adoption of technology in agriculture sector also, So in that sense, the fund, something like Agri Accelerator Fund that we have, there should be further support given to that. There should be support given to schemes that encourage farmer-producer organization. So I think these kind of measures are required to further give a boost to rural income. Apart from that, I would like to add even, announcing measures to boost agri-allied sectors like agri-processing, livestock, horticulture. These things will not only help absorb some of the workers from agriculture to these agri-allied sectors, but will also help improve labor productivity and rural income.
Right. Let me also get in Madhavi. Yeah. Please, Ms. Sinha, please stay with us. Thank you for giving us those opening remarks. We'll return to you in a few seconds from now. Let me get in Madhavi Arora as well. Madhavi Arora, what are the immediate challenges you see from the Q2 GDP numbers? Do you feel this is a temporary blip on the phenomenon, or there are some key and serious issues in the economy which need addressing, even though we are talking about a long-term blueprint, a long-term high-growth trajectory for the economy?
Hi, Parikshit. Well, I think for the Indian economy at this point in time, and something which has probably been the case last 1 year specifically, has been, absence of the private economic agents, and that's not coming back any sooner. Probably the next 6 to 9 months or even longer, you'll probably see a very lagged response by private economic agents, be it consumption or investment. And, the policymakers have been very categorical in terms of their spend. They've been very focused on a capital expenditure spend versus revenue expenditure, at least at the center's end, if not at the state's end. But at this point in time, if you look back and see the response the private sector has been very, very tepid as far as the private capex is concerned, which sort of makes us believe that the private capex will only probably take off only when you're seeing private consumption really take off. And sitting today, what we're seeing is that even though rural is seeing some cyclical uptick in consumption, it's still pretty early signs, and rural income still hasn't really reached the pre-demon level, forget the pre-COVID level. It has actually been decimated since demonetization. But the urban segment, which had seen an uptick in income in the upper middle strata post 2021, has been secularly coming off on account of moderation in sectors like IT and BFSI wages in general, which has really hit that the middle income and the upper middle class income bracket. To that extent, I think urban income and urban consumption also is looking to be a concern, and which generally it has sort of come off with a lag, but I don't think that it'll immediately sort of see a V-shaped recovery either, which means that the private consumption could remain a little bit of a laggard in terms of an uptake. It'll be probably tepid, it'll be very sluggish, which also will rub off private consumption, even though there has been a consistent policy effort on account of the center to increase their own capital expenditure to crowd in private capital expenditure, which has not really happened. At the same time, you're also seeing states who have been little, hesitant with regard to their own capital expenditure. So overall, policymakers' combined capital expenditure hasn't really seen a big uptick, to be very honest. But center clearly has been focused on urban infra in sectors like defense, road, railways, etc., and wherein the policy focus has clearly been more towards improving the productivity multiplier via these sectors, but it has not really taken place as far as the private sector involvement is concerned.
Right. Now, to specifically ask you about what could probably trigger more private capex. Now, almost every few months, there are meetings held within different ministries in the government on what can be done to increase the flow of private capex. It is something that the government is cognizant of. Now, having said that, what do you believe, Madhavi Arora, can be done in the union budget to unleash that ability to spend? One, if the industry does not see enough consumption potential, they will not put up additional capacity. Correct. If they don't see export opportunities, they will not invest. So what, according to you, could be the game changer initiative in the budget?
I think it's a very tricky call because policymakers have been doing what they can. I think policy uncertainty is one thing that really bothers private sector guys in terms of, putting in their, expanding their businesses or expanding their capital expenditure. What essentially is happening on the global front with regard to, what could really take place in terms of tariffs, in terms of the external demand. I think that also will weigh on their thought process. So I think to some extent, central policymakers would have very limited role to play in the immediate run. All they can do is probably, give some impetus to urban consumption. But again, you don't want a policy budget which is very biased towards consumption, because that's not has been the policy prerogative of this government, at least on papers. I think they would still like to focus on the capital expenditure from their end. To that extent, I think the only way they can really improve the consumption side is to probably incentivize businesses or employment in some sense, to increase the income capacity of the urban sector and the rural sector as well, rather than giving any free doles to urban or rural segment by increasing REVEX via non-merit subsidies. I think that is something that I would not recommend this government to do, which is what we're seeing at the state level. So I don't think that the government would, at the center at least, would be taking that route either. But it'll be a very difficult policy choice for them, because while we may see relatively softer interest rate in the at the margin, I think higher inflation, low certainty with regard to the growth trajectory in general, and global dynamics, which are looking very patchy in terms of their own decision making, would also play a very important part, apart from what just an event effect of budget per se.
Right. Rajesh Sinha, when we speak about a Viksit Bharat, and we hear that this was the big priority at this meeting as well, but when we speak about having a developed country by 2047, economists are unanimous on the view that you need a 8 to 9% growth, year after year, consistently, to achieve the status of a developed country by 2047. Now, keeping that challenge in mind, how do we ensure that the relevant sectors of the economy fire all cylinders?
So, absolutely correct. If we want to sustain high growth over a longer period of time, we have to see to it that, some of our sectors continue to do very well. So here, I think what can really help is if the government identifies few sectors that have high export potential and are labor intensive, say pharmaceutical sector, electronics, auto ancillary, textile, leather. So identify some of these champion sectors and create whole ecosystem to attract investment in these sectors. And this could be in the form of growing the already existing clusters, industrial clusters, or, coming up with new clusters which has the entire, high quality infrastructure, backward and forward linkages to ensure that we are able to attract investment in these sectors. And at the same time, the government has to see that the supply chain movement is eased, in the sense that if there is need to reduce import tariff to make some of these exports more competitive, then that those items should be identified. When I say the whole ecosystem should be created, including having skilling institutes, incentivize corporates to build up skilling institutes in these industrial corridors, so that the skilling is customized as per the requirement of these, specialized industrial corridors, and the workers there can be directly absorbed. So I think this is one model. It was, in the last budget, FM spoke about, building some new industrial clusters. So I think the focus on this should grow. This is a model which many of the East Asian countries have adopted, and it has worked there. So I think the government should focus on this model going forward.
Right. Now, when it comes to job creation, there were 3 schemes which were announced in the budget in July. What further impetus do you need? Because looking at the political situation in the country, the situation of farmers, the situation of jobs, the lack of skilled jobs, that is always a major political point in election after election. Now, how do we ensure that both the public and the private sector can create more jobs? The CA in the past, in reports, has urged the private sector to come out and take responsibility of employing more people in the country. But how do we do that?
So, and actually to add to what you said with automation and digitalization that has come into the picture, that makes it that much difficult for the private sector to absorb more people. Here, I think we have to go to the root, and again, I would say look at agri sector, because that is the main employment. Large part of the workforce is employed there. So what can we do to improve the productivity there? Second, what can we do to move the workers from agri sector to other sectors? Specifically, the easy movement would be to agri-allied sector. So giving a push to these sectors will help. Secondly, support to MSME segment, because the other big chunk of employment generation happens in this segment. So if the government is supporting MSME segment, which there is a lot happening on that front, but that will also help in employment generation in this segment. And then the other critical piece in this is skilling institutes, because what is happening is that even if there are jobs created, if there is demand for jobs, we do not have people adequately skilled to be absorbed. So in that sense, the entire focus has to be on skilling and vocational education, because right now what's happening in our country is we have a lot of workforce, young people coming out from colleges with the graduate degree, which is actually of no use, because we still in our country have this kind of stigma around vocational education and skilling, which needs to go. We need to have skilling at a very, really up that game to ensure that people are adequately skilled to be absorbed in even, when there is demand for jobs, there are people adequately skilled for those jobs. So I think these are a few of the areas that we need to focus on.
Right. Need to really up our game on skilling to ensure adequately skilled people are ready for a future-ready workforce. Rashi Sinha, Madhvi Arora, thank you very much for joining us on the program to discuss the key meeting that took place in Niti Aayog today, your recommendations for the budget and also for a Viksit Bharat or developed nation by 2047. We're taking a short break here on CNBC-TV18, but don't go anywhere. More than 4 months after former Bangladesh Prime Minister Sheikh Hasina fled to India, the country's new interim government is calling for her extradition. On the other side, we take a deep dive into the diplomatic process with Deepak Vohra, former Indian ambassador to Poland, and also several other countries in Africa and the West. We'll be right back with that discussion.
Will this continue in 2025? Will there be new products by mutual funds houses to diversify their portfolio? Well, time will tell.
Gonna be president, that I can tell you. And I'm safe, you know why? He can't be. He wasn't born in this country. Now, he's a great guy, and we want to have him. Everybody, so many people are in this audience that have helped.
ईवी व्हीकल्स उसके ऊपर भी सुबह से चल रही है जब प्रेस कॉन्फ्रेंस फाइनल नहीं हो। ईवी व्हीकल्स के ऊपर ये एब्सोल्युटली क्लियरली मेंशन करना चाहिए कि नया व्हीकल्स ईवी खरीदने में 5% है। Am I right? 5%। पुराने ईवी व्हीकल्स खरीदने का विषय ही आया है। We want to promote EV. GST Council is in favor of EV. Nobody is stopping people from buying EV. मगर used EV खरीदने के समय एक व्यक्ति दूसरे व्यक्ति
Welcome back. You're watching News Center. More than 4 months after former Bangladesh Prime Minister Sheikh Hasina fled to India, the country's new interim government is calling for her extradition. Massive protests in Bangladesh forced Sheikh Hasina to flee the country, ending her 16-year rule. Dhaka has formally sent a diplomatic note to New Delhi asking for Hasina's extradition for face the judicial process in the country. Hasina is currently living in India at an undisclosed location. The International Crimes Tribunal in Dhaka has issued arrest warrants for Hasina and several of her former ministers, advisors, military and civil officials for crimes against humanity and genocide. The relationship between India and Bangladesh has been strained since Hasina's ouster. This brings us to the contours of the extradition treaty between the two nations. While Bangladesh need not provide any evidence of offence committed to seek Hasina's extradition, there are some grounds under which India can refuse to extradite her. This includes accusations not made in good faith, military offences, among others, and also if the allegations are politically motivated. There is a political exception to the extradition treaty. So how will India respond now to this extradition request? So far, we have not made any official comment beyond saying that, yes, we have received the note verbal. We are now joined by Ambassador Deepak Vora, former Indian ambassador to Poland and Sudan as well. Ambassador Vora, thank you very much for joining us. This does put India in a tricky situation. We do have an extradition treaty, but are we going to honor it, or how are we going to interpret it is the question.
Thank you very much, Mr. Lustra. Always a pleasure to be on your amazing channel. And the way you put it across is brilliant. I can't do better than what you have said. Let me just give you a little bit of a background. The extradition process, normally we deal with criminals. We deal with people who have committed murder, or they're involved in money laundering, they're involved in financial crimes, they're involved in terrorism. This is what our focus has been in the past. Now, during my assignments in Africa, there used to be this character called Blaise Compaoré. He was the president of Burkina Faso, and then there was a revolution, and he ran off and got asylum in Senegal. And nobody has been able to bring him back, as demands were made. Very rarely have former heads of government, as far as I know, been brought back to the country which they once ruled, because they were told that, you know, they left the country, just as Bashar al-Assad has run away from Syria. I don't know if the Syrians have made a demand for his extradition, but it will be denied. As far as we are concerned, there's a 2013 extradition treaty between India and Bangladesh. You quite rightly pointed out. We revised it, I think, 4 or 5 years later. That means in 2017-18, in order to expedite the extradition of wanted criminals. Is she a criminal? That's the first question that has to be addressed. Now, by somebody saying that, yeah, she is guilty of killing people on the streets and ordering the military to go shoot them, etc., there has to be very hard evidence. Of course, what she is being accused of doing is it responds to the concept of dual criminality. I mean, if you go around shooting people in the streets, well, that's a terrible thing to do. So if some of her people have done it and they are in India, that can be looked at separately. But she herself, I'm not aware she took a Sten gun and went down and started clobbering people on the streets. So to my understanding, sir, this is essentially a political issue. The prime minister of a country, it so happens that she was friendly to us, even if she was not, and she sought refuge in India, we would consider it on a case-by-case basis. There's no hard and fast rule. She has sought refuge here. The successor government, which is not an elected government, we must remember that, sir. It's some fellow who proclaims that he's the chief advisor to the government. And it's a government, it's a deadly cocktail of senility, like this 87-year-old chap or 85-year-old fellow who runs it, and a bunch of students who are in their early 20s. So this kind of senility and inexperience, a very deadly cocktail. So how do we take it from there? We do not have an elected government. We do not have a duly appointed government. do we consider a request by whoever is being appointed as the chief advisor on the, we know who was responsible for it. Now, these are issues that will have to be considered. It's not going to take a very short period of time. It will take quite some time. May I also remind you, sir, that I think in 4 or 5 years ago, my middle-age memory or my old-age memory doesn't serve me very well. We had extradited 2 chaps that Sheikh Hasina wanted who were involved in the killing of her father. And that was the assassination, as you know, took place in 1975. And those chaps had assumed identities and were living somewhere in West Bengal. I think they were military chaps. So we sent them back, and later I heard that they were executed. Similarly, there was an Ulfa character called Anup Chetia, and Sheikh Hasina sent him back to us. The earlier government had put him in jail. He was in jail for 15 years in Dhaka, but they wouldn't send him back. So ultimately, it depends also on the relationship between the two governments. Is there goodwill or is there not? If there is goodwill, then there's mutual respect. There's mutual sensitivity to each other's concerns. So you know that there are a couple of these terrible fellows hanging around in England who are going through the entire process of law, which will take 5,000 years. By then, they would have moved to a better world. Then there is that Rana character who was involved in 2611 in India.
Ambassador
He's hanging around somewhere in the United States.
What we would also like to understand from you, if India does not honor this treaty or say or tell Bangladesh that, sorry, these are political allegations and there is a political exception and we exercise our discretion in the matter. If we do that, does Bangladesh have recourse to any international convention or platform where it can go and challenge the decision taken by the Indian government?
No, you can go to the International Criminal Court if you want, but their decisions will not be binding on us. And in any case, we are not signatories to the Rome Statute that established the court. So we have to take a decision in our own self. And what I was trying to tell you, sir, at some detail, I'm sorry, I went a bit overboard, was that ultimately the decision is ours. You know, anybody can ask for anything, but we will decide whether it is in our interest that this lady, who has not been accused of directly murdering people, is she a criminal like anybody else on the street? Is she a money launderer? Has she cheated anybody? These are the issues that need to be looked at very carefully. Simply because the Bangladesh government said, oh, she's a terrible person, give her back to us, we won't, sir. So this has to be done. I, in the course of my career, 51 years in diplomacy and counting, have had the opportunity to interact with foreign government. We brought back a chap from Senegal also. I remember his name even some years ago, a chap called Pujari, funny fellow Pujari, but had dozens of cases registered against him. So we brought him back. The host government where the fellow is hiding has to have the kind of relationship with India to say, yes, you have given us enough evidence, we are sending the guy back. In the case of Sheikh Hasina, we do not have the evidence yet. Of course, they don't have to give it to us. They've made the request. Now the next stage will be for us to consider whether it's political persecution or is she being persecuted for crimes that are crimes in both Bangladesh and in India.
All right. Thank you very much for putting it so well, Ambassador Vora, explaining us the nuances of the extradition treaty and how the relationship between the two countries also matter in deciding anything. And possibly in this case, India is going to see these allegations as politically motivated. We've completely run out of time, but thank you for being with us. Now, before we end the show, let's talk a bit about a collaborative initiative by Grow and CNBC-TV18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we will help you understand the 1 to 2% rule, which helps protect your capital.
You know, successful trading isn't just about finding the next big opportunity. It's about managing your risk to protect your capital. One of the best ways to do that is the 1 to 2% rule. Risk no more than 1 to 2% of your total capital on any single trade. So if you have 10,000 rupees in your trading account, you'd only risk 100 to 200 rupees on each trade. This limits your potential losses and gives you room to grow. The idea is to preserve your capital over the long run. Live another day to make another trade. By sticking to a small risk per trade, you'll be able to withstand losses without wiping your account. Trading is all about consistency, not chasing quick wins. By focusing on risk management, you'll ensure that you're in it for the long haul. It's a marathon, not a sprint.
करेगा तो कोई नहीं है उसमें. The same thing as 5%. No GST. Sorry. Used EV. An individual selling to another individual, no GST. But if a company has bought EV, or if there is a regular registered used car seller who buys EV, does some propping up in it, adds value to it and then sells it. It was felt by states and it was felt by auto and many others also that the EV market is not so saturated as yet that used cars will come. And category mein, therefore used cars category mein EV bhi hai, petrol vehicle bhi hai, diesel vehicle bhi hai. And I like to highlight this point to you. हमारी तरफ से केंद्र सरकार, गवर्नमेंट ऑफ इंडिया विच इज 1/3 मेंबर ऑफ द GST, हमारी तरफ से एजेंडा में सेल ऑफ ओल्ड एंड यूज्ड EV व्हीकल्स को 12 से 5 तक ले आने के लिए we had suggested. But when the discussions happened, it is on that margin, the margin value between purchased price and resale price. 12 लाख में खरीदा, 9 लाख में बेच रहे हैं सेकेंड हैंड यूज्ड व्हीकल के नाम पर. On the margin is only this 80.
Let's talk money.
Hello and welcome to 2024's last edition of Let's Talk Money. Hope this year has been kind to you in terms of health and prosperity. Now, as we get set for 2025 and think about our financial goals, the first step to your financial wellness, even before you can start thinking about investments, actually starts with health insurance. That's where it all really begins. With medical costs spiraling, we all need to ensure that we have adequate coverage. So what have been the defining trends of 2024 when it comes to health covers and health policies? And can we hope to get even better coverage at reasonable costs in 2025? Well, joining me to answer those questions are Amit Chhabra of Policy Bazaar, as well as Mahavir Chopra of Beshak.org. Gentlemen, thank you so much for joining in. First of all, season's greetings to both of you. I thought, by the end of the year, we are all in very reflective mode. We're thinking about life and our priorities. And we all, I think, agree that health has to be that #1 priority for you, your family, and your loved ones. So therefore, let's start by recapping what some of the highlights have been, because the health insurance industry has been going through a fair amount of change as well. There's a lot that's going on. So first of all, welcome to the show, both of you. And if I could perhaps start with you, Amit. I mean, when you look back at the last 12 months, what comes to mind in your interaction with the health insurance companies?
I think, the one theme which can define what has happened in the last 12 months is increasing penetration of health insurance. That's been largely the theme when it comes to, whatever regulations have come in. In fact, I'll just take a step back and, look at what the regulator wants to do. So the regulator has clearly called out in every discussion that has happened in the last 1 year that the main goal is that they want to increase the penetration of insurance in the country. The vision of 2047 insurance for all is something which is, while it's been talked about a lot, the good news is it's not just good talk, it's actually become reality as well. So some of the initiatives that have happened in the last 1 year, one from the regulator side, and then the follow-up that has happened from the insurance company side as well, is clearly showing that everybody in the ecosystem wants the penetration of health insurance to increase. And if I have to just discuss some of the key initiatives that have gone in that direction. So I think the one big initiative was making health insurance available to senior citizens, right? Unfortunately, let's say 10, 20, 30 years back, nobody was buying health insurance as much. So a lot of the senior citizens are either not insured at all or they're underinsured.
Anyone up to age 99 years can seek health insurance. There's no age cap or age limit at 65 years. Mahavir, comment on this. Now, in letter, it sounds very good that you have things like this, and the other bit about how anybody who has continuous health coverage across multiple insurers for 5 years, right? that person should not be denied a health claim or a health cover. So just remind us what all has happened in letter, and the bigger question is it being followed in spirit? Mahavir.
Right. So I think the 99 years clause that we're talking about, where we've said that now insurance companies are supposed to offer plans to everyone, and it has to be widest possible cover that should be available. It's something that I have not seen a major change in. We're seeing the same plans that are offered, what were being offered previously, and earlier also there were plans which were available, which were of the age groups that were available, right? And there hasn't been any major change there. The 5 years moratorium definitely is a positive change, because it was earlier 7-8 years. For a customer, I think if the customer is very well aware and is taking care of doing the right steps, like filling the proposal form correctly, making the right declarations, now they can very, very confidently, be rest assured that after 5 years, they won't have a major problem, because of the awareness that they know that these kind of rejections cannot happen. And second, because they did the right thing of filling the proposal form correctly.
Okay, fair point. So fill the form correctly, make sure you've done all the disclosures right at the start, and chances are that you are more likely to get your claim honored. Amit, just before we move on, just recap for us all the key regulatory changes that we as customers, as policyholders, should be aware of. So if the need arises, we can really directly engage with the insurer and ask for what is our due. So just quick recap of all the major regulatory changes.
Sure. So I think apart from this age increase, I'll just probably differ in my view a bit to what Mahavir said. There are now a lot more plans than there were, let's say, a year back or 2 years back for people who are 90, 95 years age as well. One can actually get a 1 crore sum insured at 99 years as well. So I think that's one big change. Apart from that, what the regulator has also clearly called out is that every insurance company must strive and endeavor to provide a health insurance plan to every kind of customer. So let's say if there is a customer who's had a heart surgery in the past, somebody has been a cancer survivor in the past, historically insurers would have typically shied away from these consumers. Whereas now the regulation says that one must try to provide plans as much as possible. Now, it may not happen in 100% of the cases, but the acceptance has definitely increased when it comes to consumers with pre-existing diseases. Another important regulatory change I feel that has happened is that now consumers can buy longer term policies as well. So again, historically, the maximum term that was allowed was 3 years. Whereas now it can go up to 5 years as well. So now there are already a couple of companies which are offering plans up to 5 years of term as well. Why is it important is because it means that you can safeguard yourself from price increases. So typically we see that every year or every few years insurance companies increase prices. Now you can buy a longer term policy and safeguard yourself from any premium increase that may happen in the future. So it's sort of a safeguard option that's available for consumers. Another very important thing also is now there is a maximum cap on the pre-existing disease waiting period. Earlier, this was 4 years in a lot of plans that were sold in the market. Now it cannot go beyond 3 years. So what that means is if you have diabetes or hypertension or thyroid, which is very, very common in our country, the maximum waiting period that a consumer will have to serve is 3 years. The good news is you can start coverage as soon as day one itself by buying riders or add-ons to a health insurance policy, but the maximum that you'll have to serve is 3 years. So I think these are some of the key regulatory changes that have come up in the last 1 year or so. And all of them are largely in the direction of giving more options to consumers and easier access to health insurance.
Okay, all right, folks, so got it. That's really important to understand the new regulations, the new rules of the game that we as policy buyers must be aware of. Now let's come to the other important aspect, which is rising cost. And I think there is no argument against it. It's a fact, it's a reality that the cost of health insurance is rising steadily. I see that every time my policy comes up for renewal as well. So what exactly is the issue? Mahavir, if I could ask you first, is it just medical inflation or is it just commercial considerations? These are listed companies, many of them. Why is the cost of health insurance going up so much?
Right. So, of course, medical inflation is to be blamed because why healthcare costs are increasing. health insurance premiums will also increase. The other reasons are also very important to understand, one of which is basically the product scope has grown very significantly. Like the things that Amit just mentioned about, which is basically that waiting periods have been reduced, or new conditions have been covered now by insurance companies. This basically results in an increase in premiums. Not only the regulatory changes that have happened in products, but also market changes have happened in products, where products have become more competitive and they have better features than what they used to have, let's say 2 or 3 years ago. And that, of course, will have an impact on premiums also, right? So these are major reasons that why premiums increase. Apart from this, meaning the second question that you had was around will premiums keep increasing in the future? In my view, because there is a race to provide better features and better products to customers, and these features are really top of the line features, making the product more comprehensive, there is definitely a higher chance of premiums increasing further in the future than they have been increasing in the past. The only thing that could save us from increasing premiums in the future is the cashless everywhere facility that insurance companies have come together to work on, where insurance companies can negotiate better rates with hospitals and bring costs down. That is the only, I think, the positive that I see in the overall space that could help reduce prices in the long run. But apart from that, because of the market dynamics of giving better products to the customer plus healthcare inflation, both put together, I see healthcare insurance products and prices to keep increasing in the future.
Sure, that's the hard reality. In fact, let's just pull that table back up. Amit's team sent us quite a nice table on just the way cost of major surgeries and treatments has absolutely ballooned. What we're showing you is 2023. If I extrapolate it back in time, pre-COVID, so cancer treatment used to cost about 26 lakhs. Now it's almost 51 lakh rupees. A heart transplant that was costing less than 18 lakhs is now costing 34. For something like a kidney transplant from about 9-10 lakhs, the cost of that surgery today is about 18 lakhs. So the cost of medical procedures has really gone through the roof. There's no denying that, especially after COVID. Amit, come in on this factor. So what does it mean for us? I mean, will costs keep going higher and higher? Can there be, Mahavir mentioned that plans are getting more comprehensive. There are lots of new features. But, give us a ballpark estimation. What does it mean for costs for, say, someone in their mid-30s? Let's talk about people who do not have pre-existing diseases right now. What can they expect in terms of the costs this year?
See, why does hospitalization become expensive? It can become expensive either because the products have become superior, as Mahavir was saying. I think that is one very, very important part of it. The other important part of it is hospitals are becoming better. So let me give you an example. Let's say if you stay in Delhi NCR and one has a heart problem, you can either go to one of the top luxury hospitals of Delhi NCR, let's say Medanta or Fortis. You can also go to some of the medium range hospitals also, which are also equally good. So you can go to a Paras hospital or an Artemis hospital as an example. The cost difference between the two is significant. So one of the things that we have seen happening in the last 1 year is what we call value for money plans being launched by multiple companies. So now the top 4 companies in the country offer what we call value for money plans, where you choose the network where you want to go to. So basically you tell the company that I won't go to the top luxury and hospitals of the country, but I'll go anywhere else, and you get a 20% discount on the premium. So by doing that, we are now seeing almost 20% of all our consumers actually taking cheaper plans than what they would have bought last year. So that is, and this is one of the methods. The other method is to take a deductible. Deductible essentially means that you pay a part of the claim when it comes, and it's a very small amount. You pay only 20,000 rupees of the claim whenever it happens. Rest everything is still funded by the insurance company, and this gives you a 20-30% discount in the premium as well. So this is again one of the ways premiums are reducing. So actually, if I look at Policybazaar data, our average premium realization per consumer hasn't really increased year on year, whereas premiums have increased. So the consumers who are facing difficulty in buying a health insurance plan because they've become expensive, buying these slightly limited plans, which are allowing them to still have medical coverage and extensive medical coverage, but choosing either to go to some certain hospitals or paying up a certain amount themselves. So short answer, premiums will increase, but there are enough and more methods available for consumers to manage that premium within their budget.
Okay, got it. I think this is a very promising point, that there is so much of innovation that you can go for these value plans. And like Amit said, they could be actually 20% cheaper. So we need to be far more nuanced than simply going and blindly buying any policy that we see in front of us. We need to ask a lot of the questions. In fact, that's exactly what we'll focus on. We'll help you navigate this complicated landscape. So if you have pre-existing diseases, what are the plans that can work for you? If you're a senior citizen, what are the plans that can work for you? All of those specifics after a short break.
Let's talk money.
As would be for any used car. So it is on the margin, not on the entire amount at which the car is being sold. So EV vehicle का हमारे recommendation तो 5 को ले आओ उसको भी जैसे EV का नया vehicle का rate है. मगर after विस्तार discussion, the marginal value के ऊपर ही ये 18% डाला जा रहा है जैसे कि हर used vehicle का है. So more can be asked as question. It is not a blind application of 18%. It is more thoughtfully done. Our recommendation was for 5%, but post that, the discussions have resulted in this. The concept note is got to be studied. In principle, the council has accepted it. Once the concept note is studied in detail, then again it will be presented before the GST Council. Once they agree on simplifying as per the note, the registration process for small companies, then the amendment will have to be done in the law. So that is one thing which I referred. Training partners, skill training partners of the National Skill Development Council, उनको जो approved partners है, not everybody, जो approved partners है, उनको GST exempt करने के लिए निर्णय हुआ है, मगर notification आएगा बाद में. Payment aggregators who do less than 2,000 rupees payment are eligible for exemption. But let us understand, and I provide this clarification now, that this exemption does not cover payment gateways and other fintech services which do not involve settlement of funds. So payment aggregators alone, I'm talking about, who do less than 2,000 rupees will have that exemption provided. Another important decision, there are several which will be covered in detail in your press.
Let's talk money.
Welcome back. You are with the final edition of Let's Talk Money for 2024, and we are giving priority to what is perhaps most important, that is health and ensuring that you have the right health insurance. We're in conversation with Amit Chhabra of Policy Bazaar as well as Mahavir Chopra of Beshak.org. Gentlemen, so now I'm coming down to the specific action plan, and I want to start with people who have pre-existing diseases, because that's probably the bulk of the universe, right? Apart from healthy people in their 20s or 30s, either you have BP or you have a case history of diabetes, and God forbid, maybe you've already had a cardiac surgery, but you still want cover for the rest of your life. So where should we begin? People with some sort of a pre-existing condition, how to ensure that I'm buying the right policy and actually getting that benefit? Let's start with you first, Amit, and then I'll come to Mahavir.
Sure. See, I think firstly, it's important to declare, that's step one. You must inform the insurance company or Policy Bazaar or wherever you're buying from that you have this pre-existing disease. That's very, very important. The second decision to take is, do you want a coverage after, let's say, 3 years of waiting period, or do you want coverage now immediately? That depends on, what do you feel? Do you think you might need to claim sooner or later? If, let's say, you want coverage and total peace of mind, then the right thing to do is take a plan which gives you day one coverage for pre-existing diseases like diabetes, hypertension, asthma, BP, cholesterol, all of these, all of these are available at day one as well.
Let's say someone has, hypertension, and maybe someone has had some sort of a cardiac history as well, and they're looking to take a plan which offers this day one coverage that you're talking about, that I want to be covered from day one. I'm willing to pay a little extra. What could ballpark premiums be?
See, it actually depends, Surabhi, on the overall plan structure. In terms of the incremental premium of day one coverage, it's typically on an average 20 to 25% of the base premium. But depending on what the overall product is, it can be as low as 30K per person, and it can be as high as 1 lakh, 1,50,000 rupees per person as well. So it totally depends on what product one is buying. But if I have to give you an average of all averages, you would expect for a 10 lakh sum insured for one person, you would expect to pay about 35-40,000 rupees for a 10 lakh coverage with a day one coverage built into it as well.
Which is probably not bad at all, considering the way that medical costs are spiraling. At least you pay that much premium, you have some peace of mind that you'll have some help at hand, God forbid if the need arises again. So that's really important to keep in mind. Mahavir, coming to you, PEDs, pre-existing diseases, any other advice that you'd want to add? And then please take up the case for senior citizens as well. Many people, like Amit mentioned earlier, 20, 30 years ago, they never thought of buying health insurance, and now they need it, but they're confused about how to go, which plans to select, how to get the right, policy coverage.
Right. So the first thing which is very important is to ensure that you are getting into a retail health insurance and not getting into a group health insurance. A lot of senior citizens and people who have pre-existing diseases, I am seeing, are ending up buying group plans from either banks or some other place. And these plans are basically one-year plans where premiums can change significantly year on year and also be withdrawn. Right. So the first thing that I would like to say this, and we're seeing this happening very often on our forum and our platform when we see people coming with grievances, is that they have ended up buying a group plan instead of a retail personal health insurance plan. The other two things that I would suggest is that always try to see if there is a free medical checkup that is available in the plan and use it because you have a pre-existing disease. It would be good that you use it to basically monitor your health. A lot of health insurance plans now also have wellness features and monitoring features, which can also be used, at their best to basically ensure that you manage your health properly. The last could be basically that when we recommend a plan, we also see that plans which have a no claim bonus that is not linked to claims, right? So that they get a regular increase in their sum insured, because for them to get an upgrade in sum insured is typically very difficult. So these are things that we typically suggest to people who have pre-existing diseases. For senior citizens, I think the plans that are now available are significantly high compared to what was available, let's say, 5 years ago or 10 years ago. So always do a lot of research on the kind of plans that are available. All the top-notch plans today in the market are now available for senior citizens also, right? From the biggest of the companies, from HDFC, ICICI, Aditya Birla, or anybody else that we're talking about, and the companies that Amit mentioned about, all of them are offering really good plans to senior citizens. Again, the PED waiting period could be a good choice where you could basically look at reducing your PED waiting period because you would want to have an earlier coverage to your existing diseases. Again, similarly, don't buy group plans and try to buy retail plans which are lifetime renewable compared to a group plan which could be linked to the group that you're part of, and plus premiums could be different and the product could be withdrawn.
Okay, that's important to keep in mind. Finally, Amit, rounded off with giving us some names. Insurers that are offering actually good plans where you can go in, you have to check the nuances yourself, but where there is a chance for people with PEDs or senior citizens or disability, which are the companies and which are the sort of plans they should explore, and any final tips, things to keep in mind before you buy the policy?
Sure, I think, see, if money is not a constraint, then you can go for a plan like, let's say, Care Supreme from Care Health Insurance. There is Reassure by Niva Bupa. There is Superstar, which is a recently launched plan by Star Health Insurance. There is Elevate by ICICI Lombard. There is Active One by Aditya Birla. There is Optima Secure by HDFC Ergo. And there are many more such plans as well. All of these are largely available from 0 to 99 years of age. You can take some insured from 5 lakhs to 1 crore and even more. You can opt for a lot of riders to make it future-proof. I think that is one important point that we haven't spoken about as yet. So in terms of checklist, I think you should try and make your plan future-proof. Because let's say if you buy a 10 lakh sum insured today it's enough. But is it enough, let's say 5 years later and 10 years later? The answer is no, because medical inflation is real. So you should try to buy a plan whose sum insured also increases every year automatically, and it takes care of inflation that happens in the future. Another very important checklist item would be taking consumable coverage when you buy your health insurance policy. Consumables means things like gloves, syringes, everything that gets consumed during your hospitalization, sanitizers as an example, right? All of this adds up to 10 to 15% of your total hospitalization bill, and by default is not covered in your health insurance policy. So very, very important that you take this rider, doesn't cost much and gets you covered as well. There is more, and it depends on everybody's persona, what is their exact requirements, etc. But I would say these are top 3-4 things that one must look at, and one must try to maximize sum insured. So given a choice between, say, buying a higher sum insured policy or having an option to, let's say, go to the top hospitals of the country or not, I would always first optimize for a higher sum insured, because honestly, a luxury hospital is not a necessity, but having a high sum insured is a necessity. And then if you have all the money, then you can always go to luxury hospitals as well. So again, these are some of the things which one must look at as you choose and decide which health insurance plan to have.
No, absolutely. And to give a food analogy, I think it's become very clear from this conversation that health insurance is not a standard buffet for everybody. Now it's become a nice, nuanced, a la carte industry. You pick and choose what's suitable for you and what you want to pay for and what you really need. So go ahead and invest that kind of time in doing a bit of research and getting the right health insurance coverage. I think the advice that both our guests have given today will go a long way in helping people make the right choice. So Amit as well as Mahavir, thank you so much for joining in. Wish you once again a very, very happy New Year 2025 and look forward to seeing you on the show again soon. Thank you.
Thank you.
All right, with that, it is curtains on this edition of Let's Talk Money. Thank you so much for joining in. Wish all of our viewers a very, very, very happy, wealthy, healthy and prosperous 2025. See you again with more wealth themes and ideas next year.
Let's Talk Money.
Will receive. I clarify that no GST is payable on the penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with loan terms. This will be very important for small businesses, so I repeat it. The Council has desired that we issue a clarification that no GST is payable on the penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with terms, loan terms. There are 3 things on which, even as the GST Council was busy deliberating, from the morning, there's a lot of speculation in the media. And as a result, there's a lot of speculation in the social media. अरे पॉपकॉर्न के ऊपर भी डाल रहे हैं टैक्स। मैं मीडिया से हाथ जोड़कर रिक्वेस्ट करती हूं, ये पूरे प्रेस मीट हम करते हैं हर जीएसटी काउंसिल के बाद, और टैक्स ऐसे विषय है जिसमें बहुत लेयर्स होता है। कोई आंख बंद करके टैक्स लगाते भी नहीं है और आंख बंद करके हटाते भी नहीं है। पूरे विषय समझने के बाद प्लीज आपके मीडिया में चलाइए। पॉपकॉर्न के ऊपर टैक्स, मैं इसका पूरे पृष्ठभूमि आपके सामने रखना चाहती हूं। सॉल्टेड पॉपकॉर्न, कैरामलाइज्ड पॉपकॉर्न, प्लेन पॉपकॉर्न, ऐसे स्टेट्स हैं जहां नमकीन के नाम में पॉपकॉर्न सॉल्टेड भी सेल होता है कि नहीं? नमकीन है वो, मगर जब पॉपकॉर्न सॉल्टेड सिर्फ नहीं है, उसमें कैरामलाइज्ड पॉपकॉर्न भी मार्केट में आता है एडेड शुगर के साथ। एडेड शुगर के चीज हर एक में रेट एक है, नमकीन के ऊपर रेट कम है। सो कैरामलाइज्ड पॉपकॉर्न का ट्रीटमेंट के ऊपर सब लोग विस्तार से चर्चा की. When you talk outside, it looks silly. अरे पॉपकॉर्न के ऊपर इतना चर्चा चाहिए क्या?
Well, hello and welcome to Business 360. I'm Ashmit Kumar, and here are the headlines that we're tracking this evening. The Indian rupee continues to weaken against the US dollar, hitting another record low today. Stock markets end with marginal losses after failing to hold early gains. Prime Minister Modi meets over a dozen economists ahead of the union budget. Niti Aayog officials were also present for the closed-door meeting, which took place after GDP growth in Q2 slowed to a 21-month low. Tata's financial services arm Tata Capital ropes in advisors ahead of the potential IPO in 2025. The decision for listing is in line with the RBI's mandatory requirement for upper-layer NBFCs to list within 3 years of being notified. Sources say that the IPO size is likely to be around 15,000 crore rupees. That's a money control exclusive. China firms up plans for a fiscal stimulus in order to soften the blow of an expected increase in tariffs once Trump takes charge. Reuters reports suggests that Chinese policymakers plan to issue a special treasury bond worth record $411 billion next year. Hospitality startup Oyo completes the acquisition of G6 Hospitality, owned by Blackstone, for $525 million. The deal adds nearly 1,500 franchise hotels across US and Canada to Oyo's portfolio. Dabur moves Delhi High Court against Patanjali, alleges that an advertisement featuring Ramdev claims that only Patanjali's Chyawanprash is original and that other companies lack the expertise. Dabur claims that the advertisement is disparaging and damaging to other companies. High Court agrees to hear the matter but refuses to restrain Patanjali from airing this ad. Vehicle registrations fall by 15% in the first 3 weeks of December. Petrol-powered vehicles and two-wheelers are the worst hit. Electric vehicles add some spark in an otherwise disappointing month. Mercury dips across North India as the Met Department warns of a severe cold wave. A fresh wave of snowfall hit Manali yesterday, leaving around 1,000 vehicles stranded between Solang and the Atal Tunnel. Kashmir's Sonmarg too witnessed heavy snowfall. The Election Commission of India counters allegations by the Congress party over Maharashtra elections, says that the increase in voter turnout between 5 p.m. and 11:45 p.m. is normal. Also adds that a case has been registered over allegations of voter list manipulation. Israel confirms killing Ismail Haniyeh, the chief of Hamas's political bureau in Tehran this July, marks the first public acknowledgement that Tel Aviv was behind the killing. Israel's defense minister warns that military would also decapitate the Houthi leadership, just as it did with the Hamas and Hezbollah top brass. Veteran filmmaker Shyam Benegal, one of the trailblazers of new wave cinema in India, dies at the age of 90. He was suffering from a chronic kidney ailment. Leading film personalities attend the cremation at Mumbai's Shivaji Park. Well, the stock markets failed to hold opening gains in a range-bound session today. Nifty and Sensex ended flat, with the Nifty falling below the 23,800 mark. The broader markets fell in line with the blue chips. Surbhi Upadhyay is joining us now with a quick wrap of the day's trading action. Surbhi.
Well, it was an extremely flat and range-bound day and along expected lines, considering a lot of global markets were anyway shutting early for the Christmas holiday. So what we have is a range-bound move between about 150 points, the highest and the lowest point on the Nifty today. But what the Nifty did was, once again, it failed to have a close above the 200 DMA, which comes in around the 23,840 level, thereabout, roughly speaking. Nonetheless, it wasn't too bad. I'll come to the movers and shakers in just a bit. In terms of the sectoral spread, there was some buying in consumer and auto that came back today. But then the large pillars of the market, IT as well as banks, they were fairly listless. The Tata Group deserves a special mention because of the story that our colleagues in Money Control put out, that Tata Capital could be looking at a large IPO in early 2025, and that got a lot of the group stocks excited. Let's look at Tata Investments, Tata Motors, Tata Technologies, Tata Chemical. All these stocks were up between 2, 4, 5%, depending on which one you picked up. Coming to the Nifty gainers, Adani Enterprises, Dr. Reddy's, and a lot of consumer names, like I mentioned. You had a good show from Britannia, Trent, ITC, and even BPCL did fairly well with oil prices coming off overnight. The losers tally included a lot of metal names that were shining bright yesterday. So Hindalco, Tata Steel, JSW Steel, these were on the way down. Power Grid also cooled off. And financials like IndusInd Bank, SBI, and even SBI Life, those stocks were on the lower side. Mid-caps had a better day today, and that's something to take heart from. The advanced decline ratio was better, and the index at least didn't go home with any deep gashes. It was flat at best. Today's movers included the likes of Greaves Cotton, which is looking at an IPO for its EV arm. Amber Enterprises, our colleague Sudarshan reporting that Amber could also be looking at hiving off its electronics business. Sagility, Triveni Engineering, RBL Bank, some interesting gains on many of these stocks. And also it was a great day for a lot of the recent listings. So much, shine and flutter around them. International Gemological Institute, SBI Life Sciences, and MobiKwik, double-digit gains for some of these stocks coming through. So fairly exciting day at an individual stock level, but otherwise fairly quiet. We don't have too many cues going into the Christmas holiday. And then the bulls will hope for a final flurry when global markets come back to trade 26th onwards.
Right, Surbhi, thanks a lot for that. Now, Sameer Arora of Helios Capital believes that the current bull run in the market is more measured than previous rallies. He's positive on financials and IT stocks in 2025.
I have seen widely out of line markets. For example, in 2004, 5, 6, and 7 calendar years, the market was up 40% per annum. If you look at the 500 index, it was up some 39 point some percent per annum. We have seen periods like 1999, when the market went up some 85% and the NAV of my fund, Alliance Equity Fund, now called Birla Sun Life Equity Fund, in that one calendar year was up 280%. Those are wild bull runs. This is a measured bull run according to me. So our logic is that you will have 2 or 3 main chunks, which mostly the market has converged to financial sector, financial services, private sector banks, and some form of IT, which for 2 years we were bearish up to June of 24, and now we think IT is a good sector. We will not buy the EMS companies because our logic is that we have a benchmark, and those benchmarks of EMS companies trade at 8 multiple and 10 multiple, and in India you can make it 20 because everything is double, but you don't make it 150 multiple.
Well, on to the money market now. The Indian rupee hit yet another record low today. It stood firmly above 85 per dollar amidst dollar buying by oil importers. Month-end US dollar demand is expected to put further pressure on the Indian currency. Bond prices remain largely steady. And China's policymakers plan to sell $411 billion worth of special treasury bonds in 2025. According to a Reuters report, this would be the highest bond issuance on record. The move is in sync with Beijing ramping up fiscal stimulus to boost the slowing economy. The funds raised will be used to support consumption subsidies, business equipment upgrades, as well as investment in key technologies and advanced manufacturing sectors. Now, over a year after Tata Tech's successful IPO, another Tata Group company is eyeing its D-Street debut. Sources tell Money Control that Tata Capital, the group's financial services arm, has initiated work for its IPO and could raise 15,000 crore rupees. The decision to list is in line with RBI's norms for the upper layer NBFCs. Ashwin Mohan joins us now with more details. Ashwin.
What we are given to understand from our sources is that Tata Capital, the financial services flagship of the Tata Group and the subsidiary of holding company Tata Sons, has in fact initiated work and the process for a big bang mega initial public offer or IPO in 2025. Sources are telling us that this issue could be anywhere in the region of 15,000 crore plus rupees, and these sources are also telling us that it could likely be a combination of both a primary issue of shares and a secondary component. Now, Kotak Mahindra Capital, the investment bank, and law firm Cyril Merchant Mangaldas, these are the 2 advisors that our sources are telling us have been roped in as of now. Other bankers and law firms may also be taken on board at a later stage. Now, if you look at Tata Capital, it had assets under management of around 1,58,000 crores as of March this year, and Tata Sons holds around 92 odd% in Tata Capital. The remaining stake is held by a few other Tata Group companies and also the trust. Now, the reason why the Tatas are going in for this IPO is because under RBI norms, all NBFCs that are classified in the list of upper layer NBFCs, they have to mandatorily list by September 2025. So that is the regulatory compliance, and hence this process has begun. We are yet to hear from Tata Sons and Tata Capital. Let's keep a watch out for this big deal in the new calendar year.
Well, in a bid to expand its footprint across North America, Oyo has completed the acquisition of US-based G6 Hospitality for $525 million. The company operates around 1,500 hotels under brands like Motel 6 and Studio 6 in the US and Canada. Oyo expects this deal to generate a gross booking value of $1.7 billion and pump up its EBITDA to 2,000 crore rupees in FY26. Meanwhile, Greaves Electric Mobility, the electric vehicle division of Greaves Cotton, plans to go public. The company has filed for 1,000 crore rupee IPO with SEBI. The IPO will be a combination of a fresh issue of shares and an offer for sale. The proceeds will be used for product research, building battery assembly capabilities, and boost manufacturing capacity. Now, shares of Amber Enterprises surged over 5% in today's trade. This after CNBC-TV18 reported that the company is looking to demerge its electronic division. According to sources, the company might also float an IPO of its electronics segment, for which bankers are already being appointed. The electronics division comprised 20% of Amber Enterprises' total revenue in FY24. Now, vehicle registrations declined by 15% in the first 3 weeks of December. Petrol-powered vehicles and two-wheelers are the worst hit. Electric vehicles add some spark in an otherwise disappointing month. India's telecom regulator has promised new guidelines against pesky calls and that they will be released in a month's time. Speaking to my colleague Abhimanyu Sharma, TRAI chairperson Anil Kumar Lahoti also defended the move to ask telecom service providers to offer a tariff plan without data and only for calls and text messages specifically designed for feature phones.
In our country, there are a large number of subscribers who are not using a smartphone. They have feature phones, and there are some who do not feel comfortable using a smartphone. So they should be able to, have the option of taking a plan which has only voice and SMS. So in order to give the consumer the choice that they can subscribe only to voice and SMS, this tariff order and amendment to the regulation has been issued so that all the service providers provide at least one such tariff voucher.
So what is the status of consultation on satellite communication and also against unsolicited calls? What kind of suggestions have been given? Can you name a few?
For both the satellite communication, we have already completed the process of consultation, that is comments, counter comments and the open house discussion, and we have received a large number of comments from various stakeholders. These are all under examination, and after examining the comments, we will soon come out with our recommendations to the government. In respect of the unsolicited commercial communications, again, we have completed the process of consultation, that is the comments, counter comments and the open house discussion. And after this, again, we have received a large number of comments because of the importance of the subject, which are under examination, and we should be able to come out with the amended regulation within a month's time.
So any key comments or any timeline behind that? Anything you can ascribe to that currently?
I think we have received a large number of comments. To pick up a few of them will not, at this stage, will not be fair.
Prime Minister Narendra Modi held consultations with leading economists and other stakeholders ahead of Budget 2025. Finance Minister Nirmala Sitharaman and top officials of the Niti Aayog were present at the meeting. Parikshit Luthra joins us now with more details. Parikshit, what were the key focus areas for this meeting?
Well, the clear focus in this meeting was the 2047 roadmap. Ever since the Prime Minister took over for his third term, the entire government machinery has been chalking out a 2047 roadmap. And sources tell us that even in this meeting, the Prime Minister and his team was more concerned about a long-term higher growth trajectory than the immediate budget exercise. Though there were consultations about the budget and what measures can be taken to spur growth across sectors, the larger focus was how can we have a larger vision for 2047. So this included a blueprint for the agriculture sector, the MSME sector, manufacturing. There was also a discussion on how India can leverage the current geopolitical landscape and have a bigger play in global value chains and be a bigger exporter to the world as well. Job creation was a big focus area in the budget in July. We had seen an internship scheme, a skilling scheme and an employment scheme being announced, and clearly there could be further job employment push areas in the budget as well. But here the focus was on how to have sustained job creation across sectors, have more skilled jobs till 2047 as well. So you had the likes of former Executive Director of IMF, Surjit Bhalla, Ritam Desai of Morgan Stanley, DK Joshi of CRISIL, Ashok Gulati, and agricultural economists, BVR Subramaniam, the CEO of Niti Aayog, Suman Berry, the Vice Chairman of Niti Aayog, the Principal Secretary to the Prime Minister, Nirmala Sitharaman, all top leaders and officials from the government were present in that meeting, which was focused beyond the immediate budget exercise. But at the same time, there are concerns about a growth slowdown, especially in the September quarter, and whether we can come back to a high growth trajectory fast enough. So there were some discussions on that, but the broad discussions on the 2047 Viksit Bharat blueprint.
Indeed, Parikshit, thanks a lot for that inside look at that all-important meeting ahead of the budget 2025. With that, we're slipping into a very short break now, but don't go anywhere. The Election Commission of India counters allegations by the Congress party over Maharashtra elections, says that the increase in voter turnout between 5 p.m. and 11:45 p.m. is normal. More details in just a bit.
मगर हर आइटम के ऊपर फिटमेंट कमेटी में स्टेट्स भागीदारी लेकर चर्चा करने के समय वो क्लियरली बोलते हैं एडेड शुगर वाले चीज को तो हम ट्रीटमेंट अलग ही देते हैं, चाहे वो ड्रिंक हो, कार्बोनेटेड ड्रिंक हो, जूस हो, जिसमें एडेड शुगर है. इसीलिए पॉपकॉर्न का ट्रीटमेंट में जब तक वो नमकीन है, सॉल्टेड है, मसाला एडेड है, चटपटा मसाला है, चिली पाउडर है, कुछ हो, सब 5%, am I right? 5%. But when it has added caramelized sugar, it is no longer namkeen. इसीलिए उसका रेट अलग है. So वो थोड़ा आपके प्रेस नोट में हम विस्तार से उसका एक्सप्लेनेशन दे रहे हैं. विषय को समझकर प्लीज जितने भी आपके मीडिया के द्वारा स्प्रेड करना है करिए.
Well, the problem of 2024 for the global steel industry has been that Chinese steel demand has been weak, which has resulted in higher Chinese steel exports. Well, let's explain this to you in further detail. India's steel demand has been rising at 10% over the last 4 years. But in the same period, Chinese steel demand is down by 13%. Now, India is the second largest steel producer and will remain an important growth driver in the world. The issue is China has slowed down, which has resulted in Chinese prices slipping to COVID lows, which in turn has pressurized global steel prices. The Chinese housing market has remained weak, with prices of newly built commercial and residential buildings slipping all the way since mid-2023. This has impacted steel demand, thereby leading to rising iron ore inventory at Chinese ports, which is currently way higher than the average inventory levels. The pain point is that Chinese monthly exports have been rising because domestic demand out there has faltered. And for the first time since 2016, Chinese steel exports will clock more than 100 million tons. It's also on course to challenge the previous all-time highs. Well, the Indian steel industry, they are up in arms. Mr. Sachin Jindal has made a solid pitch. He wants some protection for the domestic ferrous industry because Chinese steel makers, they have an unfair advantage and part of their exports are trickling into India. Well, the Steel Ministry has recently proposed to the Finance Ministry to impose 25% safeguard duty on steel imports, as India has now turned a net importer from being a net exporter in the previous year. Well, Nuvama has said the imposition of some safeguard duty along with the onset of a seasonally good quarter could give the steel producers some elbow room to go ahead and increase.
Welcome back. Now, here's an interesting case. Dabur has moved the Delhi High Court against Patanjali. The company has alleged that an advertisement featuring Baba Ramdev claims that only Patanjali's Chyawanprash is original and that of other companies lack the expertise. In fact, the word that has been cited by Dabur as objectionable is Baba Ramdev saying that it's ordinary. Other Chyawanprash companies making other Chyawanprash. Now, what's important is that these advertisements authorized by Patanjali were run across various broadcast channels, across various publications as well, and that is what has been objected to by Dabur. Dabur makes the claim that these claims being made by Baba Ramdev, by Patanjali, are in fact disparaging, are damaging to other brands, including Dabur. Dabur being one of the heavyweights in this brand, commanding nearly 60% of the market share as far as Chyawanprash is concerned, claiming that this is hugely damaging for the company. Also going on to say that as far as these claims are concerned, this is not something that Baba Ramdev is alien to. This is Dabur basically invoking the case that was going on before the Apex Court, where the Supreme Court had frowned on advertisements authorized by Patanjali Ayurved, where in fact it was claimed by Patanjali Ayurved that they had products that was even going to cure diabetes, even going to cure COVID, and that also had made those advertisements, they had made disparaging comments against allopathic medicine. So all of these aspects being argued before the Delhi High Court, the prayer that essentially Dabur had made, the interim prayer, the interim relief that the company had sought was for a stay on these advertisements being issued, being run by Patanjali. However, Delhi High Court, while it has agreed to hear Dabur's application, has agreed to hear Dabur's plea, it has not agreed to grant a stay as far as Patanjali's ads are concerned. So Patanjali's ad featuring Baba Ramdev are free to air, free to continue as far as broadcasters and publications are concerned. But nonetheless, the Delhi High Court has said that this does merit a hearing, this does warrant a hearing, and that it will sit and decide on the Chyawanprash wars later, and that will be in the month of January of next year. So that's just around the corner, a couple of weeks from now. But that's, of course, action coming in from the Delhi High Court. Let's, with that, shift our focus to the action going on between the Election Commission and the Congress Party. The Election Commission of India has countered allegations that were raised by the Congress Party over Maharashtra elections. In a 66-page response to the charges, the poll body said that increase in voter turnout between 5 p.m. and 11:45 p.m. is normal. Santhya Gora is joining us now with more details. Santhya, help us with this EC counter claim that's being made. Take us through some of these allegations that were made by the Congress and the response that is now coming from the Election Commission.
Right. So the Election Commission of India has responded to the allegations made by the Congress, citing electoral discrepancies during the Maharashtra elections. The ECI has dismissed all these allegations. Here are some of the key allegations and the ECI's responses to them. The most significant allegation raised by the Congress was the inexplicable increase in the voting percentage from 5 p.m. to 11 p.m. on polling day. The ECI has clarified that there is no discrepancy whatsoever in the voter turnout rate data. It explained that there is a difference between how the voter turnout rate is recorded in Form 17C and the trend uploaded on the voter turnout rate, that is VTR app. According to the ECI, Form 17C is filled at every polling station by the presiding officer and co-signed by the agents of candidates, and this particular form has the exact VTR. In contrast, the VTR app trend is collected by the sector magistrates through various methods, including physical visits to polling stations, phone calls and messages. The ECI stated that data on the VTR app might suffer from errors in data collection. Additionally, it noted that the 5 p.m. data on the VTR app is interim, as voting can continue past 5 p.m. or even 6 p.m. The ECI has also uploaded a detailed note on its website explaining the voter turnout process to educate citizens. Another key allegation made by the Congress was the addition of voters. The Congress claimed that over 50,000 voters were added across 50 assembly constituencies. The ECI has called this allegation misleading and factually incorrect, stating that over 50,000 voters were added in only 6 assembly constituencies. The increase in the overall number of voters was attributed to the registration of individuals who turned 18 after the Lok Sabha elections, measures taken by the election authorities to maximize voter registration, and increased voter enthusiasm to get themselves enrolled. The Congress also alleged arbitrary deletions from the voter list. In response, the ECI stated that over 8 lakh deletions were made, all following proper verification processes. Regarding the allegation of voter list manipulation using fake Aadhaar cards in Tuljapur, the ECI has said that an FIR has been filed and the matter is under investigation.
Right, Santya, thanks a lot for that input. Now, before we end the show, let's talk about a collaborative initiative between GROW and CNBC-TV18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we will help you understand the 1 to 2% rule, which helps protect your capital.
You know, successful trading isn't just about finding the next big opportunity. It's about managing your risk to protect your capital. One of the best ways to do that is the 1 to 2% rule. Risk no more than 1 to 2% of your total capital on any single trade. So if you have 10,000 rupees in your trading account, you'd only risk 100 to 200 rupees on each trade. This limits your potential losses and gives you room to grow. The idea is to preserve your capital over the long run. Live another day to make another trade. By sticking to a small risk per trade, you'll be able to withstand losses without wiping your account. Trading is all about consistency, not chasing quick wins. By focusing on risk management, you'll ensure that you're in it for the long haul. It's a marathon, not a sprint.
₹1,000 per ton, as domestic prices are at a bit of a discount in comparison to the landed cost of imports. But they also highlight that factors like anti-dumping investigation in Europe and aggressive exports by China is eating into India's exports, which is more concerning than the elevated imports that we're seeing. We'll have to stay tuned to see the government's action with regard to these rising imports, but things could get better for the domestic steel industry from here on, because Chinese steel prices could have bottomed out. Their exports as well could slow down. Additionally, domestic steel makers, well, they've chalked out their capacity addition plans with focus on value addition and cost efficiencies, which could support volume growth and probable expansion of unit profitability. Well, the steel industry hopes to get its sheen back in 2025.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports.
We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
we are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Hello and welcome to Startup Street. I'm Arundhati Ramnan and these are the top headlines that we're tracking for you this evening. OYO has completed its acquisition of G6 Hospitality, operators of the iconic Motel 6 and Studio 6 brands, from Blackstone Real Estate for $525 million. The deal is projected to increase OYO's EBITDA to over 2,000 crore rupees in FY26. Motel 6 is expected to contribute an EBITDA of over 630 crore rupees in the coming financial year. Fintech unicorn Razorpay is offering ESOPs worth 1 lakh rupees each to all its existing employees to mark its 1 decade in operations. The company has an employee base of over 3,000. This translates into a total ESOP value of over 30 crore rupees. India's SpaceX mission, intended to develop and demonstrate technology required to dock and undock spacecraft in space, will be launched using PSLV C-60 on December 30th from Satish Dhawan Space Center, Sriharikota on December 21st. The launch vehicle was integrated and moved to the first launch pad for further integration of satellites and launch preparations. Elon Musk's startup xAI has raised $6 billion from investors in its latest funding round as it battles stiff competition in the artificial intelligence market. The firm, whose flagship product is the Grok chatbot, garnered support from US venture capitalists, chip makers NVIDIA and AMD, and investment funds from Saudi Arabia and Qatar, among others. Apple is closing in on a historic $4 trillion stock market valuation, powered by investors cheering progress in the company's long-awaited AI enhancements to rejuvenate sluggish iPhone sales. The company has pulled ahead of NVIDIA and Microsoft in the race and was valued at about $3.85 trillion as of the last close. Those were the headlines that we're tracking for you this evening. But on what's brewing today, Finex, a skilling platform focused on the banking, financial services and insurance sector, has raised $6 million in a seed funding round from impact investor Eleva Equity. According to the India Skills Report, India's education sector faces a pressing challenge in preparing graduates for the demands of the job market. According to recent reports, over 50% of Indian graduates are considered unemployable due to the lack of practical skills and industry-specific knowledge. Finex is a corporate training company that helps students in the BFSI sector in India become job-ready. Joining me now to discuss this further is Himanshu Vyapak, the founder of Finex. Himanshu, thank you so much for taking time out and being here with us on Startup Street. You know, you launched your firm in 2019. What led you to start this journey and start Finex? What's the challenge or gap that you saw that you needed to solve for?
First of all, thank you, Arundhati, for having me here. Being in the BFSI corporate ecosystem for over 2.5 decades, the biggest challenge was, the students, we were looking for, we never got students, job-ready students. And when we asked students, are you getting jobs? You don't get those jobs. So clearly, this gap has only increased in the last few years. And that was an important factor in starting Finex. Also, I think this is one space, specifically skilling is one space, which is at an intersection of a social impact, good economics, and a large unmet need of the corporate India.
Right. So you're solving for that gap where people become more employable, right, especially in the sector. And you've raised the $6 million for expansion for your technology and to diversify your product offerings. We'll come to all of it in a bit, but take us through what you currently have on offer and what are your new products in the pipeline. Take us through how your platform works, essentially.
So clearly, from our perspective, the value which we offer to our learners is we offer industry-relevant courses and certifications. These set of learners are trained by our panel of industry experts who have an experience, on-ground experience of working in the industry. And we have been in the training business for over 2 decades. So, the content is in an ever fast-growing BFSI domain, the content is very contextual and application-focused. What we do at this point of time is a set of offerings, which is, kind of short courses, right from short courses to joint management programs. So we have short vocational courses, which we kind of embed with the college curriculum. These are 30 to 40-hour courses. Then we have specific industry-recognized certification across various domains like stock markets, wealth management, investment banking, and more. And we also have trained students on NISM and other regulatory exams, which are kind of mandatory for most of the roles in BFSI.
Right.
And now we are also working with corporates to offer job assured programs, so that the students can not only be ready for the industry, but also ready for that specific role.
Right. So a lot of, programs that you have there. And speaking of, job assured programs, can you sort of take us through the number of students that you've currently catered to? How many of these students have you actually helped successfully find a job? And what about teacher training and skilling?
So there are two parts of it. In terms of the number of students which we will impact this year in terms of training through our skilling courses and, certification would be about 15,000 across 12 states. Typically, the students who would want to get into jobs, which is there, our platform is building up. And the current trend shows that about 60 to 65% of them get placed, either self-placed or through our placement tie-ups after doing these courses.
Right. So if you could sort of, then take us through the kind of revenues you're currently seeing. What are the targets you have for 2025? And what about profitability?
So, till now, for the last few years, we have been a bootstrap setup. We've just raised our first institutional round. I can't divulge the numbers as yet, but, we are profitable. And, the aspiration, the way we, kind of look at ourselves is that in the next 5 years, every year we should be impacting 100,000 students every year through our, skilling and employability programs.
So you want to impact 100,000 students every year, and also you are profitable at this current point. But, apart from BFSI, right, you're also looking to enter the IT market, right? So how soon do you hope to enter the space? And, any other sectors that you're seeing a big skilling gap in?
So, so the way we look at it is finance and technology are no longer career skills. They are, in fact, life skills now. So even if I'm a doctor, you would expect a doctor to be proficient on at least the finance skill, right from a student to an engineer to a doctor. All of these are now there. So I think these two, and the second part is both technology and finance kind of contribute almost about over 25% of Indian GDP. So one, that whole space has interlinkages, is no longer a career skill, but a life skill. From our perspective, BFSI has been the first journey. Now we are looking at inorganic acquisition. We are exploring some options in the, in the technology training space to kind of add up to programs and the way forward.
So looking at inorganic opportunities in the IT space, any companies that you can tell us that you're already in talks with?
No, unfortunately, I can't share those names right now, but we are in talks with them.
All right, so you are in talks, but also parts of the funds that you've raised will go towards geographic expansion, right? Which cities are you looking to enter? Where are you seeing the most demand coming from? And what about tier 2 and beyond cities?
So, our focus is, while our presence would be there in the tier 1 cities, but tier 2 is predominantly the state capitals beyond the metro location is what we want to start off now in the first phase, and then go further down to, kind of cities like Kolhapur or Aurangabad, and the tier 3 locations is where we want to go further down. But in the first 2 years, is the tier 1 and tier 2 locations is the first focus to build up here. Because most of the corporate placement opportunities are coming up from these opportunities. So first we want to cater that and then further go down.
All right, so tier 1 and tier 2 first, and then you look at going further down. All right, Himanshu, thank you so much for being here with us on Startup Street and outlining your growth plan for the next 2 years.
Thank you very much, Anandi. Thank you for it.
Moving on, just months after making headlines for a first-of-its-kind low-cost chip, Chennai-based semiconductor startup Mindgrove has secured a Series A funding of $8 million. The round saw participation from Rocket Chip VC, Speciale Invest and Mela Ventures, while existing partners, Peak 15 Partners, Whiteboard Capital and Nishchay Goel have stayed on board. CNBC-TV18's Jude Sanit meets the founders to find out how they plan on using the money and what lies ahead. Here's a slice of that conversation.
The first meeting is usually formal, but then after that, most of the meetings are where we invite them in, we talk about a whole lot of things. We just had a wavelength. I mean, with our existing investors, they're very supportive and the wavelength is anyway there. But we just had a real click with the new people who are coming on board, which is Rocket Chip and Mela.
Right, all right. So what was the conversation like with both these new investors? What drew them in really?
What draws anybody into this field is the fact, I mean, it's hard, but then we are in a position where we've proven that we can actually execute at least the technology part of it. And that is drawing a lot of interest.
How do you plan to go about using these funds now? Where will they be deployed? I believe production is one area you're looking at, and also enhanced engineering as well. Take me through the broad roadmap of where these funds will be deployed.
Absolutely. So as Shashwat said, patience is power. And it took us about $2.3 million in seed funding to get out there and say, the pitch for the $2.3 million was we want to build a chip. And we did. Now the pitch for the $8 million was two broad things. The first is to bring the second chip to the point where the first chip is right now, which is pre-production, sampling with customers on the verge of going to production, full production.
And since you bring up production itself, and the aim and the objective is to go about helping that happen, what kind of timeline are we looking at to actually see production hit the floor and hit the market?
As things stand right now, we expect the first production batches, should the timelines stay as they are. And supply chain is a fun thing given the geopolitics of today. Right. We are expecting the first batch of production chips to arrive sometime in the middle of 2025, okay. July, August, September. Depends on how things, it's a cascade. So somebody has to give a purchase order, and then A, B, C, D, E. So everything goes well. That is the timeline we are looking at to bring out the first chips that will be deployed with customers.
But what does this mean, Shashwat, in terms of revenue itself? I'm sure your investors before coming on board would have been told in terms of what the growth prospects are like. What are they? Help us understand.
So I'm not going to quote specific revenue numbers because things are still up in the air a lot. Right. But if we actually get these two chips into production in the kind of way that we're talking about, we have enough to actually very, very comfortably meet the valuation that we are raising at. I mean, whatever money our investors have put into it will come back to them.
Will be paid back plentiful.
Plentiful,
right.
Yeah. What rate do you hope to grow? Has that number been arrived at least?
The easiest answer there is as fast as possible, because
it's the same thing the last time we spoke.
Yes, yeah. So I mean, as co-founders, what you want to do is rock it up, right? So having said that, dollar fluctuations play a very crucial role in the supply chain. So and we are in a phase worldwide where there's a lot of different things happening which are not necessarily in any trader's control, to use a very broad term for import and export. So those factors play well. The first chip is targeted at application use cases like biometric devices, consumer appliances, and so on. Those two examples that I gave you should make it pretty much easy for you to see the kind of market that is available just in India for those kinds of devices. Whereas the second chip is for anything, effectively anything with a camera on it. So CCTVs, infotainment systems, access control systems that use cameras, face detection, all of those kinds of things are what we are targeting.
Video door phones.
Video door phones are those kinds of things that we are targeting the second chip for. Again, if you look at the available market and the addressable market in India, and if you start estimating that you take a percentage of that market, you'd be able to see what kind of revenues we're talking about, and the numbers are big.
And even as you go about expanding, and on multiple fronts, and the second chip also comes into the equation, what's the timeline as far as future funding is concerned, Shashwat? Have you figured out how much you will need and by when?
The best course for us right now is that we don't need to raise for a little while. So we can use what we have and the revenues to grow out the business as a business. And we raise the next amount of funding that we need only when we need it to build a new product, or we need to unlock a different vertical, something like that. That would be the ideal case of the way we would like to operate.
And the normal course of action, of course, would be to go about expanding on that front. So I have to ask you then, what are the innovations can be expected from the Mindgrove stables?
Absolutely. So this is something I love to answer, but I have to be, unfortunately, as vague as he is. What we are doing right now is what we call technology capital. He calls it fundamental technology, but I call it technology capital. The thing here is we are building certain fundamental items with the idea to be as nimble as possible going forward. What we are trying to do, to use, as I like to very often do, is to give you a food analogy, is to build out all the ingredients and components of a thali, and then what exact thali that you assemble together depends on who comes to eat.
On that note, it is time for us to head into a short break. But coming up next, Vasishta Research Private Limited, a robotics-based startup, is betting big on India's aerospace and defense sector. A rapid fire with the firm's founder on the other side. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets.
Welcome back. You're still with us on Startup Street. The United Arab Emirates recently hosted the inaugural Founders Retreat in Dubai and Abu Dhabi, which saw participation from founders of 13 Indian unicorn startups and 5 publicly listed companies. The platform facilitated discussions around opportunities in the bilateral investment partnership and how the UAE complements India's startup success story. Estimates suggest that UAE investors have injected close to $20 billion worth of capital into the Indian economy since 2000. Aishwarya Anand caught up with His Excellency Abdul Nasir Al Shali, the PhD, the UAE ambassador to India, to discuss more on these lines. Take a look.
So the first question that I want to address is help us understand what was the idea behind, Founders Retreat event. With what aim did you organize this?
So we started with establishing the UAE-India SEPA Council in New Delhi under the embassy, and we started doing all of those events in terms of business roundtables or what we call the UICC roundtables, and we got to know so many startups, entrepreneurs, unicorns. I visited 14 Indian states. I went to research parks, campuses, and I got to know that there is quite substantial potential in terms of entrepreneurship and startup ecosystem in India, and we can actually do a lot together in terms of scaling those up and making sure that they can succeed, not just by being in the UAE alone, but being both in India and in the UAE. And this is how we decided eventually to bring them all together in one room and have someone speak to them in terms of what could they be offered here in terms of access to capital, infrastructure, scaling up their businesses, being not only in the UAE market and selling the UAE market, but also in the Indian market, selling it to it, and getting to try out their products and services in a country where there are tens of nationalities living, which would also help you and enable you to expand in global markets in the future.
Correct. I was just here covering GITEX Global a month ago, so I saw the influx of the startups that participated. So UAE is definitely, and especially Dubai, if I have to speak, is really emerging as the frontier for a lot of startups to come and set up their base here. So I want to understand that in terms of for forging that culture forward, what more is in the pipeline that we can expect in the next 1 year?
Well, so the founders' mentality is in the DNA of the country. The country has been founded in 1971, and no one thought that would be possible. No one thought that the union would continue and be as it is. And today we see the UAE as a testament to all of that being forced. And I think this is what is quite inspiring to everyone to come and start or establish their businesses here, or even have their business somewhere else and have part of that business in the UAE. Now, over the coming years, I think you will see more of those kind of engagements. You will see us expanding our network, getting to diversify our outreach in terms of Indian states and in terms of the various sectors that we would like to see explore the investment and business opportunities in the UAE.
Talking about sectors, of course, artificial intelligence is right now a big focus area for UAE. I want to understand that in that sector specifically, what's the kind of talent that you're looking to get from India? And the ones that have already set up, what's that space looking like?
Well, in terms of AI, it's one of the key sectors that we have been focusing on over the past couple of years. And this will continue to be the case because it's not just about AI, but how can you use AI in terms of all kinds of applications, whether it's in business, whether it's in education, whether it's in healthcare. And I believe the Indian market provides quite the market in terms of being able to scale up, to test whatever AI-driven technologies and applications at a massive scale. And all of this is quite important because when you deal with AI, it's not just about what you can do with it, but also about the feedback that goes into it to further improve the system. And so looking at how the UAE is working when it comes to utilizing AI in different services being offered in different businesses, and then looking at the massive potential in terms of talent and market access and size in India, the opportunities are immense and they're endless.
Vasishta Research, a robotics-based startup, is betting big on India's aerospace and defense sector. It is expecting its revenue to grow by nearly twofold next year. At the sideline of Huddle Global, held in Trivandrum, Jude Sanit spoke to Saurabh Chatterjee, the founder of Vasishta Research, to understand the different facets of the startup and the big opportunity that's awaiting for the company.
Saurabh, great to have you with us here on CNBC-TV18. First question, what is the name of your startup?
Vasishta Research Private Limited. So we are into aerospace and defense sector.
Okay, and one sentence, what exactly is it that you do?
We are pioneers in indigenous robotics technology for composites manufacturing.
And what exactly is the problem that you are solving?
So in India, we have very few automated solutions for composite manufacturing. And this needs to be imported, and the technology is not there in India.
And what is the solution to the problem?
So we have indigenously developed certain products like filament winding machines and also its software, and we are providing this solution to Indian suppliers for a relatively low cost.
Okay. How much will you do in revenue this year?
So we'll be doing around 1.2 crores.
And what are revenue projections for the years ahead?
So we'll project around 2 crores for the next year.
Okay. And more importantly, what is the one key differentiator that sets you apart from competitors in this space?
So mainly it's affordability and also the consulting services that we provide.
All right.
So we give the customers the guidance since we are into aerospace and defense. So we have a good knowledge base, and that is helpful for our customers.
And how much funding have you raised thus far?
So we have raised 24 lakhs from angel investment and another 20 lakhs in grants.
And what's the one wow factor that you've encountered in your startup journey thus far?
So I would say a wow factor is when we did our first export to Spain. That was last year. So that gave us the confidence that we can build the world-class technology solutions, not just importing them.
And where do you see yourself in 5 years from now?
So we hope to be an established company in this sector. We hope to make our mark on the composites industry in India. And we should have all our products recognized as a world standard.
All right. Great speaking with you. Thank you so very much.
And with that, it is a wrap on this edition of Startup Street. More news and updates continue on the other side. Stay tuned.
More. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
2024 saw a lot of action in the mutual fund space, and funds raised via NFOs has definitely been one of them. Let's look at the numbers. Funds raised by NFOs or new fund offers stood at 1.04 lakh crores in 2024. This is still the month of November. And we have more NFOs in the month of December that has not been accounted for here. That is an uptick of 63% versus funds raised in 2023 at around 63,800 crore rupees. Now, this was slightly lower than 2022. That time, the number was 67,336 crore rupees. But 2021 also saw massive inflows. This was double the amount versus 2020, when the amount raised was around 53,700 crore rupees. Now, if we talk about the number of NFOs, 2022 still tops the list. So far in 2024, we've seen 205 NFOs which have issued issued till November. This compares with 212 in 2023, 246 in 2022, 140 in 21, and around 81 in 2020. Some of the categories that saw high flows: multi-cap funds getting in 6,300 crore rupees of money, and other ETFs at around 1,400 crore rupees. But the real star of this year had to be sectoral funds. 40 sectoral or thematic funds have seen the highest flows that we have seen in the last 5 years. Sectoral funds garnered around 67,772 crore rupees in 2024 so far, which is more than the flows in this space from 2020 to 2023. In this period, sectoral funds garnered around 52,165 crore rupees. This is via 59 NFOs. Even index funds actually saw a lot of interest. 76 NFOs in the index fund space, raising 12,147 crore rupees, which is the highest that we have seen in at least 5 years. Index funds have always seen a lot of interest, and more so in the last 3 years, with more focus on passive investing. In 2023, 53 index funds were launched, garnering around 2,700 crore rupees. This compares with 85 in 2022. And these numbers were very low in 2021 and 2020, as you can see on your screen. Interestingly, no mid-cap funds were launched in 2023 and 2024. This space did see a big rally, but did not see a new product here, but saw massive flows in the existing names. Also, only one small-cap fund was launched in 2024. And now we are towards the end of 2024, and December also has seen a lot of action in the NFO space. But will this continue in 2025? Will there be new products by mutual funds houses to diversify their portfolio? Well, time will tell.
Hello and welcome to a very special edition of our Market Town Hall. 2024 is wrapping up and it is stock-taking time. While the Nifty is up only 11% this year, the mid-cap and small-cap indices are up an impressive 27% each this year. And while we take stock in terms of winners and losers, this is also the time to think ahead into 2025 and maybe even beyond. I'm Prashant, and that's what we intend to do here. With me is my colleague, Nigel D'Souza. Nigel, hi.
Well, thanks a lot for that, Prashant. Well, we have three very, very special guests joining us on the show to help us out with exactly that. The bets, the ideas you need to track, which will make you money in 2025. Let's welcome to the show. We have Niket Shah of Motilal Oswal, Tahir Badshah of Invesco, and Rohit Shimpi of SBI Mutual Fund. Well, welcome, gentlemen, and thanks a lot for joining in.
Thank you.
Just want to also add that all the three gentlemen have managed what has turned out to be some of the best performing funds in 2024. So good on you all. Congratulations. And 2025, well, you'll have your work cut out.
Well, it's a full-on starcast here.
Indeed.
And we intend to use it to your advantage. So, what we intend to do here is pretty simple. Keep it tight, simple. We'll go one round with all of them to understand their sort of mental makeup as we head into 2025. Just a top-down view about whether the market is going to be easy, adversarial, or not. And then, of course, we intend to dive straight into the ideas which, of course, are going to be important, and the themes where they want to put money behind and which you should pay attention to as well. I also want to mention we've got a full audience here, and some of the brightest minds from some of the top colleges here in Mumbai, and we intend to open the floor up for questions to the three market masters with us. So once again, welcome to the program. Thank you very much, all of you.
Thank you.
So as I said, Niket, let me start with you. Top down. It's never easy, so I don't want to say, well, 2024 was easy and maybe 2025 won't be. It's never easy. But how is the setup looking as we head into 2025? As I said, mid and small cap indices have done 27%, which means stocks have done far better. Go on.
Yeah, so I think if you look at in the beginning of 24, it looked like a year where there were still some opportunities available today. But as we start 2025, if you look at micro and macro both, so if you look at micro, earnings growth is kind of weakening out. From almost 35-36% earnings growth in mid-cap that we have seen in the last 4 years, we are now down to about 4 to 5%. We don't expect this to meaningfully move up, at least for 25 as such. On the macro side, I think clearly there are challenges as far as US is concerned. US has clearly articulated that there's going to be a $2 trillion cut on spending. And one really needs to see how that really shapes up as well, because that can have a meaningful impact on global markets. So if you look at the macro and micro, it looks like 2025 will be much more tougher year, probably in the last 5 years. It'll be a year where the market will be quite narrow. You need to really be very, very sharp in terms of your stock picking. You will not see a broader market that you have seen in 2020 to 2024. There'll be few stocks doing very well, few sectors doing very well. And hence, I think one really has to do a lot of cherry picking to really do very well in 2025.
Okay, interesting. Well, Tahir, what about you? What's on your wish list for 2025? Consumption clearly was a little bit slow towards the end of this year, that's 2024. Private spend as well was a little bit lower. So what's on your wish list for 2025?
Yeah, pretty much what has not happened in 2024 is what we should expect to happen in 2025. And, there are a few things which probably did not pan out the way we would have expected. For example, interest rates, in India, despite the fact that we've had interest rate cuts in the US, we've not been able to follow through. It's been about 4 to 5 months since then. And it's been a very long pause in any case. So I think that is something which probably we will look forward to happening in the course of the next year. Hopefully at the start of the year when we get some data around inflation as well as food inflation in particular, maybe the outcome on the summer as well as the winter crops. I think that should probably indicate whether we are headed for a phase where we can open up the doors for interest rate cuts eventually to happen in India. So I think that's one that we would probably kind of anticipate. The other thing is that we've also seen that very distinct deviation between in the whole consumption segment, where we've seen the upper end of the consumption segment do exceedingly well, whereas value consumption actually has trailed. And I think that is something which probably deserves a catch-up. Once again, it will be a function of what happens to interest rates, what happens to inflation, what happens to rural incomes. I think there are certain reasons which make us believe that probably that will get stronger, especially given that states and the government are now focused on rural upliftment and probably also supporting some of the stressed sections of society. So I think that is another hope that probably comes about. It will give a more balanced look to the economy as a whole. And the last but not the least is probably private capex. That's also something which has been on the cards for a long period of time, especially at the time when we are probably confronted with a slower trajectory of government capex. We don't want it to slip significantly either, but private capex could probably come to the rescue. We've seen some initial signs. If you go by probably the a bottom-up assessment of the BSE 500, then the first half probably indicates that the capex for BSE 500 is actually up 15% year-on-year. And BSE 500 typically still comprises of a lot of the private sector companies, right? And within which, again, the government side is actually slowed. So actually what it implies is that the private part has actually grown even higher than 15%.
This is for what period?
This is the first half of FY25 compared to FY24.
Okay. Okay.
So I think...
But tying all of this together, as Niket said, would you agree this is going to be a far challenging year? I mean, as things are, I mean, if something comes to the rescue, so be it. But as they are right now?
So there are some of these things which are imponderables, and therefore we need to see as to how they manifest. I would like to think that the first few months of the year is going to be a bit of a weak start to calendar year 25. It'll also probably be a bit driven by global circumstances. So we have the US markets actually, or the developed markets in general, doing a little better than India. We have a earnings revision, upward revision trend out there in the US, whereas we have probably a downward revision trend, earnings revision trend out here in India. So I think that will play its role in the first few months of the year. Probably in the second half of the year, I would expect that some of the local factors play out. And by which time actually Trump assumes office, and some of the rubber hits the road with regard to some of the policies that will come about. So, I hope so too. And that probably brings about a rotation.
So we'll come back to some of these points, and I think that's well explained. Rohit, come in. First thoughts. Sure. I mean, adversarial, not easy. So let's keep that aside. But what's your sense?
So on markets, I think the way SBIMF in our equity strategy framework, we look really at three parameters, which is valuations, earnings, and sentiment, right? So when you start off with valuations, now clearly when you just look at the trailing PE ratios, even if you adjust for earnings cyclicality, those are at elevated levels, right? I think it's only when you adjust for the level of interest rates that those ratios are more in middle or median kind of territory. So that's okay as a starting point. It's not the best where you would want to be, but it's not too bad either, considering where interest rates are. So that gives you your asset allocation type perspective as well. When you look at valuation, when you look at earnings, actually, that has been a super bright spot in the last few years post-COVID, and we're currently actually going through some probably mid-upcycle pangs, to say the least, considering how the last couple of quarters have been for the overall market. And even excluding those one-off type stocks or one-off type sectors, we know them, the OMCs, the metal stocks, etc. Even considering that, taking that out, earnings have not been very great over the last couple of quarters. We do think that is kind of pulled down by two factors. One is the monsoon issues, some of the election-related slowdown that we've seen. And we are actually hopeful that that comes back over the next few quarters. Typically, a capex upcycle or an earnings upcycle does not fizzle out as soon as we're probably seeing market experts predict at this point. So I think that's a little more durable theme that we're hopeful on. And the third one is sentiment, right? And you can't exactly predict markets, but you can tell the temperature of the room you're sitting in. And clearly for the last few years, last few quarters, markets have been kind of hot, right? If you look at retail investor sentiment or, subscriptions in IPOs, etc., that gives us some sense. So, sentiment is off peaks right now, considering the fall we did see in markets back in, if I just look at October, November, for example. But on balance, I think, with valuations being middling relative to interest rates, with earnings seeing some pause, maybe they pick up, over a few quarters, and sentiment still being a bit elevated, probably the market outlook over the next few, next few quarters, next few years is going to have to track how the earnings trajectory behaves. And there we're not as negative. We think that over a few quarters, over a few years, that will tend to pick up in line with the overall, capex cycle kind of coming back.
I just want to ask one local and one global question. So, and maybe a yes or a no, but maybe not yes or no, maybe two lines, but quick ones. How critical is the government spending and interest rates, both to work for markets to do well in 2025? And from a market perspective, are we at that point that we need those to move in the right direction, more government spending and lower interest rates? Niket?
So I think, yes, we do need that. Government spending was down almost 28% for the first half of the year. We expect that to pick up in the second half, but it's still going to be missing targets for the year.
Okay.
So definitely government spend would be quite important if you want to ensure that the animal spirits of the economy continues to remain alive.
Sure.
On interest rate, I don't think inflation is coming down anytime soon. You look at the amount of freebies that has been given in the election in different states. It's been about close to 2 lakh crores. A lot of people don't realize it's 2.5 times Manrega outflow, right? And that is ensuring that the inflation on the food side continues to remain fairly high. You look at the last number that RBI reported, about 9% food inflation. When you have a 9-10% food inflation, core inflation continues to remain quite sticky yet. I don't think we are going to see an interest.
So rates will remain high, government spending must come back. Tahir?
I would tend to agree. So basically, we need government capex definitely to continue, and I think that is the core of the Indian economy, at least.
You mentioned private sector has to pick up the slack, but we've been hearing that for a while. It's not. I mean, maybe it'll happen. Hopefully,
some signs. So
the government has to.
Which is corroborating. So I think government has to, and it in up cycles of investment cycle, rising investment cycles, government has always played a very important role. They occupy nearly about 70% of the capex that has to be done. So obviously, you can't have a situation where they are absent from the market. All I'm trying to say is that probably if you are seeing a little bit of slowdown on one side, if there is a pickup on the other, then we probably are balanced out. So that's what we're looking forward to. There are some telltale signs, there are some hard numbers which are actually visible. We also probably look at project awards, etc. And when we meet many of these companies, so for example, all of us actually interact with a lot of corporates, and I would say 8 out of 10 companies in our interactions, anecdotally or even otherwise, and you can look at the fundraise, etc. Part of it is probably for debt repayment, I agree. But most of them are in a capex mode. I mean, whether they are doing brownfield, greenfield, acquisitions, etc. So all of them are indicating at a situation where they want to increase capacity, because for the last few years they've not done so. Last many years probably they've not done so.
So you're satisfied with what you're seeing on ground as of now?
So the trends are good.
Trends are good.
It should probably interest rates is not something which we need to have. It's not a must-have. But if we get that, then that's something which will add on.
What about Europe?
Yeah. I think that actually, you are seeing capex happening in the private sector. It may not be to the extent that which we kind of say that it's taking up the entire slack from, some slowdown in the government space that's being seen. But there are interesting areas where it's happening. So whether that's power is well known, right? That's one where everyone's investing in renewables, etc. You're seeing a lot of ESG type capex happening on the sustainability side. And finally, the manufacturing opportunity of India. That's a big deal. I think we've started seeing some small strides out there. Maybe the export story out there within manufacturing can pick up with, let's say, the global economy, including, say, the US markets or the US economy improving over the next few, quarters and years. And that, I think, that will take that will get the private sector involved really on the capex side. When it comes to rates, really, like the others said, we're not necessarily in the camp which is calling for sharp interest rate cuts, but probably some of the action you're seeing on liquidity. So the CRR cut, for instance, I think that is starting to help out. And, we didn't talk about it earlier, but I think financials is, the elephant in the room, right? Large cap banks have done really nothing over the last few years.
Yeah.
And I think that gives an interesting catalyst out there too.
Absolutely. Just one round on global. Economists think Trump will do what he will do. India will not get hurt. It'll probably benefit. Agree? Disagree?
So I think, Trump this time around has a much better planned cabinet, unlike his first term, right? He obviously has Mr. Musk along with him. So I would definitely agree that what is going to happen with, say, Mexico, Canada and China would definitely benefit India to a larger extent. And there are multiple themes.
At the margin, benefit. And we'll talk about those themes in a bit, Tahir.
Longer term benefit, but I think in the short run, we will probably also be impacted.
Rohit?
Yeah, I think there's going to be a lot of noise, and you're not sure whether some of it is posturing to kind of ensure that you get a better deal out of each trading partner.
Okay.
But I think there are opportunities and there are some risks as well.
So noisy 2025. So well, let's take a quick commercial break at this point, and then we'll come back and we'll dive into the real stuff, right? What are the themes to back? And that's what I think our viewers are going to be interested in as well. So let's take that break, get into that quick commercial break. We are right back with the three market masters, and of course, this very interesting chat.
Gonna be president, that I can tell you. And I'm safe, you know why? He can't be. He wasn't born in this country. Now, he's a great guy, and we want to have him. Everybody, so many people are in this audience that have helped.
ईवी व्हीकल्स उसके ऊपर भी सुबह से चल रही है जब प्रेस कॉन्फ्रेंस फाइनल नहीं हो। ईवी व्हीकल्स के ऊपर ये एब्सोल्युटली क्लियरली मेंशन करना चाहिए कि नया व्हीकल्स ईवी खरीदने में 5% है। Am I right? 5%। पुराने ईवी व्हीकल्स खरीदने का विषय ही आया है। We want to promote EV. GST Council is in favor of EV. Nobody is stopping people from buying EV. मगर used EV खरीदने के समय एक व्यक्ति दूसरे व्यक्ति को सेल करेगा तो कोई नहीं है उसमें। The same thing as 5%. No GST. Sorry. Used.
Welcome back. Well, we heard about what our fund managers expect for 2025, but let's zero it down a little bit more and let's get the top bets from there. Nikit, you go first. Tell us what is that top bet for 2025?
So I think we do believe manufacturing will really play an important role as we get into 2025. So if you just look at the broader numbers, US has about 5.5% of the world's population, contributes to 25% of world GDP.
Okay.
Europe has about 4.5% of world population, contributes to 18% of world GDP. China has 17% of world population, contributes to 17% of GDP. India has 17.5% of world population, contributes only 3% of world GDP.
So that's what the opportunity.
So there has to be a significant movement, from mean reversion, right? And how do you do that? The only way you do that is manufacturing, and within manufacturing, you have to do more exports, right? That's how you get incremental GDP from 3% to 5 or 7% over a period of time. If you look at manufacturing theme per se, if you look at China and India, both of them started in 1970s at the same level. And China really took off from 2005 all the way to 2015 in a meaningful fashion. That's where globalization was being talked about. For India, this is probably the best time to happen because of anti-China sentiment that we are seeing right now. This is probably the best window to really accelerate on the manufacturing side. Also, if you look at India, is generally known for IT services, right? So if you look at globally, 20% is IT services or services export that we call, and 80% is merchandise export. So merchandise is far larger category than services. In India, it's 60-40, 60 being services and 40 being merchandise. So I think the real move that the government has done in terms of PLI on the manufacturing, say mobile PLI, component PLI, which is likely to come announced shortly, all of them is actually moving in direction of ramping up the merchandise export from India. If you look at someone like, say, Apple, Apple this year is likely to do about $10 billion of sourcing from India. This used to be zero. If you look at India, in 2014, 78% of mobile phones was imported. Today, it's negative 25%, which means we export 25% to other countries, right? Thanks to PLI, obviously. So I do believe a lot of countries like China, if you look at Vietnam, Vietnam export is this year is about $120 billion. In 2013, Vietnam and India were at the same level. So we really need to do a lot of catch-up. And some of these PLI initiatives announced by the government are going to be quite handy as we go forward.
Just to get the number, you said 10% of the sourcing Apple does is from India.
No, $10 billion.
$10 billion. $10
billion
right now. And,
so if you look at
exports annually out of which is made, which Apple sort of exports, merchandise exports, is now, they've said that they want to get to about 25% of their overall sales, right?
That's correct. That's over a period of 5 years.
Right.
So which is, again, a very large size.
When we speak to most of these EMS companies, they all kind of are still with the Android ecosystem.
Correct.
Very few work with the Apple, actually. Right. So will that change, you think?
It will, right, with per capita. If you look at US per capita, is $81,000. China's at $13,000. India's at $2,500. It's 2.5. If it moves to 5,000, there's a large population willing to buy Apple phones in India itself. Right? So India will become de facto the second largest market for Apple in the next 5 years.
So for example, a Dixon, right, works with phones are still the biggest segment. They work with all 5 Android clients.
Right.
So what next? I mean, they're getting into other components, etc. But within phones, Apple is a very high value segment.
So if you look at mobile phone industry, is about 4 lakh crore. From a manufacturing standpoint, it's about 3 lakh crore worth of sales that they do. Right? Of that 3 lakh crore, about 50% is semiconductor, which is 1.5 lakh crore. India virtually has no role to play, at least till FY28. Hopefully, the first foundry of Tata's will come and, we'll have some semiconductor from there. The balance 1.5 lakh crore is where the opportunity size lies, within the component manufacturing. Till now, if you look at prior to COVID, India was doing large amount of trading. 2020 to 24 was more of assembly. The first time we are now getting into manufacturing in a meaningful fashion because our value addition was only about 14-15%. Now we are really going to 50% because balance 50 is semiconductor, which you can't do it. So effectively, the first signs of manufacturing will be visible now with PLI of electronic component manufacturing going live. And you will also see that in other categories. You are seeing in compressors, right? There are companies who are now doing tie-up for compressors in India, with 51% owned by an Indian guy and a 49% owned by an international guy. So I think all these moves will really play a big role to really change the unit economics of the way manufacturing changes in India.
Valuations, Niket?
It's quite punchy, but I think, in India, you have to pay, if you look at mid-cap itself, more than 65% of mid-cap are trading at more than 40 times 1 year forward earnings. So anything which is high quality and high growth is not going to come at 10p or 15p, right? It's going to be expensive in India.
Motilal on the private equity side, I think, is the only investor in Dixon. They put in $40 million back in the day, and that's the only money which I think Dixon has raised, right?
That's correct.
Ever in their life.
And apart from the IPO.
So apart from the IPO, do you need to do something? I mean, you have to find something very small. Is it possible, or you think it's
quite possible? I think if you identify some of these themes early in the cycle and play through the cycle, I think there is reasonable amount of money to be made. But you have to be ahead of the curve when you think about some of these newer themes. You have to identify which are those companies which have those capabilities. Like, for example, if you look at mobile phone, the real essence is display, camera modules, and to some extent plastic component manufacturing, which is quite relevant. So
just name 1 or 2 which you already own with full disclosure. I mean,
no, I think we own Shelly Engineering, which is a public domain information.
And I think they work with Apple.
I don't know, but I think if you look at, they are very, very large on the plastic eco-component system.
Yes.
So if you look at mobile phone, there is a large amount of plastic component involved there.
Sure.
So we'll see how that plans.
And this is one of your recent entrants in 2024, I think.
Yes, it's been about 5 months old. Yeah.
All right.
Tahir, do you want to talk about CDMO, which is a big sort of area of focus for you? What's the thesis?
I think this is obviously about companies in India essentially benefiting from the China Plus One story, especially with regard to this whole space on small molecules as far as pharma is concerned, and even things like peptides, etc., which are coming into play. Especially, there are a good number of companies which are involved in small molecules. Many of them have actually even started on the peptide molecule space, especially with regard to GLP-1. So small batches right now, but can probably pick up over a period of time. So I think that's one space that we clearly like. The other one that we are probably very excited about is, on the domestic context, is the power utilities in the power segment, but more particularly within the power value chain, the transmission portion of the power economy. And that's because we, as we all know, are in the midst of this massive change where we're looking forward to having at least 50% of our installed capacity being in renewables. This calls for a significant overhaul, upgradation, change in the transmission system, because you're now actually going to have a mix of different types of power, right? We're largely dependent on the transmission system was largely driven by coal-based power up until now, and now you're going to have a mixture of wind as well as solar and coal.
So transformers, companies which
transformers, all kinds of equipment which are related to actually upgrading the whole transmission system.
The grid, basically.
The grid, because you are going to have instabilities induced because of this intervention of different kinds of power sources. So, and we've not done anything to the power transmission system in a very long period of time.
What kind of names? I mean, just to kind of
talking about companies like Hitachi, GE Vernova, these are kind of guys who are going to, maybe even to some extent, even the likes of Siemens and ABB. Many of the multinationals probably will dominate here. There will also be the ancillaries, which are, as you mentioned, the transformer-related companies, where you have a fair number of Indian players as well. So I think that is the ecosystem that we like. We believe that that's something which is probably going to be a lot more durable. And this process is long enough, because you're talking about, even otherwise, you're talking about power capex being in the vicinity of some $400 billion over the next 5 years in order to do everything. Generation as well as transmission. So I think that's a huge number, and we are crunched for time. We are talking about the next 5-6 years, because we have to accommodate that 500 gigawatt which comes out of wind and solar. So I think it's not a very long, duration theme, and at the same time, it is probably concentrated among a few players. So I think there'll be a few of them which will be really, really large beneficiaries.
Now, that's interesting, particularly on Hitachi. I had visited the company around 15-16 months ago, and they were talking about HVDC orders. Normally used to come once in 4-5 years.
Right.
Now they're expecting it once in every year. So it tells you the kind of,
We saw a couple of those actually come about in the past.
Indeed. Yeah. And, that's...
I think that's just the start, and we are probably going to see
many more
Indeed.
as they come about.
All right, Rohit, what about you? Tell us, what's the top bet for 2025?
So mine is the most boring in the room, which is just the mean reversion factor of lower end consumption. And I think we've seen this, happen in a big way post-COVID, that the recovery has been extremely K-shaped, right? So you've seen the lower end, particularly, rural, has been impacted quite significantly.
It's a good day to talk about lower end consumption. Vishal Megamart had the Vishal listing. Go on, please. Sorry.
That's right. So, so to that extent, we've also, if you go back, even something like two-wheelers, been doing badly from 2019 onwards, right? So it's even before COVID that space was probably struggling.
Yeah.
Now that it's been a while, there's been some change at the margin in terms of government policy, at least from the states coming out with some income transfers, etc. I think that is something which probably is driving a bit of growth out there, and just the fact that it's been poor for so many years, right? So just that, catch up, the sticker shock in terms of two-wheelers kind of, finally consumers are getting used to that. So I think that's one where there are probably...
Specifically, any sectors there?
I would say two-wheelers is an interesting one. Even within passenger vehicles, we've actually seen the small car segment has done nothing, right? It's all been SUVs, right? So potentially spaces like that, there's, more... tier 2 towns, value retail. I mean, you did speak about it.
So you'll be playing more OEMs, or will it be auto ancillaries when you're talking about this theme of two-wheelers as well as...
So the good part is that in any of these themes, right, they're big enough to play both. You can do OEMs, you can do ANCs, and that's the great part, where it's not always so obvious. You'll find even potentially industrial names which are levered to those segments, and it's kind of hidden out there. You've got to do a bit more work to pick them, but that's something which can work out, right?
That's interesting. Mean reversion, lower end picking up, and premium maybe just sort of slacking off for a while. It's done very well.
Yeah, that's
good
what.
Sugar rush over the last couple of years. Right. So we've got 3 ideas, but we've got more to go. 3 more, 4 more, 5 more. We'll do all of that. Let's take another quick commercial break here. Stay tuned. We are in conversation with the 3 market masters here. Themes for 2025 and ideas to bet on. Stay with us.
An individual selling to another individual, no GST. But if a company has bought EV, or if there is a regular registered used car seller who buys EV, does some propping up in it, adds value to it, and then sells it, it was felt by states and it was felt by auto and many others also that the EV market is not so saturated as yet that used cars will come. And category mein, therefore used cars category mein EV bhi hai, petrol vehicle bhi hai, diesel vehicle bhi hai. And I like to highlight this point to you. हमारी तरफ से केंद्र सरकार, Government of India, which is 1/3 member of the GST, हमारी तरफ से एजेंडा में सेल ऑफ ओल्ड एंड यूज्ड ईवी व्हीकल्स को 12 से 5 तक ले आने के लिए वी हैड सजेस्टेड. बट व्हेन द डिस्कशंस हैपेंड, it is on that margin, the margin value between purchased price and resale price. 12 लाख में खरीदा, 9 लाख में बेच रहे हैं सेकेंड हैंड यूज्ड व्हीकल के नाम पर. On the margin is only this 18% is being put, as would be for any used car. So it is on the margin, not on the entire amount at which the car is being sold. So EV vehicle का हमारे recommendation तो 5.
Welcome back. You're with us here on this special market town hall, and we are ideating about what to put your money into in 2025 and beyond. And we've got 3 young star fund managers with us, and we're sort of bouncing around ideas. We got 1 round done earlier. Let's get to the next one. Nikit, GLP-1 is a theme that you want to back, and there's a very specific opportunity. Yeah. Probably after, I think, Lipitor, perhaps the largest drug category in the world, eventually.